And there you go. Welcome to week 4 after an insane week 3, where you have the introduction of all the cycle variations that is. The normal, again, cycle variation, the normal starter kit we covered earlier. Now we got to show you our beautiful London Knockout, Retail Heaven, also the insane Asia Whipsaw. And on top of that, we gave you multiple additional confluences and also our legendary entry helper. And of course, we shifted a gear higher with the simplicity approach. And now in week 4, it is showtime, at least practice showtime, right? Because it will be the week where you should connect everything together and truly understand intraday trading and intraday mastery, right? So that's why this week is called Understanding Intraday Mastery, right? Perfect. Because we will finally dig into how to trade it, or how you will trade it in the future. Not technically in week 4. Week 4, of course, you should practice, but as at least so you know exactly of how you should trade it later on. We will do that with our secret weapon called cup trades, right? You will exactly know what that is. Of course, I will not dig into that right now, but we also will dig into topic 3, inducement trades. I will show you some advanced inducement trades and slowly giving you some meat to the whole thing, so you actually know how to trade it properly. Topic 4, we have some special training for you, so a lot of practice with how to trade it, right? Content plus how to trade it properly, right? And then also topic 5, we give you some trading tools with what you with whom you can, or with which you can start practicing how to trade properly, right? There will be tool execution tools, trade management tools, risk management tools, all that stuff, right? So you are starting to take those for your advantage. So again, no more blaming risk management, no more blaming sloppy executions, no more blaming whatever with calculations, all that stuff. No, we give you obviously recommendations for tools you should use there. And then topic 6 is of course the summary and tasks. So it doesn't sound like a lot, but it is definitely a lot. Again, how to trade that stuff properly is of course the most important thing. I would say the second most important thing. The most important thing is, of course, first understanding the material, because you can have the best executions ever if you trade nonsense trades and don't stick to rules. Even the best executions will not help you. So that's the second thing. First, make sure you understand everything, but that's why we only will show you in week 4 now how you could trade it, right? With the proper entry rules. We will have a few approaches. You will see everything, of course, in this week, and then practice. Okay, so slowly get used to it, slowly start practicing with trading actually, right? And then you'll have a lot of fun in the next weeks. Okay, so enjoy week 4 for now, and we see you in the week 4. So see you guys are ready again. So now we're ready for the good stuff. Okay, because finally we hear our secret weapon and say hello to my little friend. So again, we covered the American strategic bombing campaign. I will not cover it again. So now, what can we learn from this? Again, we don't need to fucking bomb the whole market all over and over again. We will focus on cup trades. That's literally, I mean, if you wanted to trade everything, you clearly now have like all the reasons to do so. If you run random inducement, build up mitigation stuff like all over the place and stuff, you could, definitely could, but it's not the point of how we should trade, okay? The point is to put our focus on stuff that clearly gives you returns and are obviously a step-by-step process you can follow and also accurately execute. So that's why we created the cup trades, and we will have a London and a New York cup trade. So everything in between is 100% tradable. I showed you like 5 trillion times by now that you can do it, but of course you should focus for sure on the cup trades. So what in the hell is cup trades though? And you're probably like, huh? Stream? Like, why is it called cup trades? Like, what is it? Like, what is it? And of course, like, it's always a winner of any World Cup. That's a cup, right? And of course, it's always shooting like a cup of tea, right? And of course, like, it's cup of tea. And you see me looking like this? Okay, awesome. Anyways, and it keeps you full and satisfied, of course. But also, when I started to making this curriculum, I obviously wanted to find like setups I can give away, and I mocked this shit up like with these cups. And that's why I just used the the name cup trades, because it's the only pretty icon you can find on TradingView to mock them up. And as you can see here, all these little cups in here, believe it or not, that will all be trades you should focusing on. And as you can see, it's a lot of fucking cups. So I will show you what it is. So simply, cup trades are timing confirmed trades. If we saw how important the timing aspects will become if you combine with the overall structure, Asia inducement, build up, inducement mitigation, timing on top of that, hover picture on top of that, EDMs, LEDs on top of that, it's crazy. It just gives you so much structure you can follow. That's how you'll be stupid if you not focus on the times we already know that have a huge impact, because you understand the bigger picture now. So now it's time to actually catching those trades. Okay, so how we do it? So pretty much the trading setup, the birth of the cup trade. And as you remember this like cup in here, so that's JP in my cup, like the retailer tiers cup, whatever, right after being induced, of course, right? So that's why I'm always so happy when I get a water, because like retail tiers and stuff. And of course, a new strategy at first is always like a newborn baby. It is weak and in the need of nutrition. So guess what? You need to develop it and put some exercise in and feed it properly, and a Terminator will become out of it. So guess what? You have now all the freaking potential. Now we show you what the couplet is, but then it will be like a baby to you because you only know it for like 2 weeks. Guess what? You need to practice it, study it, forward test it, back test it, practice it even more, mock up, practice, and at some point, obviously, freaking Terminator. But guess what? The journey needs to start somewhere. Now there we go. So the cup trade characteristics, very easy stuff. It's exactly the same thing. We're just now looking into how we trade these London trades and how we trade these New York trades, because it doesn't matter where you are in the world. You either can trade London or you either can trade New York traps. Okay, doesn't matter. You should pick your favorite one and then focus on that one. We have 2 cup trades, either London and New York, and then we will find out on day 4 what's best for you and how you should approach it. So guess what? You all saw this picture like 50 million times, right? So trapped Asia high, midline, whatever, messes around. So look at the left now to make more confirmations. Okay, awesome. So taps into the, right? So guess what? You break it down to the 1 minute now after that. Okay, so starting to get more clearer. You're waiting for break of structures. You're looking for mitigations, right? But guess what? Obviously moves away now, giving an internal inducement. Perfect. You know what a LED is already. There you go. So can you trade like that? No. What you wait for? Mitigation of the LED goes higher, right? And of course, now switching over to the 5 minute again. You're having the perfect London cycle, as we showed you like 5 quadrillion times already. You're marking this internal break of structure point here with the imbalances. You wait until it comes back, taps this zone. What is it also on the 5 minute? It is a LED. And it's just trading in line with the whole thing. And guess what comes after? There's your tube. But that's all trades that are perfectly making sense in terms of time, price, structure, and also entry level stuff. And it can look, of course, like this. But no worries, we will dig into how you trade them. So I just want to show you some examples first. Okay, but guess what? Like, what is it? I cannot even see it from here. But guess what that is? Whatever, maybe 1 to whatever. 25, I don't know. What is this? 1 to 15, I don't know. What is this? 1 to 10, I don't know. But that's all easy shit trade based off what? Based off the perfect cycle, bigger picture plays, speed, inducements, timing, vectors, breakup structures, LEDs, EDMs. It's all easy stuff. It has so fucking crazy potential, and you're done. Catch one day like that, you're done for the week. Just think about the potential. Trading of FTMO account, whatever, million account whatsoever. 1%, 1%, 1%. What in the hell? What do you need? Another one. Cup trade confluences again. First, where is our liquidity for London in here? It's of course all the way down here and all the way up here. But guess what? What should come first if you have liquidity up here and liquidity up here? What are we doing in here? Easy question, isn't it? So guess what? You have a build up, right? So of course, what is this? Induces Asia low, right? Guess what? Mitigation area below this liquidity. Awesome. Right? So what? Guess what? Build up, inducement into mitigation in timing. Awesome. Yeah, timing. There you go. And also, as you can see, possible LED and EDM confirmations after. So guess what? You have your build up. LED confirmation short even more into the inducement. Right? So guess what? Same thing over. There's your inducement into mitigation cycle completed. Right? So perfect inducement mitigation cycle. Awesome. So of course you can take a pending order later on the extreme of this mitigation areas, as Walker showed you, of how to refine these zones. Okay, of course you combine the whole picture in terms of structure. At this point actually makes sense in here. Okay, and of course what happens after? A tube. Easy shit. But that's one trade out of anything. It's not witchcraft. It's actually very easy stuff. Again, a deal scenario again is break of structure, mitigation of this, never come here. So guess what? If you're focusing on this trade in here, you missed it. It's not a problem, but at least you understand the whole picture. Okay, so guess what? That's a 1 to 17. Just with one cup trade with all the stuff you know already. And you will be like this and giving me a kiss. You will hold me like a baby and give me a kiss in here. I like it. All right, so guess what? Are you to catch all cup trades? No. Are there times when cup trades return and run away from you? Yeah. Can you take a confirmed trade after a missed cup trade? Of course. That's why we have LEDs and EDMs. But let's see of how we actually can approach them. And now take very close notes, because that shit now is essential. Okay? So, approach number 1. It will always be the extreme limit order. Approach number 1, extreme limit order. That means you have a decisional extreme to the left, always. You have your cycle here, Asia range, minor inducement into smart money trap maybe, and then final inducement into the left mitigation confirmed with timing. You can refine this zone on the 1 minute, 5 minute, whatever, find your imbalance zones, just refine your zone and get a tight limit order on the extreme if it makes sense with price as well. That's approach number 1. It's not ideally, but as you saw on the other example, sometimes they just go for the mitigation and then they're off. Okay, so if they go for the extreme and then they never give a re-entry. But guess what approach number 2 would be? Approach number 2 is, of course, the inducement mitigation. That's our ideal trade right here. That is our bread and butter perfect trade. And if you're starting out, start with this freaking approach. That's the most safest approach. You cannot do so much wrong if you only follow approach number 2. Why? Because guess what? The whole cycle will be done. Let me just draw that in white in here. No, like black. Yes, you have Asia range in here. I'm talking about the London Cup trip, by the way. This example, right? So guess what? Minor inducement here. Now this inducement in here, maybe to the left, 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 left. Smart money trap. Awesome. Now this becomes your whatever extreme on the 1 hour, which makes sense to get mitigated anyways in terms of bigger picture structure. Now you refine it let's say 5 minute, 1 minute, whatever, get a refined zone in here. Timing aligns. Awesome. So guess what? That's your extreme limit, but guess now. Now comes the, let's make it like this, makes a little bit more sense. So now comes the internal break of structure. And now you're trading the mitigation of this inducement in here, which is confirmed by timing. So that's approach number 2. So you have this is an inducement, right? Sorry, this is approach number, the other one. Sorry, excuse me. This one is in here. So you have your inducement in here. Now you have a break of structure. You're trading the mitigation of this inducement, which this is London open or confirmed inducement or whatever, confirmed mitigation. And you're waiting for break of structure and you're trading the mitigation. Okay. And then sometimes, again, it's not that beautiful. And then the other approach is just the inducement mitigation without a break of structure. Again, this is the aggressive approach. And again, everyone in here should start out with this approach and waiting for the break of structure to get a better feeling for it. But the moment you're getting more back testing and more practice, you can trade these as well because they happen more often. But safer, of course, is this. You need to be aware. Sometimes they're just giving inducement, London open, whatever. This makes an imbalance and they come right here, mitigates it. That would be a trade in here, entry in here, stop loss in here, and then they continue lower. Everyone start with this one though. Okay, so stick to this approach. Then we have approach number 3, which is combination with our entry helper. We're expecting either the inducement in here being a let or the mitigation of this point becomes a let. And as you can see here in this example, in this illustration, you never had a break of structure, but you're having a let. And that works pretty good as well. Of course, if you're having a break of structure here and then getting a let, 10 times more powerful. But guess what? Sometimes you're only getting the mitigation confirmed with a let. Okay, and that is approach number 3. So you're waiting for the let entry. But also mitigation, entry goes in here, stop loss goes above here, and you're waiting for the let. Okay, obviously first you're waiting for the let and then you're making entry. Okay, then we have approach number 3 as well. It's the same thing, but again, this is the let in here. But for whatever reason you might missed it, or maybe there was no clear mitigation in here, or maybe the sun was too big. Then what do? You go to the 1 minute, as everything is here is the 5 minute. You go to the 1 minute and you trade the mitigation of the let. So let's say again, this is your inducement in here. Right, so this becomes your let. Right, so this becomes your let in here. Whatever price is here, short makes like whatever this, you know what I mean? This becomes your let in here. And for some reason you missed that trade, what do? Take this imbalance in here and you trade this on the 1 minute. Okay. But because you know this is your 5 minute let, this is your 5 minute inducement, this is your build up, this is your London trap, you're just looking for trading opportunities. So this is your 5 minute let, you're just trading on the 1 minute, the mitigation of that let. Trading in line with the whole picture. Okay. So approach number 3 comes with additional entry helper. First thing is the let after the picture perfect play. Then the last one is approach number 4. That is when you missed the extreme or missed the let, then you still can go in the 1 minute and trade the EDM. So you're looking for your next imbalance area, which makes sense in terms of structure in the 1 minute as well. So for example, this one in here, guess what? This broke the structure point here. So this created also imbalances in here. Price comes back, mitigates it, and also confirms it with an EDM. Okay. That's approach number 4. This is the last entry we will always take because they usually are late, as you can see here. That's the extreme. That's the first re-entry. That's the second re-entry in terms of the same approach, just the mitigation of it. And that will be approach number 4 with the EDM, and then done. Again, technically, you got a bigger picture. Maybe this becomes your 5 minute let, of course. after the break of structure, after this mitigation. But again, it's not a cup trade anymore, it's just a continuation of the cup trade. The cup trades, that's all your approaches in here. Okay? So if you put them all together, so if you want to make a quick drawing about them all together, that's it right here. Awesome. So let's dig into the London Cup trade. What we will do, and of course we will show you tomorrow and the day 4 and 5. No, it is day 5 and 6. There you go, my brain. So we always start with the higher time frames, of course. You can always start with the daily, the 4 hour, the 1 hour, and then you break it down slowly. But you always see the bigger picture, and then start lower, lower, lower until you're in the 15. And then, of course, intraday cycle starts with the 5 and the 1. But before you even do that, you need to see the bigger picture of what is going on, understand obviously the cycle and the bigger or higher time frame plays. So if you look at this, for example, what is the 4 hour saying? Of course, we have our what build up in here, inducement of these areas, makes new even higher highs. But finally, we broke these zones in here, creating break of structures finally. So what is going on here? This becomes our extreme, right? And of course, now we're down here, build up, finally inducing this, even this area is in here. So this becomes our decisional. Okay, so what is going on in here? Equal lows being induced. So we know, okay, this is our perfect ideal scenario in here. And of course, we look for something like this. All right, awesome. But guess this is the 4 hours. So now we understand, oh shit, trading away from this inducement, but now we're approaching this decisional level in here. Okay, on a bigger, higher time frame. Absolutely makes complete sense. So now we're moving lower on the 1 hour. And all of a sudden, we see, oh shit, okay. So now we see our beautiful guide Asia range. When does it happen? Right before our perfect decisional on the 4 hour and also extreme on the 1 hour, because this is the structural point here. This broke it here. But again, the whole overall extreme is above here. But this is the decisional on the 4 hour. In this sense, this whole push broke here. So we can take definitely this push as an area of interest. Okay. After the inducement of Asia, to wait for break of structure. Yeah, you will get into that. Just keep patient. Okay. So what we do after the 1 hour approach, we will go into this area in here. Right. This is our 1 hour point of interest. And we're just looking for what? Refining of the zone. First of all, we see this was the extreme, right? But this in here is the EDM, and this is the low of the whole. So this is the 1 hour. This whole thing is the 1 hour. Now we're just refining it as Walker did it. And again, what is this in here? It's also an EDM. This push led to the whole rally in here. So this is your extreme, and this is the push that led to the whole thing. This is already mitigated, and this is your EDM. So you can take this extreme in here for sure, as it's based on the 1 hour, and also this is on the 4 hour. So this is 1 hour and 4 hour. But now you just refine it to the 1 minute and taking this imbalance zone in here, which also was an EDM in here, and this thing started the whole crazy rally in here. All right, and this whole thing led to the whole push. So you already understand, okay, this little candle here must have a huge off liquidity of imbalances. So they will come back, obviously, to maybe mitigate this area. So you're marking out now this zone and refined the overall structure. Is that clear? You have 1 hour. Now we're refining it to the 1 minute, also with combination with EDMs, finding these zones. Okay, makes sense here? Okay, so next thing, of course, we look into the internal play then. So we look into now the 5 minute, and that's how it looks like. So we're having this was all the 1 hour in here. So now we refined the zone to the 1 minute, and guess what? It will make perfect sense with our internal play in here. So what are we going to do? Of course, we dig into the this is the 5 minute in here, right? This is the 5 minute, this is the 1 minute. So what are you going to do? We're just watching the cycle pretty much present its magic. So of course we see the channeling out of Asia, making the minor inducement. not really done yet. So we're looking to the 1 minute afterwards. You're seeing the channel forming. Beautiful, right? So what can we expect? Entry approach number 1, which is the extreme limit order. If we go back one step, we know this is a 4-hour, 1 hour perfect zone in terms of structure. We refined it to the 1 minute. Now we perfectly below that and doing what? We're channeling downwards. So what can we expect? Inducement, right? And look at the clock. What does it say? London open. Perfect. So the whole picture makes sense. So what can we do? Approach number 1, placing a limit order like this. Just with the fill of this 1 minute candle in here, right, with the zone we just refined earlier on, and as we already put in time as well, we see our perfect time window would come pretty good in here. Definitely is possible to achieve in here. Makes absolute perfect sense. So what is going to happen? Price taps into it. Perfect. That's your first entry area for an extreme limit order. Approach number 1 out of a cup trade. So what's going to happen next? Price reacts, gives imbalances in here of what is it? This is the final inducement, of course, but also the huge mitigation of this area of interest earlier. So what's going to happen? Taps into here, mitigates, and is about to form a let. So this is definitely possible to take as well from the extreme, right? So guess what? Taps into it, now locks in the let. Perfect. Meant a little bit into drawdown, but of course, no problem, right? Nothing to worry about. Guess what happened next, ladies and gentlemen? There's your tube. And that's how it looks on the edge. Picture fucking perfect. Okay. Timing on point. Anyways, so now we're switching to the 5 minute again. That's how it looks. So again, maybe you remember this example now. What is going on here? We have our perfect cycle upwards. We have our extreme limit order. We had our extreme mitigation based on a 1 minute let. Now we're having a bigger picture break of structure. Left imbalances in here. Perfect. What is going to happen? Approach number 2 after the break of structure. Mitigation. So what are we going to do? Break of structure, we're placing a limit order right here. Stop goes above here. Yeah, so good question. It wasn't a break of structure on here. But again, what did we cover before? If it doesn't give a break of structure, that's a riskier, not a riskier, more aggressive approach. But guess what? It's based on the let as well, which led to the mitigation. Sometimes it's not so nice. You don't get a break of structure here. That's why we have multiple approaches. And again, it's confirmed with the let, not with the break of structure. Same thing, different variation. Okay. But guess what? If you don't like that, wait for this one. Now you have a break of structure, bigger picture play, 5 minute zone in here. After the break of structure now. Okay. Guess what's coming? Approach number 2. Limit order is set. Price taps it to the minute. What is going on here? You guessed it. Perfect let. So guess what can happen after that one? Approach number 3. Right? So I saw this one, by the way. This one was the first one we took from the extreme as well. This was our extreme. We never had a break of structure, but the let confirmed it. Right? Or we can look for something like this. Trade the let and then the mitigation of the let. Okay. So in this case, we will go in the 1 minute. I can see here. Right? Oh, sorry, say on the 5 minute. And this is again the imbalance that was created after the let. And we could look for only this trade in here as well, because this is again, look at the bigger picture. Perfect cycle, perfect mitigation of a 1 hour zone, perfect timing, now break of structure. So let's say for some reason your limit order gets lost in here or not triggered. It's not in the trade. So what you can do instead, you trade the mitigation of the let. Okay, that's a very late, that's like a lost opportunity, okay, for let's. So guess what? Price comes. We dig into the 1 minute first. So price comes, we're refining this whole world zone and the extreme, and price missed it. No problem. So it missed it. So what? Okay, but at least that's the approach, but we just missed it. So no worries. Okay, so what is the next thing to do? First of all, price crushes down like crazy. So if you took the 5 minute mitigation in here, that would work. If you refine it too much in the 1 minute, you will miss it. But guess what? Price gives you a huge reaction. Of course, so if you took this one, good for you. If you took this one, good for you. If you took for this one, you missed it. No problem, but we're just following our approaches. So guess what? We're looking at the bigger picture now again. We're zooming out because we want to see what's going on here. So we see this is our 1 hour zone in here. We refine it perfectly, tap to the minute. So now we look, okay, we have Asia range induced. But should it reverse here? No. We have time until the next proper demand zone, which guess what? This is last day's highs, whatever. This in here. What is the push that led to the break? It is this in here. This push led to this liquidity grab in here. Again, daily highs and shit, we covered it. Okay, that's the only push that had an impact. Not this one, not this one, not this one, not this one, not this one. This is the only push in the whole scenario which led to a daily high grab in here. Okay, and it's right below here. So guess what we can expect? Can expect price to go at least to these areas on a bigger picture. Okay, so what is going to happen? We go back to the 5, we refine this zone in here. Right, we're taking this demand in here. Right, so now we see, okay, our cycle is starting to continue. Awesome. So we're having our minor inducement here or break of structure, whatever. Right, but trending in line with the trend in this scenario, away from our perfect cycle. Awesome. So what's going to happen next? Last approach, number 4, because we know we still have room to the downside. So now we're waiting for last approach, which is approach number 4, which is an EDM. So we're just waiting for EDMs now. So guess what? We broke it down to the 1 minute. We know we still have room to the low. The only thing we do, we monitoring price for EDMs. What do we have? This pullback in here. Awesome. Break of structure, finally. Extreme already mitigated. In here, no extreme. So this becomes the mitigation zone. And guess what? There's your left. Sorry, EDM. You can take it because you still have a lot of room to the downside. You're just looking for this trade. You don't force anything. Just waiting until it presents. And there it is. You're trading the mitigation. Yeah, of course, that's an internal break of structure. Right? Of course, this is like the bigger break of structure. And this is just this push in here. Again, this just confirms that this will go lower. Right? Internal break of structure. Right? Guess what? I'm taking the trade in here. If you missed the limit order in here, because again, there's the limit order placed perfectly on the mitigation as an EDM, equilibrium divergent mitigation. Right? So it needs to mitigate. If you missed that one, there's another re-entry in here. You can take that one. Stop goes above here. And then, of course, price starts folding over. So you're going back to the 5 minute and you would see something like that. Okay, and you all should know what makes sense in here, don't you? So guess what? You have the 1 hour zone, perfect cycle. But guess what? Now we're starting crazy, channeling downwards. What is going on here? Build up. Oh shit. Timing. What should happen here? What is the zone? Right. So at this point, even if you're coming from a 1 hour zone, you should start thinking, oh shit, like intraday, that's like a perfect cycle, isn't it? Perfect timing, build up, inducement into mitigation with the perfect timing. So what's the next thing you expect? Of course, I will not tell you because you should tell me what should happen next in here. If you see the overall trade, this in here. New trap, perfect, mitigation. First, we expect an inducement, right? So now we're having a build up, staying short of that. You see, timing is literally 5 minutes away. Mitigation zone is right below that. So of course we expect an inducement in here and then look for trades in here. But guess what? The timing will become New York. So if you're New York trader, now you're getting interested. If you're London trader, you're out. The day is done for you. You guess what? How many trades you got with just London plays in here? All entries combined with just London trades. You had your extreme limit approach number 1 to 15. Okay, not bad. The mitigation of the inducement with the aggressive approach 122. Okay, not bad. Then again, you have the bigger mitigation with the 5-minute zone 1 to 10. Okay, not bad. It also was the let. Okay, 1 to 10. I take that as well. Guess what? Waiting for the EDM 1 to 13. Not that bad. So what in the hell? That's 4 just following just the approaches with one little cycle. What in the hell? That's like 50 reward in just one little play on one little day, based on the higher time frames, based on the perfect cycle, based on all the entries. And guess what? You don't need all of those trades. Catch one out of those. One. Of course, we show you how to catch them all, but guess what? You're not playing Pokemon. You don't need to catch them all. You're catching one and getting funded and whatever, getting shit done. Like that's what it needs to be. Don't focus on all the craziness. Focus on the Mona Lisa plays. Start backtesting the shit out of them until you really understand what's going on. Like, don't fucking mind what's going on in here. Like, what? Who the fuck cares? Who the fucking cares? Like, what happens here? Again, you would have the reasons. Oh yeah, mitigation here, magic manipulation minutes. It makes sense, but who gives a shit? Focus on the clean approaches. It's easy shit. Limit, mitigation, let, mitigation after break of structure, EDM last one. Easy shit. 4 approaches after a perfect cycle. Same thing for, guess what? New York. So what do? We fucking do it again. But only, of course, if you're New York cup traders. Because now you're having your New York cup trade. So you're going back on the charts and be like, oh shit, I'm in this zone in here. I forgot to put the chart in here, but you already saw it on the edge of how it looked like. But guess what? You see the overall day and see the overall picture. You understand the overall cycle. And you go back to the 5-minute, like here. And you saw this one, right? And you see, oh shit, London is done. Now I'm coming to play. I'm a New York trader, whatever. And see, oh shit, build up after a full cycle is completed. Gives me the perfect build up before my ideal time window, which is 3 o'clock. Almost to the minute here. I see the build up. I see a mitigation zone. I expect the inducement. So guess what I do? Approach number 1. Limit order here. It's big, but it's clean. Would you miss it out if you don't like it? Okay, but I take the trade 10 out of 10. I don't care if it's like a 1 to 7 because it's clean. You need to take it. It's a really clean cup trade after perfect cycle. Again, it doesn't need to be at 1 to 10 all the time, whatever. If it's clean, take it. Guess what? Taps into here perfectly to the minute, right? But guess what? You're waiting for what? Your other approaches. What is that? Inducement into mitigation into perfect timing, no break of structure, but guess what? Let mitigates the inducement. Like, oh, you what? Oh fuck! I just smashed my glass. Do you understand? Like it's the same shit. It's the same timing. It's the same every shit. It's like the same shit all over again. So if you miss the extreme, look at the difference though. If you take the little extreme, it's fucking huge. If you take the mitigation based off the let on a 1 minute, what the fuck? Just refine your stop loss like by, what is it? Like by 5. What in the hell? And guess what? It fucking tubes out of there like nothing. That's a 1 to 10, literally, what is it? 1, 2, 3, 4, 5, whatever. Half an hour, you're done. 1 to 10. New York cup trade, 1 to 10, easy shit. Based on a let of the inducement, perfect timing. Like there was no re-entry. No problem. You're at 1, 2. There's no approach number 3 or 4. Okay. catch one of those. Good. Guess what? What's the next thing you would look for? EDMs. Okay. London close in here. Guess what London close does? Only goes for 50%. We don't care. Makes a new high. Awesome. We know this is our New York inducement. Perfect. What do you look for? Imbalance. What is that? It's an EDM. Confirms it. It's late in the day though, so would you hire here? No, you would not. It's late in the day. It's almost day's over. Look at the clock. Late. Does it make sense though? It does. Okay. That's how you catch New York trades and of course late trades and all this craziness in here. But again, focus on small stuff. Focus on one of those trades and you're good. Just master them. Okay. It's all coming together, Richard. It will get even clearer with repetition. Because again, think about it. You just like actually start thinking about that. So where in the hell, I don't know. Like just, I'm talking probably about like, I would not say everyone, but let's say majority here. Just imagine 3 weeks ago. Where did you were in terms of your trading? What did you trade? I don't know. But now actually think about what you know so far. Like, it's not an improvement. It's like a different planet, I would say. You just need to really grasp like actually what's going on in here. Because again, like don't ask me like questions like, oh, like what is here? Like why is this push directing in here? Like why do you care like that much? Think about like the overall picture. There's a 1 to 10 waiting here, a 1 to 20 waiting here, a 1 to 10 waiting here. Like why are you focusing on that? Like it doesn't matter. Understand? Like wait for the cleanest shit. And only trade when it's clear. You don't need to catch everything. If it's not clear, stay away. If you're confused, stay away. If it's clear, execute and practice until it's clear. All right, so let's dig into how we can utilize the understanding of cup trades and the entry approaches in like quote unquote live market conditions right on the edge, this time on GU from the 22nd of July. So let's see what we can do in GU. Like probably we find something, right? So if we're starting just based on the 5 minutes and no higher time frame analysis, no too crazy cycle variations, just normal intraday trading, so we get a good feeling for the overall entry approaches. Again, we take still a look to the left, what was going on the day before, and we already can see Mona Lisa day, right? Inducing Asia highs to the high side and London open. Perfect. Messing around, building equal lows, and here takes it out, right? Goes back into the mitigation zone. Inducement low happens in New York trap. What a surprise. And then obviously reversing even all the way back up to here, but never takes out these highs. But even nicer for the day we are in right now, building up this insanely nice quadruple tops to the high side, right? So we had this perfect cycle variation in here. And now we are entering the 22nd in here, right? So we know already we had this juicy liquidity target to the high side. And we also had this inducement to low side, which induced all of these zones, right? Imbalance got filled in here, right? So here, let's zoom into here a little bit, right? That was the last gap, got perfectly mitigated in here. So again, if you look for mitigation zones to a low side, okay, probably this zone would be better, right? And not the extreme, as the extreme already is properly mitigated, right? And now, first things first, of course, let me just make it a little bit more clean. First things first, what we always do is, of course, identifying our build-up, right? So we see Asia slowly but surely builds a really lovely channel to the low side, and we have crazy good targets to the high side. So right, so Asia, okay, makes even the channel nicer. And now we have our first minor inducement out of Asia range. But what's the timing? If you check on the bottom, it's just 7 a.m. So way too early. It's not even Frankfurt open. It's just way too early. Our first timing confirmation is Frankfurt open. So we're not really interested in that minor inducement. Same thing, for example, in here. We had a day earlier. Again, what is this? 7:15. When did it happen? 7:10, right? It's just too early. And then guess what? London comes around the corner and induced this minor inducement because that's when the liquidity comes in the markets, right? Not in 7:10 and not in 7:15. Or, oh, even I'm getting crazy. That's 7:10 as well if you check on the bottom, right? So it's what a coincidence is that they're doing the same stuff literally 2 days in a row. Like that, I think we're kind of stupid or something, right? So guess what? We're not getting trapped into that. Right, but we see overall is staying inside the channel, not induced the channel to the low side or high side, right? It's just in the same build-up channel, right? So let's see what they're doing. And of course, faking around, building these double bottoms in here also, right? Okay. And now, obviously, slowly but surely, check the timing. Oh, Frankfurt open, right? So Frankfurt open technically was a few minutes ago, right? But guess what? Now it's getting interested because we see, okay, it's still in the build-up cycle to the low side, right? Perfect. So we either induce it to the high side or the low side. If you want to get into this area down there, then of course we have to induce the channel to the high side, right? We have to induce this channel to the high side, and we're currently already in a stage of achieving that, right? But also made an inducement low of this in Frankfurt open, right? So inducement high to go lower would be definitely a very good outcome they're gonna do, right? So let's check the M1 for the first mini cycle we could have, right? So we see already these equal lows in here got induced, Frankfurt open, pushes price higher, and boom, then Frankfurt induced lower, right? So this cycle technically could be done. Mini cycle, not again this overall cycle. This channel is still technically in place. This is just a minor baby inducement to the high side, so nothing too crazy. But even that led to new low lows into the equal lows. Again, that is what smart money traders see already as the change of characters, right? They're seeing new higher highs being formed. And then obviously they're looking for buys in here, and that's why they're getting smoked. So that's also smart money trap confirmation, right? Again, they see this already as the elegant desk push into a low low. That already led to the new breaks. That left the imbalances. So they're looking for entries in here and they're getting smoked. That's an L for them. And now we're having our inducement, obviously. And now we getting interested. So we avoid an L, and now we're getting obviously interested for buy opportunities, right? So let me check if I have my pen somewhere. Yeah, I actually have. There we go. So we're having again these equal lows being now induced, timing Frankfurt. We still have to keep in mind that we had our overall quadruple bottom to the high side. We still technically are on this channel. We want to induce it maybe to the high side or more to the low side, but more to low side is kind of unrealistic in the scenarios as we already had the equal lows. I already had a fake breaker structure. We already had a smart money trap. Now inducement low, Frankfurt open. So the best bet you could have is this cycle or this channel getting induced to the high side. Next to liquidity zone would be some sort of Asia midlines, right, in these areas. I already can see a nice smart money trap in here, right? Or like whatever, and then it becomes just a little bit messy. That's probably a smart money trap as well, but we should not pull something out of ours here if nothing is clean in here. We don't have really nice plays in here. So best bet is just to aim in these zones and then monitor price action inside these areas to see for lower time frame confirmations and then trade after build-ups before, maybe timing confirmations, maybe entry hyper confirmations, all that stuff, right? But for now, you would have a very nice understanding what should happen next as we equal lows, timing, perfect, Frankfurt open, first cycle could be done. So if we check now, what's our confirmations we want to have, right? First of all, we had this push. Now again, as we had the inducement, we can look for the next thing, obviously relevant break of structures. Okay, so now we had that. Perfect. So what's the next thing we would look for? right? First of all, we can say, okay, extreme mitigation in here, right? Or we wait for other confluences like entry helper, right? So it slowly has to roll over the equilibrium, and then we can look for lets as well. First of all, it gives us our extreme entry in here, right? Or extreme mitigation, which we could take, but again, we should not aim for the fences here. It should not take Asia high out right away, as we still have to induce this channel. That's why the understanding of cycles into cycle is very essential to have slowly, because just again, this cycle did not take out the channel low. It just induced Asia low. We had a baby cycle of the build up, fake breaker structure to high side, smart money trap into inducement. Now we're ready to induce this bigger channel, then go lower, and then probably take out this Asia highs. See, you have to slowly but surely combine everything we know so far, even on an intraday basis. The play we have right now is obviously this buys into the next liquidity area to induce this channel in here. Timing, Frankfurt open, confirmed it as well, right? So if that's not clean enough, completely fine. So let's see. There you go. Tapped into our buy trade in here, right? So now also entry helper could look something for confirmations, right? So let's see if we have some more confirmations. Okay, doesn't seem like it. Okay, so that's technically what we had in the scenarios. Okay, so we just had the extreme mitigation, not really a clean let in here, right? It's not really that much of a nice EDM we had, let we had, right? So we're just taking the mitigation of the extreme. Risky trade for sure, definitely 100% valid trade. Not a cup trade yet though, because the cup trade would be in London Open. So we already can take a look out for our main time window, which is London Open, right? So it would be right here. So again, if you want to play it very perfectly, as you already saw a lot of times when I did that, or the overall, or even students, right? That again, you can definitely get in and out perfectly all the time, right? So let's see if our quote unquote theory makes a lot of sense, right? So we had our liquidity target for Asia midline, we have the next timing window. So even we know not only when we should get in here, based on this mini cycle, but also when we should get out based on the liquidity target. And guess what? Even when, based on the next time window, start to click, it's insane, right? The next thing is, what do we look for next? Okay, so we already can see, oh, interesting. And here, so we had a build up. First of all, this position runs very smoothly. So this is the build up we technically had like this. Right? And then the question would be, is this build up getting induced to the high side already? Or if we just mirror it upwards and just could say, this still could be in this channel and it's still maybe is not induced yet. Okay, so that's why you're taking the nice touches you had here. 1, 2, 3, 4, 5 touches, right? Then you just mirror it upwards, just press Control and then, oops, obviously have to press Control here, and then you can mirror the line and then just push it to the other side to get a nice channel, then connect it with a next logical point, right? If you make it like this, you have a problem, right? Because again, then you would be like, oh yeah, inducement to the high side. Okay, but then guess what? You're tapping straight into the smart money trap, which you would have here, right below the liquidity, which is Asia midline, right? So again, that's why you should be like, okay, smart money trap makes more sense first, because again, guess what? It's not a liquidity grab for no reason. They want to trap the liquidity. That's why they give the smart money trap first. Because again, they want reversal traders or continuation traders to get stopped out first. So that's why, again, they're faking it in here, giving the false reaction of this very clean and balanced zone in here, right below the liquidity zone, right? Because they want people to get in here and they aim for low lows, right? But obviously that's not what they want to give to them, right? So they fake the smart money trap reaction, of course, right? Same as they did here, right? Look, they do it for one candle, they tap in, give a fake reaction, and then smoke them, right? So that's what they do with the smart money traps all the time. Perfectly fine, right? And before that, they even faked the break of structure in here. Perfect stuff, or the koch, whatever, right? So now you're having a valid smart money trap reaction. Perfect. That's another check on our cycle. variations if you want them. And the next target zone should at least be, of course, Asia midline, right? To grab the liquidity. And then we could look for mitigation in here. But again, it's not really anything nice in these overall cycles. So again, technically, maybe you pull that out of your arse, but what's the reasons for that? Not really anything, right? So again, that's why you should not pull some POIs out of your arse and run extreme orders. That's where these losses happen. Okay, so just stay away if it's not that clean, if you don't have a clean POI, because again, maybe what with this one, maybe this one, maybe this one, maybe this one, maybe this one. No, it's not a cherry picking, whatever. So just wait and aim for the liquidity, and then if in here you get some sort of nice confirmations with timing, entry helper, break of structure, whatever, then it makes sense to look for, but not an extreme. So you stay away. Approach number one will be off the table. There's no approach number one because it's not clean. Okay, so all you do is wait. First of all, small money trap getting induced. What a surprise. And now look what they're slowly doing. So this channel is slowly getting induced to the high side now, right? Perfect. So guess what? Timing right around the corner. And look what they're doing. Now it's very obvious. Again, this one would be the, did it induce with one vector candle? But now obviously it's very clean that this cycle is getting induced to the high side. Again, now it is very difficult to mess that up, that you don't see that this cycle is getting smacked to the high side, right? So what a surprise. What is the timing? London open 2 minutes. So this trade, only a 1 to 6, is out of it, right? Because you aim just for the next liquidity zone. Perfectly fine. Again, you don't know how far we go. That's done. 1 to 6, you start the day off with a very good trade, with a Frank Turius trade, right? We will dig also into that, right? But guess what? Now we're having the next cycle completed. Again, remember what our initial goal was. This cycle to a low side getting induced to what? To the high side, right? So now London open to the minute, and now we can look for a London cup trade. So what do we look for? First of all, London to the minute, right? So this now is the whatever. We don't really had a nice clean pullback for potential break of structures. Maybe this one, or again, this candle led to the new high. So let's see what I actually give. So not too much. Okay. So not really too much going on in the scenarios, right? So if you want to play it very extreme, you could say, maybe we got to see maybe, you can say, okay, this is the candle that still also made the new high. So maybe this is your baby pullback, whatever. So maybe this already classifies as the equal lows, break of structure in here. But again, that's the very aggressive route. But just again, if you look at the bigger cycle play, it couldn't be more clean. Bigger picture channel, getting induced to the high side. We had a baby channel inside there with the build up, smart money trap into inducement. Again, the only thing which wasn't clear is the mitigation to the left. Now timing confirms this baby cycle being induced to the high side, vector candles to the high side, right? Perfect. The only thing now we look for is London cup trade, right? So we could say, if you play very aggressive, this in here would be our point of interest. You see the imbalance is formed. If it comes back and mitigates in here, that's our London cup trade. And what a surprise. They give you the tap. And again, you also can put a stop above here. That's completely fine if you want to play a little bit more safe, or if you want to play it aggressive, you put it back in here, right? So what's our target though? That's our minimal target, our minimal target, right? At least you take out these lows. But again, if you check what's our ideal point of interest to, again, first of all, now we have this channel induced to the high side. So you want to go lower. The only question is how low you want to get. Do we want to take out this inducement, or do we just aim for a mitigation instead? So what you should always do first, just aim for mitigation instead, right? Because again, if you want to partial, it's totally fine if you want to do that, right? So, but for this argument's sake, just get the stop higher. If you put it here, it's completely fine as well, right? But let's just put it the way you should do it as well. If you check the 1 minute again, right? You should put your stop. Technically, you can put it above here, right? That's completely fine. But again, what is this difference? Like not even a pip. So why not play it more safe? You have spread anyways. You have to calculate to the high side. So just put the stop above here. It's completely fine. But if you want to put it like here, that's technically okay, right? But just Now we place it like this. And what we aim for, 1 to 10, right? So you'll notice the architects love to give 1 to 10s out all the time, right? So that's just a thing they love to do. So 1 to 10s is just what they do, right? So this is the last supply demand candle in here. Wick is all the way down here. We just aim for this, 1 to 10, perfectly fine. Induce the channel to the high side, London open to the absolute minute, baby cycle in between, boom, take it. Okay, so let's see how that played out with the London Cup trade. Wow. Okay, so 20 minutes tubed into the, and you're out of it. So now things starting to look very, very juicy because we have this overall cycle completed to the downside. Now we had this really nice inducement high from the channel. We took advantage of Frankfurt, right? We then traded down into London, into the overall inducement, into this really nice point of interest in here. So now, of course, this whole cycle is induced to the low side. That overall cycle of the build-up inducement into, again, mitigation, again, first of all, induced high the channel to go low, vector candles with speed in our perfect time window, as you see with our box, with our London open cup trade, the box, right? So we're perfectly in there, right? So now we can prepare to, again, we always remember, huge equalizer of Asia high, plus technically even being quadruple top, right? So that's at least the target we should aim for if this cycle is completed. How do we do it? Of course, we go to the M1 and we see very clearly this channel is being induced to the low side, no doubt about that. Even give this baby small reaction with one candle, even one more time of this trend line type of thing, right? And then smoked through it, tapped into the mitigation to the left, right? So what you can do now, again, you could do the approach number one. Technically, how it would look like, again, your limit order sits on the point of interest we got earlier, right? Stop goes below it, and then you should aim for at least Asia highs in this scenario, right? So let's see, 1 to 8, not too bad for an extreme limit order, right? But we will see later that sometimes the later entry, like quote unquote later entries, not the extreme entries, can give you a better reward actually, right? The risk reward ratio. So let's see. First of all, if we made shit up here, if this kind of makes sense, right? So baby cycle in between, induced high, induced structure high, right? And then we had our really nice entry, London entry confirmation into the inducement. We had our perfect ideal exit in here. And now we're looking for the perfect day overall. Again, look at it. Frankfurt closed perfectly to London Open. London Open perfectly entered in here, and now obviously we can close it here after this bigger channel is induced to low side, and we tapped into a point of interest, and this overall cycle is completed, and we had really nice liquidity targets up there. Okay, so see, perfect buy, perfect sell, and now we're looking for a reversal trade in here. Okay, so we of course can wait for the other entry approaches for the cup trade. So let's see what price action gives us. For break of structures, again, it can be very tricky. If you run it very aggressive, you even could take this mitigation in here. That technically would be your internal break of structure, right? And then maybe this point, but that's way too far out, right? But for argument's sake, technically that's the only clean pullback you had before the huge down run. But then you had this baby pullback. So if you like that as well, gives the fake reaction of this trend line once again. If this candle then pushes down back to candle to low side, that's completely fine as well. The other thing, again, will not recommend you that, but that's a possibility if you run the extreme mitigation without the break of structure, and that is obviously this right here, right? So if you can check, right? So we had obviously the vector candles. We know the cycle should be done after the induced to the low side into the mitigation anyways, right? Now I tap perfectly into it, even 50% of the imbalance fill. or technically 50% of the POI getting filled, right? And then, of course, this in here leaves the imbalance from here to here, right? Then we take this candle for point of interest, comes back, taps down as well. So that would be a very aggressive extreme mitigation point, right? Mitigation of the inducement. Target would be the same, right? At least 1 to 12s in here for Asia highs, right? Because of these huge juicy equal highs in here, and then quadruple top of the high. But if you zoom out, of course, look at it, 1, 2, 3, 4, 5, 6. We technically had this quadruple top in here as well, right? So that would be a new target we could aim for as well. But from an intraday perspective, at least you partial out in here. And if you want to hold partials in here, that's completely fine as well. So for argument's sake, let's say we took both, right? So whatever, like going crazy here. Let's say we hold one position higher and the other one we close. Let's hold the extreme one. Is that the extreme one? No, that's the mitigation one. Let's hold the extreme one because it's only 1 to 8. Let's say you hold this one until here, 1 to 13. Okay. But the good thing is we have multiple other entry approaches as well, right? So we had our limit extreme, we had our mitigation without a breaker structure. Now we can wait for breaker structures and let's all that stuff, because even entry helper not confirmed anything so far. So let's see what price action does. Okay. First of all, we should not get shaked out here, right? There's no point of pulling break even too early in this stage. And now they're building not a breaker structure, but a equal high. So that's technically a build up in here, right? So the only thing we're looking for now still is a let. And look at the timing, 10:30. What is that? Magic manipulation minutes, right? So definitely if a let happens in here, which this one, if that one have been a let, that would be the absolute moaner, right? Technically not need a nice mitigation to the left in here, but technically magic manipulation minutes, if that would be a let, which it was not, that would be perfect. Even equilibrium turns to the upside, right? So that even gives you additional confluences, and that obviously would be your Mona Lisa let in here. Technically, sometimes we talked about it, sometimes equal highs and not the break of structure is even nicer, because again, it gives retailers the crazy resistance confluence and they're looking for sell trades. And again, a break of structure is the Koch whatever for smart money traders. So sometimes equal highs is even nicer. Technically, again, if that's a let, that would be your Mona Lisa trade in here, but it's not. Just for argument's sake, we say, okay, we do not have this entry, even if it's a magic manipulation minutes to the minute, even that we had the equal highs, even that we had an extreme, even that we had an extreme mitigation. The only thing it's missing is a let in here. Timing perfect, but let's just say we didn't have it. Maybe we see, oh, okay, now obviously the vector out of it, right? So they out for this one, okay? So we have to wait. The good thing is, again, technically we missed this one, but let's see what they did in here. Obviously the left imbalances, right, from here to all the way up here. So if they come back down there, then technically this is another opportunity we could look for. And again, the next thing would be an EDM. What's our next perfect timing? Again, you have the cheat codes already. Is magic manipulation minutes 2. Okay, so you already know, okay, something in here. If it taps in here, okay, would be very interesting. So let's see what price action does in the meantime. Right, so okay, what's going on here? Just another build up, so that's really nice, right? So if they give a build up, you mark it up. Right, so okay. Again, always use this one, like where you can see like the touches like 1, 2, 3, 4, and then mirror it up. It will help you a lot to understand when the buildup is done or not, okay? Like getting induced, right? So let's see what they did to the buildup. Okay, first of all, induced low, the buildup, okay? And then see if they induce it high. Like first of all, they should go higher now, inducing it a little bit to the high side. And again, what's going on here? That is technically your smart money trap, right? Not even technically, but even realistically. And look what they do. They tap in here, give the false reaction. And I think slowly but surely you see how they inducing the smart money traders. Because what do they look for? Kochs, right? So this is again the push that led into the mitigation. obviously they're looking for sells down here. So guess what is going to happen? They want to induce smart money traders. What's the next structural point smart money traders could look for stop losses? This push in here, right? Again, first of all, you're above the zone, but second of all, this little pullback in here, or obviously the extreme all the way up here, but that's very unlikely, right? So if this is the structural inducement to the high side, that also would induce the channel, whoops, to the high side, right? So we also can see timing and obviously price perfectly. When should it happen? Again, that's the cheat codes where you could see sometimes when they should induce it, right? So at some point it's getting ridiculous of how what you can see, right? So let's see a little more. Okay, and what was the price? That obviously induced the structure, induced the channel to the high side. Now you can't even argue it. You could be like, that's just a wick, blah, blah, blah. Okay, but now obviously it's induced to the high side big time. Okay, also induced the structure. So now we can look for sells into this point of interest. Do you see how that works? It's very important. Again, that's literally the cheat codes of the market right there, right? So technically, that's your vector candles out of it, structural inducement, smart money trap, false reaction, false Koch, right? Boom, into inducement of the channel, into inducement of the structural inducement. Now this is your extreme mitigation. If this gives you mitigation here, you could run the hedge straight into this point of interest. That's all the time possible, and you saw or seen us doing that a lot of times, right? So let's see if it gives it to us. No. Okay, so that didn't give it, so it's completely fine. So what's the next thing for baby cycle confirmation? Look at the entry helper. You know this cycle is done. That's your extreme, right? Perfect. We never had an extreme limit order. You should not run any limit orders anyways in like scenarios like this, right? The only limit orders is for London, like cup trades, New York trapped cup trades, stuff like that, London close, and limit orders, but not in the middle of the range. You wait for confirmations, right? So that's your pullback. Again, build up, inducement, relevant break of structure. That's not a push into mitigation. Then obviously it makes kind of sense. Then you have let confirmations if it gives it, right? So let's see. All right, so they're messing around even lower. We're still having the entry helper in mind. You know what to look for next. All right, so let's see. First of all, now we have a proper break of structure that could look in the push. So now we technically even could look maybe for something like this as well, because that's the push that led to the new break in here, right? And again, entry helper, if it gives us a let, that's a possibility as well. Okay, so not on let yet, but tapped into the zone. And now slowly but surely we could argue that's definitely can turn out being a let entry. Okay, so just for argument's sake, here could be your entry right here as well, right? So 3.6 pop. And again, you target your ideal Mona Lisa target is this point of interest and here. And then you trade literally everything up, down, up, down, up, down. Okay, so let's see what's going on in here. Comes lower, perfect. Okay, comes even back. So if you pulled break even, that's a break even. In my opinion, it's not really something you get shaked out because it's still a let as well. So even a clear let, if you even say, oh, there's a gap in here, now it's definitely a let, like no doubt about that. But that's nothing you should shake you out, right? Something that even gives you more confidence that this is now even a better let. Technically, you could say, yeah, this missed the let. Now you have a clean liquid equilibrium touch, perfectly fine in the zone, makes still perfect sense. So that's something completely valid still. Okay, let's see if you match it up here, but looks good. And boom. Okay, so now obviously we're playing the perfect day in here, right? Again, Frankfurt plays perfectly closed, London cup trades into the inducement, London cup trades away from the mitigation, away from the overall cycle, into this. Again, the perfect thing would be if we would trade at this extreme, but that's done now. Never gave us the mitigation here, but we had this optional zone in here with the let in here, perfectly fine. 1 to 8, we don't say no to that. But now obviously the better trade appeared, which we looked for anyways, is this mitigation of the imbalance on filled the imbalances. And what's the thing we look for anyway? So that would be a let entry, but it wasn't a let. So what's the next thing in line? Maybe you see it on an entry helper. EDMs, and you can see this push is obviously way lower than here already. So it's an EDM. Okay, so take advantage of that. If you get the additional comments we look for anyways, what's the next timing window we looked for in the first place? Magic manipulation minutes 2. What's the timing here? So 15 minutes is in the range. We give it a little buffer because again, it will not be to the minute all the time perfect, right? What else do we have? More confluences maybe, right? So first of all, we build this build up to low side. Again, 1, 2, 3 touches, getting loose to low side. What's the other build up they show? From here to here to here. Right, so technically you can make it up like this, right? So 1, 2, 3 touches. That's technically the fourth touch, giving a false reaction, getting induced to low side as well. So again, 10 traders, they want to see 1, 2, 3 touches, getting another touch, and then obviously look for buy. So they're inducing also this channel upward or this trend upwards to the low side in magic manipulation minutes into the mitigation in here. So actually perfect, being an EDM as well. That is really, really, really solid stuff. And technically, we talked about that. That could also be your overall break of structure. We had the inducement to the high side here after a channel. Induce build up slow here, induce build up slow here. And now we're having our EDM away from our extreme mitigation. That's the mitigation of the inducement. Only thing missing was the let in magic manipulation minutes 1. What a surprise. And now we're treating the EDM away from it. So picture perfect shit. What do we aim for? Again, at least Asia highs, right? What is it? If you make it properly, right? So something like this, 1 to 15. Not too bad at all for Asia high trade. Perfect cup trades scenarios, right? Re-entering the cups. Extreme mitigation. Again, technical break of structure mitigation. That would be this one now with the let, with the EDM, the let we missed in here. Okay, so let's see if we match it up. Well, look at it. Absolutely gorgeous. Okay, and done. Okay, so let's see. That worked out pretty bad. Not too bad, is it? Okay. So let's see for the next things we look for. And again, we already can see what they're trying to do here. We look for the next build-ups and we could see, okay, 1, 2, 3, 4 touches to the build-up already. Okay, so if they induce the build-up to a low side, we could look for even more entry confirmations. Okay, so let's see if they stay inside. Okay, so we would be very careful of marking up a build-up high here, right? Because it's not clean. If it's not clean, then don't make it up. You're always on the safe side here. Okay, so let's see what's going on. Right, so first of all, we have this kind of anti-confluence EDM in here. So again, if you really wanted to play the absolute insanity day, you already have the options to do so at this stage. Think about it, how crazy that is, because again, this is your anti-confluence EDM. Why is that important in this scenario? Again, that's something you should not do. I'm just telling you, you could do it, and we showed it obviously a lot that you can. And obviously you should know how we do that. And now we have this anti-confluence EDM. Why is that interesting? Because you want to induce this build up to the low side, right? So we just aim lower of this build up and want to induce it to the low side, right? But our overall direction is of course long, right? So let's see. Okay, this even holds into it, right? So you see this is even nicer now. So this build up is highly confirmed now. Right, so technically this is still possible to hold, but again, it's not nice trades you should take. It's just for your understanding basis of how you technically, if you really wanted to flex over your friends, how you could do it. Right, that's nothing you should whatever you should do if you trade like millions of accounts and stuff like that. It's just something you do because you understand literally how the market works. Okay, so just wait. And there you go. That's the ideal scenario would happen because now we induce the channel to the low side, faked obviously the smart money trap in here, right? So again, smart money traders getting very happy about this reaction. And they see, oh, it holds 3 times, it's even stronger than even resistance traders, support traders, blah, blah, blah. Like supply trader, all this craziness, they're all being very happy about that. They're getting the koch, whatever in here. We know it's obviously the inducement of the buildup. Okay, so technically you could look for longs in this scenario now, but obviously at some point we're just going too crazy with like all these positions. But you see, how we literally can do this slowly but surely all the time. So let's not get lost into the details too much. Okay, so we expect obviously higher price action. Perfect. Same stuff in here. So what we have in here now, same stuff. Look at the build up. Right, so mirror it up. Right, to see. Okay, perfect. Right, so it's technically still kind of in the channel, induced low here. Right, so perfect. We look for more continuations high. So this is your inducement low. Perfect, right? So technically, again, that's how the order flow is very solidly created, right? So again, when they have a build-up into inducement, into mitigation of the order flow, not an EDM though, so we're not too interested about it because we have more confluences, the more the better. So that's something you could take, but it's not our ideal scenarios. Our ideal scenarios, again, is EDMs confirming the moves as well. But technically now we know, okay, build up, inducement, that could be a nice POY for potential new mitigation. Why? Because again, we also left imbalances in here. So let's say for an order flow approach, this could be a possibility, just a little bit too big. That's what she said, right? But anyways, now we see it's going on, another build up, another inducing low side if it taps in, which it does. Now look at it, how juicy it is. On the entry helper side, filling the imbalance, right? What does EDM stand for? Equilibrium divergent mitigation, right? So guess what? We have our equilibrium being divergent, right? And now we're having an obviously mitigation. Order flow, still trading away from that. We never took out Asia high yet. We start having crazy nice mini cycles in all around in here, right? But obviously our overall trade should only be the extreme mitigation, let entry, which we missed, EDM trade, and obviously now we can trade another EDM into confirmation, right? What's the next ideal timing window we have for absolutely 10 out of 10 trades is, of course, New York Trap, New York Open. What a surprise would have given this entry in here to the absolute minute. And you see how insane it is. Like how insane the timing is as well. It's the absolute perfect compass. Look at it. New York Open gives the perfect inducement. That's what New York Open should do, trapping a move, right? For New York Trap to take it out or mitigate it in this stage, mitigates it, right? So perfect. Again, if you say now, okay, I want to take this, always not a sell, but a buy, right? So let's see how that would work. Like what is the stop? 6.9, just a little bit big, but for argument's sake, 1.8. Right, so you can of course wait for the refinement. Right, so what is the refinement? Either break of structure or mitigation. Break of structure or no mitigation. Oh my god. Break of structure mitigation or no break of structure mitigation. So now we have the imbalances from here to here. We know this is technically our EDM trade. So we can trade the mitigation of the EDM like this. Okay, that's definitely a possibility you also can do. Or again, if you want to just be in the trade, again, that's how your personal reference of how you refine these zones sometimes, because again, the wick is from this candle. So again, either take this candle like this and the low, or you still stick to this candle overall and you just take it like this. And in this scenario, that would even be a little bit more sense because again, this candle wick down there, and this is technically your point of interest candle in here. Same thing as we had it in here, right? And same thing as we had technically this one. Yeah, technically we could take the same one in here because also the wick is with this candle, not with the black one. So that is again the way of how you want to refine these zones overall. There's multiple preferences of how to do so. Usually I go with the one which made the last balance one, right? And then you can technically take the wick one. So in this scenario, you could also take the black one in here like this, or you can refine it back to this candle, whatever you feel like more comfortable with and how accurate you want to be. But if you want to be tagged in this scenario also, because the wick is down here, is this candle. Okay, this is your supply demand candle, right? Other way around, if this wick down there, you should take this candle instead. Okay, same thing as this. So if this candle wicked it down there, that's why, again, this is a little bit lower than the black one. So that's why you take this candle instead. And low goes obviously here. right? So, but again, play around with that. I guess that's not a perfect rule because sometimes they go for this candle, sometimes they go for that candles. So you have to find your personal preference of how to refine these points of interest, because sometimes if you over refine it to like this candle, then again, you leave the risk of missing out a lot as well. Okay, so just massage it a little bit around, and then you will find your personal preference of how to refine these 1 minute candles as well. Okay, or you go to the M5 and just say, okay, in this scenario, nothing, right? But you could also say, okay, let's get the M5 candle overall, and I'm fine with that. Okay, that's perfectly fine as well. Sometimes even is better. But for argument's sake, in this scenario, just take this one, right? So to refine the entry of the EDM, mitigation, what does it do? Mona Lisa shit, building the equal highs in here, right? So that's, again, better be covered. Same thing as we had it in here. Sometimes they give the equal highs, even nicer. Equal highs, if they tap into the mitigation, take this freaking trade. And look at it, timing. Should I say to the minute, or you want to say it? But you can see it anyways, right? So here we go. That's your 10 out of 10 trade. Mitigation of the EDM, overall trading the overflow over and over again. We had this build up into inducement. This gives us the PDY point of interest for the EDM, right? And this EDM obviously gives us a mitigation. Oh my God. Okay, so you could again, same thing, aim for Asia high, or let's say you're all still in this trade in here. Same scenarios, right? You go higher and say, okay, I have my extreme one running as well. I have a lot of targets, Asia high. Let me go one for the next medium inducement one, and then look for reversals over in here. Okay, so perfectly fine as well if you want to do that. So you have 3 trades running safe, 2 trades running more aggressive, perfectly fine. Okay, so let's see what's going on in here. All right, if you made stuff up, looks good. Entry helper now finally goes over the equilibrium, right? So what's the next thing we could look for? Let trades. Okay, not sure if you saw that, but that technically touched the let. But let's say if you get like cleaner ones. Okay, that's definitely a cleaner let in here. Okay, so technically, again, nothing I would recommend you taking, but technically this would be your let entry on the M1 after the EDM. Again, just playing order flow now. We still have not our targets achieved by any means. So again, if you missed out everything and you just want to get into this move, there's your new opportunity to get in as well. Okay, so let's see what they do. Okay, oppa, and just tubed out of it. Okay, let's see if our target is met. Definitely our Asia high target. Just smoked through it like nothing. Okay, so let's see. Now we're aiming for the medium inducement in here. Perfect. What's the timing? New York trap time. So if it gives us a perfect cycle overall, a perfect starter kit, then obviously it should take out the liquidity in here. We should not get too excited about it before it takes it out. Okay. And boom, there you go. It literally took 5 minutes more wait to literally get not trapped into whatever maybe, maybe reverses here and blah, blah. No, takes out the liquidity perfectly fine. So now we go on the M1 to look for potential reversal trades. Okay, because now we have a medium inducement. Perfectly fine. Again, back the candles. Nice. Medium target also achieved just by a little bit. Again, could induce higher a little bit more. Again, doesn't mean if it takes it out by 1 pip, it has to immediately reverse. Right, so that's again why these reversal trades sometimes are a little bit tricky. You should not get caught into these false break of structures. Again, that's what retailers and small point traders look for. You need to be smarter than them, and I'm pretty sure you are. Okay, so what's the things we look for, right? Okay, now you go, there you go, induces it even higher. But now you could also see something interesting. Build-ups, 1, 2, 3. Okay, look at it, build-ups, 1, 2, 3. So yes, you are in a medium inducement, 100%, but what is this on M1? Is the channel being induced to the high side? No. you have some sort of vector candle for sure to give again the false illusion that this is a medium inducement. And here already, I mean, this is a medium inducement, don't get me wrong, but it's not maybe ready to reverse yet. So what do you wait for? You see this build up getting induced in what direction? To the short side, exactly. And what's going on here? Fake break of structures. Fake Koch. What do small point traders look for? Mitigation in here. Okay. What do we see as well in these scenarios? Right? So this is another push. That higher. The push is here. What is this? It's an anti-confluence EDM. See this push right here? This push right now, anti-confluence EDM. So it's just better to be safe and stay out of that than to make up a reversal trade just because it took out this medium zone by a few pips. You can do one push higher to stop out small point trades and then be ready. Okay, but just be always aware of reversal trades. Okay, and let's see what we have. Again, now, if you have some sort of let confirmation, or nothing we would be ever interested, but just an anti-confluence. Again, for the ideal Enigma method, it's the best scenario they can do. Faking the Koch, or a change of character, giving the small money traders reasons to enter in here, take them out, and then reverse in a medium inducement zone. That's always the ideal scenario they can run. So let's see. Boom. Takes them out. Okay. Very interesting. So again, are we done yet? We don't know. We just don't make shit up. We react to what's going to happen. Okay. But now we have a very good understanding. Build up, inducement low to go higher, medium inducement zone. Right. If you check again on M5. Nice medium. 1, 2, 3, 4, 5 touches to the high side. Now it gets taken out. Small money traders are already trapped in. Right. So now we can get very interested. Right, because we know everything is grabbed to the high side, perfectly fine. Everyone's got stopped out, right? So let's see what we wait for now. Build up, inducement, right? Relevant break of structure, maybe. Right, there we go. That's our relevant break of structure of the day. All got stopped out with the build up, fake break of structure. Small money trap in here. It becomes a for fuck's sake. Getting smoked. Everything is done now. Okay, we have this overall cycle, obviously induced to a low side. Now take out Asia high, took out medium liquidity. Huge vector candles, baby cycle before price action might be done. Lovely, lovely stuff. Okay, so let's see what we can do. First of all, we have our extreme mitigation. That's very unlikely to go all the way back here. Again, we can go to the M5 to see, okay, it's still imbalances. That's our point of interest right here. Something like this, right? If it's not clear in M1, which is not, right? Which point do you take? All the way up this one? Not really, right? So you take the overall 5-minute candle, still very good. You would have a structural inducement, perfectly fine, right? And then let's see, what's our next timing window, which it should mitigate something. London close. It's right around the corner as well, right? There we go. So let's see. We have our real break of structure, relevant break of structure right now. Cycle is overdone. We have a baby cycle before. Induced small point traders high one more time. Breaker traders already very excited about this buy trades, right? But now we have a relevant break of structure in here, right? So we had anti-confluence before, build up inducement, anti-confluence EDM into higher highs, right? Induced even more. Now it's ready to reverse medium inducement as well. Okay, so let's see what they're doing. Building up, equal highs in here. So if it takes it out into a structural inducement, even building up equal highs in here. So look what they're doing, building up highs, building up highs. So now again, it would be very juicy. Boom. There's your tap into it, right? And that would be a lost trade of the day based on the 5-minute mitigation, right? And what you should aim for, depending on your overall chart vision. Again, you could aim for, as it's the last day of the last trade of the day. Again, liquidity getting low. You could aim for this mitigation here. Again, you should not aim for new low lows or something like that. You could see whatever, like the overall channel, what they're trying to build in here, right? With the whatever, the overall buys, whatever, how you can draw that, like something like this, 1, 2, 3 touches, whatever they want to induce it at some point. Whenever you could aim lower in here, you could aim for this zone, right? That's all possibilities you could do. In any scenario, that's not the best trade anyways. As you can see from the risk reward, it's only a 1 to 4. I just show you how you could trade it. Again, let's see in the M1 if you would have better entries. Okay, so first of all, we wait. Okay, London close right here. So we see the purple line. London close right here. Okay, perfect. Looks okay. Now again, we have like this minor internal breaker structures. If you want to refine it now, which you could, to get way better risk reward on that London close trade, would be right here. Let's remove the big one for argument's sake and say this is your better one. Okay, and all of a sudden this would be a 1 to 10. Okay, so not too bad. If again, wherever you want to aim for, just saying the day gets very late, this would be a good trade. Okay, for the last trade of the day, let's see what they did. Mess around. Okay, do they hit our target before the day is over? Okay, at this point, it's probably just wise to close it out because it's getting very late and you're getting probably choked out with whatever that is. 1 to 1 to 4 only. Okay, but overall, that's definitely a very good reversal trade you can take based on London close, and then you have to wait for the next day to give you something properly. Oh, okay, first of all, it did exactly what you wanted anyways, but it's just too late. Okay, so if you want to hold it, it's fine. If you want to pull it break even, or if you want to close it getting choked out at 1 to 4, something like this, because you think, oh, day is getting over, whatever. But now we did our ideal play, hit our target anyways. Okay, so did even aim for this last mitigation in here, right, to end the day off perfectly fine. Okay, but then we have to wait for the next day, but we already can see for the next day, okay, this is kind of the trend they're trying to show. They give the false reaction in here, and then obviously induce this trend to the low side. Okay, so that with that in mind, we have also a good understanding of what should happen in the next day in here. But yeah, there you have it. Like that's technically one day in Intraday Wonderworld with like cup trade approaches, everything you know so far, and how crazy can it look already? Like 1 to 6, 1 to 11, 1 to 12, 1 to 13, 1 to 8, 1 to 15, 1 to 8, 1 to 12, 1 to 7, everything in one day, like depending on how you held this one, right? So it's insane. So now again, you have the cheat codes already. And now it's ready, or you're getting to get ready for the cup trades. Again, you don't need to trade everything like that. No, trade the clean cup trades, like maybe whatever the mitigation here or the EDM in here. That's 1 to 15 a day. That's all you would ever need. Okay, or the London close reversal New York cup trade in here, right? New York cup trade would be the continuation in here. Right, perfectly fine with the EDM or the M1, or the mitigation after it, or even the let after it, right? Or again the London close one. But there's an abundance of trading opportunities every single day. You just need to train your eyes to identify them properly, and also on the edge of how we just did it. But as you can see, it's endless. Okay, there's so much possibilities, and again, you should understand technically every single trade of those already. It's not that we pulled something out of ours which you don't understand. No, you should understand everything in here. Maybe something is very clean for you, maybe something is not too clean. But again, the key essence here is you don't need to understand every single thing in here. It's good enough if you understand 1 or 2 very clean for your personal trading style and pick one of those multiple entry opportunities. And that's again 1 single day. Okay, so pick your cup trade, backtest, 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 forward test, practice on the edge, practice on replay, practice live market conditions, pick your cup trade and pick your entry approach. Okay, so enjoy the rest of the cup trade examples and slowly but surely get your head into it. additional confluences. This also will be a command for you guys. So again, you have the LED confirmation, you have the EDM confirmation, you have, of course, Asia high and lows. Like, of course, if you reacting from this stages in here, maybe in here, this is an EDM. These are really powerful, by the way. You will see them a lot. Then, of course, you have Asia midline and actually mitigating Asia midline, or if you never broke out of Asia first, you will induce it. And then, of course, you're trading the inducement trade away from Asia or into the inducement. Then we covered the liquidity zones, like which usually always get induced, like which yesterday's highs or weekly highs, right, or lows, of course. We also covered the day open price, which we will dig into a little bit more today with some examples, because again, sometimes price always comes back to react on these zones. And finally, we covered the whole cup trades and how to approach them. Okay. And just a quick revision of what the liquidity or the liquid equilibrium touch is. Again, we just combine it with our stuff you already know, just to adding more confirmations. Again, after the break of structure, you're waiting for the mitigation. And if that shows you a LED, which is, of course, the black line is the liquid equilibrium, and the purple line represents price. And if price actually touches the equilibrium, it's technically perfectly mitigated on an equilibrium side. And that's, of course, when price should start continuing. And by the way, just for repetition, this is an approach. Sounds so simple. That is what Rentax use on a daily basis, which made them the biggest and best hedge fund in the industry with this little approach in here. So don't underestimate that shit just because it's a little indicator. I know it's definitely very, very powerful. Okay. So then, of course, we had our EDM setup, which not getting confused with like the normal divergence stuff. It's not a reversal. It is a continuation. And why do we use it? We will not never look at diversion at any means. We only combine it with mitigations of the higher highs break of structure, maybe in here, right? So if, oh, that's horrible. You know what I mean? Of course, if we have something like this after a break of structure in here, the next higher high, we're looking for an EDM, which already mitigates something, leaves imbalances, and that provides us a continuation trade. And that is the third and final approach of how we enter the trades if the whole cycle aligns. Again, extreme entry, maybe this being a LED, and then after an EDM in that order. And that gives us a pretty solid structure we can follow to approach trading on a really good basis. And again, if you combine it with the EDMs, with the LEDs, it becomes even more powerful. And again, you should not look at random LEDs on random EDMs. Always look at price first. Always price action first, and only if price action makes sense, then you grab out the entry helper and then see if it is an additional confluence or an anti-confluence. Okay, anti-confluence means if whatever you're looking for a reversal maybe in here for whatever reason, and you think this might be a reversal in here, I don't know, maybe this was an inducement, I don't know. But then again, you look at this scenario in here, maybe you have an imbalance in this one, and then the entry helper says, oh shit, you're having an EDM. Again, you better not looking at this in here because price is most likely going to make a new higher high and starts continuation. And in general, always picking reversal trades, always more dangerous. The trading in line with the overall cycle is always better. Okay, so never force reversal trades by any means. Okay. So then we have covered also the cup trade entry approaches and what did they were. So pretty much we had the extreme entry, which always, again, best case, this is London open or New York trap time. You always have a smart money trap before that, right? And then of course you can break this down of, like, let's say this is the 1 hour, you break the whole thing down, you're finding your in balance areas. So let's say, as we covered before, let's say you have your imbalance from here to here, getting for this candle, you mark out this candle, stretch it all the way out, and this is usually where price mitigates these areas. And again, if this lines up with the cycle and price, you can have a perfect limit order. Of course, this needs to make sense to the left as well. Maybe this is your extreme or your decisional or your efficiency of the pullback areas, right? Of course, and then it needs to line up with build up, inducement into the mitigation, into timing. So you're just lining stuff up. Okay. Then we're having our second approach. This is if you don't like extreme orders, that's completely fine. If you don't like limit orders, you have two ways of approaching it. You're either making the aggressive approach, which again is more if you're getting more used to the concept, you know what you're looking for, then you don't need a break of structure, you're just trading the mitigation right away of the inducement when you know the cycle is over. Or of course, the much more safer approach is wait for the break of structure, and then you trade the mitigation of the inducement. Okay, that's your two variations. You always should stick at the beginning for this one, but again, the more experience you get, because of course the more, definitely way more outcome you will get on those, because they happen way more frequently than of course these. They are more rare, but of course they're way more safe, they're way more secure. And if you only focus on those, you would miss of course a few picture perfect plays like this, where they just don't give you break of structure first and then they never come back to these areas. So at some point you need to decide, again, first you're starting out with those, but then the moment you realize, okay, maybe I missed a few very, very clean examples on a bigger picture, then again, you can start digging into those, but you always should start with that to get a better feeling for it at the beginning. Okay. Then, of course, we had our approach number 3, which is then combining it with the entry helper to get even more clarity. What we have a mitigation area, which also becomes the let entry to give another perfect check on our checklist to make the whole thing even prettier. Or, for example, if you don't have a clear mitigation, let's say like all the candles are connected, you're looking something like here, like everything is properly mitigated. And then again, price comes back in here still, and this fires the let in here. You technically don't have a perfect price mitigation, but you know, okay, the let confirms that you can still enter this trade. Stop goes above this area. And then again, you're just trading the equilibrium mitigation and not the price mitigation in the charts, but in overall the calculated equilibrium mitigation. Okay. That's how it helps you to, if price action is not clear, or if it's clear with the mitigation and you're having a let, that's a perfect combination and it's the most powerful one. Okay. Then of course, the most powerful one you can always have is if you have, let's say, like in here, oops, like in here. Oh my God, let me draw it again. Let's say like this, and you're having a break of structure. There's your imbalance. Then it touches here and you're having a let. That's the most powerful one you can always have. And that's a must take if you have a break of structure. Often inducement is being New York Open, New York Trap Time or New London Open. Then you're having a mitigation and it's being a let. That's 10 out of 10 trades aligned with the whole world cycle, build up, inducement into the mitigation to the left, whatever. That's 10 out of 10 trades. That's the ones you should focus on. You should never miss. You always should monitor price about these setups, because if they appear, that's like literally gifts from the architects to you. Okay. Then we have our next approach, which is same approach, but still a different time frame. You're having your 5-minute play, and then this zone in here, which is also the mitigation on the 5-minute. But for whatever reason, you missed this on the 5-minute or the zone was too big. Then you break this specific play in here, which is the let and the mitigation of the 5. You break it down to the 1 minute, and you should have something like this again. If this is the 5-minute let in here, you're waiting for mitigation of that 5-minute let on the 1 minute this time. And then you're placing an entry here and stop loss above here. And that's how you approach it after it happened, and you break it down to the 1 minute. Right, this is the M1. I don't even know what the hell that is. And that is the M5, of course, right? Like this. Okay. And that's the next approach you can do. And then we have our last and final approach, which is the EDM trade. So let's say you missed the extreme, you missed the let, and there's a lost chance, which is the EDM trade. And you're just trading in line with the trend now after break of structures. You're finding your mitigation zones, which also make sense in price action. Let's say this is the new formed lure low. This push led to it. You're finding your imbalance area. And the moment it gets mitigated and you also get a confirmation with the entry helper, you easily can trade this EDM trade. Stop goes above this zone and you're trading in line with the trend or the completed cycle. And we do another one, of course, right? So we start, of course, with the higher time frames as usual. So what are we doing in here? So that's September of AU, by the way. So to understand where it's going, we need to look what already is going on. So what do? Of course, we see higher time frame break of structures. In here, we see now momentum switch. Okay, so we're taking obviously liquidity up here, making high highs, and also in these areas. Okay, so induce and mitigate on this day, and higher time frame means they will likely want to move lower the next day. Of course, if you have like an inducement already, now you're in a mitigation zone. Of course, you expect obviously a reaction after that. So guess what we did? Okay, awesome. We're still on the higher timers, by the way. So this already by itself would be in cup trade on a different day. But now we wanted to react a little bit more, and we look for directional confirmations, because guess what? We already did what? Induces low to go higher, to likely induce the next day high to go lower later. Always think a few steps ahead what they're trying to do on every time frame. So now what we will do, we go on the 15-minute to see what is going on here. So on the 15-minute, we get a clearer picture of what it could do today. Again, how always combined with Asia range to expect like the place they wanted to do. Okay, so what we do now, we're going into the 5-minute. Awesome. So a closer look shows that they are creating these equal lows, right? And potentially saving that mitigation below for later. That also can always be a possibility. As you can see here, that looks like a mess in here. Guys, and not always need to take it out immediately. So what are we doing now here? Channeling upwards though, right? Okay. So guess what? Get Asia inducement out of London, but remember the cycle isn't completed. It's just timing that was induced. We have no other confluences. Again, you have no inducements whatsoever and no whatever smart money traps. But then again, you need another mitigation or inducement after. You don't have anything. You only have this minor smart money trap in here, but of course nothing else in terms of the cycle. So what do you do instead? You're waiting for reaction. Pullback is necessary, of course, to fake what? Huge double top. Obviously faking retailers low, channeling downwards. Okay, interesting. So what is this already? Smart money trap. You can expect that. And guess what? Finally, we move pretty much in an area we're interested in. And when does it happen? Of course, in New York Open and its play. So confluences of events are lining up finally, right? But we did not do anything until it's clearer. So what can we do at this point? As we see, they created equal lows like crazy. We know that on a bigger time frame, we wanted to go short now. Now on internal play, we never had anything in here. Channel downwards, inducement high, faking the triple bottom or the triple top first, giving false reaction. Smart money trap finally timing confirms the push into mitigation. What is the new confluence you learned? Imbalance, odd. What is it? Asia range. Perfect, right? Awesome. So what's going on in here? Entry approach number 1, right? So where's the midline reaction in here? Now it's the high, if anything, right? So again, channel highwards, bouncing off of that. Again, this is possibly a buy trade in here, but again, we're focusing on the cup trade in New York this time. Okay. So guess what? We can do an entry approach number 1. Right. So what we're doing here, we're refining our zone. Perfect imbalances in here, lining up perfectly with Asia midline zone. Awesome. We now see, okay, perfect, creating a lot of liquidity. So we're good for this smart money trap to be induced. And we're going for the liquidity zone, which is Asia midline of this current day, above all these areas of liquidity, and timing will align properly as well. So what we're going to do, perfect reaction into here for our extreme mitigation. All right, so now look at the M1 in this case, right? So why the Asia midline in here? Because you always line up with liquidity zones that make sense after the timing says you're ready for something big in terms of the cycle being not completely to the upside. Equal lows in here, equal lows in here. At some point you need to grab this liquidity. They're cycling up all day, trapping now sellers, right? Smart money trap into inducement, into mitigation of this liquidity zone in here. What does the giveaway? Perfect timing. If you check the box, it's almost to the minute. 1 minute delay of New York trap time. Perfect. Confirms the whole cycle, right? So the limit order is good to go at this stage. All the confluence line on that. Okay. So guess what? You're getting the same thing all over again. You're having this as an inducement at London Open, at New York Open, sorry. Guess what? You're having the mitigation areas. So these move away from the entry, right? So guess what? We can wait and see if they give us actually a reaction of this price in here. So we're going to 1 minute later and see, okay, so they're tapping into here, right? And not interested, as it did create a microcycle in here, just building it up, and only, again, building, and never went in here. But you might have gotten early based on the let, but again, your stop would be way, way, way too big. And just because it's a let in here, it's just way too big in here. Okay, so that's not a trade in here. So we still can wait for entry approach number 2, because what do we have in here? Build up, false reaction. We still have a mitigation area. So it would be a perfect microcycle in here, wouldn't it? Right? So guess what happened? We can do a mitigation after break of structure, or obviously after build up inducement mitigation. So what do we do instead in here? We wait patiently, placing a pending order on the extreme. I never had a break of structure because it was very crazy push in here, right? So we're just trading the build up, false reaction into inducement, into mitigation, into the bigger time frame, inducement, mitigation. See how that works? It's all fractal, guys. It's always the same exact play. Let me repeat that one again. This is the higher time frame, whatever the 5-minute play, inducement of the perfect cycle. All right, but now we have a microcycle build up before imbalance zone, which is already the point of interest anyway. So we're trading the inducement into the mitigation with a limit. It's the same stuff all over again. So guess what? Taps into here, even gives a little sweaty hands in here, even got a little bit higher. Okay, but should we freak out about that? Of course not. So there we go. But there's even more, right? So now what we do in here, we can trade the mitigation again, like later on the 1 minute after. So now we traded this one in here, the bigger one, right? So we traded the extreme in here. We traded the mitigation of the extreme, and now we can look in the 1 minute and trade the mitigation of the mitigation pretty much, right? So what we do, we wait for this one, taps into here again, induces high even once more. Perfect. Now mitigates the same thing. We're just trading an order flow with the whole picture. So the mitigations only work again if there's an imbalance. So if you see this as a let in here, it never mitigated here. Stay short of it, right? So again, if you take this let for whatever reason in here, then you're good because your stop is still above here. But again, it's just too big, a little bit. Okay, only minor. But anyways, this is the limit order. If you trade the let, your entry would be here, kind of, because you wait for the reaction, then your stop is too big. And again, never mitigated, so you can wait for the mitigation here properly. But yeah, if you took the let in here, your stop goes above here, and you're still fine anyways. So guess what? You're getting your proper reaction. Awesome. So guess what? The next thing would be, the last thing you're looking for is the entry approach number 4, which is, of course, the EDM setup. So guess what we have now? Finally, we're having our break of structure to lock everything in. What is the extreme of the push that led to the whole break of structure? It is, of course, this one in here. You refine it to the 5. Sorry, that should be the 1 minute, right? No, sorry, this is the 5 minute. Of course, this is the 1 minute in here. This is the 5 minute, right? So this whole zone in here becomes your 5 minute zone, right? And the 1 minute would look like this. Okay, after finally the break of structure, trading away from the overall New York cup trade. Okay, all entry approaches are online. So guess what? Price comes back, creates a huge EDM of the 1 minute, and the 5 minute looks like this. Perfect play. Internal break of structure comes all the way down, channels, inducement into what? Into the mitigation of the 1 minute. Perfect EDM on the 1 minute, confluences of events, and it tubes from there on, right? Then of course you have like minor confirmation in terms of like it should go lower, right? Of course. And then the day comes to an end, and that's how you trade the New York cup trade, in a very like messy in here, but very clean in terms of all the approaches we showed you so far. Okay, so if you take all the entry approaches again combined, what do we have? The extreme one, 1 to 7, the mitigation of that, 1 to 9, the mitigation of the mitigation, 11, the EDM, 7, and 1 day in one play out of one New York Cup trade. Aligned with the higher time frame, aligned with the daily cycle, timing. Of course, you can focus only on the clean ones with the break of structure, and you would only get this EDM in here. Again, no need to take this one or this one or this one. If you want to wait for the break of structures after, you only would have one trading opportunity. That's completely fine as well, right? But all the trade was possible, and that's just how you line it up pretty good. And in other words, it's just like, are you kidding me? Right? It's just always the same shit. If it's not clean anyways, it's always the same approaches. It literally step by step, it's always a step. You just follow the timing, the cycle, build up inducement mitigation with the structure combined on the higher time frames with the overall market intentions. It's really hard to mess that shit up if you just follow on that specific route. Again, if you make up stuff, it will be very hard. But again, if you just focus on those cup trades and do nothing else, just focus on the pure intentions, always wait for break of structures, enter on LEDs and EDMs afterwards, it's pretty solid.
Okay, so let's dig into some entry approaches. All right, so what is our first step? As always, is going to be to do what? Identify our liquidity. Here's your low. And then obviously we've got Asia high. So that will be our first step. Let's go to the next one. So now you can see we have identified our liquidity. Now, what do we also notice? Build up, inducement. Okay. So we've got our eye on that. So we've seen that, okay, we've built up this liquidity here, we've taken this liquidity here, and we've taken this liquidity here. So let's see what happens next. Then again, we have our vectors here, but this one's within timing. Frankfurt open. Okay, interesting. So now we've got our vector candles down, induced Asia low, given our final little minor inducement. So let's see. Okay, and then after Frankfurt open, we could be looking at a couple of things. Potentially we would want this mitigation, price maybe like, let's go back a slide actually. Okay, so let's say you're looking at it here, right? You've got your equal highs up here, you've got your liquidity here and your liquidity here. So one of the things that you should always do when you're trading is sort of try to understand the price action that you'd like to see. So you can see this is equal highs, break of structure. So ideally we come back and get like this mitigation, right? But it's also about reacting to what you see. And now you guys know about the entry approaches. We've had our inducement. Yeah. So we've had our inducement, our build up and our inducement. Unfortunately, we haven't had mitigation, but you're not always going to get mitigation from the left. So over here, right? So next, we need to react to what price action is telling us. So We've come into Frankfurt Open, we've given our inducement. Okay. This is a day that we went through on week 3, I believe, but it's good to go over and look at now that we understand, okay, we've got entry approaches and, you know, which of our 4 entry approaches is this? So coming into London Open, we create an M5 let away from the inducement, right? Okay, so now we're thinking, okay, we've got this mitigation, but we've also got this mitigation, right? And then coming into London Open, you also see that we create equal highs and react off this zone here. This is a liquidity zone, right? So we know, okay, this reaction down is a false reaction. We don't have to be too worried about it. So let's look at the next slide. So on the next slide, we have a couple of things come in. So you can see that we actually built liquidity right here, created equal highs in the direction that we want to take the trade, and then we vectored down into this M1 POI, which was also an M5 let. And then on this, you can also see, let me grab the straight line. Dun, dun. There you go, right? So you can see that we've also got the M1 EDM. So this would be our approach 3 and our London Cup trade. If you're not comfortable taking it right here, there's nothing wrong with you waiting for it to push off, come back. You know, this is your retest, stop loss there. That is a fine way to take it as well, right? So we now know, okay, we're trading away from our inducement. Where should we go break even on this trade? So we're in like this. Well, we should likely go break even here. Where is our targets for the trade? So we know, okay, we've had an inducement low. With vector candles, we likely want to trade away from it. We then know that we've also got liquidity here, so this could be a target, and liquidity here. So maybe while you're building up confidence, you can target here, but the true like good target is right here. Look at all of the liquidity we've taken to the downside. Now we should come and smoke this point right here, and as you can see, that is exactly what we do. But maybe there's a little bit more. Look at the way that this has happened. Build up, inducement, faking a reaction. Okay, so here, faking that the equal highs is holding, faking that the equal highs is holding, and now we've had a vector through. Okay, so now potentially we could be a little bit interested in it, because this is from a retail perspective. Yeah, sorry, I blanked. Yeah, why do I keep blanking? Their sell stops have been triggered, right? The sell stops have been triggered. We've broken out of Asia high, Asia low. Sell stops have been triggered. Their stop losses are here and here potentially. So, but now look at it from this point. We've just had a breakout high, and they go, oh, of course, I was wrong. This is actually relative equal lows. This is equal lows, right? Double bottom. So now they're like, oh yeah, buys. Come on, let's get those buys going in. So what do we have? We've had equal highs built up with a reaction, and then equal highs built up with a reaction, and a strong vector through. So this is definitely interesting. Right. First thing is we have our, this is obviously the advanced trade where you've got straight up mitigation of the inducement. This is approach 2, but it's not a cup trade. So let's maybe wait for something a bit more confirmed. Okay, so now coming into here, we can see that this point here, so this is the beginning of New York trap, we have a perfect M5 let. And then on there, we can see that price comes up, mitigates the M1. In all honesty, there's nothing wrong with taking this off of the M5 as well. So we can see again, we get our build up, our inducement high, mitigation, and now we're trading away, right? Okay. So where do we expect price to go to? That's the big question, right? We've got our New York trap cup trade, and now we need to figure out where we should take profit. So in my opinion, you should, even though yes, this is resting on liquidity, you should actually take profit here, because we're quite late in the day and we could very well actually build up within this SMT. And the last thing that you'd want is to like hold it and it turns out, oh, we're building up, and then price like begins to just gradually go up, and it's getting to the end of the day and you want to close your trade within the end of the day, but you've just sacrificed X amount of R because you wanted to hold it to here, when you know that the end of day consolidation is going to provide a build up for the next day. So let's look at this with the cup trades on. As we can see, this will be our first cup trade. You may ask, like, oh, why does our mitigation is here, but why are we entering here? Well, obviously you've got to include spread into your buys, like it will just get naturally included. So it's best to, if you're going to like place a limit, it's best to add spread to that limit. So that's where you'd be tagged in. And then for here, obviously we've added spread to the SL because you add spread to the SL in cells. So even though you've already seen this day, I think it's good to build knowledge, and you sort of begin to understand, like, okay, I saw this in week 3. Now I'm seeing this in week 4 with the entry help, with the entry approaches, and it's all beginning to come together. Okay, I can see that this was a cup trade. This was a cup trade. I can see that maybe this this trade up here, whilst it's not a cup trade, it's more of an advanced trade, and maybe I need to spend some time before I get into these. But as you can see, these cup trades, you know, no one's going to complain about this RR, right? So yeah. Okay, and the next one. So as always, we're going to start with our first step. What is that? Marking out the liquidity, of course. So then we can also look at a couple things. So we notice, okay, you know, we've got equal lows here as well. We're in a build up here. Okay, this is interesting. Obviously, previous day low plus Asia low gives us our equal lows. So, you know, we have an idea of what could happen. Potentially we come induce low, go higher, and then maybe we get like a New York trap reversal, or depending on how the higher time frame looks like, we may just give a little bit of a pullback and then continue higher. So let's get into it. So we're obviously going to let price action play. We've got our little inducement low, but nothing to trade. What have we now got? 1, 2, 3. Now got a triple bottom right, and we've created more liquidity to the top side. Hope everyone could see that. You can also see we've got build up, potential inducement high. Again, I wouldn't really trade stuff like this, but it's still good to look at and understand, right? So we now have our equal highs here, which is just more liquidity to the top side, and we've got a triple bottom on the downside. Now, we don't want to do anything until we have our inducement, because then we know which way to trade away from. So let's see our inducement. Okay, so we're giving the reaction away from the equal highs. Okay, now what have we got? 1, 2, 3, 4, quadruple bottom, right? And you can see that they're faking this reaction. This is really important, and you'll really, when you begin to train your eyes, you'll really like to see this. Like they need to show the liquidity, and they need to give people chances to get in. So by reacting away from it, people are seeing like, oh yeah, we got pins to our support zone, so now we're going to go up, and they're re-entering, right? Because the more times we tap this, the stronger the perceived support becomes. But we know better than that. So what can we expect? Perfect, right? And you see how at one point this would have just been a clean black candle, loads of momentum to the downside, right? So now the people that were in buys, they got in buys here, SLs down here, they've all been stopped out. And now we have the people the breakout traders, right, who are trying to get in. And they're getting in on the breakout, especially with all of this momentum. Oh, yeah, love it. Let's get in, right? Wrong. We're in London Open. We have so much liquidity built to the top side. We've had our vector candles, and now the whole world has been tricked into shorts. So what can we begin to think about? Longs, right? So is this going to be a valid mitigation? What do we think? If we've got liquidity, if it's resting on liquidity, we've got liquidity higher as well. We know that the entire world is looking for shorts, and we've now had a significant inducement to the downside in London Open with vector candles. What do we think? Do we think that this is going to be something that we should take, or is this going to be a smart money trap? Well, very likely it's going to be a smart money trap, and this is something that you should never take. If it's resting on equal highs, even if, don't get me wrong, there are going to be times where it works out. That's just the game, right? There's going to be that 5 out of 100 times that it works out, or whatever it ends up being, because they need to keep them in the game. Or if they always lose and they never work out, then they're not going to stay around. So there are going to be times that it works out, but in the long run, it's never worth taking stuff like this. Never. All right. So next up, of course, we've had smart. So now we've taken out all of the buyers. We've brought in the sellers, and now we've also brought in smart money sellers, right? Who think they're genius and, oh, of course. So what can we expect? Now, this is our inducement, right? Maybe you're a little bit worried, like, oh, this is equal lows, when realistically, look at everything that we've had, right? 1, 2, 3, 4 reactions. Induced all of that down here with vector candles in London Open. Is all of that, all of the confluences that we have, we've trapped smart money traders, we've got all of this liquidity here, is all of that not going to outweigh the fact that, oh, maybe this is equal lows? No, obviously not, right? So, no, obviously it is. So here you can see we have our M1 EDM and also our M1 let. If you're really worried, like, oh, maybe it takes out this zone, just put your SL down here. That's it. That's the counter. Okay, so this is approach 2. Instead of so approach 2 is obviously you have boom, 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 boom. That's like our ideal approach 2, right? Where we have the relevant break of structure afterwards. But in my opinion, this one is actually nicer, where you've got something like this. So you've obviously got equal lows up here. This is your smart money trap, right? We come in, hit the smart money trap, come down, give our mitigation, our true mitigation, and then go off. And this is very, very nice. I prefer this to when it breaks structure. Okay, let's keep going. So We expect a pullback from here, of course. We've taken liquidity, so we're going to expect a pullback. That's how it works. So where could we expect to pull back to? Well, ideally, we'd pull back into these mitigation areas, right? We still haven't met our target at all. Look at like the significance of this inducement, the way we built liquidity here. You know, we're almost definitely coming for up here, at least here, but pretty much always up here. So ideally, we'd come down into this mitigation, and this would be like our ideal play, right? Like I said, remember, we have not induced anything significant relative to the inducement we had to the downside. So, you know, this is like a little baby inducement that just causes a pullback. This is the main inducement, right? So ideally, we get this mitigation. Price just misses. That happens. But, you know, this is part of the game, right? Especially if you're going to be waiting for like your ideal setups with your mitigations, which you should be in the very beginning. Like you should be combining it with mitigations. You are going to miss trades. That happens. That's to be expected. But the last thing you want to do is go and chase those trades. So yeah. Now look at what we have. What are we doing here? Where is, for all the people that bought at Asia Breakout, sold at Asia Breakout, where are their SLs? Well, they're either going to be here or here, right? And look what we're doing. We're faking the reaction. Oh, there we go. You know, what a surprise. We've never seen this one before. They fake the reaction at the liquidity. But, you know, this should not scare you. This shouldn't. Then, what a surprise. We blow through that, and then we fake the reaction here. Look, building perfect double top in New York Trap. Absolutely shocked. Okay. Overall TP hit. So that would be your buy. You know, you can put your SL here if you're not quite as comfortable. And there you go, right? Nice and simple. It's like a 1 to 7 with no stress. The thing is, you just need, especially with trading, it's best to keep it simple. Don't overcomplicate things. Don't go into like, oh, craziness, and you're like playing like 4D chess or whatever. Just keep it nice and simple. Stack your confluences. Understand which inducements have been, which inducements are weighted more significantly. In this case, it's obviously this inducement, right? Look at the way the liquidity is built. It's obviously this inducement in London Open, vector candles, quadruple bottom. Like, what more could you ask for? So yeah, let's get into another one. Right, so this one's quite interesting. Here's the H1. I want to include the higher time frame as well. So H1, and then this is obviously M5, as that is our main time frame. So what's the first step? The first step is always liquidity. So looking at this day, you can see that pre-Asia, we had a huge build up, absolutely huge. And then Asia vectored through, we vectored through this build up, and we vectored through this high on the left. So what does this tell us? This tells us, okay, potentially we could be expecting what kind of daily cycle? There's two that, you know, we could potentially expect. We're not going to like force it, but we could understand if it happens, and that's going to be retail heaven and London knockout. So let's look at how it plays. Okay, so as you can see throughout this day, there was nothing that, excuse me, so up to this point, there was nothing easy to trade within here. There's no real trade within all of this. And in these cases, it's always better to sit out and sit on your hands and not try and make stuff up and do all of this crazy stuff. Because look, right, we've had a very significant inducement on the higher time frame, right? It's a medium inducement. So where is our first like significant liquidity point? Well, our first significant liquidity point is these equal lows down here, right? because, or even you could say like this point here. Yeah, because this is like, we had the break of structure, so people were in here. So, this is maybe a potential buy zone for a lot of people. So these two are like the significant liquidity points, right? And we want to have, after we've had our medium inducement to the top side, we know, okay, especially with the way that we had it, right? Vectors, all of this build up right here, we know, okay, we're probably going to need to have like a significant inducement to, we're probably going to need to have a significant inducement to take us to like continue back up, right? And this is definitely a skill. It's a skill to not make shit up and not just pull things out of your ass. So what do we see here? Well, we see, okay, potentially we've got our, this is a medium inducement, but it's not a significant zone, is it? It hasn't caused anything. It hasn't done anything. It's not significant. So what is the first step always? What is always our first step? Think back to simplicity approach. The first step is to identify where they're building liquidity. And this seems pretty clear to me, right? We've got liquidity up here, and then intraday we've got double top built here, and we're building relative equal lows right here. Not really, but we are building a double top right here, right? So now we understand. We can also see, okay, the time's roughly New York open. We're beginning to get vector candles. So we can see, okay, things are beginning to play. Let's see. So now what should we wait for? What's the next step? We've identified our liquidity. So what do we wait for? A build up, an inducement. And then this inducement, as you see, this is the M1 of this point right here, like this box. You see, we have a mitigation into this as well. But this is not something that we'd necessarily enter. We can, but this is not the most confirmed trade, is it? So let's go and have another look. Let's zoom into this pre-8 as it's getting close to New York chap timing. Okay, so this is the M1. We can see that we're building equal highs and equal lows. So liquidity for once we take the sell, down there. Also, the entry helper is looking juicy. We could have a potential let. So there's also one thing that I want to cover. And you'll see this on the edge quite a lot. There are a couple of things that you can do in this scenario. And to be honest with you, you should always at least take the entire supply zone. Because there's no guarantee that it's going to come up to hit. There's no guarantee that it's even going to hit the entire supply zone. So I'll show you how you deal with that as well. But I speak about this a lot on the edge. You should always give yourself the best opportunity to be tagged in. So let's keep going. Okay, so as you see, price just misses this supply zone. And the thing is, I want to be completely honest with you guys. Like this happens. This, guys and girls, this completely happens, right? It would be a lie to say like, oh, everything always goes perfect. Your mitigations always get hit to the pip. So what can you do in this scenario? There are three things. You can, so let's say you've got your limit here, right? You can monitor this and using the execution helper or the MT4 trader system, which we'll show you later on, you can have your limit here, and then you can also have your market execute ready. So you're just waiting to like push sell, right? And then when you see, okay, we've taken the equal highs and we're beginning to react, right? We're beginning to react away. You can market execute with stop loss up here and then remove your initial limit. And even though, yeah, you'll have like slightly worse entry, it'll be here and here, you'll be in the trade, right? And that's the most important part. The most important part is that you're in the trade. Who cares if you sacrifice like an additional pip? At least you're, maybe this is like let's say this is like a 4 pip zone and now this is 5 pips. So you've reduced your RR by 20%, but at least you're in the trade. And that's the most important. The second thing that you can do is you can keep the limit on and hope that it gets tagged. This is somewhat questionable, especially when we've had the let as well. And then the third thing is you can obviously look for re-entries. Personally, I'd always recommend number 1. Even though you may get a worse entry, you're still in the trade, which is the most important part. So we've had our let here. We could potentially look for sells from here. So let's have a look. Okay, let's look on the bright side. Perfect M1 let, so we could potentially see approach 3. Okay, this happens too. It's important that you guys don't expect perfection at every point. You obviously have to adapt to the market. Like we said in the beginning, will you miss cup trades? Of course you will. That's just part. That's just part of the. That's part of trading, right? There's a big psychological aspect to trading, and it's the acceptance, and you are going to miss trades. But it's important that you never start to chase a trade. You always let the trade setup come to you. But obviously, as you get more and more advanced, you can take these. Like I said, if you see it reacting, just below your mitigation zone, just execute here and then take off your limit. It's as simple as that. Yeah, so let's go again. All right, so let's zoom out and let's see where we would target. So we're in New York chap, we would obviously partial at this low. This is like the intraday, and then the significant liquidity would be like down here, right? These are our equal lows. You see that 1, 2, 3. So that is where we would target overall. Okay, so as we can see, we take out this point. Now we've taken liquidity to the downside. So what do we expect? A pullback, right? We shouldn't be worried, and especially for like your mentality, this could be a reason why you partial here, so that you're not worried about like this pullback. Because the worst thing that you could do is you see a pullback in a zone that you expect to create a pullback and you pull out of the trade. That's one of like the worst things that you can do. Okay, so look at overall timing, London close, still not, the overall target is still not met. So it's possible to take this sell, but we need to be careful as we've induced low. So technically we could come higher, right? But let's have a look at M1. Okay, M5 mitigation there. M1 EDM with this point right here. Okay, we can also see we've had our build up. We've induced the build up. SMT reaction to the downside. Look at that. Even gave. Okay, yeah, this is beautiful. This is our SMT. It even comes down and gives the internal break of structure. So they're also going to try to sell from here. So that has brought in a lot of liquidity. And then obviously we see our vector candles up into our M5 mitigation, which is an M1 EDM. And then we just do a little build up, induce high with vector. And now we can be interested in this zone. So there you go. Look at that to the minute. Can't complain. And then you can see from that point, price melts. And this is the end of day consolidation. So like we do expect a build up. So to be honest with you, if I was in like the sell here and the sell here, I would probably just close here intraday. And that would be me done. But if you did want to hold to your overall target, it does eventually get hit during Asia.
So in this example, I will be showing an entry approach. Now at this point, you have been taught the 4 entry approaches and been shown several examples of it. And I will of course show another example. However, my example will be a little bit of a variation where I kind of combine 2 of them together. And again, this is just for understanding purposes of how you may see it in the chart as well. It's a kind of a trick question, should I say, to guess what it would be, because I won't mention it until the end, because it does combine 2 actually, so it's not going to be 1. Again, figure it out. Hope you wrote lots of notes down regarding it so you can of course recognize which one it is. So if we look at the chart in front of us, of course it's a 5M chart and our trusty GBP CHF, of course. And the main thing we have to do, step 1, is identify the build-up. So looking at the chart, it's pretty obvious, in my view at least, and hopefully you should at this point have a clear view of liquidity. So if you see what our liquidity is, we currently have a trend line over here, also a trend line over here. So you can essentially call this a channel essentially of liquidity. And then we also have equal highs or your resistance, again, another channel, as well as a somewhat resistance, or if you want to call that equal lows as well. So at the same time, it's just overall liquidity, so you don't really need to worry too much. We also have this resistance, or if you want to call it a trend line, as it slightly goes to the downward direction like a trend line does. Nevertheless, it's liquidity, as you can see. So currently, if we look at where price is, of course, trading, we have broken out of Asia low. Now, this looks a little bit interesting because Asia low actually ends up here, because throughout Asia, we were actually inducing low. So technically, this trend line is actually induced at this point. However, what happens as we go into Frankfurt Open, we now also have an inducement outside of Asia low, as you can see. Now we're trading outside of the range. Now, the most important question is, okay, like, where are we going now? Are we going to continue bearish like such, or are we going to now maybe continue bullish and induce higher now, maybe Asia high at this point? That's the question, of course, that we have in our heads. And this is why it's so important to understand the smart money trap zones, as well as, of course, what's to the left, your yesterday's high or low, as well as weekly highs or lows, to target your medium inducements and possibly major inducements, which occur far less than the medium and minor ones. So currently what we can see, other than Asia high, we have another target. So what is our target? Well, that's the question, of course. Asia high, Asia low. Asia low, of course, already induced. So we only have Asia high at this point being right there. So currently, of course, our question is, what are we now inducing to the left? We've technically induced also this trend line. So these levels of liquidity are now also induced. But if we look at where price is currently trading, we can actually see, okay, that was yesterday's low. Now, why is that important to understand why we target that, not always targeting a yesterday's low or high, depending on what it is? So the reason being, of course, we can see this reaction actually occurred later on in the day. You can see London close being this purple line being over here. And then we have around, you could say, 6 o'clock or 5:30-ish. So later on in the day, we then get this reaction. So it's not necessarily the strongest reaction, depending on what happened to the left. So this reaction didn't have such significance. Instead, then we start to get into the low volatility levels as we then get later on in the day, like such over here. And of course, creating this trend line like such. So if we see currently, however, we do get a reaction over here. And of course, what is this? Must remember what that is. You can see already what this box is. So what does the box mean? Is it a POI or is it actually a mitigation? Now, that's the most important question. What did I say? Our target was, of course, yesterday's low. It's a weak low, essentially. So it is not, of course, then a POI. It is a smart money trap. So right now, we actually have a reaction. Hence, of course, the smart money trap. It's a little bit weak. It's not very strong. Again, a lot of choppiness around this area when it came to the initial reaction. So that's like 15 minutes worth of price action where price actually traded in the same area. So what that of course does, it helps us actually identify, well, actually, not only is it a smart money trap reaction, it's also building liquidity in this area right here, only for it to be taken out again. So let's see what price does. Essentially, of course, we induce low. Now, this is a little bit tricky to look at only because of the timeline we have here, and you can already see that is, of course, Frankfurt Open. So essentially, what we have here is our Frankfurt Open inducement. So if we look on the 5M chart with a bit more clarity and without this line, of course, we can see the perfect clear inducement of yesterday's low. So it's a pretty clear picture if you look at it now on the right-hand side, where without the line, of course, it's far clearer for us to now understand this. So what we now need to do is we wait for Frankfurt Open to induce Asia high and London Open to possibly present entry opportunities. So we're not necessarily interested in really taking anything of this reaction unless it presents. If it presents an entry where we, for example, mitigate like such, we take it as a pullback trade, and then of course expect Asia high inducement where we likely actually want to take the sells now for a continuation trade, right? So that's important. Of course, you understand the other levels of liquidity. This is our first target. We also have, say, target 2 down there and target 3, etc. So that's where it's important that we do understand that when it comes to intraday, you don't get your reactions where it's, say, 1, 2, 3. You don't get one push all the time. You only get that when we have a retail heaven or a London knockout, and that's usually once we've had a major inducement. However, for intraday, you likely will get something like this, and then price plays around, maybe induces high, only to then continue like such. Then it targets the next level, same thing, does the same thing. So it takes these zones in, of course, an order and not all at once. Otherwise, it wouldn't make sense. And of course, liquidity does need to be built up. So in this case, of course, we wait and we see our reaction. London Open gives us these perfect vector candles outside of Asia high, as well as, if you remember, this resistance type of trend line looking thing. So now at this point, we have the question, well, we've got the characteristics of an inducement high, where it likely will be our main inducement for the day. So what that means for us is we can likely take an entry if it presents. Again, we need to wait for, of course, the opportunity. So we have our perfect inducement. We're not going to guess now. Maybe it ends here. Maybe it ends here. We're going to wait. We're going to wait for the reaction after the inducement where we can see it potentially has now ended. So at this point, we can already cross off, okay, targets have now been induced to the high side, right? So let's see what happens. Well, we get reversal characteristics as we, of course, would like to then take the entry. Now, on the 5M, it's a little bit tricky to see what's going on here. You can see all these wicks. You're not necessarily sure what they mean. We need to now scope down on the 1M to view clearer price action. If we look on the 1M, we have now the 1M over here and the 5M over here. We can see far clearer on the 1M what's going on. Now, if we actually look at what's going on in this case, now remember your entry approaches for this one, we can already see, well, this technically is a break of structure. Now, why is that your break of structure? Well, this was the last push that led to the inducement up here. The inducement now has reacted and it actually breaks past those vector candles that essentially pushed above and formed the last bit of the inducement. So we have a break of structure. So now at this point, we can, of course, take the extreme like such there. So you could say this is the one of the entry approaches where it's the simple mitigation after the break of structure. So that's point one. However, in this case, we also get potential ladder opportunities. You can see price has crossed the line. So the likelihood is, based on the fact we're now over here, is upon the pullback up here, as well as here, it forms a nice lead. So it goes hand in hand. You can see the reaction breaks over the line, then this reaction upwards, we expect to touch the line. So let's see what happens. perfect, of course, it's a let. So even if it wasn't a let, it still classifies as one of the entry approaches. It's just really, really nice that we also get the 1M let here, which is perfect. We can potentially identify another opportunity. So let's see what price shows. I guess the first question you ask yourself, if we want to take another sell, say you missed this one, right? What are you going to target? Are you going to say take this one or this one over here? What are you going to do? Are you going to wait for an inducement, or are you going to simply wait for this one of these mitigation zones now, as we've technically had our main inducement here? Now, this is really key when it comes to the advanced stage of when it's intraday trading, where you essentially wait for your internal inducements. Now, if you remember what they are, so we've had a main inducement over here. Then price doesn't swiftly move in one direction unless it's, of course, news usually. However, what usually happens is we get exactly like what we're seeing, price action like such. Now, what's important here is the cycle. Remember the build-up inducement mitigation. So although this is the cycle, we've had our mitigation too. When it comes to internal plays, we also want the same thing. It's really key to stick to that cycle. We're not going to randomly just take a mitigation zone. We can predict maybe it's a let over here, we've crossed, but we don't really have a clear mitigation that makes sense. And that's why we wait. So important to remember this. If there's no clear POI for entry, we'd rather wait for an internal inducement, say of this imbalance zone over here. We want to take out liquidity. And usually internal inducements don't take out every bit like such there. That was not a clear line. Let's do it again. Like this entire liquidity, it may take out only the relevant internal liquidity, which could be like this zone over here. But we want to wait for that anyway. So we're not going to guess that inducement unless you're very, very advanced at this stage. So we have a reaction. Okay, so could this be our inducement? Now let's question why this could potentially be an inducement. Well, we get perfect vector candles, right? We get a really nice vector candle, as well as a bulk of liquidity being taken out on an internal base. So on a fractal level, yes, we have actually had an inducement, and we're getting this really nice reaction where it's a very strong wick actually from what you can see. So upon this, we want to then enter if price presents something. If it doesn't, then that's fine. You just have to mentally understand, okay, that's an inducement trade. As you know, we don't always get an entry, but it's really key you focus on those. Otherwise, you will likely take more losses than anything if you try to catch inducements. I can promise you that. I mean, that's probably too harsh to say, but you know what I mean. So upon this, we now will wait for our reaction. As you can see, we wait for the reaction, which then may present a mitigation entry. Okay, so looking at the reaction, what can you say? We didn't technically get a mitigation of anything here. Of course, it was a wick. It didn't actually present anything. So what we get instead, okay, we get, this mess. I would call it a literal mess at this stage because it's not clear at all. So what we must do then is identify potential fractal liquidity again. So now we must identify, okay, we've had an inducement high. Let's mark up our steps actually. So we have two over here being our inducement. Build up, of course, was to the left being the Asia high, as you can see over here. So one already occurred down there. 3 being our mitigation. So technically this cycle has played out, and then you can hold the trade, and then it's about the fractal plays in between. So now it's the same thing. Okay, 1, that's our liquidity. 2, that's our inducement. 3, that's the mitigation, right? And it's a question of, okay, what is our mitigation? That literally is the question. We don't actually have a mitigation zone here. We're not going to pretend to make up this. If it does react, fine, but most of the time it won't because it's not very clear as a mitigation. So instead, let's identify, well, what can we see? Well, it's pretty clear. Maybe it's not at first for you all, but try to see this. It's pretty clear to see this channel of liquidity, right? So the reaction after the inducement is not very nice. So we can potentially now get an inducement of this liquidity. And you can already see, of course, this was taken out by this current reaction. So that's already done. So upon that, we can potentially get a reaction high to take out this liquidity, but remain in our initial inducement zone. So within this zone, essentially, potentially we get an inducement to take out these highs. and then same thing again. Then we can potentially expect a mitigation to present. So we'll see what happens there. Perfect. Isn't that exactly what's happened? We've had our inducement here now. So of two fractal inducements, the main inducement, liquidity, of course. That's, of course, the mitigation reaction anyways. Same thing, liquidity, inducement. Upon this, we actually do get a mitigation zone, right? You see a really nice mitigation zone upon our inducement. So that's much clearer than if we try to guess something, say in here, it's not very clean. We also get, of course, these lows. Perfect has already been taken out anyways. Little fractal liquidity upon. Now, hopefully we get a reaction up. That's, of course, a prime entry opportunity. And this is why it's really important not to just randomly take trades in here and guess the inducements or mitigations and put tight stops, because you would have been stopped out probably several of times assuming that. Now, the other question is, what else can we see that makes this zone potentially a better zone? Remember your entry approaches. So again, it's the let ... or ellipses, as you can see. So price did cross over. Maybe upon the pullback now, we get a let. So it's important to understand where you are crossing the line. Have we had the pullback where the line lines up at this point? That upon returning, if we mitigate, it can form a let. So let's see how that plays out. Well, it plays out perfectly. You can see it kind of tapped twice on the let aspect. That's fine. Still get the mitigations, probably only 5 minutes worth of waiting. And then price does what? It takes out all of these levels of liquidity that we built up. Remember, upon the inducement outside of Asia high, which occurred probably around there. Now that should hopefully make sense when it comes to the break of structure aspect. Now here we did actually get a break of structure, did forget to mention that. So this example, of course, it was primarily approach 1 being your extreme mitigation over here in particular. Then our continuation, of course, was a little bit different where we have our break of structure here, which I did forget to mention. So your break of structure there. Of course, that's a reaction. You pull back into a let zone for continuation. So that continuation aspect is really nice as well if you miss an entry like such from an extreme. So let's see what approach essentially was. Hopefully you guessed somewhat right. We of course have approach 2 being right here, literally perfect example of the break of structure you can see here to the mitigation. Now in this case, why I wrote, of course, almost approach 3 is because of the fact we did get a let on the 1M. Now we only got the let on the 1M, and that's why it's not really approach 3, but it kind of is when we take just one element of it, which is the 1M let. And that's a continuation trade, remember, as price has formed the main inducement here. I hope you enjoyed the understanding aspect of that, and hopefully you can find these examples again and again. So that's it from me in this specific module. Again, practice. So look for more examples on this where you get essentially approach 2 with a let as well is really nice. Now approach 3 is very, very strong complements where you get the 5M and 1M in combination. However, approach 2, I like solidifying it when you get a let also. So that's usually just a basic smart money approach, however, with our understanding of the inducement. But the 1M let makes it far better in my opinion. So that's it from me. So in this example, I will be covering an entry approach. And again, it's going to be one where I don't directly say what the entry approach is as it's occurring. I'd rather you actually test yourself and figure it out. Hopefully you have your notes of the 1 to 4 entry approaches, and you can figure out which one it is as I'm explaining the example. But don't worry, I will, of course, mention which one it is at the end. It's just a nice little challenge, I guess, in between. So if we get straight into it, we can already see our lovely GBP CHF pair in front of us on the 5M chart. Now, we do, of course, have Asia range over here, as well as London open trap time occurring as well. So I showed that deliberately just so we can understand potentially what we might actually see in this day. Now, if you remember from last week's lessons of the retail heaven and the London knockout trades. Now, in this case, depending on what happened in the previous day, where we may have had a major inducement of liquidity to the left, or even a relevant medium inducement that induced enough liquidity in quotation marks, then we likely will have the next day occur where price doesn't necessarily need to induce Asia high. Now, the reason I say that is let's just look here in Asia, for example. This inducement already induced all of this liquidity here, this false high over there as well. So technically, this is a relevant inducement alongside what happened on the previous day. So what that means is we of course get a mitigation, as you can see from the 5M chart. However, in here, what happens is a little bit messy. So we get a Frankfurt open inducement low outside of Asia low, perfect vector candles. So it's very, very clean in that sense. We have a smart money trap occur there. Inducement high at London open, right? Taking out these liquidity points. However, the only tricky thing here is, let me just clear the drawings, is we get an inducement one last time of London. And that may be a bit tricky where you actually may get a valid loss, and that's completely fine. However, let's make sense of this on the 1M chart and see what actually happened on a lower time frame. Of course, we need to see that price action to see exactly what's occurred. So below we have, of course, the 1M chart. We have, of course, London session as well as Asia with a bit more clarity. Now, if we apply the simplicity approach, it's not going to be entirely clear when it comes to both the break of structure and mitigation aspects. You may not necessarily get that in every single part. And that's why we strongly focus you identify the build-up and relevant inducement areas. And then, of course, the relevant breaks of structure and mitigations come afterwards. Now, I'll be honest, over here, when it comes to this trade, it's not really tradable unless you're very, very advanced, right? So if we look at our build-ups for the day, we can already see Asia build-up being the trend line over here, as well as the trend line lows. So both buyers and sellers, we get an inducement high, right? And then we, of course, have another trend line and another trend line, and of course lows. At this point, I probably don't need to explain all the types of liquidity. Hopefully you have picked up well on that. You're in week 4 right now, so you should really have strong knowledge on that. If not, of course, just go back to week 1 and revise it again. So we have build-ups and we have inducements, right? So of course this inducement induced the trend line over here. Then what we get actually is an inducement high here, partially inducing this trend line. So we don't always get an inducement of the entire trend line, but we get these fractal inducements of relevant liquidity. Now, I wouldn't say that's tradable unless you're very, very advanced, but otherwise, I wouldn't say that's tradable at all. So don't worry about if you see that and think, oh, I missed a move, it doesn't make sense. Like, don't worry about it. Right, so then we get our inducement high, vector candles low. And what does that mean? Takes out this low, takes out this trend line, takes out the whole of the Asia trend line, as well as Asia low being a little bit further back, which will be right there. However, it takes out a lot of liquidity, and you could say the main liquidity. So Frankfurt Open gives a very nice inducement low. However, we get a pullback. Now, upon our pullback, we get equal highs, inducement high over here. What does it also do? Have a smart money trap here. False move right there if people were to take it. Actually, that's more of an FFS, I would say, because it didn't actually give really somewhat of a reaction. I mean, you can argue it's a smart money trap, actually. But nevertheless, it induced this reaction. So it essentially induced structure as opposed to typical liquidity, like trend lines, equal lows, equal highs, etc. Right? So London Open gives a really nice inducement high. Upon that reaction, which is right here, we have the reaction high to there. We actually get this equal low formation over here. And then upon the pullback, we get this perfect channel liquidity, both sellers and buyers. Now, the only thing that's tricky here, if I just clear the drawings, is you would ideally take a mitigation like such here. Now, in this case, it did not occur. And Sometimes, unfortunately, this may happen where you get induced one last time because price is just not satisfied enough. So it has to induce one last time. You can see it's such a slight inducement again within London Open. And of course, that means you likely would take a loss here, taking the mitigation entry. But if you arguably look at it from the simplicity approach aspect, you don't actually get a break of structure. Ideally, if it just came a little bit lower over here, that would break this structure point, then the mitigation. However, that doesn't completely invalidate anything at all because we don't use structure too much, only if it's relevant. And if it doesn't occur, that's completely fine. We're just looking for the absolute relevance points, and you may not get a break of structure. Likewise, you may not always get a mitigation like such over here, etc. Again, remember, use the momentum mitigation to help you understand essentially where are the valid mitigation zones depending on what price did. So hope that makes sense, if you know what I mean. If not, refer to week 1 again, because the momentum mitigation is really powerful in you avoiding zones like such over here, as well as taking smart money traps or FFS zones when you shouldn't. So in this case, our final inducement high, right? We have this little baby liquidity, which essentially was the smart money trap reaction to the left. Then we get this trend line low, right? So people buying, we get a perfect mitigation in here. Upon that, though, we also even get this, you could say it's a relevant break of structure to these points, also being the trend line from this reaction. However, that's also a fractal inducement low. Hope that makes sense. So of course, it's an inducement low, takes up liquidity here. Arguably, you could say it's also relevant in terms of breaks of structure. We're in line with the mitigation POI as well as overall direction, right? So you have your mitigation just after London Open window. Then of course, price reverses now and then takes out this liquidity, the trend line over here, as well as, of course, this being now, is it a smart money trap or is it an FS? It's a smart money trap as it did give this little reaction over here. However, of course, we must understand that this reaction here of Frankfurt Open doesn't mean our inducement's complete. We simply just get this crazy little pullback and then price, of course, now continues, hence why this is not a valid zone to take the mitigation. The only time it's valid is if it happens in the moment. So say this pullback came a little bit lower, ideally with a let, we can take a pullback trade at minimum, take out this high over here, right? So only in those cases do those pullbacks make sense when it comes to actually trading with the complementers. However, if we just, of course, continue, we have, of course, this smart money trap. That's also an inducement, like mentioned over here. Then inducement high of this liquidity here gets very fractal. Then, of course, price reverses, taking out these lows over here, only to then continue. So now what I'm trying to basically say in this example is, in this case, it's a little bit more advanced to take this entries. Purely, you could only have taken this based on either inducement trades taking the highs over here, as well as this low over here. And then, of course, waiting for the mitigation, which is the prime entry here. However, you wouldn't be able to really guess that this inducement was complete based on the fact it just induced high. That's fine. Don't worry. It's better to miss these trades. Honestly, don't take this or don't try to force it. 'Cause imagine how many losses you would have taken if you tried to take this entry here, then this entry here, and then even this buy here, now getting probably fed up. You've taken 3 losses, 1, 2, and then 3. So it's much better you just stay away from something like this. And I'll show you exactly why this is really nice, why I mentioned this. So London Open, we could say, okay, it didn't actually present an entry when it comes to like simplicity approach, as well as the entry approach as well. So look at the reaction though, it's pretty nice reaction as you can see. However, just not so nice to take an entry. Nevertheless, cycle did play out, just not with complete clarity, as well as if you expect Asia high to be induced, etc. So now what we can do, of course, is we still have New York trap for a possible entry opportunity. So what we know here is, well, actually, maybe we can potentially wait for New York, of course, and then identify possibly maybe buys in the opposite direction, whether it's a pullback or not. It may give us a very clear entry to take with the whole lit cycle understanding. What happens is we get this reaction. Now, what's key to understand here is when did this reaction occur? So you could say the inducement low. Technically, it's an inducement. We're not going to argue it's not. The whole leg from here down is an inducement. It just takes out relevant liquidity to the left, as well as fractal liquidity here. Of course, taking out liquidity as we go high. Now, the reason why we're not so interested in areas like such over here, right? Like, I mean, let's see, would you take that? Does that mean we execute over here? Ask yourself the question, yes or no. Think about it. Think about timing being the most important part over here, right? No, we don't. And the reason being is because most traders will be executing in New York Open. So that is actually 2 p.m. UTC plus 2 being exactly within this line over here. It's not a straight line, but nevertheless, I can't draw straight lines. But okay, so what happens is that means early buyers obviously are getting in. So everyone in here is going to be an early buyer, right? And this means that the market makers now can take advantage of retail liquidity in the form of your smart money traders. So your smart money trap over here, as well as your FFS zone, whatever you want to call it, this induces those type of traders. So we have your typical like trend line traders over here as your lows, your breakout traders like such over here. So in this example, of course, it's purely the smart money liquidity aspect as opposed to typical whatever your like trend lines like such over here or your highs and lows. So in this case, we actually have the smart money liquidity in play, where likelihood is there's going to be early buyers and they're going to likely 100% take this mitigation, assuming it's valid mitigation in the smart money concepts world. So of course, this only helps us because we want to wait for a real reaction, right? So let's just see if it's a smart money trap or an FFS based on the reaction. Okay, perfect. It's a smart money trap, right? You get a really strong wick actually. So it's a very strong reaction over here. Now, another thing that's probably very key to mention here is you may argue, so this is a 5M chart, you may argue, well, actually, it's almost a let, right? It's almost a let right here. So maybe it is correct, right? We're using the entry helper, so it can't be wrong. However, that's completely not the case, and that's because this is a very clear example when I say that. Price has actually already tapped right here. So if it's tapped here and it stays short of the line by that much, that likely means, well, actually, if it is a lead, it's going to cross past the smart money trap zone and actually become an FFS anyway. So it literally shows the zone's invalid completely because it's not even a lead. And if we still wait, thinking maybe it's still going to be a lead, you're just waiting for price to now smoke through the zone. And then it's a lovely lead, but it's not a lead of mitigation. Now, we can take advantage of that, and I'll show you why in a few slides. But first, what do we have in timing wise? We have New York open to the minute continuation. So to the minute over here, we get price reverse. So we can understand that this reversal is actually a pullback to induce the smart money traders. Maybe we get whatever the length of the inducement is, where it's that long, where it's this long, that we can then take, of course, the actual trade. So in our understanding, we can see that this area is actually a pullback to take out liquidity low. So the intention, of course, is to induce low one last time. And that means it will help us, of course, understand that anything in this zone, if there is some sort of mitigation, maybe on the 1M would be completely invalidated as intention is already complete. Again, refer to momentum mitigation on that one. So let's see how price then continues. Perfect. It's a smart money trap. It's induced ever so slightly low. That can really annoy a lot of people right there. So yeah, not very happy people. However, what we do see, if we remember the let aspect, we do see, of course, the 5M let at the inducement, right? So it's, if we line it up, it's probably within this area right here. So we have a let now. So I know that's probably like, well, what is that about? Well, it's the aspect that we can get the lets as the inducements. Now, I did mention that in the previous example as well. It doesn't occur so much. Of course, it's advisable you only use it in mitigation aspects. And that's why when this occurs, I'm not going to randomly just be like, okay, let's buy. We're going to use, well, I was going to give it away there. We're going to use another part of this entry approach that helps us validate the entry. And I'll show you what I mean by that. But first, let's look at the 1M to see what actually happened over there. So what we can see, of course, this was that smart money trap reaction right there. Of course, on the 1M, it's even clearer as a smart money trap. It just reacted like such. I don't know why I did that kind of line, but yeah. So of course gives a smart money trap. That's the 5M. So 5M, okay, what can we actually see? Now from a fractals perspective, we can see a beautiful build up over there and a perfect little baby inducement low. Now price doesn't have to induce very low. Like it only makes sense to take out the smart money trap, annoy a few people a bit, and then of course price can continue. Now if we look on the 1M, it's far clearer. Again, build up, perfect inducement, perfect reaction. Look at that, candles going up like such, relevant break of structure. So what does that mean? We have a mitigation zone, right? Now think back to the entry helper. What do we also have? If you look over here, what is going on? Well, we have, of course, potential for a let. Nevertheless, however, we still have a valid entry play. We have the mitigation, let's just say step 1, inducement, step 2, step 3, mitigation. And essentially, when it comes to the basis of this, that's all you really need. You don't need anything else. So you have all the steps of the cycle, even the smart money trap liquidity, the trend line liquid. Ooh, let's do that again. Come on, just draw some sort of line. Okay, can't draw very straight lines for some reason. But nevertheless, you have your cycle play in every basis from the bigger time frame to the fractal time frame over here. So that's really nice. Let's just see if price does give us the let. Okay, perfect. We get a let. Price taps in very nicely. It's a perfect let as well. You can see it taps the line perfectly. Now it's the question of, okay, let's see if price reacts first. Okay, perfect. Now, what's key here as well, that's very important, we must consider is London close. Now, the purple line here is, of course, London close, which is 5 p.m. UTC plus 2. Now, in this case, we have to understand the logistics. Well, volatility is likely going to be lower. London traders are now exiting the market, and then there's only New York traders essentially. And the key windows where this volatility kicks in is now, of course, coming to an end. So what that means, of course, volatility is not going to really play around too much unless it's a news event, don't get me wrong. But that means we need a reasonable target from where we are. So we're not going to try to guess and expect this to fly. However, we're going to guess for a reasonable target. Now, if you remember what I mentioned before about the intentions of this purpose over here of New York trap open, of why it reversed, essentially, of course, taking out retail liquidity over here being the smart money traders at New York open. Intention, of course, was to induce low. Did we complete intention? Yes, right? And then we take the pro trend trade. So, of course, what that means, our target is New York trap high as the bearish intention to induce is now complete. And that's what I meant, to induce low, taking out the trap, it's complete, right? We've fulfilled target. So, of course, our reasonable target from where we are right now, if we look at the, you could say, distance of price, it's not too crazy. However, we can target realistically, and that's all we're going to do is we're going to be realistic all the time. So at this point, you should be at break even over here once we've crossed this point. And then, of course, we just wait, set TPs, and then boom, it's basically TP time over there. So you get a perfect vector candle even, right? And then price reverses and probably chops around until Asia the next day. Now, I hope that made a lot of sense to you guys where you don't need to trade every session. Just trade the relevant sessions. In this case, New York trap time was perfect, whereas London Open wasn't. And that's why I gave this example, because I know you can get very eager to want to trade everything. However, it's just far better to take the perfect entries. And risk to reward wise, well, I don't want to guess, but it's a pretty nice risk to reward if you take that and your TP is there. That's like, no, I'm not going to guess. I don't want to guess. I'm not even going to give a wild guess, but it's a pretty high risk to reward. Right. Now, I guess the question was, well, what was the entry approach? So if we go on the next slide, hopefully at this point you could have understood it. So it was, of course, approach 3. So in this case, remember, it was slightly different, where instead of the let of the 5M as a mitigation, it was an inducement, right? So the let was an inducement over here. However, part 2 was perfect. So part 2 over here being the let on the 1M. Of course, we see that here, perfect let as the mitigation in this case. Just over here was the inducement let as opposed to it being the mitigation let. And that's key to understand because even then it didn't appear as a let. It was short upon the initial reaction, so we could have expected, of course, the let not to make sense when it came to the mitigation. So I hope that made a lot of sense to you guys, and of course backtest it all, identify these type of entries, ideally entries 1 to 4. Ideally entry approaches 1 to 4 would be very, very clear to do. Don't, of course, get ahead of yourself and try to make up things and get confused. Only take one of the 4 entry approaches and watch how they play out. Backtest all of the entry approaches, figure out which one you like the most, and maybe veer towards 1 or 2, for example. So I hope you enjoyed that, and I will, of course, catch up with you soon.
Right, so let's get straight into it as always. Pair and time frame right there, 2022. So we are going to be working on the entry approaches. We're also going to combine this with the daily cycle to see how you can begin to get some ideas of what to expect. So before we get right into the entry approaches, we have to ask a couple questions. What daily cycle are we in? And where is our next liquidity target? So let's have a little look at it. Well, we are very likely in the Asia whipsaw daily cycle. As you see, we whipped Asia high here, strong vectors, and then we came down and whipped Asia low again with strong vector candles before again whipping the high. So what could we expect? Well, we could begin to expect another whip low. And what do we have directly below this low? A very nice potential liquidity target, a very nice potential mitigation. So that would obviously complete our lit cycle for us to go even higher. When would be the ideal time? Well, if it came in again within New York chap. So we have to look at a couple things. First, let's just apply the simplicity approach real quick. So you've got your build up, inducement high, build up, inducement high, and then build up, inducement low before build up, induce high, and then again build up, induce low to build up, induce high. So we have a potential mitigation sitting below the liquidity. This one here, it is this mitigation from over here. They're the same. You're seeing the price is coming down with lots of momentum, strong vector candles, and we're within timing. Plus we have the Asia whipsaw daily cycle, right? We've taken the high with strong momentum, taken the low with strong momentum, high again. So we do expect this low to get whipped, right? Which one would be our more valid mitigation? Well, let's have a look. So as you can see, it's got clear equal lows right here, plus Asia whipsaw daily cycle. So this mitigation here is a definite no. Also, we've induced this to the top side, even if it wasn't Asia whipsaw characteristics. We've induced this to the top side, and now we've got equal lows right here. So we would never take this mitigation here. And then obviously to add to that, it's Asia whipsaw. So again, we actually expect this low to get taken. And so therefore we expect this to be an SMT or an FFS, which would be nicer. It would be nicer if this was an SMT. We come down, we give a little build up. It would have to be a very short build up actually, if we're going to get it within New York chap time. But maybe we don't get the timing. But if we get the build up into So let's say you've got your build up here, then you can potentially, if you're confident, place a limit on this, and this would be your approach 1. So again, it ended up just being an FFS, but we can still see, okay, we've got some potential. Everything looks nice. You've got Asia whipsaw, so you know that this low should get taken. That's equal lows 2. And we're vectoring down. Oh, and we do actually have timing. Sorry, I missed that. So timing as well. So you've basically had your cycle complete to the downside as well. So yeah, this is definitely a more advanced one, but it can definitely be taken. You can you can definitely place your limit. Likely you place it as it comes into the FFS right here, but for the moment I think it's more recommended that you all stay like looking for like the safer opportunities. So we've had approach 1. What could we look at now? Well, now that we've had our cycle complete to the downside, we can look for our entry helper. We can look at our entry helper. Remember, the entry helper is only used after you have a complete cycle. And what do we look for first? We look for lets. And then after that, we look for EDMs. Okay, so let's have a little look at the entry helper. If we zoom in here, we see this right here was an M1 let. It's a little bit tricky because technically it only mitigates the M5, so you may have to take it like this, or if you're very confident, you can just take it like that. Yeah, they're too tricky. I don't like picking mitigation zones for limits, and I don't like trading with no imbalance. Isn't there an easier approach? Well, of course. What follows lets? EDMs, right? And when does this EDM happen? At London close. So we can see, okay, we didn't like this one, that's fine. We didn't like this one, that's fine. But this one here, we've got our EDM at London close. You can't really get much better, especially when the target, again, we know it's Asia whipsaw. We've whipped high, we've whipped low, whipped high, whipped low. So what do we expect next? Another whip high. Also, just very quickly, look at how funny this is from a structural point of view. So let's start from here. High, low, 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 no, higher, low, higher, high. Then this is your lower low, and this is your lower high. They expect to sell from here. Okay, so that's where they're selling from. They get tagged in. Lovely. What are they expecting? They're expecting a new low. We give this mitigation. Take them out. Okay, now, oh, of course, I was, it was just a whatever. Now, obviously, we're bullish. They look for this. And then this gets taken out. And then they go, oh, no, this here was just a liquidity grab. It was just a liquidity grab because we've made a new lower low. So now this is obviously going to be the sell. So let's actually look at how many times they've been. So they sold from here. Yeah. And then they sold from, and then they bought from here. Jesus. And then they bought from here. That's another one. And then again, they've sold from here. So what do we expect? Well, obviously we expected this to be an SMT, this to be an SMT, and this to be an SMT. So let's see what happens. There we go. these are our 3 different approaches that we've had. So we managed to get approach 1, approach 3, and approach 4. Before we show the trades, let's see where we should be targeting. We know that at least this high is going to be clapped. So this should be our intraday target, and then our main target is likely going to be the previous day high. Looks pretty clean to me. Clean liquidity grab to the downside with cycle complete at New York Trap. What a beauty. This is the M15 time frame. So let's actually see. As you can see, we gift a reaction, we mess them around, but ultimately it's gone. And we're coming for the highs. So very simple. This one here was 1 to 10, 1 to 12, 1 to 7, and that is just New York Trap we are trading. Look at how coming into this, we're building up, giving the build up, and then we just blast right through. Cannot complain about that at all. Let's get into the next one. So yeah, M5 AUD/USD 28th of April 2022. So again, we're gonna have a couple questions for this one. What is our potential daily cycle? I'll let you guys think about that, and then using that plus what we're also seeing, where could we expect price to go next? So likely, why is this going to be the target? Well, let's go on to the next slide. We can see it looks like a potential Asia whipsaw, as we have induced Asia low right here, and then instantly come up and induced Asia high, all with very strong momentum. These vector candles, right? Lovely, lovely. So after we've whipped low, then whipped high, what do we expect again? Another whip low. But first we can see that we're reacting from this point here, building what? Equal highs. So what can we begin to expect? Likely this will be taken out first, and then we will come down. Again, if we just go over using it with the simplicity approach, you can see we have build up, inducement low, channel into inducement high, but just a minor one. And then we've built equal highs, and now we will likely get boom into continuation lower. So let's have a little look. Perfect, right? So we can see we built the equal highs right here, faking that they're going to hold. This was our FFS. We've got our Asia high inducement. Again, lovely vectors. And then here you can see the POI that we chose. It was a little inducement POI above all of this liquidity right here. Again, this could be approach 1. But this would be quite risky. You need to be very, very confident in your zone to take something like this. So maybe we just sit and wait for something a little bit more confirmed. But we can see that it's all coming together really nicely. So now that we've had our cycle complete with our build up, inducement, mitigation, this was our FFS, what can we look to help us? The entry helper, right? So we've had approach 1, which was a bit of a risky one, and now we can see, okay, London open, we've got M1 let here. You take the mitigation of that, and then again you've got your M1 lets here and here, mitigating this, filling the M5 imbalance over here. What is this? MM1. So we've had London open, sets the inducement, MM1 continues away from that. So now this is looking really good. Probably if I was to take this, I'd probably put my stop loss above here, because you know, it's only going to reduce it a little bit. It's only going to reduce your RR a little bit. You've got a big target. It's better to stay in than to get out, but definitely for this MMM trade, yeah, this will likely be just like that. Maybe if you want to be extra safe, you can put it above that demand right there. So perfect. Now we are building liquidity at our target. This is obviously a false reaction as we've had a break of structure high, quote unquote. So all the smart money traders take buys here, thinking they're the smartest people in the world. Let's see what happens. We also have to think we've had Asia high inducement. So the Asia high breakout traders, their SLs are going to be here. And now look, what are we doing? Oh, there we go. Now we're collecting quote unquote order flow. So people are going to be looking to trade this, but we know, okay, we've got the Asia whipsaw daily cycle. We know that this low is likely a target. And also now that we've built these equal lows, we've shifted structure to the top side. So now even again with huge momentum candle, vector candle, sorry. So even the support and resistance traders are going to be getting in on this. This is possibly another re-entry for them. And then obviously smart money, if they didn't get in here and they're waiting for the more confirmed setup. So now you've had your internal breaker structure, you're waiting for your more confirmed setup. This is what the smart money traders would take. So again, need to be very wary of this one as well, especially with these vector candles right here. So let's also look, it's not the cleanest EDM. So this would be the point, that's your high, that's your low. As you can see, it is an EDM, it's not the cleanest EDM. The better trade would be something like this on the re-entry. And yeah, where would you be targeting? Well, obviously you would be targeting a new low. So let's go look at that. And perfect. It's important to understand where you can expect reactions, because the last thing that you want when you're on the charts is to see a reaction, get really scared. So let's say like, where's my drawing thing? Okay, yeah. So let's say you're in like sells here, and let's ignore all of this price action, right? And we know that this is likely going to be an SMT. And so we can expect a reaction from there. It's either going to be an SMT or an FFS because we've had significant inducement high. And now we need to at least grab some liquidity to the downside. The worst thing that you can do is if this starts to pull back, oh, you get scared, you exit this, but you actually expect a pullback from here. Same with like this sell here, right? It hasn't quite taken the low, it's still building liquidity. Sorry, let me go here. Hasn't quite taken the low, it's still building liquidity. And we can actually expect reactions, you know, for them to fake the fact that, oh yeah, it holds. Obviously it doesn't, but we can expect them to fake that. And you wouldn't, if you're in like the sell up here, the last thing you want to be doing is exiting right here because you got scared of a reaction at equal lows, right? You just go break even and you understand, right, the trade should at least go to here because this is the liquidity. We've got the Asia whipsaw daily cycle. Everything's looking good. And yeah, that is how it should. Basically, the last thing you want is like getting out of trades because you're not understanding, oh yeah, we can have a reaction here, or oh yeah, we can have a reaction here, right? So let's have a little look at all of the trades. Again, can't quite see it, but there is a trade here off the reaction like that. So total, again, this one is up in air, but these two are definitely nice. Personally, I would take this one like this, so maybe reduce the RR on that one a little bit. But yeah, you can see that even this is one of my favorite ways to trade, and it's like, what you do is you identify, so I trade 7 pairs, I identify the cleanest traps on each day, and then like the cleanest inducements, the cleanest inducements each day, and then I just trade away from that, right? And it just allows you to just stack entries in that direction. Personally, I'll only stack 3 entries in one direction. After that point, I'm sort of like over forcing the direction. So once I've got 3 entries short, that'll be it. And you can see if you're really worried, you can maybe like partial here. And yeah, but to be honest, this one is fairly straightforward in terms of like expecting this low to be taken. Perfect.
So what we're going to do is something new. Why not? So what we're going to cover today will be a beautiful, beautiful example. You will love that one for sure. Okay. So what we're going to do is we give you a top-down break analysis about like very beautiful trades and like stuff which is very interesting, and you will see why I mean that. So first thing, as always, we start with the higher timers. You can start with the 4 hour, you can start with the 1 hour, okay? And this scenario we will start with the 1 hour. So what we are about to see and do, first of all, what do we see? We see a huge freaking crazy rally, bullish, really like insane, okay? So what do we see now though? We have a first break of structure, second break of structure. So finally starting to push price bearish. Okay, the next break of structure, which would be important, would be in here. But already we see a switch in character, right, from being bullish to bearish. Awesome. So what do we expect? First of all, we see this point in here, that this is already the push that led to this first ever break of structure in here. Okay, so this is already a very significant zone for later purposes. This is the extreme, but guess what? This is Asia high. So we're not technically interested in looking for mitigation in here. Okay, because this is Asia high, but as long as this is still the push, we expect something to react from here. Okay, what's the next area to the downside we would be interested in? It would be this area in here. This is the imbalance in here on the 1 hour. So if you go to the 50-minute, right? What is that? Okay, nothing clean. Okay, so what do? We go in the 5-minute. Okay, so we're starting seeing this candle in here. Okay, so what we can do, we're taking this candle as our demand candle, as it is the 1 hour time frame as well. Okay, makes complete sense. So this is the next target area, should at least reach if you go bearish in the scenario. So we already have 2 points of interest we would be interested in. Okay, but also, what do we have? Right now, we just in the Asia range, and knowing, okay, this is a possible scenario, and also our higher, definitely more interesting potential area is going here, because we're turning market from bullish to bearish. First indication is the first break of structure here. Okay, so what we do now, of course, we're switching. Let me get my pen. I understand that we have this area which is locking in the bullish trend then, sorry, the bearish trend then, right? And of course, we're having this demand area, which should give a reaction for pullback areas. And then we can look easily for the zone in here. So we're already understanding the bigger picture scenario in this case. Does it make sense? All right, now let me remove that here. What we can do after that, you just go back to the 5-minute and see what the intraday play shows us. We have a bigger understanding of the higher time frames now, and now we're just reacting of what is going on an intraday basis. So what do we see? First of all, we see up rally like crazy, right? We never broke off Asia red, so we just do nothing, right? So okay, there we go. So we have a minor inducement here. Do we induce anything to the left? No. Should we do anything here? No, not really. If anything, we expect like a pullback because it's a minor inducement, okay? But we never expected anything here, so nothing worth trading at all. So what can we do? Just waiting. Awesome. So what is price doing in here? So now we can switch. Let me get my pen. So now, what do we have? We have a minor inducement in here, making fake break of structures. Okay, what is this also? If it's a fake break of structure, it also is an inducement. What is our next area of interest as we never grab liquidity to the high side? It is Asia midline. Have you seen this pattern before? Right, I think you did. So what do we do? Let me remove that. What do? We're switching to the 1 minute, right? And what do we see? Okay, so we see this area in here. There's no imbalances whatsoever. This is Asia liquidity range. Okay, so what is our imbalance? It is from here to here, right above Asia after this liquidity in here. Okay, so what can we do at this point? We're putting our entry helper and see if we're actually getting something. And after this play, remember this play when we have Asia range induced high, comes back to Asia midline and goes higher to grab liquidity. Sounds familiar, right? So guess what happens? Price, first of all, what we can do immediately, because this isn't getting now really clean. Let me remove that. We see already the price is building up liquidity and starting reacting falsely. Okay, so nothing crazy, but at least we understand the bigger picture play. Starting understanding the first pattern to grab these liquidity areas in here to get our potential point and interest in here for the buy side and then look for shorts. Right, but now we understand the price should at least react from this zone in here, which this is the push that led to the first final 1 hour break of structure, showing us the first bearish signs, right? So, but first, at this play, it is just minor inducement low to probably induce here, mitigate Asia midline scenarios to go higher, right? So what we can do in a 1 minute in here, we're taking our zone. This would be our first approach of entering long trades in these scenarios, right? So if you switch back to the 5, what's our target for this possible play? At least areas in here, we expect price to go either to these areas, which is already mitigated, so that's a no-no. Or if anything, it becomes liquidity later, right? And of course, we expect something in here. Would I run a limit on here? No, because it's Asia high. Do I expect a reaction of here? Yes, I do. Will it get induced or mitigated? I don't know, because it's Asia high and I don't want to mess with it. But I guess what? We can react from it. But first, we expect price to even go to these areas. Okay, makes sense. This is a setup we also learned already. So guess what? Price taps into here. Perfect. Gets our first limit triggered. Perfect play. Minor inducement into Asia midline. Obviously, we want to go higher. Right? So guess what happens? Taps in there, even messes around crazy. No problem, right? Still reacting the zone perfectly. Right? And guess what? Now we're getting into London. Awesome. Should we look for a reversal here? No. No. This is not a zone we're interested in. We're interested in is high. Right? So guess what? We can start switching to the 1 minute to see for confirmations. And what do we see already? Right? This point in here and this point in here already gave an EDM confirmation. So we're looking for more upside. Okay, so what do we have? We're now channeling upwards and looking for obviously inducements in these areas. Right? So are we inducement yet areas? No, not yet. So they're even faking it. So that's obviously a fake. Right? So what do we happen? There we go. Why is it a fake out? Why you should not getting trapped into that? Because you never grabbed liquidity in these areas. Right? So you're moving to the 5 minute here to see if it makes sense. And definitely makes sense. This is an inducement and probably mitigation area. But guess what? This is Asia high, so we will never run a limit order in here. We will react instead. So what is going to happen? Price finally. Oh, there's your tube in here. Right? So guess what? That's your vector candle. And now it starts making sense. Okay, so now you can close out this trade in here. Perfect. 1 to 16, whatever it is. But now you do nothing, just waiting. If this point it's either induced, and we do what? We line up with timing. What's our perfect time window? Next one, magic manipulation minutes. So what do we do in this play? We do nothing because we don't know if it reacts from here or it induces the zone. So we just wait. This is probably a false one. We're just reacting, right? Waiting for confirmations, right? Okay. building equal highs here, and finally, perfect. Now we're having our equal highs into inducement of this zone. It makes sense for us. When does it happen? Perfect timing. Okay, so now we're building sense out of the bigger picture. We're having our 1 hour zone, which created the push lower. First, intense. We don't want to play a limit order because again, we don't know if it's getting induced or no. But now we understand the intraday play, minor inducement, retaps Asia midline, huge channel upwards, perfect timing, equal lows into inducement. Perfect. What's the next play we can do? We go to the 1 minute. What do we wait for? What is that? Minor break of structure into what? Mitigation into a let. Okay, so we can play this in here. Just lining up higher time frames, lower time frames with the cycle, right? Obviously, you look for targets later. But guess what? If that's not confirmed enough, no problem. You wait for this break of structure. If that's clearer, right? But guess what? There's your break of structure. So what do you see? Imbalances from here, taking the extreme. Because again, this is not really that much or nice. You're taking whole zone like here. Okay. This is the last demand candle. Okay. And obviously taking these areas with the imbalances. Okay. So you expect price to reach here after now the nicer break of structure. So what can you do? Place a limit order like this. Okay, makes sense so far? Does that make sense? Awesome. Let me just put the Marin in the waiting room. So guess what? Taps in. Perfect. Perfect. Messes around. Should we get freaked out? No. Okay. Moves around, messes around. Right. So if you really wanted to get the mitigation of this one, you could. But for the sake of it, we have already 2 places in. Not interested anymore. Again, there's your mitigation of this imbalance. Okay. Not interested in that. Messes around. Finally, giving a reaction. Awesome. Okay. So what is going on here? Nothing. We don't get any EMs, which makes sense, other than this one maybe. It's not nice though, so we're not interested in that at any means. And if you're looking for the EDM, the last final thing would be in here, but there's no mitigation, so we cannot trade the EDM, even if this point to this point is an EDM and this is the let, but that's not clean. That's a desperate entry in here. If you miss this one and this one, you could enter it here. But again, that's not clean and that's not the way you should do it. Trade the clean ones here and after break of structure here. Minor break of structure into mitigation, bigger break of structure into mitigation. And that would be the EDM in here. Just for the argument's sake of it, you can take it here, but there's no mitigation, so that's not an EDM. Okay, EDM always needs mitigation. So what happens next? Price shoots down. Awesome. So what is the next thing we do? Of course, we are switching time frames and understand the bigger time frame. First of all, our minor target is Asia low. Will it stop there? Most likely not, because we're acting from this zone in here. So what's the next likely zone? You remember the efficiency of the pullback. Next pullback will be here. So you can target all the way down here. Right. If you want to partial out here, possible for sure. But let's just see what happens during the day. On the 5 minute, right? Just waiting. What happens? Magic manipulation minutes. What is going on here? Okay, look at it. This becomes a smart money trap, right? Of course, we're trading into the cycle, right? Of course, but this is trading away from the bigger time frame thing. So this becomes a smart money trap. What is it? An EDM. This point and this point, this point and this point. It's an EDM. Hope everyone sees that with a mitigation. So now you're going to the 1 minute again. What do you see? In here, break of structure, right? You're trading the mitigation of this push in here. After a break of structure. Trading just counter trend in the hedge position. Okay. So there's your counter trend by, obviously that's not a cup trap by any means. That's just, again, the understanding. You're trading a 5-minute smart money trap. You're actually now taking advantage of their trapping. Okay. So target, you don't know, you don't pick anything in here, you just react afterwards. At least you're having a buy position in here, reacting from the smart money trap with confirm with EDM. Okay. So what's going on here? Just waiting until we get something like this. EDM, let in here. So you're closing out this trade with a counter trend 1 to 6. Okay, because again, you don't know if it comes all the way here, but entry level says let, so be aware of it. Okay, you don't do anything here, you're just closing the trade and market reacts immediately. Okay, what's going on here? Do nothing. And now the let is locked in, getting a second let after. So what you do, switching over to the 1 minute, you're still playing the same play. You see, you're still never even lower than Asia low. You're still playing the bearish scenario in here, right? So guess what? You're having a final inducement in here. This was the let. You're having even whatever this weird inducement candle in here. Okay. So what can you do? You're waiting for break of structure. Oops. Trading the mitigation of the inducement, right? If it becomes a let, even nicer. Semi let is it good to take? For sure, you're playing the flow scenario, right? Aiming at, for this one, Asia low. Okay, because this is very, let's say, deep entry in terms of price, right? So Asia, oh, that's not Asia low. That's Asia low, right? Guess what? Perfect reaction in here, right? Oh. So now you're getting into New York Open, trap time, having this huge bullish run. So guess what? They're probably trapping something in here. So you better be aware that this forms probably another smart money trap in here, right? Because again, you're in trap time. Of course, they want to trap. It's trap time for a reason. So you can expect, again, maybe you're stretching out this trade, whatever. Because again, you're very deep entry. They can always come back here and mitigate what? This imbalances. You don't want to mess with it. It's a 1 to 6. It's okay. At this point, you're reacting from price action. Don't want to risk the whole pullback and get a break even on this trade. You always can re-enter if they come back. Okay. And if they still go lower, you have still these positions on. Perfect. Right? You're just reacting. Okay. They're messing around hard. See what they're doing. Okay. Messing around. What do they have? Build-ups. Break of structure. Other way, reacting again from the smart money trap in here. Okay, so what can you do? Okay, this is not clear in here. Let's say this would be an imbalance in here, which is not. Then you could trade the reaction of here. Okay, oh, comes low. Okay. Then again, that's the reaction of, again, the false smart money trap from a let entry. Okay, but then again, that's a very short trade, let's say like this, right? But guess what? Aiming for the next mitigation areas in here for proper order flow, but at least you understand that this reaction makes sense in here based off the let and the smart money trap. So you're switching time frames again for more confirmations. And you're getting a let in here. Okay, that's not bad. Well, failed the let. Awesome. So now you're actually going into here. Awesome. No reaction, no reaction. So what do you do? You switch again from here, you stay short of the zone. Not a problem, right? But at least you're making enough stuff up. Okay. Just following price action comes higher and never taps in here, right? That's completely fine. You don't need to trade it all the time. Okay, so check in here. Okay, what is it? It's still an EDM to this place. This point and this point, this point, this point, it's an EDM. So that just confirms you, okay, price should go lower. Okay, makes sense? So but you don't making any entry up because you're just reacting from it. Now you have London close. Awesome. Okay. So again, there's nothing you want to trade in here because again, you're just wanting from a downside and there you go. And the day starts to an end. So if you want to take positions off of these trades, it's completely possible. We're aiming for 1 to 20 in here and 1 to 57 in here if it actually plays out. So if you want to partial out in here, totally fine because it's day changeover. So again, if we want to see what we have, bullish attempts, minor inducement out of Asia. You know this play, building up liquidity here, tapping into Asia range, mitigation into timing window, perfect. To the minute almost, right, with London open. Awesome trading into the inducement, aiming for higher time frame things, looking for the build-up inducement, waiting for the break of structure after, confirmed by let. Awesome, confirmed also by the other break of structure here, and you're aiming downwards. Playing still the bigger time frame play. You know that this is a smart money trap. You know that market will react from a smart money trap. And again, this just keeps you chill that you know, okay, this is good to hold and you should not freak out because the market gives a false reaction. And even you have this mitigation here. But again, this is just for confidence. That's nothing you should trade. But again, it's more gives you confidence to hold these trades in here because you're still aiming. If you check, remove my pen. If you check on the higher time frames, we're still reacting from this zone and we're still good to this point in here. Okay. So now if you let market do Asia session, right, whatever. There you go, Asia's being formed. Oh, okay. So there we go. Now we're switching time frames. So now we're looking inducement, possible, also would be a break of structure for the bigger picture play, but still we have our demand zone over here. So we're looking now the 5 minute, see what's going on in here. Right? I'm not sure why the thing is going on. So what do we see? Check in the pen, where is going on? So we're having channels downwards, right? Also a little inducement high to go lower, but we're still not even close to this areas in here. So all we do at this stage, let me remove my pen, is wait patiently for confirmation. Again, we know inducement low into this areas would be possible, but again, we should not look for buys in reversal anywhere close because why would the market react randomly out of here? The next area of interest is down here. Okay. And again, the next mitigation then would be the higher time frame mitigation areas. So at this stage, you do nothing and don't get excited that you have an inducement low here. So what do? You just wait. Okay. Okay, nothing to be excited about. Okay, now it looks more interesting because now we're looking actually, what the hell, into an inducement area. Perfect. So now we're getting interested in the mitigation area. Okay. So now it looks more juicy. All right, but what do we do? Oh, timing. Perfect. We have no buildup though. Is that a buildup? No. That is just channeling. Well, like in here. That's not a buildup and nothing we'd be interested in. Timing makes sense, but not the mitigation yet. So even if the mitigation hits here, that's not a limit order. You would react afterwards, break of structure, okay? But now, okay, moving further, awesome. So if anything, you would reacting from this zone in here, okay? If it comes back and gives some let, that's an area you would be interested in. Just because of the inducement, we never had a mitigation, right? So if you check on the left again, this is the candle that should make sense in terms of the supply demand, right? And it never hit it here. So it still stayed short of this area, right? But now timing would make sense. Okay, so we just monitor price and we see, okay, magic manipulation minutes, awesome. Okay, and we already know that this is a smart money trap in here, right? Because again, this is the inducement in here, so that's not an area you should short from. But what do we have now? Again, we have Asia midline. What is it? A liquidity zone, right? Liquidity zone in here. What is EDM saying? It is huge EDM. Hope everyone sees that. This point and this point. Huge EDM. Never got the mitigation zone. Never got a build up. Huh. So what if you break that down to the 1 minute? Here's my pen. So what do we have? Huge channel downwards. Stayed short of the mitigation. That would be our break of structure in here. Never come back here. So now it's the efficiency of the pullback. Okay. But again, we reached now this area first. I have an EDM, so probably most likely cancel out the zone, right? Efficiency of the pullback. Close the zone and waiting for this. And what can we do here? Taking the Asia range, candle in here, right? Makes sense? And that's how we can play easily the plane here. Let's say we're acting from here because we're kind of late. Let's execute actually here, Doppler's here. Our target should be here. Only 1 to 5. It is what it is. Better than nothing, right? Because you're playing the EDM on the higher time frame. 5 minute reacting from the liquidity zone, which is Asia, and aiming for the proper mitigation. Okay, so that's why you're not making stuff up. Even comes back, okay, not a problem. Even mitigates here. Yes, instead of imbalances, you shouldn't be surprised that it comes back. You never had a break of structure, so no break even. Totally fine still. Not getting freaked out. Again, you're waiting for build up into the inducement, right? But guess what? You're just having channels into these areas now. And at this point, it should already be clear that this zone will not gonna work because it will never come this low. And what does it do before? Faking the smart money trap with a minor reaction and then faking it already. So at this point, it will be very clean that this will not gonna work out. What do we have? Okay. Now finally tapping in, still in the build-up phase though. What do we have? Okay, now it should be very, very clean. What do we have in here? Huge as build-up. So what can we expect next? False reaction. So should we question? Easy question. Should we react from this zone in here because we have a break of structure? Is that something you should ever take? Is that a point you should look for? Exactly. No way. No way, because you're trading straight into the trap. This is huge build-up. If anything, false reaction into the inducement, then it's good to go. This is a no area. Okay, so guess what? There's your tube. Vector candles. Now it looks interesting. Do we take a random trade in here? No, the zone is way too big. But now we know the cycle is completed. Okay, so what is the next zone? London, New York Open. Right, so New York Open would be here. Because again, trap time is way too late. Trap time would be over in here. Okay, so we can expect false moves again in New York Open and then right moves here. Awesome. So we're waiting. Okay, and finally, we're having a reaction and understand, okay, this now can definitely be a schematic you see here before. Build-ups, false reaction, inducement with vector candles into already a mitigation zone. So can we technically be done here? Yes. Now this would make sense for mitigation in here, but this alone is not enough. I would wait for a let. If it gives me a let, I take this trade 10 out of 10 times, right? Oh, okay. Comes very close. Not yet the let though. Okay. I would count it in. Fair enough. That would work for me. Trade like this. Because why? Build up, false reaction into inducement, reaction into mitigation, and already almost a let in here. Okay, and again, what do we do? Coming from a higher time frame reaction after London trap, inducement EDM here, now final inducement into the zone, perfect. Okay, so what do you do? Just wait it out. What happens? Price reacts like crazy. What are you going to do here? Let's look at the 1 hour again. In here, what should happen here? Oops, there's my pen. So what do we have? We have this area in here, which finally broke this break in here, finally gives us a major break of structure. So this becomes our extreme. Efficiency of the pullback, we're tapping now into the demand zone. So technically, we are good until here and then look for lower. Make sense? Efficiency of the pullback. We tapped first into demand until we're going into supply like this. Make sense? Go back to the 1 minute to see if you have any confirmation whatsoever. So of course, first of all, we can aim, of course, all the way up here. Becoming a juicy 1 to 40 if it actually plays out. Okay, I would take that. What's going to happen here? All right, awesome stuff. So what are you going to do? Whoops, changing directions. So what's going on here? Okay, got it actually quite nice. Nothing you should trade about, but guess what that is? Huge EDM, look at that. That crazy ass EDM in here. So guess what? That's not a counter trend scenario whatsoever. No Asia midline stuff, whatever. This is a huge EDM in here. Just gives you confidence to what the price will go higher. Nothing I would trade, but again, to understand the price will probably go higher, right? From this here. And guess what? Reacts perfectly. Okay. But now you're in London close, you're not interested in anything in here. Oops. And you easily could hold until next inducement into mitigation of the higher time frame plane here. Okay. So if day closes here, if you want to actually make partials here, oh fuck. If you want to make partials here, that's 100% possible. 1 to 20 partials or 1 to 27 partials. Not a bad day at all for one trade. Okay. Oops. Why is this a valid demand area? Inducement into mitigation. Also huge imbalances here. And again, we line up with the daily cycle. London failed here, come back, give a false reaction, creates an EDM of Asia low into the build-up inducement mitigation. We're reacting the reaction, and now we're good until efficiency of the pullback. Until guess what? This is the 1 hour area of the extreme that did what? This is the extreme that led to what? The break of structure in here. It's the extreme here. So you can expect smart money trap into extreme areas. Awesome. So what we do, we go again, next day. First of all, obviously this trade is out, by the way. That hit TP, 1 to 50, not bad, 1 to 57, okay. So that's your first 1 to 57 trade in here, and you're trading the reversal right after. Okay, not so bad, not so bad. So guess what, you're waiting. Asia is getting formed, do nothing. So at this point already, what can we expect? All right, we can expect either inducement high, off Asia midline or whatever, bouncing higher. You can expect Asia inducement low to go higher. You can expect whatever, Asia whipsaw. There's multiple scenarios you understand so far. At least we understand now we're coming from a 1 hour demand zone and we're aiming for the extreme, which is the 1 hour supply zone. So we know we're in the middle of nowhere. So we're just reacting of what price action is going to do. Okay. So we're just letting price action complete Asia range for a guide. Okay. Until Frankfurt. So now we at London, we are at Frankfurt, right? So we go in the 5, we are in the 5. So what do we see already? So we see something like this. So we already see the building up the channel up, but also channeling downwards for what is that? Channel inducement into probably mitigation. There would be a possible mitigation. What is the entry per se? Okay. EDM. So we're now looking to the 1 minute, right? Whoops. There's my pen. So what do we have? We have a build up inducement candle of the 5 into possible mitigation areas, which is in here based off an EDM. There's not a balance here. It's not a balance here. That's VIX. So the only possible mitigation area of an EDM would be this one, which was just tapped. Nothing I would personally trade a limit of, but just for understanding purposes, you could. Okay. So let me remove my pen. Because why can we take this? I mean, understand this in here. Because again, look at the 5 minute. It's the same shit all over again. Build up, cycle, channel, inducement with speed into a mitigation confirmed by an EDM. Okay. This one, high, lower, this one. This one obviously higher, this one. EDM into a channel, inducement, mitigation, EDM, looking for buys. Nothing I would run a limit on of here, right? Because of course it's Asia low, nothing I would run a limit on. But guess what? What we can do instead, we're waiting for either break of structure equal highs. Now what we have, equal highs off of day open. Okay. So what can we do? That's a possible trade in here, right? Okay, taps in. So that's a possible trade because it's a little bit more confirmed because the EDM hold. And of course, now you can aim for Asia high being closed out. Make sense? So we're just waiting. What happens here? Of course, our ideal scenario would now be Asia range being induced. Perfect. When does it happen? London open. Awesome. So now we look to the left if this is a reaction trade we can take from. Right. So now we understand, okay, what is going on here? Okay. This could definitely not make sense here. Why would this make sense? If anything, we're looking for this Asia range. This Asia range got induced by this in here. Right, makes sense. Because why? There's my pen. This push in here led to finally the break of the day. What is this push doing? Nothing. Right, but this is the intraday candle with the huge imbalances. So if anything, this is already mitigated anyway. Smart money trap in here. And this definitely had an impact in here. Okay, so if you want for minor inducement trades, you can play this trade for sure. So what can we do in here? Same thing as always. Trade a limit of, well, candle like this. Okay. Or you can make it safer and be like this, but it doesn't matter. Let's just understand what's going on in here. Okay. But now we're just confirming the cycle again. We now finally induced Asia high. We still know we should actually go to the upside, but still we have a perfect cycle to the upside. So what do? Just waiting. Perfect. Timing. Taps into it. No, taps not into it. Now it taps. Okay, perfect. Would we react from that? No. What do we wait for? Confirmations. Okay, now we have a record structure. Minor one. Right, but nothing I would limit, ever run a limit on. But again, the whole cycle confirms it. Right. And also, what can we do? Let it play to show. Okay. So what do you have in here? That's your 1 minute lat in here. That's your possible trade. Okay, but again, count the trend. Definitely count the trend. But again, you're just playing the schematic all over again. Okay. Stop would go above you though. Okay, but again, just playing the intraday play, but understanding technically you still want to go to the extreme. But now you're just playing the intraday play in the cycle. Okay. Makes sense? Because again, the cycle is completed. You have channel, inducement, into what? Speed, timing, into mitigation. Asia range got induced finally with timing and speed. Now you're having break of structure. Awesome. So what do you expect technically from the build-up? Right? Of course, inducement low of Asia next, right? But something again you should be careful about because it's still looking for buys. Now what do you got? Okay. So if this plays out like this, what is this? Huge up and down, huge downwards low. What is that? You already know what that is, don't you? Asia whipsaw. So what can we expect? Perfect. Not even in London, not even in New York Open whatsoever. So we still have a lot of time to come higher. So now we look for the next zone, which price would make sense at. This is the inducement area, right? And what's the EDM in here, which led to what? The push that led to this break of the high. So where's the liquidity come from? Here. Does it make sense? Inducement mitigation. Asia whipsaw should whip this whole play here. Yeah. So this trade is out 1 to 10. But guess what? What do? We don't place a random limit in here. Just wait what price action shows us. Inducement in here. Okay. This is my pen. Right. So guess what? Now we're having an inducement in here. Right. Also, if you take this zone, missed it, you're trading the inducement trade in here. But this would be the zone that led to the whole push. So now if you can see if this inducement actually led to mitigation to the left and see if it makes sense. So now we can break it down to the 1 minute. Where's my pen? But this is the 5 minute zone in here. So we're taking a zone because now we're having a break of structure after the inducement. Okay, that's dangerous always. Oh. So let's see if you look at the 1 minute. Okay, and see. Okay, what's the push from here to here? Where's the technically the 1 minute imbalance? It's from here to here. So this is the obviously the other candle direction that led to the push. So let's see on the 5 minute. And out of a sudden, okay, it technically mitigated it perfectly. But we first went for the 5 minute zone. But now remember, adjusting what you see, not what you want to see. What do we have? Huge channel downwards, Asia whipsaw into inducement, technically into mitigation. Not our ideal perfect zone, but on a 1 minute, this was the demand area. Now it gets mitigated. Okay, so what do we do next? We go to the 1 minute again and see what the hell. Oh, not. Oh, I went to the seconds. Oh, shit, I messed that one up hard. Sorry for that one. I went accidentally in the seconds. All right, so there we go. Now what we do, we go not to the seconds, we go to the 1 minute. And what do we see? Okay, perfect build-up, right, into the inducement in here, and we missed the trade. It is what it is. But again, at least you understand that this plays over, right? So if it comes back to these areas, whoops, what does it do? Induce this equal lows in here. Perfect. So what can we expect after? LEDs and EDMs. So what do we have? Nothing in here. Oops, that's our 1 minute, 5 minute LED. That was a little bit too quick. That was our 5 minute LED, waiting for the reaction. In here, trading the mitigation of the 5 minute LED. Obviously, that was a little bit too choopy in here. But that's a possible trade you can take later, because again, it's the order. You missed the inducement trade. The next thing is the 5 minute LED. As you see in here, that's the 5 minute LED. You're trading the mitigation of the LED. All right, perfect. Obviously, we missed this one on the edge here. Not a problem. So now what we do, we go to the 1 minute again and see this huge reaction here. But now we're interested in, of course, our bigger picture play, which is, of course, the final demand area or supply area, whatever, right? So what's the extreme in here? Nothing. What's the push that led to the whole thing in here? This is our 1 hour zone you can run off for the final zone in here. All right, we take this candle here. And again, if you look for the 1 hour, what do we have? This is the push, the extreme that led to break of structure. Finally, what did we have? First, we went into demand, efficiency of the pullback. Now we're waiting for a huge reversal. Now we're having our first break of structure, second break of structure. The whole thing is starting turning over and becoming bearish instead. This is the push that incidented, first of all, this break of structure here. That was the decisional, which was a smart money trap in here for the, guess what? Look at the bigger picture. Decisional extreme. Decisional becomes the intraday counter trend sell, but a smart money trap higher. Reacted from this point in here, daily cycle. Now look at this. Timing is right here. Perfect timing would be 15 o'clock. We are 1 minute short. 1 hour short. So now we're going to the 5 minute again. Look at it. You know, 1 hour short of it, and we still have room to go. So we monitor 1 minute. See this huge push starting to whatever, closing out this trade if you went into there, because now we're monitoring for the overall 4 hour, 1 hour, everything combination of the final sell. Right, so we're just waiting for a perfect scenario. Don't getting faked out by this reaction by any means. We're wanting to this area to be mitigated, right? We do nothing here, not getting faked out. And now the timing starts to come aligned pretty good. Oh shit, there's your final tube, inducing highs one more time. Okay. Taps the extreme. So let's say you would have run in here, right? Again, that's more the advanced shit, but don't care about it too much. Because for argument's sake, tapped in, perfect, and now you're just waiting for what? Okay, messes around. Oh, taps even more, makes a higher high. Okay, not a problem. Not a problem. Oh, there we go. What do we have? Break of structure, finally. What do we do? Limit order of the imbalance in here. Stop goes above the high. Timing to the fucking minute. Break of structure, mitigation. Timing is on point. Fucking cycle, Asia whipsaw. Did you understand actually all these entries? Like actually, what the fuck? That is it. What is it? 1 to 50, 1 to 40, whatever. 1 to fucking 5, 1 to 10, 1 to whatever. 1 to 7, 1 to whatever 16. And guess what? Look at that shit. If you're now taking just this trade alone, this one on the 1 hour. Okay, this is the 15. So this one on the 1 hour here had huge imbalances, right? Again, where is it? Again, line up with daily cycle, inducement, coming into London, inducement mitigation. So now, of course, you don't take this whole zone, you break it down to the 15, see if it makes sense. Okay, still this is the last imbalance in here. As you can see, this in here, by the way, Stockport took this trade, right? So again, this was a news candle, for example, news which just complete the cycle. Look at this trade, by the way, she took it. I admire that shit, but look at it. Perfect daily cycle, inducement in London. What does it do? Building a liquidity, tubing it, creating the low when fucking to the minute in New York trap time. Now look at it, trading equal imbalances at the push in here. And guess what news did? Come back all the way in here and trigger the limit order. That's fucking impressive shit. And that was a news candle and buy, obviously. But now we cannot take this huge candle. We need to take the candle that made an opposite direction, whatever you can call it, resistance, whatever. There's obviously liquidity into the market here before the news. And this is the news candle. They holded the market on purpose for 5 minutes. And of course, you only can do that if you put liquidity into the market. So that's why this candle becomes, of course, an interest. You cannot take this whole candle in here. You're taking the candle that held market for 5 fucking minutes before what? The whole news candle mitigated their position and then shoot it. But that, of course, had a huge impact in here. And also to mitigate the 1 hour imbalance. You see, that's why we're taking this zone in here. After, we obviously, right up before is the inducement into the mitigation. And guess what? It happened right in our time windows. Makes the false reaction never get in there. Sometimes they leave this little gap on purpose to fake you out. Then they're giving the false reaction, forming an EDM off of a liquidity zone, Asia low, giving the EDM, trading into what? Build up, inducement, we're trading the 1 minute reaction, tube, 1 to fucking 40. And guess what? Doing the same shit for that fuckers. Did the same exact cycle. We missed even the buy trend, which was clear as well, but we fucked up the zone in here. It happens. It's the same exact thing. Build up into inducement, into mitigation. If you don't have an extreme, you miss it. Never had an opportunity to re-enter, and re-entry would be here. Never got there, as you can see in the 5 minute. You missed that trade. It is what it is. You take the left after. Perfect. And guess what happened after? That fog is insane. Right? So guess what? If you hold this trade, because what? You're having your 1 hour zone, market turning bearish at this point. So guess what happened? If you hold this trade until now, it is a fucking whatever. What is it? 1 to 100. There you go. That's your first 1 to 100 on the edge. If you take the extreme, that's your first 1 to 160. If I can take it. It's insane shit. Is it that complicated, ladies and gentlemen? Take it all the way down here. Whatever. Where is it? 1 to 50. What in the fuck? Was it that complicated? Ladies and gentlemen, what in the hell? just combining it with the overall picture, waiting until market turns over, trading the higher time as a trend, and look at that fucker. That is to the fucking minute. London trap time. Like, what in the fuck? What can we do? First 1 to 100 trade. There you go. All right, and there we go to the intraday trading master guide. So these master guides videos obviously always fun to do, and a shitload of nuggets hidden for you as well. And again, take a lot of notes because in those videos there's a shitload of content in it. Okay, so if we of course want to find the intraday master guide, first of all we have to look at the bigger picture always, and that would be H1, sometimes can be H4, but usually you don't need it higher, right? So H1 is technically all you need to understand what's going on in the bigger picture. For example, again, if you had it like, let's just pick a random one, like let's say, okay, here trend line upwards, right? Where does it get induced? To a low side, building equal highs, even if you count that in triple. Top obviously induced when low, boom, into here. That's why again this London knockout, for example, happens, and oh my god, is it a beautiful London knockout? Look at it. So again, same stuff all over again. So you know that how to analyze that by now. So as we look here though, we are right on the edge in Asia range in here. So London session, Frankfurt session is about to open. So we look at the bigger picture again, right? We see this huge down run. We see this juicy equal lows again, where Asia low and at previous days low was building the equal low, right? And of course, we already have this crazy up run in here. And what a surprise, what do we have in here? Huge liquidity buildups, faking the resistance or support, whatever in this case is support, right? And then boom, takes that out first, little minor pullback, and then of course aims for the medium, whatever this case could also be major, inducement, boom, when does it happen? London close. So the next day in here, which we are currently in, we have a very good understanding in what direction this day should go, and I give you a hint. It's obviously to the upside overall. First though, if you see Asia range is like this, right, and we are about to mitigate something in here, of course the Mona Lisa scenario would be inducement low into this mitigation in here, and then obviously higher. That would be our Mona Lisa 10 out of 10 trade. So let's dig into this day on the M5 and wait for our deal zones. Again, so this now is a little bit fast forwarded. We had this major or medium inducement play earlier, right? So if you go back again, if you check right here, right, this is of course the previous day's medium major inducement, right before London close in New York trap time. And guess what? We are right here now, and late New York trap time right before London close. That was our medium / major inducement. And look at the next day though. First of all, huge liquidity upside, equal highs like maniacs, right? Build up, getting induced in what direction? High side, what is going on here? Equal highs, equal lows. Gets induced in what direction? Interesting. So again, this is one of my favorite trades of all time, right? Yeah, like that's like beautiful stuff when you have like this channel build up, inducement of the channel. For example, today I record that is the 28th of 18th of July. You can check GF on that, for example, like GBP Swiss franc, exactly 101, the same scenario. Again, it's always the same, doesn't really matter, right? And again, that's why I'm going to trade into the inducement, and we'll dig also into these trade scenarios, which we will call the fast and Frank-Curious trades, because it's usually happening in Frankfurt session and you're trading into the inducement, right? And then obviously into the target of this major / medium inducement, and you refine obviously the zone for more precision entries if you want so. So again, but for now, should be very, very clean. Major, medium inducement, you want to trade away from that, right? You want to trade buy side, obviously. The day shows obviously the build up, equal highs, shows the build up channeling downward, shows this little build up, inducement high to go what? Inducing the channel high side and to smash low with momentum and speed vector candles now into this medium / major inducement. Mona, Lisa, shit. And before that, we even had this juicy printing opportunity to trade inside this inducement into the mitigation for the short side, obviously. And then we close it out here and look for buy opportunities. But that's our 10 out of 10 buy opportunities in here into medium inducement and obviously timing on point. So let's refine it more though. Right, so first of all, we're taking this point of interest, our medium major inducement, break it down into the M1, right? And we can see, okay, that's the extreme. What's the last imbalance zone? Right here, right? That's the last imbalance in here. And we take the supply demand candle, break it down, and so obviously it comes in right here. You also see it on M5. If you open up your eyes closely, that's your last imbalance right in between here. There's no imbalances obviously in here. Same thing in this scenarios. Okay, so that's our juicy point of interest and broken down into the M1. Obviously, you project it out to the right, right? To be right. And then we do the same thing in here and break it down to the M1 to see what's going on. In this scenario, we just obviously see huge down run, taps into the POI, perfect. Okay, so let's see what's going on though. Boom. Right, so first of all, down here, that would be your approach number 1, your extreme limit entry. But again, it looks a little bit like a big zone, right? But technically that would be your extreme limit order. But as you already can see, not ideal as this zone is quite big, right? And quite risky. So that's why it's always better to wait for what? This is the push that led to the low into the mitigation and now finally gave what? A BOS, a relevant break of structure, right? Perfect. So let's see what's going on. Boom. Okay, first of all, after the break of structure, we can refine now our extreme point of interest with imbalances left in here. Timing is perfect, right? We had our higher time from pure one point of interest, broke it down. Now we had our break of structure, so now we can take our mitigation area and refine it on the M1 in here. After the break of structure happened, boom, what a surprise, tapped into, right? So your limit order should wait right here, stop goes below here. And if you break that down to the seconds, again, maybe there's a better entry opportunity in here. We will not do that for argument's sake. And again, you don't need that. The 1 minute is all you need, but I'm just saying, okay? Then guess what? What a surprise. We placed the limit order here, or if you just waited it out, again, you can mark it executed as well in here. Stop goes, of course, below here, right? That's how you should do it. And let's see, what else do we have? Entry helper, not really anything. Okay, so we see there's not and there's no EDMs. Obviously, we don't really look for EDMs in this stage. But first of all, we need price action to roll over the equilibrium, and then we can look for potential let entry. So with that in mind, we know, okay, this entry is a little bit risky, but guess what? Higher time frame mitigation of a medium inducement, break of structure after, right? And then mitigation of the M1, timing perfect as well, right? So guess what? We have still opportunity for let entries, right? So we have to wait a little bit to figure it out. And as we can see, okay, they're messing around in this price action point a lot, but guess what? That's not a low, that go even lower, right, into these areas still, right? But guess what? Gives an internal break of structure into mitigation. And what is it? A let. And if you check the timing, only to the absolute minute. What a surprise, right? Okay, so guess what? We take this mitigation area in here. Candle, perfect, boom. To the minute, mitigation, lovely shit. Gift from the gods. Take it. Boom. Boom! Just chooped out of it after perfect let to the absolute minute of the higher time for mitigation of the break of structure, of the internal break of structure into another mitigation. Let to the minute, chooped out of the target, of course, should be your Asia high, at least for the internal target, right? For the internal perspective, Asia high. But for the bigger picture understanding, you should understand, oh, I'm trading away from a medium inducement, okay? So you can hold it a little bit longer technically, but for the argument's sake, Asia high is always your best target for sure, okay? So guess what? We continue to play though, because as you can see, it has not taken out Asia high, but what can we see? Huge channeling upwards, right? So we draw it in, huge channeling upwards. So again, now you answer that question. What should happen if you see this channel? And again, you still have upside action, but what should happen before? If you set inducement low of the channel, 100% right. There you go. That's your inducement of the channel to the low side. And again, what's our another entry approaches we still had? Extreme, approach number 1, right? Mitigation of the break of structure, approach 2, let entry, perfect. What's the last thing we need to see after let? If you said EDM, perfect, okay? So if we have the inducement low of the channel, we're looking for EDMs. If you check the entry helper, okay. So what do? Marking up our mitigation zone, right? We check the entry helper. If it is a let, what a surprise. It is a let, or what a nice one, right? So guess what? That's perfect because the inducement of the channel we expect anyways into some sort of mitigation areas. Being an EDM confirmed, take it. Take it. And what's the timing? What a surprise. Only magic manipulation minutes to the minute, right? So 6-minute shorts. Close enough. Absolutely master guideline, okay? So guess what? They even mess around though. Completely fine though. So you should not be getting freaked out if they come back after the reaction. It's completely normal. And then you analyze the charts. Okay. Build up. Right. Channeling. Equal lows into inducement. Left imbalances. Taps into another time. Okay. Completely fine. If that happens, and what a surprise. It chooped out of the and did the same thing even again, right? Build up, equal lows into inducement, build up, equal lows into inducement, build up, equal lows into inducement, boom, boom, boom. They give you so many re-entries, right? That's again where you should not get shaked out, but see the bigger picture and see the smaller cycles in the bigger picture. Never induced Asia high until boom, now. 2 baby cycles in between, build up, equal lows, inducement into mitigation, build up, inducement low into mitigation. Lovely shit. Now the targets are hit, right? And we had a lot of entries. 1 to 12 of the extreme, okay? Not too bad, not too shabby, right? What do we have in here? The better entry, 1 to 27, just for Asia high. Think about that. Insanity. This entry, 1 to 5, not the best one. Re-entry 1 to 8. What? And let's check of how it looked on the M5 like this. Insane, right? Again, we had this one. We didn't even count that Mona Lisa trading, which I 100% would taken if I would be awake in this stage early in Frankfurt, right? Huge shoe blow into the medium inducer mitigation, internal break of structure. Again, that's technically your first entry in here with your extreme order, right? Then again, internal break of structures, that was your second trade. That was your first trade, and the M1 also later gave the let entry. right? So we had the extreme, we had the normal break of structure mitigation, we had the let mitigation, tubed out of the, again, even if you trade M5 order flow, another opportunity in here. That was our EDM trade. And obviously we aim for Asia high. But of course, if you understand the bigger picture, where's your next liquidity area? Right here, get tagged to the absolute pip, right? But before we had this major good intraday liquidity, of course, we aim for that Asia high as well. Boom, juicy out of it. But again, if you want to still hold a little bit, you can, because the next medium inducement is in here. Okay. So guess what? After this medium inducement and after this huge up run, again, you should draw it like this. Build up, inducement low, EDM on M1, boom, goes higher into the medium inducement. Lovely stuff. Okay, so guess what? Now the next timing we look for, magic manipulation minutes 2. After medium inducement to the left, after huge up run, right? Okay, what do we have? Internal break of structures, relevant break of structures after medium inducement, after huge up run. Okay, so what can we do? M5 in here, right? Again, that was our medium inducement after our big up runs, right? Break of structure, relevant break of structure, this zone, you're getting from the M1, right? So that's your break of structure, relevant break of structure, that's your medium inducement on M5. Okay, perfect. And why do we choose this zone in here? Entry helper can give us the magic reason for that, right? So again, we don't know if it's this POI, this POI, this POI, this POI. So guess what? We observe and monitor M1 price action with the entry helper, and when it taps into this point of interest in here, it is a perfect let. Okay, so that's again why it could make sense to refine POIs like this with the entry helper as well. Tapped into it to the perfection. What do we have before that? Imbalances left, right? Perfectly. Again, that helps a lot to be like, why not this POI? Why not this POI? Why not this POI? No, let says ready here. Okay, so that could be a potential area we're interested in. Okay, perfect. So let's see. We had this entry, boom, smoked down. What a surprise. Now, again, what we have, building equal lows like crazy. That's the build-up for the later stage. What do they do before that? Getting a channel downside, building the equal lows. We understand, okay, you can trade away from these little traps as well. When you have that, internal break of structures, mitigation, right? So trade into the smart money trap to obviously look for mitigations of the proper order flow, right? So you have these imbalances left, right? So you can trade into here as well. So why again would you wait until they come back in here? Why are you not like trading into here and then obviously trade lower? That's all the possibilities you have. I just show you everything, right? When does it happen? Obviously New York trap times, you expect some traps going on anyways. So you expect a false reaction into proper mitigation and then obviously lower, right? So let's see what's going on. Right, first of all, internal break of structures into mitigation. Now look at it, juicy quadrillion tops in here, right? So guess what we expect? A tube obviously into the mitigation, order flow away from the medium one, right? Boom. When does it happen? When do they tap in? London close. What a surprise, right? And guess what? You wait for what? Internal break of structure. That's the push, obviously. It led to the high, or if you want to say, even makes a new high in here. So technically, you can say this would also be a break of structure, right? Again, because again, they decided to make one push higher into the mitigation barrier. Completely fine. So that would be your internal break of structure. Completely fine with that, right? So you refine it. That's the push that led to the internal break of structure, right? Or even this one, if you want to see this one. Left the supply demand candle in here. There's no imbalances in here in the extreme. So you take this mitigation, look at the entry helper. What is it in here? What a surprise. Only a let. Off the timing, London close, mitigate some to your left with a nice juicy liquidity grab inside of it. Juicy shit! So guess what? Boom, chopped out of there. Okay. Obviously, you should aim for these what the hell was that? Into this liquidity area build up. That's what I tried to say here, right? And guess what? They only gave the equal lows again, forming the 1, 2, 3, 4, 5, 6. 6 touches to the very strong support zone in here, right? So guess what? You have what in here? After let comes what? The EDM, right? Perfect. So guess what? They tube down, but still stay short of it. And then if you check the timing, now we're out of strike zones. 8 p.m. UTC +2, that's where the liquidity just leaves. And again, they probably save this liquidity areas for when more liquidity is in the markets and then take it out. Because if they take out these zones very late, yeah, it's not ideal strike zones for them. The liquidity is just not there. So again, sometimes they wait for Asia, where the liquidity at least enters an Asia session, or of course major zones, Frankfurt, London, New York, all that stuff. So that in mind, now liquidity is getting very low. So it's best to just close out this trade. And if you're in this EDM, just close it out also, because it's not worth it holding into no liquidity areas and then risking Bs. Just get paid for the day. And let's see what this reversal trades after we had our medium inducement. Again, before that we had 20 risk rewards of 26 plus 10 whatever 6 8 all risk rewards, and we closed everything out here, or other scenarios for Asia high, or best case even here. Then we take the reversal trades or like pullback trades in this scenario, right? Again, we had this trade, potential this one, this one, this one. Let's see actually, and maybe even this one, but let's see what we would have had. Right, so obviously we had this one, where for 1 to 13, not too bad. We had the pullback trade, right? We had a 1 to 8, not too bad. We had obviously this mitigation of London close in here, right? Of unlet, what a surprise. And what was this about? We closed it out at 1 to 8 also. So if you look at it, probably was at 1 to 9-ish, but obviously the target would have been lower 1 to 10, but it's better to just close it out in here. Okay, so that is how the day ended. All based on this juicy medium inducement, and then this medium inducement internally or intraday targets, and then trading away from that. Look at this. Absolute perfection. The only question is, what about this equal lows in here? And that's probably exactly what you ask yourself, because again, you're in the stage already where you understand so much, or you ask this kind of questions like, what about the equal lows? And even if you understand everything before that and can catch multiple 1 to 10s already, you want to understand everything, which is good. So let's dig into it. Why or should it not take out the equal lows? Let's find out. So next day, Asia range. Okay. Did they take out the liquidity in here? They did not. Okay, but what did they do instead? Build up, channeling upwards, right? Tube internal liquidity of the channel still stays inside of this major build up in here, right, for the day. But guess what? So what could happen next in here? Again, very careful if you say take out liquidity low side, build up, inducement of the channel again into mitigation in here for the internal play. That's your next order flow imbalance. Of course, you aim for the liquidity later, but now you had an inducement low of this channel into mitigation. So what should happen next in here? Tube the liquidity first into a mitigation zone again. Again, build up, inducement into mitigation. This again, of course, builds what? Major liquidity down here. Now we have 1, 2, 3, 4, 5, 6, 7 touches in here. Tubed upwards, so support traders getting very hard about that one, right? And of course, the bigger picture is trading away from here, right? But still having this one in mind, right? So again, we're just in between. But of course, we have to trade what's presented to us right now, and that's the vector candles into this mitigation area, right? So guess what we expect in here now? build up, huge liquidity, vector candles high into mitigation. Does it click? Boom! Chup the liquidity. Build the liquidity, chup the liquidity. So guess what? This build up gets taken out, or even this huge build up gets taken out after vector candles into inducement, into whatever, mitigation. Boom. Now inducement, chup the liquidity into what? This zone right here, right? This supply demand candles imbalances, okay, right? So get into the, again, inducement into mitigation. It's always the same. So guess what we expect after that? After an inducement into mitigation, right? We expect a new pullback, build up, right? First inducing low the channel to go even higher, right? Into what? Into mitigation of Asia high this time and aiming for new liquidity low, right? So boom, chup down. Again, channel build up, induce low first to do one push higher into mitigation, inducement into mitigation, right? Now, boom, goes for Asia low, chup the liquidity, right? So what's the next thing again? Build liquidity. You already can see this juicy box in here. What should happen next if we have an extreme mitigation zone, pullback area, mitigation area, supply demand? That again still was our mitigation of the medium major inducement in here, right? So guess what? If they give us a build up right before that in our ideal perfect time window, what can we expect if we see this build up? Huh? Inducement into mitigation, maybe? Oh, when does it happen? Magic manipulation minutes in this scenario. To the minute, right? Okay, so guess what? Is that your approach number one, yes or no? Wasn't this your approach number one, yes or no? You see, it's the same stuff all over. Approach number one, extreme limit order. So again, you could place a limit order in here. But again, this zone is just way too big. So you do what? You wait for internal breaker structures. Again, that's the push that led into the inducement, vector candles, into timing, magic manipulation minutes, right, into the mitigation. After a build-up, induced high first, into inducement low, into mitigation. There's your internal breaker structure. There's your imbalance areas. That's your point of interest. After the breaker structure, after the cycle is completed. Guess what? Taps into, so what is that? Approach number two. What a surprise. Isn't it the same exact thing that we had in here? Extreme, approach number one, later, and then EDM. That's the same thing all over again. What? Right, so guess what? Just make it a little bit bigger so you can see what's going on with the entry helper now as well. Again, this push led into the extreme, mitigation, internal breaker structure. We had this mitigation. We pull up our entry helper. And what is it? What is it? Oh, approach number three. Let on the M5 in combination with a mitigation of the extreme. Balances, let after breaker structure, after overall cycle play completed into a higher time run POI. What the hell? Tubes out of there, right? So what's the only thing missing? If you see this, for example, you draw your build up, right? Draw the trend line, draw the build ups, right? So what should happen next? If you see 1, 2, 3, 4 touches to a trend line, imbalance is left in between here. You want to trade away from this one. You want to trade away of the cycle. Target at least Asia high. What should happen next? Of this build up, what should happen next? Build up getting induced into mitigation. Are you kidding me? Right? So that's your next trade. Entry opportunity right in here. You're aiming for, obviously, Asia highs always. Chup out of there. What? Okay. But guess what? Now, this cycle is completed. takes out obviously 1, 2, 3 price points, right? Asia high has been taken out. This cycle obviously is completed vector candles, takes out this structure point. And we had, if you check now to the left, this was our medium inducement. If you remember, right? From this inducement led to the medium inducement here, took out the structure point. So this technically is our medium inducement. Now we have a medium inducement also with the structure point. And guess what? We have here imbalances, and that's your extreme of this medium inducement right there. After what this cycle is completed, huge upruns, vector candles, timing to the absolute minute, New York trap time this time, takes out medium liquidity, taps into mitigation of this medium inducement. You see how we all can connect it slowly, okay? So guess what? What's our starter kit variation? First of all, right? What is this? Retail heaven, right? What is this variation? Starter kit. What could this variation turn into? Starter kit, right? So guess what? We're marking up this mitigation zone of the medium inducement after the cycle is completed with vector candles timing to the absolute minute. We had our extreme, we had our let, we had our EDMs, right? Boom, into targets, medium inducement, into mitigation of the medium inducement. Lovely stuff. Boom. There's your reaction, not the nicest one, right? So we have to wait until it's a little bit more clear on the M5. Build up. There's a structural inducement. If it taps into the inducement and induces the structure of the channel, then we would be interested. Induces the channel high and the structure of the channel. So what should happen next? Tubed downwards. Perfect starter kit daily cycle variation. 2 Mona Lisa shit. The only thing which wasn't too clean is of course this entry in here on the M1, or maybe this entry in the M1, but as you can see, everything is there. Sometimes it's just not too clean to take, but it's completely fine. It's completely fine. So guess what? Now you'll probably be like, oh, what happened there? Quadruple bottom, because that's also mitigation. Isn't that a 4 times to the bottom? Should that be taken out now as well? Isn't that a double par top? You're all correct if you say it like that. Very important if you say it in that voice. It's even better, right? But you're correct. Now we're having build-ups in here, double bottom. And again, this also took out something to the left. So this is technically a triple top. And that's obviously a point here. That's another point. That's another point. That's another point. That's, again, a quadruple bottom and a triple top in there. So what's the logical thing that should happen? If you said now, taking out all the liquidity, high and low, 100%. Because that's how it works. They build up liquidity, take out liquidity. So guess what? This day, build up, channeling sideways, induced high, induced the structure in here, high to go what? Lower, into medium inducement, into medium inducement. Right? So that's your Asia play. Induced high to go what? Induced medium inducements. Right? But stayed inside in here. But this is a medium inducement in here. So what should happen after this medium inducement, after this build up and take out medium liquidity? Reaction. Boom. Okay, there's your reaction. So now Asia obviously gives a nice play in here. So that took out the medium one, liquidity, but stayed still inside of here. But that's overall our bigger liquidity. But for now, we're just having this medium inducement, channeling upwards, induce the channel low into what? Asia range is closed now, so that's your Asia midline. There's your imbalance zones. Did we not had that earlier somehow? Huh? If you remember, one of my favorite trades we had. If you never induced Asia high to the high side, but give us this juicy midline play into the inducement of the medium one. Huh? So guess what? We mark it up. We also have day open price on top of midline. We take our entry helper. What is it also? An EDM of an imbalance after medium inducement, after build up, after into inducement, into mitigation. 10 out of 10 trades. So again, what's your entry output confirmation? In the cycle before, you had the cycle before, right? Let, you still have, we only didn't have a let, that's completely fine in this scenario. Next thing, EDM trade into the absolute perfect cycle. Okay, lovely, lovely shit. So that's your buy trade. Equal highs, never got induced Asia high. Perfect medium inducements, channeling inducement into mitigation. Asia midline, day open price, EDM. Oh my god! Right, so of course you're aiming to take out Asia high into the next supply demand areas, at least, right? So there's your tube. Boom. Right, so now if you check the timing, Frankfurt open to the absolute minute. What is this candle called? Was all the way up here. Not sure if you can see that because of the line is to the minute also, but the wick all went all the way up here. Huge vector candles to the absolute minute. So that cycle is completed. Frankfurt open, inducement to the minute. What should happen next to this internal play? If you said take out Asia low now, 100% correct. Right, again, what do we have? Technically, yes, this is your medium inducement. But guess what? What is this? Again, remember, this was also some sort of structure point we had, which led to the medium inducement. But now, again, we have this 1, 2, 3, very close to this one as well. So the Mona Lisa scenario is, of course, to take out this major liquidity now there, and then aim for this 1, 2, 3 top in here. That would be our Mona Lisa outcome. So guess what happened? Choop! Not yet though. Only chooped Asia low, but guess what? Stayed very close, forming the equal lows in here. Right, so guess what? Chooped her. So question for you, will that strong support hold? A hint, look at the timing. New York trap time to the absolute minute right now as well. So should that trap the liquidity and take it out? The answer is, of course, it choops the liquidity. And with what does it do it? Huge vector candles to the absolute minute. London open, right? Everyone's getting some breakout traders jumping right now off the chair, right? And placing the little life savings on that sell. Right? But guess what? Guess what that is also? What cycle variation is this? Induced Asia low, Asia high to the high side. Chooped through Asia range, taking out the medium inducement. What cycle variation is that? Asia whipsaw. Okay, and what a Mona Lisa it is, right? So that's your Asia whipsaw right here. So guess what? If that's an Asia whipsaw, where are we in the daily cycle right now? Where are we in this illustration? Right? Answer is we're right here. Right? So we had our inducement, high side for Asia, choop through it, and just right here. So we just chooped obviously something medium to the left here. So our Mona Lisa scenario is obviously this buy trade in here. And then we can aim for, as we showed it in the illustration, for new highs. Right? And obviously we also understood that our target should be the triple top we had earlier in here. Right? So guess what? Just because we should take out this high in here, it would be this high. Yeah, awesome if that's your target. But guess what? Higher time from liquidity is all the way up here, the triple top we had earlier. All right, so guess what? Chooped! First of all, out of it like nothing, right? So guess what we do? Next stage is always build up the liquidity, channeling upwards, small money trap reaction in here. What should it do to the channel? Induce the channel, choop the channel, right? Boom, goes higher, builds the equal highs in here, Okay, so build the liquidity, equal highs. We use the simplicity approach this time to mix it up with everything, right? Equal highs, equal lows. Okay, so build up, tube the liquidity, inducement. So build up, inducement, build up, inducement. What's the next thing of the simplicity approach? Relevant breaker structure, build up, inducement. That's the push that led to the inducement. Breaker structure, red breaker structure. So 1, 2, 3 steps in. What's the next thing we do? Marking up the mitigation. 1, 2, 3, 4. Build up, inducement, red breaker structure. Marking up the mitigation. Boom. Taps into the mitigation. What a surprise. So what's the next thing we do? Marking up our smart money trap. Very obvious one in this sense, because that's also the equal highs in here. Our major liquidity was all the way up here. There's 1, 2, 3 top in here. Right, so perfect. Smart money trap marked up. You're not getting faked out here. What's the next thing we do? 1, 2, 3, 4, 5, 6. Timing. What is it? Oh, only New York trap time to the absolute minute. After a build up, inducement, red breaker structure, right? Mitigation, smart money trap, timing. What? So what do we expect? Tube. And what does it tube? The equal, whatever, not even equal height, but the quadruple top in here. Oh my God. It's absolutely insane. Just let that sink in and understand the bigger picture. That's the intraday master guide right there for you in a nutshell. 3 days in a row. Get used to it, and you will dodge like the bullets of the market, like Neo in here in the 4th sequence of Matrix, right? Get used to it. It's the most insane shit you could ever experience, okay? So get used to it. Backtest, forward test, practice, life on the edge, practice. Everything is there for you. So just to show you like the difference of the traps versus induce, right? So pretty much when something is trapped and when something is induced, or what is a trap, an inducement, right? So again, a trap always is something that lets you in, but don't give you an exit, right? So again, all the buildups you see, guess what? That's always these traps for the retailers, right? So that's always considered traps. So get what? You always wait for these traps, or aka buildups, and then you wait for what? You wait for the inducement, right? And then you know already the next steps. You're waiting for best case breaker structure, mitigation after that. But always wait for these traps, aka buildups. Very, very easy, right? They're not so hard to track if you know what it is, right? But again, just understand the noun, right? So trap is a noun, obviously. Induce or inducement, like technically is a noun as well, but to induce is a verb, right? So you always have to understand, like the trap is the act of building something, and the inducement is taking them out. Right? So again, hint, one describes a method while the other does something, right? The trap leads to it, the inducement then actually is the act of something happens, right? So let's look at some examples, very easy one. Again, what is a trap versus inducement? Always see it like this in the markets. Like a trap, obviously you see it just does nothing to you. It just wants you to get into it, That's why they're building it up. They're building up these traps. Again, smart money traps, whatever, all these retail traps. They want you to lure you in and give you the reasons. Nothing happens though. It even seems good. You are in the trap and you think, oh, yeah, oh, yoo-hoo, or my double top, awesome. Oh, my trend line, my channel, yoo-hoo, whatever, right? But guess what? The inducement is the punch. And that punches out the retailers, and that's where we jump in, right? So always, but the most important thing about the whole thing is to know what a trap is and know what inducement is, right? So very easy. Again, trap lures you in, says, come here, I do nothing. But then, oh, what? The inducement that punches you. All right, this, right? A trap, oh, but then look at this guy. Right? So be aware of the difference of a trap and inducement. Right? So guess what? Again, in charts, easy stuff. Trap, see like this, already know. Oh shit, that's a trap. Houston, you have a problem. Right? Stay away from that shit and wait. Right? Again, you know already what you can do instead. You wait for chup. And then it's safe to enter, right? You know already the cycle and you can trade into the inducement or trade away from the inducement. Then you combine it to structure and obviously the checklist, timing, tools, entry helper. And that's, of course, the way to go from here, right? So what you will do, of course, you know all the stuff from the traps and inducement, but again, very, very easy stuff. And looks in the chart like this. Again, trap, a method of keeping retailers in the trade and give them reason to take the trades, whatever support, resistance, build up trends, whatever channels, whatever indicators, nonsense, whatever, smart money traps. It's all built up on purpose. You wait for the inducement and then trade away from it or trade into the inducement. Both is possible, as you already know, right? Again, trap, inducement, inducement. So you stay away from traps, you wait for the inducement, then it's safe to enter. Stay away from trap, wait for the inducement, then it's safe to enter. Okay, easy stuff, right? Of course, easy stuff. Again, you saw this example, just again for refresher purposes. Channel, trap, stay away from it. And what do they do? Building up, inducement into what? Into mitigation. But what does this do first? Inducing people the wrong side direction. Channel, trap. What do they do? Inducing people the other way direction. Inducement out of Asia, of course, building up the false channel. Everything looks upwards. Trap, of course, a very easy smart money trap. Huge vector candle. For what purpose? Right, for what purpose? Of course, inducing people short side. Build up, equal lows. To do what? Trap, inducement. Inducing them low first before going higher. Building up the channel, higher, building up, inducing low to go higher. Into smart money trap gives, why is it a trap? Gives a false reaction to what? Build up, equal lows to trap low to go higher into now the final extreme mitigation. All right, then guess what? Builds up equal highs here, builds up equal lows here. Traps lower with speed to do what? Go higher into mitigation. Makes an inducement low to push price lower. People are getting induced low to do what? Into build up, inducement, into mitigation. Just know these little instances here, as we covered it a lot, and you will be good. Just discover them, and also in a bigger picture. Again, huge channel upwards. For what purpose? Just to take it out later. Right? Of course. But enough for that. I hope that's clear. Let's party, right? So, of course, we're here to party. Let's end it off with a good bang in here. So, easy example to warm you guys up. So, what do you do? 50-minute time frame, right? So, first thing what we do, as always, we see what our liquidity areas, right? We see this area, right? We see all the liquidity here, structure point in here, minor one, better ones, and of course, this up here, right? So, what's our next thing to do? Mark up our mitigation zones, right? We have a decisional mitigation, we have our extreme mitigation, we have this liquidity spot and this mitigation zone below that, and then our extreme mitigation. So that's all the stuff you do always before you do anything. Asia has never been induced. At this point, you're just waiting until they show the hand, but you need to mark these zones out before. Always mind inducement points. If there's a mitigation point up there, it makes it sense an decisional point. It does. Right, guess what? This is the push that led to the break of structure, or this Asia low in here. That's the push that made it all, and that's of course your extreme mitigation, and below that is liquidity points, right? So again, that's always the stuff you're doing all the time. Mark these points out before and look at higher time frame, or some even can be the 50-minute for higher time frame. It doesn't necessarily need to be always the 1 hour, the 4 hour, the daily, whatever. 50-minute is in a lot of cases enough for that stuff, right? Because again, you're expecting the intraday play anyways, and that's why the 50 minutes sometimes is enough, right? So again, what can we expect in this scenario? We can expect scenario 1, where it gives like an inducement high into the minor inducement, into decisional levels, right? And then whatever can be an Asia whipsaw, taking out the liquidity into mitigation as it's an Asia whipsaw, then taking out all these liquidity points and goes to the extreme, and then go lower. Then we include the timings, magic manipulation minutes, London Open, New York Open, and New York Trap, obviously, that's a T, right? So guess what? We already have this scenario 1. We can understand this is a possibility. What else? It can happen like this. Induces low first, takes the liquidity into mitigation. When does it happen? London Open. Then maybe gives a decisional area. So maybe this becomes a smart money trap in here, right? To what? The magic manipulation minute. Maybe gives an EDM in here. Never know. And then it goes higher, taking out liquidity to go into the extreme level. And then goes lower at New York trap time. Is a possibility as well. What else can happen? Can happen in here. Okay. Taps into, takes liquidity, gets the mitigation, goes higher, forming like an Asia whipsaw as well, taking liquidity into the decisional level, then moves lower. Of course, this zone gets invalidated, and then goes all the way down here to the extreme, and then goes higher. That's all scenarios that can happen. But guess what? You don't want to guess or whatever, what is most likely. Why would you know that? You don't know what seems more likely, but the question is, right? So pretty much first of all, it's a tricky question of what is more likely in here. But the true answer is, what do you guess is the answer here? Is it scenario 1, scenario 2, or scenario 3? Very good. It's either all of them or none of them, right? So guess what? Very good. So we don't know. It could be either all of them or none of them, right? But guess what? We just reacting and don't predicting. We know that this can be, of course, a scenario. We know, of course, that this can be a scenario. We know, of course, this can be a scenario. Awesome. We just see what prices do, or what price pretty much does, and then we react from that. Then we're using our checklist, our timings, our structure, our indicator, pretty much an entry helper, and then we react from that. But we don't randomly pick, we go into a day and whatever, pick, I expect on Wednesday, that should be a Asia whipsaw. No, that's no point, and you should never do that. So let's go into the price and see what they show. Oh, choop. Okay, so what do we do? And now can we make sense out of here? So what do they do here? So build up, awesome, into a inducement, building up the channel, into what? Into an inducement, into mitigation. Perfect, right? So guess what? Now they're going into minor inducement, into decisional level. It's only interesting for us now because guess what? Timing, perfect, right? So now we're playing up the cycle and we understand, okay, now it is technically a possibility. Awesome. So now we can jump on the 5-minute and react from that, right? So guess what? We're just reacting and looking for M1 opportunities in here, maybe whatever. I'm just showing you the bigger picture so you understand the bigger picture. We dig into entries when I go into trading view. But so you understand the bigger picture and really can pretty much complete it in your head. Is this valid now to go down though? Yes or no? Just in terms of what you know so far. Exactly. So you just need to understand the bigger picture first and see, okay, this is a valid decisional point which led to the break of Asia low. Awesome. So this is an imbalance. Awesome. This is a liquidity point. Awesome. So now my timing. Awesome. I had the cycle before. Channel, equal lows, mitigation area, into inducement. Perfect. Mitigation, timing. Awesome. Use the checklist, checklist. Perfect. So you can, of course, expect a tube. There you go. So obviously, your entry orders would be like in here or in here. Maybe this becoming an M1 lat or this becoming a 1 minute EDM or something like that, right? Of course, that's all possibilities you can look for later. But first, you need to see the bigger picture and understand, okay, technically my cycle is done here. as of all I learned so far. But guess what? We have now in here, right? So guess what? We're having this liquidity area. We're having this huge demand zone, whatever. And now what else? We're having timing, magic manipulation minutes. And what is this now? If it induces high and smashes through it like nothing, what is that? Very good, Ruben. Right, it is, of course, a Asia whipsaw. So what do you do at this point? First of all, you look at the clock, taking out your Rolex and see, okay, first of all, it's magic manipulation minutes. Right, so understand, okay, that's an area I'm interested in. Then second, you use the cycle. Do I get, first of all, my cycle before that? Build up into inducement, into build up into inducement, into mitigation, perfect, into inducement, into mitigation, decisional level, timing, perfect, 1 hour, 1 minute confirmations, perfect, my cells, whatever, perfect, right? The target, of course, is Asia low in here, or liquidity to the left. So now we understand, okay, now it gives me this Play-Doh with speed can be an Asia whipsaw. Perfect. I have an inducement to the left. I have a mitigation zone now. Perfect. So what you do, you use other tools we give you and throw it in here. Chup. So at this point, you already see, okay, what do I have? Asia range. Awesome. Asia range. Awesome. Okay. Not really a minor inducement, would be better, but it's not. Okay, it's just a build up in here, building equal highs. Awesome. Not a problem. What do I have though? London open. Perfect. Right, so now what I have, pullback into mitigation, pullback into mitigation. Okay, so what do I have now? A tube of Asia, into magic manipulation minutes. So now you're lining it up with, to the left. What did we have here? We had like a liquidity zone, which got tubed, induced, and right below that, a mitigation area. Perfect. And now you're using this schematic we gave you, really handed to you, didn't we, right? So guess what? You use that. And what do you expect? What do you expect? First of all, where we are in the cycle, where we are here. Of course, very easy, right? So we are here. We are here. We are having our inducement into mitigation, into timing. Perfectly aligning our schematic play we even handed to you, right? So guess what we expect after that? So what should we expect here now? Just if we follow our structure on a bigger play, not like into digging into entries, but first of all, we are here, right? Okay, awesome. So what do we expect next? We're expecting this in here. So now we're just completing the picture, the puzzle, and understand, okay, this should be taken out anyways. Okay, that's already done, mitigated, perfect, that's done. Asia Whipsaw says, take out this point now. Awesome. What's next? Inducements. There's no mitigation area, whatever. Doesn't even make sense in terms of structure. We're looking for the extreme. Decisional is done. You're taking the next thing, inducements, into valid structure level, which is the extreme, with the imbalances. That's all the way up here. And you expect it when? In New York trap time. Is it possible? You have magic manipulation now. Perfect. Whereas New York trap time could definitely be in here. Makes sense? Awesome. So now you can look in here for valid buy areas. Of course, just playing the timing, the structure, everything you learned so far, and using the tools we gave you for orientation. All right, so guess what? You're expecting guest plays in here, and you're looking for internal breakup structures, mitigation, entry helper, let, EDM, whatever. But you know this play is done, and you expect this in here. Awesome. Right, so guess what happens? A huge tube. There's your internal breakup structure, and whatever, there's your mitigation, maybe under 1 minute. Doesn't matter too much at this point. You just understand the bigger picture, but look at the tube. Whatever, this maybe is your M1 EDM. But you at least understand now, perfect, the play was done here with the Asia Whipsaw. You expect this into New York trap time, expecting inducements, expecting mitigations. Into what? Timing. Timing to the minute. You cannot make that shit up. To do what? Induce high and mitigate to go now lower. So you can close out the buy here, and you're this areas, mitigation area. So you had your huge tube vector candles. Look how they're faking the liquidity, faking the inducement, faking the double top, giving a false reaction, build up, perfect, into inducement. When does it happen? New York trap them to the minute. So now you are here. Okay, to the minute. Okay. So what do you expect next? What do you expect next? Right, you're on the build-up into the mitigation cycle. So of course you're expecting a tube low side now. There's your tube. So now you think like, oh, okay. So what should happen next? Awesome, I look for re-entries. Is this a possible re-entry? I don't know. You're taking out your cheat sheet again. Where are you here? Where are you here in this cycle? Right, where are you here? You are here. Right? Of course, you're expecting this to be taken out. Best case London close. Again, timing is off here. You're smaller than a clock. Right? So again, technically, it's too late to be taken out. But is this valid to go a little bit lower? Yes or no? If this maybe is an EDM, it's a mitigation. London close, should mitigate. Want to get out of there. Right? Again, can be a let, can be EDM, whatever. But is it valid to take? Richard says yes, of course. There you go. If 100% is. So you are here, so timing can be off, but again, smaller than a clock, and there's your tube. So do you see what I mean, guys? We give you the whole structure. Again, we showed you this, whatever, 2 weeks, I don't even know, last week maybe. But again, this, how can we make that shit up? We saw it on first day when I showed you on GU. The same exact fucking shit. Like, we cannot make it up. It's all confirmed with the structure, with the timing, with the cycles, with the whatever intraday cycle, with the entry helper, with everything. And we fucking give you the whole day. Oh my god. Like, you know what I mean? So do this fucking all the time. Use the checklist JP showed you as well. Just use it. Go with structure and take it step by step. Use the guides we give you, use the tools, use the schematics, use the checklist, use the structure, build up and do some mitigation, timings, whatever, tools, everything. Use it. It's there for a reason. So, a last thing we wanted to show you, and again, don't mind the freaking name, because if someone has a better name, you clearly can come up with it. But the name is the Fast and Francterious. I know. What the what the hell is going on here? But anyways, what is the Fast and Francterious? So it's usually a fast trade into the inducement. It happens in Frankfurt session. So get the joke, Fast and Francterious. Right? So guess what? What is going on here? That's, again, one of my favorite trades, and it's the first ever trade you take for the day. And there's usually fast trades and you're trading into the inducement. That's why they're Fast and Francterious, because it's Fast and Frankfurt. Right? So guess what? If I get up in the morning, that's my favorite trade. So that's why I want to show you how what they do. So again, you either have the two variations. You either have the minor inducement first of Asia, and with the liquidity build up in here into a mitigation area, or you never broke out of Asia so far, and then you have an inducement, then you're trading into the bigger inducement. Okay, very easy stuff, but very powerful. For example, as you can see here, we have our variation 2. What do we have? We have our inducement, awesome. So we want to trade away from those inducements, of course, into the next equal lows, or into the extreme, in this case, decisional, because this is the extreme, this is the decisional that led to the whole push. Right, so that's the extreme, that's the decisional, and the next liquidity would be here. But now we know we have this inducement areas up here. So what we can do easily, we know this is our inducement area. We want to trade away from it, and we know our next equal lows are at least here, and our next mitigation area is in here. So why would you wait all the way until they're here and then look for buy in here if you could easily trade in line with those as well? So they, as you see here, inducement, building channel, now Asia midline, and now we're getting into Frankfurt, and now we're having our first EDM mitigation, and we never broke out of Asia. One of my favorite trades. They're so powerful. Again, then you can take this trade for sure into the downside, right? But now you're having a minor inducement. Of course, never induce something to the left at all, right? So guess what? You're getting another EDM, and you're dancing like these guys in here, and that's your trade in here. That's your sell into the whole inducement area. Take the sell instead. Crazy trades all the time that just come from inducements, pretty much not inducement and EDM traders. That's crazy trades. And again, you're starting the day with a huge trade and not picking the reversal all the time. You're actually trading in line with the inducement. And of course, now it hits the decisional level and then it just goes. But as you can see in here, that would be the worst trade in here, like just messing around. And you can start the day easily off with like those trades. And that happened a lot though. Happened a lot. So another one. Look at this. The same shit all over again. You're having channels in here, never induced Asia at all, having your first EDM, second EDM, you're trading into the inducement. Okay, then you're coming back, Asia midline, inducing here, mitigating, going low, and then perfect reversal in here. Okay, but this is the trades you can take easily into the inducement before everything happens. So guess what? Right, we easily can take advantage of those all the time. So what do we have in here? We have this day, right? So what happened here? Channel upwards. There's your imbalance. There's your day open price. There's your channel. That's your inducement low into this thing. You can take the buy in here or wait for the minor inducement. Wait for Asia high being retested, and then you're taking the buy in here. Next target is at least a smart money trap. When does it happen? Magic manipulation minutes. Then you're having your basic Asia high scenario. Then again, into the mitigation, into the let. Anyways, not about that one, right? You're having this same one in here. What do we have? Asia midline. Asia got never induced until here. Minor inducement. Minor inducement here comes all the way back in here, giving you the imbalances of the day open price, giving you an EDM trade. Take the short. Why do you want to hit the short and trade into the inducement? Stay short of the mitigation area. So come all the way back here, taking out now this liquidity, getting into Asia high, Asia midlines. When does it happen? Perfect timing. And now, of course, this becomes a smart money trap into the trades. So you see, there are so many different variations to the theme you can trade easily without making stuff up. Easily, right? Another one in here. And that's where you need to start thinking. You need to start thinking and understanding where's the liquidity. So if you see this days, again, nothing to the left would help you at this whole scenarios in here. Nothing at all would help you. So what do we have? Channeling downwards, channeling upwards, channeling downwards, pullback. There's nothing really you can trade in here, right? But why would you not instead wait for, if not inducement happened or no low lows, you're waiting for Asia low, giving you a pullback, minor inducement. You're waiting for EDM trades and trading into the inducement and then trading the Asia midline continuation. Easily possible. That's your goal right in here. And then again, at this news candles, of course, this is news in here, but where are the buyers in here? Where can there technically be any buyers in this whole play? The answer is nowhere. Where would they buy? They cannot buy here, they get stopped out. They cannot buy here, they get stopped out here. So there is no buy side liquidity at all. So what can you do instead? Asia range, minor inducement, Frankfurt out session, waiting for the break retest of Asia high. That's the only trade that is valuable until what turns out to be in retail heaven. That's the only trading opportunity at all until what? They're building equal highs in here. Now this is the inducement, medium inducement of the equal highs, building first of all, again, everyone is buying now. Now they want to bring sellers in, building the fake resistance, medium inducement. And now you're trading away from this medium inducement. Same thing, Asia range never being induced, minor inducement, coming back into the mitigation, Asia range. Trade this sell instead. And trade in line with the EDMs and mitigations. And I lost EDM in here. You don't need to force reversal trades all the time. Take this buy instead, or this sell instead, again, this buy instead. Like, why you need to trade always the reversal trades? You can trade the continuation trades as well easily. Just understand the bigger picture, right? On the 1 minute, it's whatever. You can even dig in this. It's even clearer. You have this as your medium inducement. You trade away from that, right? Again, you're having your imbalances. When does it happen? At Asia midline. Minor inducement, comes back, mitigates, perfect, EDM, confirms. Comes back here, that's your order flow entry, awesome, makes it low, low, comes back, they open price, be another EDM, just trade in line with the flow. There's no point of picking reversal trades in this area at all. Just trade in line with the trend for additional stuff. In the 1 minute, very clean stuff, isn't it? Right, easy stuff. Just trade in line with the trend a little bit more as well. Don't always force these reversal trades if it's not due. Okay, so easy stuff. Is that clean? Because I think that's done for the examples at this stage. Okay, because what we have, let me just give you the rule sets about this one. Again, it's the fast move into Frankfurt session into London Open, inducing Asia in the meantime, right? So always monitor the structure on the previous day to the left to see if you had an inducement or no, right? And watch out for EDMs and LEDs, easy stuff. And you trade into the inducement. That's the first ever trade you can take on a day, and they usually are really powerful. And again, we will jump into days tomorrow into TradingView and show you all these opportunities like for a whole week, right? So it's very, very easy stuff.
Into a really big example where we maybe go through a week's worth of price action. Okay, so this is our H1 time frame. Okay, we can see prices reacting just below this high on the left. So let's go into the day and let's see what we see. This is FXCM, so you need to be careful because this right here doesn't exist. So here we can see our build up to the long side, very nice channel. We've got our Asia high liquidity, our Asia low liquidity. So what do we know about the day? We have a very clear long build up, so we likely want to see some short traders induced before we can continue long. Okay, yeah, makes sense. Makes a lot of sense. So here, this is just Asia low. We can see we have a false reaction upwards. Frankfurt. Yeah, okay. This isn't a clean POI, but when we see price building above it, we can mark it out to understand, like, okay, we understand that when we come to this point, yeah, we've probably completed our cycle, but we're obviously still going to wait for confirmations. So let's go on to the next one. All right, so here's it on the M1. Again, this would be obviously a lot more advanced, but you have your mini cycle complete here with your build up, inducement high, mitigation on the left, and then your re-mitigation. Again, it's always going to be the same thing. This is why we've given you so many tasks about just repeating and repeating and repeating, right? Build up, inducement, mitigations. Sometimes we don't have a mitigation on the left, sometimes, and the mitigation is actually a mitigation of the inducement. These can be more tricky, but with time, you'll even master these. Again, this is a possible trade to take. You're obviously trading into the inducement, but I think it's more important that we go over the Mona Lisas first. Okay, so we've had a lit cycle in Frankfurt, right? We had our Asia low inducement, and then look at this, right? Lovely vectors, and then we just boom down into Beautiful, beautiful. So much traders are looking to sell from this, right? Because we've had our break of structure to the downside. You know, this is clear imbalance, right? Oh my God, look at this move. Momentum's on our side. We've had a break of structure low. Everything's lining up. Perfect, right? We're now looking to trade away from our completed cycle here. And the question is, do you see what we have? Remember, what can we begin to look for after we've had our completed lit cycle? M5 let, away from our completed cycle. Let's jump into M1 and let's look at some re-entries. Okay. So look at this. This is the M5 let, and then when we go on to M1, we've also got an M1 let, right? Now it's just looking good. Let's pull out our mitigation zone and let price do its thing. So potential mitigation. Yeah, we can even just take it off the M5. You know, we don't have to over refine everything. Okay, so next we need to think about where we should target. And what you need to think about is, remember the H1. So here is where it comes down to confidence. Basically, you've got two good targets. You can either target the H1, and that will be like your overall target, or you can just target Asia high, and that will be your like intraday target. Neither of them are wrong. It's just about your experience and how confident you are. Okay, so again, look, every time, right? Oh yeah, faking that it holds. But look at this. This looks familiar. We've seen this before. Okay, so we've taken this. So now let's have a little look. We just clipped the H1 liquidity after we've had an M5 build up, inducement high, potentially another M5 let, and we're in New York open. So obviously it would be much preferred if we're in New York trap, but this would be one of those times where you say, okay, look, we're not in any specific timing, but we've had a pretty significant inducement. Accompanied with that, we've had a build up underneath it, right? So now we can get a little bit interested. Okay, so you could definitely have a possible loss here, but what we need to remember is that we're trading away from this overall inducement, right? And now we've got a perfect M5 let. So could we, we've had build up, another little mini inducement, internal inducement, so can still be interested, yeah? Okay, and then look at this, right? Even this, all the way to the left, faking that it holds. So potentially this could be our mitigation, but where should we target with this mitigation? Well, the ideal target would be all the way down here, as we've had an inducement high and now we expect an inducement low. This all just becomes liquidity, right? But we also have to acknowledge that maybe we don't get to this point and we need to take into account timing of the day. So if it becomes late in the day, then this will not be the target. And personally, obviously, I just trade intraday. I don't hold like outside of the day at all, really. So this, this is like a pretty ideal target in my opinion. So there we go. We can see on the M1, it got filled. Price came up, filled, and then where would you go break even with this? Well, realistically, you're going to go break even after this low is taken, right? So there we go. We're tagged into that one here, and here we can see London close. So we could, at this point, we could expect a pullback, right? It's quite likely that this target will be hit as we're trading away from this inducement, but it's likely not going to get hit today due to the timing. So it makes sense to just take it off right here. Okay, so there we go. You can see end of day, we pull back, build liquidity for the next day, and also obviously this build up, and then the overall target gets met. What a surprise. Who could have thought, right? Now this becomes very, very interesting. We won't give it away yet, but just look at the higher time frame, look at the H1, and what was an inducement, consider what it's become, right? So this was the previous day. It's a complete channel to the downside. Yes, we induced this low, but it's also relative equal lows. We've also made obviously relative equal lows in this demand. So this demand is almost definitely going to get broken. So looking at the H1, what does this look like? This looks like equal highs, right? So again, when we induced it, it was an inducement, but we also created relative equal highs. So after it traded away, this is us showing the liquidity. So potentially, what could we expect for a day like this? Well, we know that wicks are lovely liquidity, right? People love to put their stop losses below wicks. So potentially we could expect something like this. Yeah, makes sense. Obviously, we're not going to force it, but we can understand that we can expect it. Okay, so price builds relative equal lows with the wick on the left. Notice how they stay within demand to further trick people. We've got the previous day high up here plus equal highs on H1. Then obviously Asia low is also relative equal lows, and then Asia high, right? So okay, so we've got potential POIs to sell down to, but realistically, they're not the best, right? Realistically, you don't really want to be taking a sell from Asia high down to here. But for the sake of understanding, we can understand it. Now we've got 1, 2, and a third tap of this support zone. So what do we expect from here? Well, we're in London Open. We see our vectors up to take out these equal highs, right? These POIs are not for limits, but just for POIs to see if we complete our lit cycle. Now the lit cycle has been complete to the upside, and we have an obvious target, the equal lows down here, right? Let's go into the M1 and find a possible entry. So again, notice how we're taking the entire zone, not just this like little one, the entire, so this up candle and this up candle, the entire push, so the entire supply zone, right? Okay, as we can see, price didn't come back. Happens. We don't want to force a trade. An advanced trade would obviously be to just take it right off the inducement, take it down. But now things become really interesting. We have a potential mitigation zone above all of these equal lows with huge vectors in London Open, so things begin to get a bit interesting. Okay, cycle complete with vectors in London Open. Is this a trade that you can take? Absolutely. This would be your approach 1. And now when you think, where are we going to take this trade? Well, we understand the higher time frame. This is our intraday target. So where is our overall target? Right here, right? So what can we expect from this? We can obviously target the previous day high plus the H1 relative equal highs. And now that we've had a lit cycle complete to the downside, obviously this does give you a bit of shaky hands when we come back into it so many times. These zones are going to become SMTs. And this is where the structure traders are going to want to enter due to the breaks of structure that they've seen. Okay, we've broken structure to the downside. So they're like, yeah, let's sell. So now that we've completed our lit cycle with vectors with a clear target, let's look for re-entries. So now we have our M5 let away from the inducement. After we've had our smart money trap reaction, we have no mitigation to the left. Ideally, actually, to be honest with you, ideally it doesn't come down to here because this demand has been tested so many times that I'd expect this to be liquidity now. So you wouldn't really want this mitigation. But what we can look for is we can look for a mitigation of the M5 let. Okay, so here we see we have our possible mitigation. To be honest, it's probably better to even take it like this, right here, to take that entire demand zone. And then what do we see? Price comes down, tags us in, perfect. Okay, so wow, what a surprise. We haven't seen this one before, have we? They're providing the false resistance at Asia high, giving the reaction. You need to notice how they're constantly trapping and faking people out. Oh yeah, it holds, it holds, it holds. Everyone's got their SLs up here. It holds, it holds. So New York trap time's coming up right here. Let's look for another buy opportunity to fully stack the buys into our target and away from our lit cycle at London Open. So let's go have a look at that. Now we're having an EDM, but we're not mitigating anything. But obviously the EDM does suggest that price is going to continue higher, but we don't have a mitigation, so we can't take that. Now we have a potential mitigation right here, and you look at the entry helper. Ooh, we could have potentially another M5 let to confirm the trade. Again, just trading away from our completed cycle. We understand that all of this is liquidity. We've got liquidity up here. This is our overall target. You see how this just gives us confidence to continue to take the buys. You should also probably partial at Asia high, even though we definitely expect price to come up here. It is good to partial here, especially because this is like 1 to 10. This is like 1 to 7. So good to partial that. Okay, as you can see, price tapped back in. We get our M5 let. Why would you not take this trade? So what should we expect from here? There's only one real answer. Price skyrockets. Are we surprised? Not really. So you can see very clean, right? Now things are looking good. This is the H1. We've induced the liquidity that we built up. See, it's the same even on H1. Every time frame, they build the liquidity, they give the false reaction, they take it out, and then they trade away, right? So let's see. Knowing where our potential targets, knowing that we induce liquidity on H1, where are our potential targets? Well, we've induced significant liquidity, and even before this in Asia, right? So build up, inducement high. Okay, interesting. So what kind of daily cycle could we expect? This is the first significant liquidity point in all of this. You're not going to be choosing little piss random points like this or this. This is our equal lows, and then this would be our main target. We've induced the H1 liquidity high, so now we can expect this. Okay, so from here we can expect a retail heaven or a London knockout. We've induced significant liquidity with strong vectors on the H1. So now the world will be seeing this as bullish, right? Let's just go back to H1. Look at this. Everyone's going to be seeing this as bullish. Okay, so now is the perfect time to reverse on them and take them all out. So let's see. Build up into inducement, even though it's in Asia. Obviously, this would have been much nicer if we had this in London Open. We get our London Open knockout, take that to the downside. Oh, would have been so nice, right? So here we do have our Asia low bounce, but there's no POI to line up for. So this is likely just going to be a false reaction, bringing in break and retest traders, right? We've also got a potential POI up here. What does this POI line up with? Day open, right? So here you can see we have EDM and an M5 let, so you could take it right off here or you could wait for the more confirmed entry. So the more confirmed entry is, we have our cycle complete at London Open, then we come back, mitigate the M5 let and EDM here with another M5 let. Okay, makes sense? That's our entry. So now we know at this point here, we have to know, okay, this is likely going to be a retail heaven daily cycle. So coming into MM2, we see, okay, we've got an M5 let. And then when we go on to the M1, look at what we see. Build up underneath a potential POI. Again, always take the best way to get tagged in. Here, the supply zone is not the best way to get tagged in. Taking it from the imbalance here. So the imbalance fill would be the best way to get tagged in. Okay, lovely build up underneath our potential mitigation zone, right? Boom. Look at how beautiful that is. We have inducement. This was an M5 let. Another build up into another inducement high into our previous inducement zone, trading right away. Perfect. Okay, so now we trade towards the target. So target has been met with strong vectors. It's New York trap time. So it would make sense you TP at the sells and look for buys. Okay, but we've had a significant inducement to the downside, so we need to think about where we would TP and if it would be worth to trade. We would have to TP at the mitigation or imbalance fill on the inducement. So the RR would not be worth it because what time is this? London close. So New York trap provides a pullback for London close to provide the mitigation to continue lower. Yeah, and then now let's see it with the potential trades on. We won't include the inducement trade, just the nicely confirmed one. Okay, so this one is obviously this one's obviously the riskiest one, and then you've got these two absolute beauties taking it down to the overall liquidity target, and then potentially when you're more advanced you can take an inducement trade in here up to this mitigation before expecting end of day consolidation. So this is obviously a slight variation of the daily cycle. Absolutely, it would have been much nicer if we induced Asia high first, but you also had to remember that in the previous day we had a medium inducement, and then Asia obviously also did the build up and we induced the previous day high in Asia. So the main point is to look at how everything is so clean once you apply the timings. Also, you have to understand that yeah, we can understand what the ideal scenarios are, but it's still important that we react. So this is very likely going to be high of the week because of, we've induced the significant H1 liquidity. So we know realistically, okay, this is high of the week. We also see, okay, we induced this yesterday, right? Now, coming into today, we mark up our liquidity here, here, and then our next significant point is up here. We also know that Asia builds a downtrend. So what are the possible outcomes in this scenario? Either we induce low to mitigate the higher time frame inducement, or we just induce high and continue lower. These are our two scenarios, right? Okay, so we can see Asia is building the downtrend. Even out of Asia, we're seeing lots of pins. What is this right here? That's the previous day low, right? And we're seeing lots of pins and strong movement away from that, faking the support, yeah? So we know better than that. What do we expect at this point? Okay, now we have an inducement in London Open. So let's take a closer look. Okay, more advanced entry here because there's nothing on the entry helper, but this would just be a straight mitigation of the inducement. There was no extreme limit entry, so there's no approach 1. So what should we expect? Sorry, what could we expect from here? Let's go into it, right? So this is where things get a little bit more advanced. This is likely not a zone you would set a limit on, right here, at least at the beginning of your journey. But it's important to note that we had an M5 let once we tapped in the zone. So likely we're not going to come lower. So potentially you could take this off the reaction. You know, this close right here, stop loss below here. Perfect, right? So let's have a look. Then even though if we go back, we are expecting price to come back up and mitigate this inducement over here. Normally, it's not best to target mitigations. Personally, I think it's always best to target liquidity. So for me, if I was in these trades, this would likely be my target. Or I would definitely partial here. Definitely. This TP would be the most logical point, especially because we're trading into the H1 inducement. So obviously the main concepts are you want to trade away from your inducements, right? So you have to acknowledge that these buys right here are just going to be pullback buys. Yes, intraday we're trading away from the intraday inducement, but overall we've got that H1 inducement high, so we're trading away from that. So you do have to understand that overall these are going to be pullbacks, but intraday these can be like the main moves, right? So again, so we've TP'd on both of these buys. Now we're again in the build-up phase. Yep. And this is where we want to line things up with timing. This is where the simplicity approach really comes in. So we want to make sure that we don't make anything up and we just play and react to what we see. Okay. So zooming out onto the M15, there's no significant liquidity points here. The first significant liquidity point is up here. So this is likely going to be a smart money trap. And what are we doing within that smart money trap? Boom. Building up, right? Another reason for this being a smart money trap is Asia, break, and retest. So people are in sells here. This is going to be a liquidity zone. People have either already moved their stop losses to break even, or their stop losses are still up here. But we know that this is the overall inducement of the H1 zones on the left. So this is likely not going to get taken. Yeah, so we understand, okay, this is likely high of the week. All right, this is a bit more advanced. So even if you don't understand the entry that's about to come up, as long as you understand why price moved the way it did, that's the most important part. As long as you have the understanding first, the entries can come later. That's completely fine. Okay, so like I said, this can seem like a more advanced trade or a trade in the middle of nowhere, but let's break it down. So we know that we're within a smart money trap. We've got a build up within that smart money trap. New York trap has come, and to the minute at New York trap, we've given an M5 EDM and an M5 let, right? So let's go down into the M1. So we know that this point here, so this point here relates to this point right here on the M5, right here. Okay, so that is the M5 let point. This is the point where we have our M5 let. So we can see we have our M1 build up within the overall M15 build up, right? Which is within the smart money trap. Okay, then we see huge momentum to the downside, inducing low on the M1, right? What are these? Vector candles. Then we have our mitigation plus the M1 EDM. My bad, guys. 2 minutes after New York trap. It wasn't to the minute. So let's just summarize this really quickly. We have had a reaction from the M15 SMT. Then within the M15 SMT, we created a build-up, we channeled, right? Then we induced the channel, the M1 channel that we created here, to the downside. At New York Trap, pretty much to the minute, alongside an M1 EDM with an M5 let. That's a lot of confluences. So what are we going to do? We're going to take the trade. What do we expect? Wow, what a shock, right? Personally, the TP for this one would probably be right here. Don't worry, I'll show all the potential entries afterwards. I just don't want to clutter the chart because it would be lots of green and you wouldn't be able to see all the markings. Okay, so, oh, sorry, I skipped ahead. So now we've completed a potential higher time frame cycle, but we are not within timing. So let's wait for more confirmation. What's the next timing point? We've had London Open, MM1, MM2, New York Open, New York Trap. Next one is going to be London Close. And what do we want to do at London Close? Mitigate. So London Close, let's go down to the lower time frame. Not bad. So this is the M5. So on the M5 you see, oh wow, what a surprise. M5 let, and then here we have our mitigation and then our mitigation of the M5 let. Now, where are we going to take this to? Again, now that we've completed a cycle to the top side, we should come and take the low, right? Higher time frame cycle. We should come and take the low. So that would obviously, if you're going to swing it, then the low would be your target. But for intraday, yeah, I'd probably just close at these equal lows right here. And then price does its thing, comes down. Obviously now we're going to get end of day consolidation a bit. And yeah, so let's have a look at the trades on M5. So look at how beautiful all of this is. And this is just if you close these here. You can partial these here and take these all the way up to this liquidity zone. But you see how nothing was made up. Everything made sense, right? It's just about building confluence and doing what makes sense and letting the trades come to you. 32R in a day with fairly safe TPs and no crazy trades. Can't really complain about that one.
One of my favorite pairs of GBP USD, and I just want to walk you through like a whole, yeah, let's call it a week, whatever, just until this day here. Because what did we have in here? So we had like all the way, and now please make sure to actually stick with my thought process because it will help you obviously further. And if there's any question in between, don't hesitate to speak up because this is really now for you understanding. But now I show you a different perspective, a little bit on more intraday aspect of it. So what do we have? If you jump on the 1 hour, as you already can see, we had a huge down move down, like pretty much all day long. We have down move, down moves, down moves. What do we have now? Finally, we're having, first of all, these huge areas in here, right? First of all, this, everyone should see that huge double bottom, whatever, pretty much crazy. Then even a fake retest, small money trap on a higher time frames. You have the false reaction, inducing whatever high here first, right? Again, inducing people the wrong direction to what here with this wick pushing the market lower, taking finally out these huge equal lows, even more visible on the 4 hour, right? So again, now you know already, okay, shit, they're taking a huge liquidity grab. Perfect. So now you can do finally. Now you're digging into the intraday. Oops, let me remove that here. I didn't show this. Oh my god. Hopefully not, right? So what you do, you just know, okay, this in here finally, and by the way, what do you have here? Obviously, easy stuff. This, of course, being your London knockout. Why? Because again, you're channeling upwards. What do you have? Inducement high out of Frankfurt in this time, and then the whole thing just being a London knockout. Why? Because of course you're having these huge equal lows on the hourlies, right? And again, they're only inducing London, or in this case Frankfurt, then just knocking out all the liquidity moving lower. Same thing here. Now you know this is the liquidity grab, but guess what? It's only good to trade away from it if you have a changing character, break of structures. But did you have that here? That's the push. You never had that. So guess what? The only next thing that happens, again, pull backing a little bit down to give a final impulse, even channeling down like maniacs again, to bring now every single one to the downside. Again, we had this huge break of structures, equal lows of the hourlies, giving now even more bearish attempts to the downside. Oh yeah, if you want to make these lines straight, you can use shift. Let's work like this and this. Right? Shift and then choop. All right. So, by the way, this again, if you're getting confused by an Asia rips in here, fair enough. But this is actually like some sort of Mona Lisa trade. Again, what do you have? You know you're having this huge inducement. You want to give a last impulse to get everyone on the wrong side. Guess what? Perfect inducement of Frankfurt here. First, of course, minor one. Another one faking the break of structures first, making now the final inducement. Huge tube into what? Break of structure, mitigation, perfect let, timing, perfect, right? And again, what does it do? Jumps lower, reacts from liquidity zone, which is Asia low, and then just tubes lower than that, right? So again, get not confused by false Asia whipsaws if it actually makes sense to push a lower price, right, in order to bring every single one on the wrong side of the markets, right? So now, what do we have? We know now we have a huge liquidity grab, and we finally pushed everyone with this huge channel, now literally 90% or even 95% on the sell side now. The whole day was selling, higher time frame screaming fucking sells like maniacs. So guess what? We're just waiting for internal break of structures to lock something in, right? So now we actually seeing already, okay, the next day makes what? Finally, we're having changes in characters and getting these intraday, whatever, this internal break of structures. But that shows us, okay, we want to trade away from the major inducement higher. Now they're even making a last push lower, making it a London knockout as well. 2 London knockouts in a row, right? So now we know 90% of the liquidity is short side. So guess what? We are waiting for this internal break of structures, but we don't do anything until what? Of course, Asia session is closed. So now we're seeing, okay, they're making this internal break of structures, change of characters, and now we actually are ready to slowly push the market into the bullish scenarios. So what do we do in this scenario? Nothing. We're just waiting for what? Now we, again, as we moved into it, we know our ideal scenarios. What could happen in this case? You can expect either, where's my pen? Whatever, if something like this would happen, you would not look for a reversal in here. No, you would look for whatever retest, maybe something in here, and then higher, because you know major inducement here, last push to the downside, now change of characters for internal break of structures. But now we're having our perfect ideal scenario. What happens in here? What do? Channeling upwards. Perfect. Never induce something high. Perfect. Even giving like whatever false mitigation here before the channeling downwards, giving a false reaction, right? And then finally, tube to the downside out of Asia range. Perfect scenario. That's literally like a Mona Lisa setup in terms of like structure, bigger time frame, all combinations. So what you do, again, easily, what you can do if you're getting really advanced, right? So let's even put this like here, right? So guess what? This is yesterday's low. So this should be induced. But what do they do before that? Build up into mitigation. So this is a mitigation candle. There's no real liquidity in here. So that's not a point that should be taken out. Already 95% of the people, or again, major inducement low. One final day to induce everyone the wrong side direction. So you know, okay, this is definitely a point that doesn't need to be induced even one more time. Everyone is on the sell side anyways. You can be ready to go long. The only question is, looking for inducement intraday, but then mitigation to the left. That's the only cases when you actually can take like this point in here, because you have so much. Again, someone ask about like, when do you know it's enough? Technically you don't know, but at some point you need to start thinking about, okay, 4 hour major equal lows, and the next day fully channeling downwards, and then finally giving a break of structures in here intraday. Ideal scenario, of course, is always inducing low, mitigation to the left. Okay, so of course you're having this for fuck's sakes in here, right? Whoops, what the hell was that? For fuck's sake in here, of course that will never gonna hold, right? But that's here for fuck's sake. So technically smart money trap, right? So smart money trap into inducement into mitigation. So your inducement would be Asia low, right? Asia low inducement, perfect. And then you're switching to the 1 minute, and then you're easily picking the next imbalance zone, which makes sense after the smart money trap or for fuck's sakes, whatever, and to a mitigation area. Right, so your mitigation would be all this demand in here, right? Oops. So why do we pick this candle? Again, this is technically the one you need to pick the low as well to make this one bigger. So the imbalance is in here. That's the candle that mitigates something in here. Look at it to the perfect, like inducement into what? This is already mitigated. Perfect stuff. Whoops. All right, so just this is the laser low, this is the liquidity, that's the mitigation. Now we're having the same thing all over again. Smart money trap, or for fuck's sake, whatever, into inducement, which is Asia low, into mitigation. Right, the perfect ideal scenario is of course timing. Now you see lower opening. Is it a possibility? 100%. For fuck's sake, awesome. What we expect, an inducement into mitigation. So that would be your first limit order. Okay. Knowing that, again, your first intraday target is of course the Asia range, which will 1 to 10. But if you understand the bigger picture, oh shit, technically I'm in a 1 hour, well, a 4 hour, I took this huge liquidity downwards, I'm having another channel downwards, having an intraday, whatever, change of character, break of structures. So technically, we're good to go a lot more upside, right? Technically, we could go all the way up here, right? This is your decisional level, right? The decisional, that's extreme, whatever. So technically, you can aim for 1 to 50. Easy, right? Could do that for sure, right? But guess what? Intraday target is the Asia range. But if you're combining, of course, the higher time frames, 100%, that thing has a lot of potential. So if you want to borrow a partial out 1 to 10 to pay you for the day, possible. So what happened in here? All right, so we're just playing it, taps into it. When does it happen? Timing, perfect. Channel upwards, false smart money trap in here. Speed, vector candle, smart money trap into inducement, into mitigation with timing confirmed. Awesome. What's the next thing we're looking for, ladies and gentlemen? Please answer. Structure, internal structure, perfect. Right. So if we're looking for an intraday break of structure, is there any chance you have an internal break of structure in here? Yes or no? The internal break of structure would be here, right? So technically we're looking for an internal break of structure, but are we most likely to get that and then all the way down there? I don't know, right? So intraday, just if you think a little bit, we don't really have like an internal structure in here which we can break and then retest. So technically we're looking for mitigation of the inducement, right? So again, we know now, okay, after this candle, where's your imbalance? It's all this candle. That's of course way too big for even enter or entering, but at least we have to understand, okay, that could be a possibility, right? There's nothing really on the 1 minute as well, right? We could be interested in. Whoops. So again, the only thing we're looking for is, again, we know, okay, this is our inducement candle. We're having our imbalance area now set. This is of course the point. We never had mitigation of this area, so we're expecting price to come there at some point, of course, right? So even now building more, and now we're getting a pullback, perfect, and now it comes back to best case scenario. Okay, it doesn't even do it, right? Okay, okay, so that's fine. Okay, so never come back, perfect, doesn't matter. So what's the only thing we can do at this stage? We're looking for what? Magic manipulation next. So technically this would be our perfect mitigation in here. Just stay short of it for like 1 pip or whatever. So that would be too big anyways in terms of trading it. But that's not a problem. The next thing we would do is, of course, magic manipulation magic manipulation mitigation, whatever, if something which makes sense. So now we're having this stay short of it for like 1 pip or whatever. But now we're having this imbalance. Awesome. Right, the next thing we're just doing is trading the order flow. So this gets mitigated, and now we're looking at the time again. Does it make sense in terms of the cycle, timing cycle? What is it? Magic manipulation minutes to the minute. So now we're switching to the 1 minute and see if it makes sense also. Right, at this point, okay, this is technically your demand candle. So this is your magic manipulation minutes. So let's say you miss this trade in here. What you definitely can do as you're just trading the order flow, you never took out Asia highs, you induce low, you're coming off a perfect cycle, you missed this trade, it was too big anyways. So another re-entry opportunity would be this mitigation, and stop goes below, of course, this candle. Timing confirms it, cycle confirms it. Okay, there's no intraday break of structure, it's only a minor trade anyways, it's a 125, but if you missed it, okay, not a problem. Okay, so just say you take this one, taps into it perfectly, right? Okay, awesome. What do we have? Finally breaking out of Asia high, and also now locking in the break of structure. Okay, so this trade is done. Just a minor intraday position, whatever, but just trading the order flow, as we told you. We never had something in terms of LEDs or EDMs. Okay, so the next thing we can do for sure, now we know this is a break of structure. It's not an inducement, it's a break of structure. Why is it a break of structure? Because again, we're having all a whole cycle to the left, higher time frame confirmed, break of structure, and now we have an intraday break of structure. So now what we can do is we're just completing the cycle. We're switching to the 1 minute, and the next thing we want to know is, or we want to see is EDMs. Right? So we're just knowing, okay, we have an intraday break of structure, we have still a shitload of upside movement left in terms of moving higher. So where's our extreme mitigation in the best case? In the best case scenario, our extreme mitigation is of course here, right? So if that gives me an EDM or something of interest, I will be definitely interested in it, right? So we just can wait what price action does. And of course, that's why it's so important to close this trade out in here, because guess what? There's your extreme, that's mitigated in here, order flow, but now we're having like an internal break of structure, which intraday acts as a minor inducement or whatever, because price grabs it and wants to pull back. Of course, after every break of structure, usually getting a pullback. And now if you see this is your mitigation, you would get a break even on this trade, right? If you hold it, if it comes all the way back here. So why not close this out and look for re-entries after? But first you actually locked in a 125 and you're still having holding this trade. Maybe you closed, whatever. Let's call it 20% out over 1 to 10. So this trade was risk-free anyways. You closed at 100%, 1 to 5. So now you're building a buffer. And that's what I love to do. At starting day, closing out a small trade, whatever like this, 1 to 5, 100%. And technically you're good for the whole day because you will not lose 5 trades in a row, right? So that's building a buffer into the intraday plays. Okay, so if you close at 1 to 5, you should not be feared about taking a re-entry in here because you're still having this position on, and also you're just trading a re-entry. So we're just waiting what price is doing. Awesome mini cycle. Oh, and stayed short of it. Okay, so should we be like, oh my god, stayed short of it? No. All right, so guess what? It's not mitigated, so technically it's even nicer. Same thing here, by the way. If it would come lower and mitigates in here, making an inducement and then mitigates lower, awesome, that's good too. But now we're having a proper inducement area right before our mitigation area. Now building up channels, whatsoever, it's always the same. If they stay short of the mitigation areas, always give it a possibility that they induce these points and then tap into the mitigation later. It's always possibilities, even sometimes nicer. So we're having the channel. Okay, so awesome. So again, what do we have? Again, we have a channel upwards, build up. Now we're expecting what? Inducement. So now we know, okay, build up, inducement into mitigation. Perfect cycle. Perfect. What is this thing in here? Let to the downwards. Again, this would be the extreme. This would be whatever, some sort of mitigation, whatever. This is very late, nothing you ever trade, but just for understanding purposes. So if you can expect at this point, false channel upwards into inducement, into mitigation. We expect that, don't we? Boom. That's your trade. Right? Right here. Channel upwards off the breakout structure into inducement, into mitigation for point. Again, this is the point. Check on the 5-minute. This is the point. Again, directly extreme. This is the point that led to the breakout structure. That's some point of interest anyways. Having even really nice mitigation imbalances on the 5-minute. And of course, this was the extreme. And they like, see how they even love to fake that. They're faking the mitigation of the 5, giving a false reaction. But hopefully you're smart enough now that you see channel upwards, inducement into mitigation. Perfect. And of course, on a bigger picture, is of course is in here a huge EDM, right? Technically, it was here EDM as well on the 1-minute, but guess what? If it's a 1-minute EDM, you need a 1-minute mitigation. It never mitigated here. It stayed short of it. So good if that's a 1-minute EDM. It needs a mitigation. That's why it's called equilibrium mitigation or divergent mitigation, whatever. So you need a 1-minute mitigation. You never had that. Comes back after build-up, inducement into mitigation. Perfect. Okay, so that's your re-entry in here. Technically waiting for breakout structures. So that's your breakout structures. Well, that's your breakout structures in here. You would actually look for re-entries in here. But as you already can see, okay, they're giving lets, whatever. Most likely they will not come down there anymore. So that's good. So now we can switch again to the 5-minute. And again, what do? We just not picking a hard target, because again, where would be a hard target in here? Technically, for this trade, okay, you can aim like this areas, right? But you never know. Just looking at the time and you see, okay, trap time is right around the corner, right? So if you want to do anything in here, pen. So you're taking liquidity zones. Again, where's your liquidity zones? Asia midline, this one not really, and Asia low. Okay. Again, this is also the push that insinuated all this. So this could be sense on an intraday basis, only on an intraday basis though. So if you take this liquidity zone in here, okay, Asia low, again, being induced, being retested, and then this whole push acts from here. So this is definitely an area just based on the liquidity and the decisional level that is a point we would be interested in. Taking the demand or supply, whatever, you know, or already confused that all the time. Doesn't really matter. But we don't really want to trade it. We just want to understand it. Sorry, this is the demand candle in here, this up candle in here. Taking this one, you're taking the low of this one because we need to cover it, and then the stop is this supply, whatever candle in here. Because again, think about it, they're pushing price, holding it here, holding. That's why the up candle created, and then the whole thing goes down, right? So this is the candle that has the liquidity in it, and that's obviously also the decisional candle, right? That's why you take this one, but that's only for intraday targets, right? Because again, you expect, okay, why would it react from here? It will not. If it does anything in here, it will fake. That's even nicer if it fakes a double top, whatever. But the logical intraday target for this trade in here would be this area. And also, if we give it a nice cycle, that's also a technical reversal area for intraday. Intraday. You always focus on M1 POIs or some M5 is, for example, in this one, I would not be interested in refining it too much. But if you just whatever look into it of how it would look like, yeah, I don't like it. So again, you could technically refine it in this scenario, but again, you would take in here. That's already mitigated, so we would take in here, but nah. You don't need to refine it for bigger understanding. Just always take the supply and demand candle, the candle which makes an impact in here, combined with the liquidity zones, and then technically wait for the build up before that. You would sound okay. Oh, yeah, that was a weird sound. I don't even know what it did here. But does this point make sense to everyone though? On an intraday aspect, of course, the market will not reverse here completely smashing downwards, but for an intraday target, does it make sense to everyone? Of course, if it gets clearer, of course, with timing, if you get a builder, whatever, if they give an equal highs in here, inducement, then that's a no-brainer that we take that. But just for understanding it right now, we're building up inducement low, having our not even LET, but EDMs, perfect. We're missing even the LET, that's not a problem. We're having our inducement, mitigation of the inducement, our first mitigation of the magic manipulation minutes, our first EDM entry, Now we're just looking for the next area, which makes sense, which is this area in here. Okay, so we're just waiting what they're doing, giving random pullbacks. Oh, and all of a sudden, New York trap time. Okay, so what should New York trap time do? Building traps. Oh, okay. So guess what? They're giving us even fakiness. Perfect, lovely, lovely shit. So building equal highs in here, faking the reversal. So that's for course a trap. Giving even a retest once more, building a triple top, whatever. Awesome. So if anything, what we do here, looking for more buy side, because why the hell would it react from here? This point at 0 to no impact, they're faking the reversal in here. And of course, now we know for fact, okay, what do we have? False buildup. What the hell? False buildup. Now we can expect what? Inducement into mitigation. What's our next timing window? London close. What is it? 17. Should happen like this. Okay, so we can expect that. Okay, even fakes one more down push. Okay, so now again, you already see this will be kind of close. Not a problem. Oh, now London close happens. Okay, 10 minutes in. Okay, close enough. I would assume so. Okay, so it makes sense in terms of the build up, fakiness to the low side, inducement into the wrong direction, into mitigation of a point that has liquidity, which makes sense in balances areas. Awesome. So now this trade is done. 1 to 20 fucking 8 to the minute. Not really. 10 minutes. Yeah, it's not to the minute. Right? But guess what? That trade is done. And if you really, really wanted to, but again, now we're digging into the advanced stuff, your limit order sits right there. Right? But now obviously we're talking about like a little bit more advanced stuff, and you only would place it here once you see the build up and then into the inducement, into the mitigation. Otherwise, there would be no mitigation, no limit order in here. Okay, but now the limit triggers, whatever, the day will close. So the only area you will look for, because the day runs to an end, is the next liquidity area, which is of course this pullback in here, and then you're done for the day. Choop. That's only 1 to 6, but that's done. Right? So that's how you trade intraday and combining with higher time frames. Then guess what? You're still having so much upside. It's incredible, right? So guess what? This is just one intraday play you can easily play. Yeah, just to show you what's possible. Obviously, again, don't get me wrong. You don't need to catch all these pushes by any means. Catch one. Close it at 1 to whatever 10 is enough. Again, for example, think about it. You're catching one of those, which is it's very clean. It's pretty much pretty clear in terms of EDMs, mitigations, after break of structure, after inducement, perfect cycle. You're aiming for the liquidity, right? So if you just catch that, and let's just call it a 1 to 20, and you close it out 1 to 20, that's more than enough. That's more than enough. And then the next day you don't need to fear anything because you're building yourself a buffer and don't need to fear the next trade. So I have a rule which again works pretty good for me, but for me technically the risk is only the first ever trade, because if I close my first ever trade on the day, I'm up for the day, or if I'm down, whatever, if it's getting a loss. But again, for me technically the only risk I have for the day is the first trade. If I close it in profit, the next trades for me are risk free. That's how you're building a buffer. That's where you're getting into the more advanced stages. But for now, focus on the clean stuff and actually close them as a 1 to 10s whatsoever. Right? Because again, that builds confidence, that builds like a buffer, not needing to fear, oh my god. No, pay yourself and actually go with what makes sense. If you have this day now, so we know, okay, this is the intraday play done. Okay, it even goes lower, we don't care. Awesome. So at this point, we're not interested in anything as it turns into Asia. At this point, we're just waiting and waiting and see what they're trying to show us. see our build-ups in here. And now we already see, okay, what they're trying to do. Build up low, whatever, maybe not even inducement here, just this minor build-up to push price higher. Okay, also we're not even interested in anything. We only know we still wanted to trade away from this bigger picture play. We have 95% at this stage, maybe 80% of the wrong direction, right? So if you get on same thing, we don't anticipate anything, we're only making stuff which makes local sense. So you can have, of course, as always, inducement high, and then whatever, maybe this, and go higher, perfect. You can have like whatever, small money trail, like in whatever, like this, we don't know. But again, the best ideal scenario for us is, as always, medium minor inducement into whatever, smart money trap, which would be here, perfect, into inducement into extreme. That would be always our ideal scenario, right? So technically, this is always our perfect ideal scenario if the timing and everything else makes sense. So what we can do in this sense, we just wait, right? Okay, what do they do? Nothing, messing around, building, that's nice. What do they do? Building even equal highs in here. So faking the false inducement low now. Awesome. So now we know for a fact, okay, that is our first inducement in Frankfurt. Okay, what does it do? As always, giving us a smart money trap. Perfect. So what do we do next? We go on the 1 minute and see what point would make sense in here. So we see that's the point Greg asked about. So we see, okay, this is the whole push that led to the whole new breakout structure. The whole push gets initiated from this one. So this becomes our smart money trap. But what do we have of the extreme of this push? We're having our 1 minute imbalance zone in here, right? So we extend this out all the way and could make this sense. Could make this sense on an intraday play. Having a smart money trap, minor inducement, goes a little bit higher, and then instigating an extreme into our extreme, decisional extreme. This whole push led to the whole break, right? So we're having our smart money trap, goes higher into mitigation area. Could this make sense? Yes or no? Perfect. So now we don't even make anything up. At this case, we're just waiting for confirmations. The next perfect thing is, of course, let's say a build up into mitigation. So if you're taking this point and it's here, what ideal scenario would be we're having a build up in here and inducement in here. Timing, breakout structure, that's always our ideal scenario. But we see we're playing the bigger picture and trading away from the all left inducement low, right? After change of characters, after higher time frame, whatever. Right, so the next thing we do, we just do again, guess what? We do nothing. We just wait and wait until they show us the hand. So should we get excited about that? No. Should we be looking for sells, buys? No. We do nothing. Not getting tricked, we do nothing. Okay, they're faking. We don't care at all until actually something happens. So now we're moving into London. Perfect. So what is London to do if they want to push price always in the wrong direction, maybe make an inducement, whatever? We don't know. We're just waiting until they show the hand. Oh, perfect. So what is going on? So now we're looking to the left again, and we see what they're doing. Smart money trap getting attacked. Perfect. So what is going on to the left? We're having, oh, interesting. We're also having this POY, which is the extreme. What do we have above that? Triple bottom, aka liquidity, right above the imbalance. So we extend this push out, the triple bottom, to see what it does. And whoop, what the hell? What the hell? And these fuckers playing a quadruple bottom, whatever. Right? So that's perfect. See, they're building an triple bottom in here. If you make it very accurate, we make it like this. Look at these fuckers. They're faking the quadruple bottom. Okay. Oh, coming even lower. Oh my god. That must be an insanely strong support area. Oh my god. That will definitely hold. You should definitely place a buy now, right? So for sure, that's what we're gonna hold. So that's perfect. That's our perfect build up, quadruple bottom. Now giving a false reaction So that's a Mona Lisa trade again. Timing confirms, build-up confirms, everything confirms. False reaction, that was mob my trap, not really visible. Oh. Oh. Okay. Timing, build-up, false reaction into inducement of the minor, false reaction into inducement, timing, build-up, perfect mitigation. Okay. Oh, okay, that almost stopped us out here. Perfect. Oh, that was really hard. I mean, that almost faked us out here, right? It went 0.5 slower. Like, oh, probably panic closed here, right? With that 30 seconds. So, but yeah, that's done. That's a perfect cycle, isn't it? Isn't that a freaking Mona Lisa trade in here also? Right, so if we're confirming the break of structures for moving away from the major inducement down there. I'm just moving away from that. So guess what we do? Next thing, as always, wait for the mitigation of the inducement. Obviously, that target is higher. So guess what? Intraday target, but makes it sense to close it here? No, definitely not. Definitely not. At least, at any least, that's your at least target in here. 1 to fucking 30, 40. That's your least target you should ever even think about. All right, but guess what? As we're still having this lower position in for huge upsides, if you turn again, whatever, 50-minute, whatever, this is our area that led to the major inducement. This is the whatever, the push in here. So we at least have all the room to this push, which becomes our supply area, internet the whole 4-hour huge liquidity grab. What the hell is that? Right? So guess what? This is still also a potential swing trade in here. It becomes a, or what, a 1-200. I don't even think that will be a possibility in here, but technically it is. Right? Makes sense. So guess what? You can close partials all the way down, whatever, but technically this thing has potential. So we're just waiting if it gives a mitigation. Okay, looks interesting. Oh, stage, oh, comes back. No, switching to the 1 minute. What do we do? Oh, okay. So what do we see? Now we're playing again in line with what we see. We're having this push. So technically that's our intraday break of structure. So now we're having major break of structures. Perfect. Or main break of structures for the day. So technically they will not come all the way down here. That's also 1 minute let. Obviously we would never be interested in that one. But now what do we have? What do we see? What do we have? We're having this let in here. Sorry, this EDM in here. Nothing you would ever be interested in, because why is it an EDM? It needs mitigation. There is no mitigation. There is no imbalance, so nothing you would ever trade off, right? So guess what? You can trade whatever the reaction of it. Maybe if there's no mitigation, you can wait until it breaks or not. But if it holds, you can whatever market execute that. But again, this is something more advanced. You can market execute it later. But that's just advanced. You should not do it right away. So let's just not do it. Okay. And again, if there's no mitigation area, no imbalance, but it still is an EDM, often led or something like that, trading in line with the whole trend. Because think about it. You never induced Asia high anyways. You have a perfect cycle to downside. So of course, you're just technically only looking for higher trades, isn't it? All right. So you wouldn't, of course, this will go smash here. So if you want to take that one straight, of course, you can chase it a little bit in here. You're just looking for trading opportunities, but still you always have the possibility that it goes lower, but this was your 1 minute let, this was your 1 minute EDM. So technically the cycle says you would be ready for it. Let's just say no, we don't break it, right? But guess what? Just choops it. What the hell? Right? Just choops it. Like nothing. And guess what? The only opportunities you would have to re-entry or EDMs and all the way down here. Whatever, where's your next EDM? The open price always is an area of liquidity. All right, so there's what? There's the imbalance, induces break of structure, Asia high comes back, forming a let. Perfect. This point in here. What's going on in here? You should not technically not look at this point at all, but it's a let plus they open liquidity. There's your continuation trade. All right, what's the next point? Inducement out of Asia. Perfect. There's your next area. They're faking smart money traps. Awesome. Giving a false reaction into what? Into EDMs. Taking from here. Okay. Right. So guess what? You're changing time frame again. Right. So what do you look for? Whoops. Just look. I mean. Okay. Now, what is the timing? Magic manipulation minutes. Okay. So what can happen as well? Same thing as always. Looking for more higher sign. Let's see that 50 minutes in here. Yeah. So the next target you should even look for on an intraday basis is, of course, the liquidity again. That's your intraday target. Right. So intraday target is, of course, the liquidity next. Right. Inducement low. This is just the high. We don't really care about that. We care about the liquidity, and that is all the way up here. So now we have magic manipulation minutes. So we're still looking for continuation trades. There we go. Having these points in here. Right, awesome. When does it happen? Okay, not really to the minute. I mean, 9 minutes off forming a let as well. Okay, so let's see if that holds. Oh, comes close. Fails the let, no problem. Still EDM. There we go. Continues higher. That's the mitigation of the whole thing. Still goes higher. Oh, comes really close. Gives us, oh my god, shaky legs. Still goes higher. Perfect. Okay, but that's a shaky one. Oh my god. But again, nothing you would ever take in terms of this high of a structure, just for confirmation that it goes higher. Okay, but again, you would not trade a trade any times so high anyways. Okay. And again, what do we see? Coming closer to our liquidity area. Never induced it anywhere close, did it? All right, so should we look for reversal trades any soon? No. They're faking it. Whoa. There we go. Finally took it out. Perfect. So what's going on? We could look for technically now reversal trades. What's an anti-confluence? EDMs is anti-confluences. If you already see that from 50 miles away, that point in here, that's a huge anti-confluence. What is going on here? Channel. So should we look for and sell in here? Yes or no? Exactly. Huge no. Again, just because it is an inducement in here. Again, they even show it to you. They show it to you. See it. Timing is good. Awesome. But what else do we have? We have build up, EDMs, inducement into what? Into mitigation. So now we're looking at the 1 minute if there's any mitigation point. All right, so there's two choices now. As this was huge EDM, you can take the extreme. That technically is mitigated, so you have two choices. You can take the extreme one like this. That would be my personal reference. But again, if you're not sure, then you're just making the trade like a little bit bigger. All right, so you can make it like this. Right, that's fine too, but that's really big. That's what she said. Right, so you can make it like this as well. Technically, that's the imbalance candle that led to obviously the break in here. Right, that's the candle that started the whole push. Now it's an EDM on the 5 minute, huge EDM also on the 1 minute, so that's good to go. Oh, taps into it. So shaky hands. Oh, that was close. Okay, comes even back. Maybe that's a safer entry in here. Okay, should not get faked out by that shit. I love to faking around, but of course should make at least higher highs. Okay, because again, build up, inducement into mitigation, EDM should go make a new high. That was a sneaky one, but there you go, 1 to 14. Give you some sweaty hands though. Okay, makes sense. But again, safer one is put stop below this structure, and then again, there's no sweaty hands. But again, if you want, still, no break of structure, equal highs. Technically, again, taking the extreme, mitigation, go higher. Same shit all over again. Coming off, of course, inducement into build up, into inducement mitigation of an EDM, timing, what is it? Perfect to the minute. London close, right? Of course, the guys want to go home, then mitigate their position out of it, and then they push price higher. Right? So it's not, again, just follow. That's why you don't getting faked out so easily. Even if you look for inducements whatsoever, Should see the build up. Same thing for Watton, I think it was, right? You asked about this trade. I mean, this one is a tricky one for sure. It's the same thing always. That helps you so much to get out of these confusion trades. You look for the build up into the inducement, into mitigation. Same shit here. Of course, you're having an inducement, but guess what? You have a build up into inducement, into an EDM, into mitigation. Perfect. Make a new high. Right? Make sense? Or is it too much? But should make sense. This whatever, this one runs at whatever 1 to 50 in this stages, so that's not bad. We have still this trade running in here, which is not that bad as well. And then you just play an intraday plays. It's always the same stuff. Small money trap turns out for fuck's sake into inducement into mitigation. Small money trap into an inducement into mitigation. Right? So it's always the same stuff, just different plays. You combine with timing to the absolute minute, to the absolute minute. Again, the safer trades would be break of structures into mitigation. Again, technically would be here. Break of structure into mitigation. But guess what? Unfortunately, they never gave it. Right? So that's not a wick, that's magic manipulation minutes for the ones who have confused. That's not a wick, that's the magic manipulation lime. Right? So technically that would be the ideal perfect scenario. If that would be a wick in here, yeah. Build up, which technically was an EDM on the 1 minute, but then inducement into the mitigation, yeah, that would be a 50 million out of 10 trade. If that would be a wick in here actually, but it did not, so you just missed it. Then you're trading in line with it, right? But of course you're waiting for it. If never presented, no problem, right? But you're trading what you see and not what you wish they will give. Same thing for here. Of course, if you're looking for reversal trades, you have your reasons, but then you should be smart enough to see the build up into the inducement, into a mitigation, into an EDM, into a higher high, into London close. And the stuff is, it's always confirmed with timing as well, isn't it? So it's not the stuff you're making up. You don't make that up. It's confirmed with timing and structure and inducements and build-ups, mitigation, smart money trap, cycle. Same thing here. Okay, so what we have still, we know our area of interest, again, whatever. This is at least the push, the supply zone we wanted to be interested in terms of like anywhere reversals at all. So we know, okay, this is the first time, again, price made a character, change in character after a major inducement. We had a final and last complete day for still whole price movement downwards. Finally, we had a break of change of character in Asia. Perfect Mona Lisa trade in here. Still trading away from this major inducement, or technically this major inducement, the whole play. Another Mona Lisa trade perfectly after that, right? So still we're saying, okay, we're still in the middle of the whole area in here. So you know this is our valid supply zone, perfect, okay? Everything in the middle, again, is just nothing. Small buy traps whatsoever they're using for whatever confusing purpose. And as you already can see, this little push in here turns just to another smart money trap in the process, right? Again, it gives a lighter minor inducement, whatever minor reaction, and then shoop, getting induced, right? So guess what we do? Just in hindsight stuff now. I don't like to do this stuff in hindsight, but as time reasons, let's just do it anyways. So again, what we do, we know, okay, this still is trading away until we have space for the final supply zone. So again, what do they do the next very day? So we had our final last trade for the day in here. So same shit all over again. They're showing insane equal lows. Not only equal lows in here, equal quadrillion million tops, whatever. Right, perfect. So guess what? What do we have? Same shit all over again, giving smart money traps, building false break of structure. Same shit all over again. This becomes your smart money trap. right? Again, think it's always doesn't need to be low here. That's the huge liquidity area. They're faking a smart money trap, faking a break of structure, and then what a surprise! To the freaking minute gives the inducement, right? So now, of course, what we do, as always, right? If you have something like that, switching to the 1 minute, right? Where the hell are we? Something in here. So again, this is the 1 minute. Now this is your inducement. Perfect. So now you're getting into perfect internal break of structure. So now this is valid because now you finally have an inducement of these huge liquidity zones, break of structure into the mitigation area. A little bit big area. It is what it is, right? So guess what? If that's too big, you're waiting for new higher highs being formed. Perfect. Into what? Into EDM trade. Hope everyone sees that. Perfect. When does it happen? Of course, magic manipulation minutes. Not to the minute, but what is it? 9 minutes? No. 8 minutes away. So technically amazing. So if that was too big, not a problem. Guess the EDM trade. Where does it happen? Day open price, mitigation after break of structure, after inducement, timing confirms. Perfect. Right? We aim at least for the smart money trap. Also 1 to 10 trade. Perfect. Switching to the 5 minute. Right? Again, makes sense. Again, this is the least target we take for the smart money trap. When does it happen? New York opens. Of course, we don't expect a reversal here. If anything, we expect a trap in New York trap time. They do it. Why would they ever reverse here in the middle of no man's land? Of course, nobody knows. So that's why you're not trading the reversal in here. Okay, that's where the day ends. Of course, it ends with, as always, London closes and getting out of the right. So that's only valid trade in here after perfect Mona Lisa inducement here, huge equal lows, break of structure, smart money track, false break of structure, inducement to the minute, wait for the now final legit break of structure into EDM trade. Perfect. Perfection, isn't it? Right. So next day, what do we have? Right. So guess what? We don't have an inducement low. So guess what this will become? It will become liquidity for the next day, but we don't know at this point. Of course, at this point, we just wanted to take a short position. That is a short position you should never take. Why? Alex covered it briefly. It is yesterday's high. This is the day from here to here. This is the high. Never take a limit order from these highs. Why does it give a reaction? Of course, to fake people in, right? But what do we have before that? Huge liquidities, right? Where's your valid zone of mitigation? Asia midline, inducement of equal lows, speed, vector candle. That's like a retail thing they love to do sometimes, to just fake. Oh yeah, support works so good. And then they give the false reaction to do what? The next day, of course, they just smash it. But if you see double lows, whatever, these double lows, you should not look for buying here. Never. Again, you look for shorts into it, but again, the only short is this. This is yesterday high. Technically not interested in that. Guess what? They induce this later. And then, of course, this is your inducement. You trade away from it. Guess what? This becomes a liquidity the next day. So it's always, they show it so easily to you all the time. Guess what? Equal lows, smart money trap, inducement, of course, trading into the liquidity, and then again into the mitigation. What's the next mitigation zone? This push in here, which led to the whole scenario, right? And this is yesterday high. This becomes a smart money trap. You have your internal plays, equal lows. Next liquidity area, of course, Asia midline, demand area, build up on the 1 minute, inducement in the 1 minute, break of structure in the 1 minute, into mitigation on the 1 minute, into liquidity. They're inducing high, but before they're inducing high, they're showing me the intraday play, equal lows, vector candle, away from the smart money trap to induce people along that direction, giving you a 1 minute build up in here, into an inducement, mitigation of Asia midline to do what? Smoke the smart money trap. Perfect. Now we're having this inducement, trading away from it. So that's why you don't expect a reversal in here. you're expecting, of course, to take out the liquidity. That's why this kind of retail happens in here. And the only legit area you should look for is, of course, in here with the imbalances that led to the whole push. That mitigates it. At this point, it's really, really messy. I got to break even on that shit. But that's nothing you should really be interested in. And in terms of timing, it was just a mess. But I took this trade in here. Got to break even later, and then it moved away. It is what it is. If you know it's a small money trap, because you have, what do you have? You have breakout structures, right? You know there's liquidity there. You can trade the mitigation here for sure. You have to understand this is a small money trap because this is yesterday's high. They're going for the liquidity, going for the mitigation, and then they take it out. So if you took this sell in here, of course you can. But then where's the target? Target should be at least here, right? So that's only 1 to 6. But again, the next legit mitigation area is Asia midline. It's down there. It's a 1 to 10. But you need to understand it. You need to close it, and then you obviously close it here. You trade the 1 minute plane here, right? And then again, you're aiming for liquidity again. The next day, of course, you're trading up the bigger picture. You're seeing, okay, small money trap being induced. Now, of course, this becomes huge liquidity. Gets smoked. Next legit demand zone gets tapped into. Waiting for break of structure. Extreme. Getting mitigated, but it ends up a break even. This is what it is. We're moving into first day. And again, we're still having in mind, okay, technically, we're still having room to the upside. And this is not something we would really be interested in anyways, right? So again, this is just mess, doesn't really make any impact. So that's not really something you should pull ever mitigation point out of your arse. Again, that's why you're only trading the intraday scenarios and just see what they give you. Okay, so what do they do? Perfect. First of all, again, they're building these equal lows in here. Awesome. So now already we know, okay, we could expect inducement into whatever a valid demand zone. Awesome. So this becomes whatever. Small money trap. They give a false reaction. Right? So they give a false reaction here. Whatever. A little bit tricky to see. They give a little small money trap. So they're ready for the inducement. So they're giving the inducement in here. When does it happen? Okay, not even Frankfurt. Okay, so nothing we would be interested in. Awesome. So now we're just waiting. Okay. We're waiting for what? We're waiting for stuff that makes sense. So we see the bigger time frames in here. That's not something that makes sense, right? Again, we should not pick a random point in here and here and here, whatever. Just playing the intraday play and show what they're doing. So we're switching to the 1 minute in here. And we already see, okay, perfectly building the channel. Awesome. So we know, okay, channel building to the downside of Asia. Inducement. Perfect. There's nothing really that makes that much sense. Other, if you really wanted to play something on supply demand areas, then the only point is again the extreme in here that led to the break in here, or the equal highs, right, on a daily basis, or this level that is now being tapped into, right, in here. So you're just going to the 1 minute and play the play. Like you see, they're giving a build up. Awesome. Okay. So what is going on here? They stayed away, stayed short of the demand area. So guess what? This is your minor inducement that most likely becomes your small money trap. That's a no-no. No-no. And what is it also? It is a lead to the upside. No. Small money trap, only minor inducement. You're expecting another push into the demand, right? Also, the lead helps you to do it, right? And also, equilibrium points downwards. So no. There you go. Now you're having build up. Perfect. Into push. When does it happen? Where's my thing? Frankfurt Open. Almost to the minute. Right? So now it makes sense. Now it taps into demand. Now we're having a channel. Now we're having our small point trap in here. We stayed short of the mitigation. So now we're looking for break of structures into mitigation. Right? Oh, there's your break of structure. Perfect. So now what we do, we're looking for mitigation in here. Right? Or of course, if you want to take the whole demand, in here. Again, it's always depending of how much you refine it, right? So again, this is the whole 2 candles. Again, you can't completely refine it like this, or if you want to get tapped into, then you need to take both candles, right? So I would put a limit here. But this one, no. Here, no. Because again, this is just a little bit way too big and way too random. In terms of daily cycle, it makes sense, but nothing I would ever place a limit on. That's why you're waiting for break of structure. Right, you're waiting for break of structure. Now into the mitigation, and obviously you aim here. 1 to 9. Okay, not too bad. So break of structure, awesome. Even gives another break of structure. Perfect. Taps in, awesome. Even almost goes to this one. Okay, there we go. Tapped into it. Awesome. So what is it? Channel, inducement of Asia, minor one, fake, smart money trap into the mont, timing to the minute, into break of structure, into mitigation. Lovely. The only thing was left is mitigation. Now even equilibrium points upwards. Awesome. So we easily hold this trade until it hits Asia high. There you go. Perfect. So what's the next thing? So now also what we see, oh shit. This was quick. That was very quick. So guess what? It also could have characteristics. There we go. Asia whipsaw. Very good, Richard. Hawkeye. Right? So guess what? The push that led to the structure break in here, it's like this. The one area in here. Right? This is the push that led to the whole structure break. So we can take this demand area. So if it taps into here, that's technically good enough for a demand or supply area that could make sense for an Asia whip. So nothing would ever place a limit on, but something we would understand, okay, if this is an Asia whipsaw, what do we expect? If this is an Asia whipsaw, what do we expect, ladies and gentlemen? So there you go, tube. So where's the tube? The tube would be at least here. Right? If this whipsaw goes into a relative supply area and then tubes. But nothing would ever place a limit on. But at least we understand, okay, this was a push that had a valid area of reversals, because again, this was a push that led to the break of structure. Awesome. So now we're just waiting again for confirmations. So what do? Right, giving. Oh, okay. Giving the false swatted a little bit up in here, a little bit equal highs, and then the tube. And the tube happens, funnily enough, to the fucking minute. To the fucking minute Frankfurt, to the fucking minute London. Awesome. Again, way too big. No limit order here. It's way too big. So we wait for what? We wait for break of structure. Right? So if you're getting more advanced, whatever, you're just getting in here. So if you're getting really advanced, again, what would happen next? You can enter it here. See, that's your inducement, build up, inducement, timing into the mont area and Asia whipsaw. Perfect. So that's your let confirmation. So I take these trades all the fucking time, right? I take it here, whatever, and you aim, of course, Asia whipsaw target. Only 1 to 7 because we took it a little bit late because we waited for the let. Okay. And again, the safer entry for sure is break of structure. Whereas your next area is here, right? So this technically you can play it risky like this, or you play it safe like this. So let's say whatever, I'm not sure. I fucking close this trade in here because it's way too big anyways. I run the risky way. Whatever. So I just show you some variations to the theme. You can whatever do what I just want to show you what I would do in this scenario. I would play in here and go for like a 1 to 20. It's worth it for me. Right? Because again, this is technically the demand area here. Right? But again, whatever you want to do, you go for it. Okay. Again, technically, the more valid play is again stop above here, but that's too big. That's what I 1 to 6. I would fucking risk that. Okay. But anyways, wait for the break of structure. Perfect. False scenario. EDM confirms the little pullback thing into perfect. Hits the trade. Awesome to the tick. And smashes. So what do we expect now? If it's an Asia whipsaw, is Asia whipsaw technically completed? Yes or no? So we're looking at our time and see if we saw this schematic. So we have only a few months left until Asia mitigation. Not completed. Why is it not completed? If we took out this low already. Whipsaw. So it only needs to take out this low and then technically we're done. And that's what just happened, right? One more buy. Exactly. We're still in this little whatever demand area. Right. So again, nothing we would ever trade off. Nothing would ever trade. We wait. Right? Nothing we would ever trade. No, we're not even interested in that shit. We're waiting. Just waiting. See, makes another pull. Like, why would you get induced here? Like, there's no point. Like, why would you trade a random trade in here? Just waiting. Okay. Nothing even break of structures. No here, no break of structure here. No break of structure here. So now we're entering our magic manipulation minutes. Awesome. Okay, so okay. So now we're having our first legit break of structure in here. There's no break of structure. There's no break of structure. There's no break of structure. Now we're having our first legit break of structure here. Happens magic manipulation minutes. Could turn a let. Now again, we're turning price actually above equilibrium. Awesome. We're taking our extreme, and if it lines up with magic manipulation minutes, that's a fucking buy. Oh, okay. Oh, okay. That's your market execution here, or whatever. Let's even work it like this. Why not? After the break of structure. So it should happen again, another whip. Right? Makes sense? We don't mix it up here. Asia whipsaw, that's the Asia whipsaw target. Makes lows. We don't get induced until break of structure. Timing confirms the whole thing. Now we're getting a let. Okay. Right, so there you go. So now we're just channeling upwards. Awesome. You're not interested in that. Okay. What is going on here? What is going on here? Nothing exactly. Okay. So what is going on here now? Okay. That confirms the EDM. Nothing we would ever trade off. Just gives us confidence to hold the trade. This points in here. Get EDM. Nothing we would ever trade off. But gives us confirmation. Hit. To the tick. Makes new highs. Awesome. Right, but technically the Asia whipsaw is done. We could hold this longer for sure. We could technically hold this trade longer, but just for an intraday target, this is done. Another 1 to 10 in the books. Right, but you know, still on a higher time frame, okay. Higher time frame is 5 minutes. Again, this is not. Again, this should go higher. But if you're not sure, just close the trades and wait for confirmations. So you're just waiting, waiting. For example, something like here could turn EDMs, lets, whatever. Switching the time frames. And there's your extreme here. If it's an EDM, yeah, could be technically continuation trade. Taps into it. Perfect. There's technically EDM trade in here. Awesome. Continues higher. We switch to 5 minute. Perfect. What's going on here? Oh, creates a 5 minute EDM now. Hope everyone sees that from this stage, this point in here. At this point in here is already lower. So we're switching to the 1 minute again. Obviously, we can now take this EDM in here as well. Right? For the buy side, of course. Taps into it one more time, messes around, and tubes it. Okay, just trading in line with it. Extreme, EDM, 5 minute EDM. Tube. Continuing the cycle. Right? So guess what? Next timing we should watch out for is New York Open. So now what do we have? Build up. If you check the 1 minute. Building up equal highs. Channeling, making a build up. It's pretty much New York Open. So what is the next time zone we should be interested in anything? Is of course, oops, New York trap time, so we're still away from that. So what should logically happen next? If you're having a build up here, inducement into what? Into mitigation areas, right? Okay. Okay. Oh, so we're switching to the 1 minute. What do we have? This is our mitigation area, inducing Asia midline. So what do we do? It's the same cycle over again, guys. Same cycle all over again. Giving us no break of structure. Okay, oh, there's the break of structure. So what do we do? There's your extreme. There's your buy. There's your mitigation of the buy into, of course, let's say we took it here. Stop goes above here. Very close though, but still held very nicely. So then what's the target for this one? Yesterday. Hi. Next liquidity zone, another 1 to 10. Shoops it. Did we make anything up here? Again, that's again the Asia whipsaw thing. Like, did we make any trade up here? Waiting for the break of structure, waiting for the time. Literally. Okay. Like, is there anything unclear? Like, seriously, please let me know. Is there anything unclear here? Because that's Mona Lisa shit. Like, that's how we have like a little, like a steering wheel, and we could like steer the market. I don't even know what the fuck noise that was. See, like, I don't even know anymore. To smash this madness off. So guess what? We still never went into this demand area, supply area, whatever the fuck it is, right? But guess what? Now it's the last day. It's Friday. It's NFP. NFP is so random. You cannot trade the news. Oh my god. NFP is so random. Whatever, right? So guess what we do? We do nothing until, as always, we have what the hell was that? So do nothing until, of course, Asia is closed. Okay, so if let's continue. Oh, max even low lows. Okay, so that's already like a interesting scenario in here, as we technically induced Asia with Asia itself. So that's kind of weird. So at this point, again, you do absolutely nothing. Right, you just wait what they're doing. Okay. So building channels. Like always, the first thing, an easy thing to do is always just wait for what? Wait for London to open until you get some more clarity. So you never had inducement to the left, no smart money traps, no nothing. So guess what is our first thing to do? We're aiming for the liquidity. That's the first thing we always do, because again, there's no smart money trap, there's no nothing in the middle of the range, you're channeling downwards. You always need a liquidity grab or smart money before that. You never had that, you're just channeling downwards to guess what? Build up inducement into mitigation. If this is your inducement, I would not pick a random mitigation in here, right? So let's see what they do. Okay. Faking. And by the way, if you're getting trapped in this now, and let's say this is a mitigation, at some point you should be like, oh shit, let me actually get out of this trade. Oh, there you go. You see, like, if they reaction once, twice, whatever, 15 times, and don't go in your direction, just close it up, because they will go and induce. So they're building the equal lows, giving the 1, 2, 3 reactions, and then finally, choop, there's your build-up, that's your inducement, that's your bigger channel, that's your inducement, grabbing now liquidity. Awesome. Okay. So guess what? Now we can change it to the 1 minute. And what do we wait for? As always, mitigation of the inducement, of the timing, build up, channel, inducement to your left. Perfect. Waiting for break of structures, ideally. Never got it. Completely fine if it goes whatever. Oh, taps into it. There we go. It's the same shit all over again. Isn't it sometimes repetitive for you guys? It's the same shit all over again. Like, I don't even know. Like, it's the same fucking shit. Right? So you can't even make that up. Like it's the same shit. You're just waiting for liquidity grab, waiting for the build-up, waiting for timing, equal lows, getting induced, waiting for break of structure, mitigation, inducement, timing. Blah, blah, blah. All right. So guess what? The next thing is 1 minute EDMs. All right. So that's our let in here. That's our mitigation of the inducement. Perfect. So guess what? That is already our let. good timing in here. Hope everyone sees that. Let. Tube. Oh, sorry, not let, EDM, of course. Right? So again, technically, that's high, but if you really wanted to, you can take that. Okay. And of course, you aim for jeje high. Right? Types even one more time into it. Messes around here. Okay. That was hard. Right? So guess what? Now NFP is right around the corner. What do we see? What do they show? What is going on? So we're having inducement of Asia. Awesome. What is our next liquidity zone? Yesterday's highs. Right. So what do we expect? Okay. Magic manipulation minutes. What is going on here? Okay, at this point, it's just a joke. Right. So they're making equal highs on yesterday's high. They're building the channel downwards. Right. Okay. Building equal lows, inducing it. Right. Okay. Perfect. Giving false reaction. Awesome. Nothing we would ever be a buy interested in. Right. So you're waiting. Okay. So now we're switching it to the 1 minute. We're having our equal lows, higher time liquidity, having our buildups. Right. So question, what NFP, by the way, is here. That's NFP news release. So any ideas what these random news events we're gonna do? Like we're building a channel downwards, we're having high liquidity upwards. Like is there anything these random news would ever do? But let's see, maybe they make it even obvious. Okay, oh, okay, now it should be very obvious. No, okay, oh. Okay, so make it very easy for you guys. So channel downwards, high liquidity upwards with yesterday's highs. We're having our inducement candle right before the news. Right, so but news are very random, so they don't make sense. And okay. I mean, don't trade news. Don't get me wrong. Don't trade news. But if you do, then trade it right. Okay. Is it that hard? Like seriously, would that be a surprise to anyone in here if that actually would happen? Like out of magic appearance. Okay, so let's see. Oh! Okay. Oh my god. That will reverse for me. Oh my god. It will stop me at a break even. Oh no. That's a break even trade. Alright. So getting freaked out here? No. So we're checking. Our thing in here. Alright, so that's done. Alright. So we're done. Done and out. That trade is done. 1 to 10. Technically close enough, it will not reach it. That news is over. Okay, so you do the inducement. Alright. So yeah, that was crazy. Close enough. Let's actually check. Is anything wrong? Oh no, seems good. That was a surprise. Then again, you need to get out there. Right? So that was a huge surprise. So now, of course, they're messing around. So what do? We're just waiting for 1 minute break of structures, right? And if you get any lets or whatever, you can take the sell. I think even a few people took the sell, if I'm not mistaken. All right, so you're waiting for new breaks here, whatever. There you go. Making a new low, building up the imbalance areas, right? Okay, taps into there. As you sell, where's the sell most likely going to happen? Inducing high, mitigating higher time frames, right? And by the way, just for your interest, these trades in here, they're done, right? Never forget about that. So that's done. If you just check if that hit TP or no. Oh, okay. Whoops. Oh, what a surprise. What a surprise. Oh, okay. What a surprise. Oh, it's only a 1 to 106. You barely even can see it. Let's see if that hit TP as well. Oh, okay. What a surprise. And that's only a 1 to 60. Oh, man, that was an unexpected event in here. Right? So, yeah, I mean, it's so random, man. Like, and of course, you're aiming for this, and then you're done. Done. Technically, if you're not done, what do you have? Asia midline. Right? Asia midline, of course, what do you expect? A mitigation of this demand or supply, whatever it is, taps into the waiting for what? Internal breakout structures into the mitigation. That's your buy trade. And the week is over. Oh my god. Okay. Does anything not make sense? Not even NF fucking P, huh? Like seriously, guys, look at that shit. What the fuck? That is like, what is it? It was something here surprising to anyone in here. What can I say? Like, what can I fucking say? 1 to 6, 1 whatever, 1 to 60, in between, multiple 1 to 10s, 1 to 20s. Like, what in the fuck? Not every single trade in here was made up. Everything was confirmed by either timing, structure, liquidity, the cycle. Like, what in the fuck, ladies and gentlemen? Like, what can we do? Can we possibly even make it up? Like, how? And there we have it, the ultimate blueprint of everything you should know so far in combination. So you have a very good feeling about overall how the market works, what cycle variation we have, how we utilize them, and now we dig into how we actually can trade them with the entry approaches we gave you, right? So it's more than just a dream anymore. It's the ultimate blueprint. So this will be one of the most important videos of week 4, because that is where you have to really put in the work and get used to the entry approaches we have in combination with everything we had before and all the different cycle variations to get prepared and be ready for when a cycle variation appears and how you can utilize your knowledge so far and have an advantage over the markets and know exactly what entry approach to expect also. So let's dig into the blueprint. Okay, so it will be a little bit more theory video, but very important video. So take a lot of notes and maybe even draw this stuff yourself for even better understanding. Okay, so as always, we start with the H1 time frame, right? The 1 hour time frame. And I just gave a basic example here. So let's say we had something like, okay, 1, 2, 3 triple bottoms right here. And then we had this huge tube, medium or maybe even major inducement, right? We already had, okay, Irrelevant breakout structure right in here, right? Perfect. And then whatever market pulls back, and we are right here in the 1 hour, and now we break this down into the M5 as always, right? So this is the M5, but the 1 hour, obviously the box is just like this, right? 8 hours, so 8 candles. More, it's not more like that, right? So again, 1 hour chart, and we're currently here, and then we break this day down on the M5. So if we see this variation on the 1 hour, and Asia range is right here, and then we break it down to the M5, there's 4 potential variations we could expect, right? Because we know this is a minor, medium, or even major inducement, right? Based on the, first of all, H1 and the triple bottom in here, maybe even took out something to the left, even like something like this, maybe, right? Then it's definitely major, right? So, but just let's say this picture, and we just say, okay, for argument's sake, this is just a medium one. It's completely fine as well. But we know we want to trade away from that, but our perfect Mona Lisa point of interest is in here. Okay, so M5 opens up in here, or technically is done already with Asia range, Asia buildup. So technically it would be like something like this, right, on a 1 hour. Okay, so perfect. Then we can expect 4 different cycle variations. The first one, of course, is our starter kit. And now you should already understand in your head how the starter kit could look like. It either could look like, again, inducement high here, maybe into mitigation, right, in London, then goes low, New York in here, and then something like this. That would be our starter kit, but also can be the other way around, right? So it can be something like this, right? And then something like this. Okay, that's also a possibility. So we have the starter kit variation. We also could have an Asia whipsaw, right? So Asia whipsaw would be more like either like this, right? Would be possibility as well, right? Or again, the other way around. If we have it like this, right? But that's more like unlikely, as you can see. That would be very fast price movement, right? And then technically, is that a possibility? No, right? So we know, okay, if the Asia whipsaw appears, the inducement low would make not too much sense, because that would mean it gets whipped again, and that's very unlikely. So Asia whipsaw, again, yes, we have like 2 cycle variations, like a upside and to the downside, right? But first of all, the inducement has to happen to the upside first, then we can have a whip of Asia, and then we can take it out again, but into this mitigation set. That makes perfect sense, but not if we have it like downside, then the whip, and then again, technically, because Asia whip, so you aim lower than here, that technically does make a good sense, does it? Right, so that's more unlikely. So Asia whip, so only in one direction in here. Okay, retail heaven, obvious one, right? Same thing. If the inducement happens low, we don't expect a retail heaven, because that's not a really outcome for the day, is it? Right, so that would be the retail heaven to the low side, very unlikely. Right, but if it induces to the high side, then it could be a possibility, because yeah, maybe this major or medium inducement already grabbed enough liquidity. They don't need to come back to efficiently pull or deliver price action, don't need to fill imbalances, whatever, it's just out of it. So to the high side, an Asia whipsaw, a retail heaven we can expect, but to the downside, same thing as Asia whipsaw, very unlikely, right? Because why would it just sit here and then wait for the next day? Could be, again, very slight possibility, but very unlikely. Okay, then London knockout, that's obviously the ideal scenario if we have market condition like this with the medium major inducement, right? If we have London in here, boom, into mitigation, and then just out of it for the whole day, that's obviously the better, the Mona Lisa scenario. as we're trading the mitigation of this major medium inducement in here, London open in here, grabbed enough liquidity internally or intraday wise, and then just is out of it. Okay, that's obviously the 4 cycle versions we have. So we can have both scenarios for starter kit. We have one variation for the Asia Whipsaw, we have one variation for Retail Heaven, and of course one variation for London Lockup, because again, same thing, if it's to the upside, it will not really end like this. Okay, and then the day is just over here. That's very unlikely as well, right? Same thing as Retail Heaven. Okay, so how does that even look like? Okay, so now we dig into more breakdowns and see the bigger picture of the M5. Okay, so let's say we had the scenarios in here as we covered, right? So H1 in here, triple bottom, perfect, and now we induce high, right? Perfect, even nicer than having the mitigation in here, right? So technically that's our perfect ideal scenario. If again we want to go low a little bit first, again we want to make sure that people are getting stopped out. Sometimes, again, don't get me wrong, sometimes you can get an mitigation here as well and then go lower. That's also very possible, but the Mona Lisa scenario would be smart money trap in here, induced high of this highs, and then into the mitigation down here, and then obviously it gives a reversal or in New York trap. That's the Mona Lisa starter kit variation, but again, sometimes you can have a valid mitigation here. The M5 obviously will give you the proper understanding for that if you expect an SMT or the inducement. Okay, so let's say we have Asia range in here. We have like a really nice build up, right? And then into an inducement, and the mitigation zone would be something like in here, right? So that's the extreme mitigation right here. Again, then potentially you don't expect an inducement of this highs, because here's your build up. You're already into vector candle stages, right? And then maybe this baby thing in here is the, for fuck's sake, into the valid mitigation, perfect, and then down, right? Then obviously this mitigation would hold. Other way around, if it's, again, let's say we have this point of interest in here, we have Asia range in here, right? And then we're just having something like this, build-ups, we're still in the channel, right? And then again, gives a double bottom in here, a double top in here, then of course you expect an inducement and then trade lower, right? So that's all the cycle versions you have to expect. Again, if you have an inducement low, force per build up into inducement, into medium one, and then trading away from it. So the M5 can give you a very good understanding of this is an inducement or a mitigation to the left. Okay, so in this scenario, we had the perfect ideal Mona Lisa scenario with the SMT first, right? Giving a false reaction and then inducing this medium, right? Perfect. So let's see what we had on M5 though, right? First of all, again, Asia. Then again, if we have like a build up to the high side, right? Okay, but then the build up getting induced low into mitigation, could be also Asia midline. We had never had an inducement high or low out of Asia range. Perfect. So that could be again a potential trade. We will dig into it. That's the fast and fluctuous trade, right? One of my favorite trades there is, right? Because again, you're not having an inducement to the high or low side, you're still in Asia range, but you're having your build-up inducement into a mitigation, maybe also Asia midline, right? Maybe EDMs, right? And then you're trading into the inducement, perfect stuff. And then you expect, obviously, after the inducement, the reversal, depending on where you are in here, right? But that's definitely tradable in Frankfurt or even early London, could be also potential, right? But that would be technically in here, and then you expect something like this, right? But that would be in here in the 1 hour, perfectly fine. Then after, again, we had the A inducement minor one, right? So maybe this one is even this one in here, right? That gives the false reaction of the mitigation zone, right? You're still in the build-up zone. Perfect. So what do we expect? an inducement high side. That's what I drew earlier in here, right? So we're still in the build-up zone. You not had the inducement yet, other than the minor one, right? The minor one gives just a fake reaction in here. Still is in the build-up stage, right? Now finally vector candles into London Open, perfect, right? And then we could technically look for here into a potential mitigation, because this cycle on the M5 is completed, right? Then the next ideal scenario is the extreme mitigation of here. So first of all, we have this extreme mitigation to the left, right? To the left. Then we had the mitigation of the inducement in here. Then after break of structure, we can have our LET or EDM trades. And later on, we can have our only EDM trades, and then we aim for a low, seeing the build up, right? Seeing the false double bottom in here, false reaction, New York trap time, boom, into what? Into now this Mona Lisa point of interest of the H1. And if that takes into the, we could have potentially 2 or multiple entry opportunities. Again, if you refine this on the M5, finding our, let's say we have maybe something like this, same scenarios, imbalances left between here and here. That's our M5 point of interest in here, right? So potentially we can refine it, right? Or we have something like this, but then also something like this, right? So we have our extreme mitigation or this one, right? And then obviously we see when the cycle is completed. Same thing. Again, the cycle on M5 will always help you to identify the proper point of interest. If you see the buildup is getting induced right now to low side, and you're in this point of interest right here, chances are very high that this will gonna hold and will not go into this one. Okay, so that's why the cycle always comes first. Then you look to your left for potential mitigation areas, but you still know, okay, this is my potential mitigation area anyways. You just want to refine it. If you're not too good with refining POIs yet, completely fine. Just stay away from the extreme and wait for what? Internal break of structures into mitigation, right? Maybe a LET, next thing, maybe a LET also, or maybe EDM, or the next build-up, inducement into mitigation, also induce this channel they're building up in here. So that's also a very good opportunity, and you're trading away from that mitigation of this medium inducement or even major one. You want to trade away from that, or that's technically Mona Lisa entries in here or in here, or technically in here. And then obviously you expect price action to go higher away from that point in here. Okay, so how does it look like? If we break it down to entry approaches, exactly how we said, right? We can trade definitely this extreme, right? Again, if you're not sure if this should be a mitigation in here on smart money trap, just stay out of it for the extreme mitigation and wait for M5 confirmations, right? Because again, if you're not sure if the buildup is induced yet on the M5, not a problem. Break of structure, LET, timing, EDMs, all gives you entry opportunities if this holds as a mitigation, or if it wasn't ready yet and you're still in the build-up stage, right? That keeps you away from getting in. You wait for the inducement. There you go. Then you know this can be you mitigation on the extreme as well. Okay, but always use the M5 for seeing if the cycle is ready, completed, or not. Okay, so but if we had that perfect reaction, SMT into inducement, medium one into mitigation in here, we definitely can fire approach number 1 with the extreme limit order. Okay, then the next thing we look for is the approach number 2. So aggressive one, if we didn't have on break of structure, again, this would be the real break of structure in here. We never had that. Again, price just giving a pullback in here. But that's the aggressive one with the mitigation of the extreme. Okay, but definitely these will happen a lot because not all the time you will get a clean break of structure. If you're looking at the M1, for sure, different scenario. Again, this one right here can look on the M1 something like this, right? This is your extreme inducement, and then you had something like this, break of structure into LET, into mitigation, boom, and then you go on, right? So again, that's how you use multiple time frames, but as this is just the M5, sometimes you don't have a break of structure. That's why you look for the M1, and chances are that you have a break of structure in here, maybe even a let, all that stuff. Again, if it's a let, approach number 3. On this scenario, this is the M5. Again, break of structure would be right here. That's your mitigation area. That would be your approach number 3, confirmed also with a let, for example, and confirmed also with a relevant break of structure. This also can be a break, a let in here, of course, right? And this is just your break of structure approach, even safer, right? The last approach we had, you probably guessed it, EDM trades after, usually happens in the middle of the range after the extreme. Again, this also can be a EDM. Then technically this one would be only interesting but not ideal, right? Again, the best scenario would be extreme approach, let EDM in here, and then you have the whole movement downside. Sometimes, again, the EDM comes quite late. Completely fine. You just have to be aware if you have the inducement already to the low side, and then, for example, like this point and this point gives an EDM in here, be very careful about that because you're trading into the inducement then. And again, that's not EDM like anymore. If you had the liquidity grab to the downside into mitigation stage in here, the EDMs usually get disqualified or not valid anymore if you had an inducement already. So be aware, EDMs, they usually happen a little bit late. Completely valid if you don't had the inducement yet. If you had it, reconsider you taking this trade and rather look for the other direction away from the inducement. Okay, so extreme, maybe aggressive one without break of structure but being a let, then more confirmed one with the break of structure, maybe also let, right? And then the last one with approach number 4, EDMs technically on the M5, right? This time on an M5, or again, you can look for EDMs in between in the M1 as well. Completely valid. Perfect, right? So that's technically all the approaches we have. And then it goes all over again, right? So then again, if you clean the picture a little bit, because technically we all were only here, 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 and here, right? So now obviously we are done with the cycle. The build-up getting already induced minor Asia low. And then finally, boom, vector candle, New York trap into what? Into this 1 hour point of interest. So technically here done. Technically even we could have traded this push before. So 1, 2, then 3, 4. That's probably the EDM in here, right? So 5, and then New York trap time, New York cup trade, perfect. Same thing all over again. Build up, like of this channel, getting induced with vector candle into mitigation, into timing, refine the POY, 100% possible that you have an approach 1 as well, right? So refine it on the H1, A5, and then see when the build-up is done into the inducement vector candles. Timing confirms the move. Approach number 1, extreme limit order, definitely valid. Next one, same thing as always. Approach number 2, extreme mitigation. Again, this in this example even nicer. Technically had an approach 3 already, right? After relevant break of structure in here, right? This is the push that led to the vector candles. Break of structure into mitigation, also maybe being a let, even 10 times nicer. That would be a 10 out of 10 trades if this would be the case, because you're still in this Mona Lisa point of interest right in here of the H1 medium or major inducement. You want to trade away from that. That would be a Mona Lisa scenario. And last but not least, we had, of course, even another chance with the EDM in here, or again, if you see the bigger cycle in here, like a channel getting induced into mitigation, right? Here is your fake break of structure, or your structural inducement into mitigation, but overall this just induced the bigger picture channel. They're creating in here inducement low of the channel to go what? Higher away from the medium major inducement, and then you're expecting obviously the next day to shoot out of there. Okay, then if we had the same scenarios again, H1, but again now this time we're getting an Asia whipsaw. In this scenario again, we're having an inducement high, whipping through Asia like nothing, right? Like in here, just messing around in here. Asia midline potentially plays in here. Again, we talked about this setup before. We will talk about it later as well, right? Into the inducement. Perfect. Cycle normally. Everything is normal, right? Until extreme getting mitigated. Even this scenario, even 10 times nicer because you had your relevant breaker structure into mitigation. But then Asia just getting whipped, right? Again, if we check difference, this was the normal one. Again, inducement high, and then we have pullbacks, pullbacks, pullbacks. Everything is normal here. But then Asia whipsaw just whoosh, smacking through Asia range after we had the inducement high, and then just takes out Asia range like nothing. That will lock in the Asia whipsaw. And then we still look, same scenarios, extreme mitigation of the medium major inducement, depending on how we had it, right? Off here, that's your extreme. We now know this is an Asia whipsaw, so we expect this high to be taken out, right? So again, that would be a potential extreme mitigation, right? Again, this would be your extreme limit order. That's your extreme mitigation of the breaker structure in here. Mini build-up into inducement timing. Could be New York trap time in here, right? Also maybe is an EDM. And then obviously it's out of it, and we aim for at least to take out the Asia whipsaw high, or of course, overall the next liquidity zone, and we want still to trade away from the extreme in here, which is the major medium inducement. For the overall days, we're looking for trading away from there as well. So that's obviously the Mona Lisa scenario. Let's see how we could trade it if we had the Asia whipsaw. All right, first of all, we had our Mona Lisa approach number 2 in here. Right, again, we start technically in the range, Asia midline. Right, we have our build up. Again, technically, you could even see the mini cycle in here. Build up, vector candles to the downside with speed momentum, right? Then build up getting induced to the low side, Asia midline point of interest, mitigation, right? Perfect. Again, then you can trade the mitigation here, or in the M1, even after unbreaker structure in here, right? And then into the mitigation. That's even nicer, right? So technically, could be something like when you have like a little push in here, that's your breaker structure in here, into mitigation, 10 times nicer, or this is your let and this is your EDM on a 1 minute. Usually not, because these pushes happen very fast, right? And they just want to induce out of it with speed, inducing Asia range into the extreme mitigation, completing the cycle to the downside now, Asia whips are locked in, and then obviously reversal, right? That's all possibilities you have to walk in your mind, right? Then guess what? Asia whipsaw, you can trade it off the approach number 1, extreme mitigation. And most of the times that's actually with its Asia whipsaws, the only entry opportunity, the clean one, because they're just out of it, right? They usually don't give you a clean mitigation. They don't come back, give you a nice order flow or EDMs. No, they're just very rapid movements, right? So that's, again, by entry approach number 1, sometimes it's a good solution. At the beginning, can be a little bit risky if you're not understanding when the cycle is done or not, right? But in this scenario, again, we had the build-up, technically getting induced with speed, right? Out of the Asia range. This scenario just into mitigation, something in the M5 in here. And again, that's what you have to understand when the cycle is done on the M5. If you see the vector candles, right, maybe gives us false pullback of some sort of smart money traps into mitigation to the left. In this scenario, we're just picking something in here, right? Again, if we had like down, at some point you will see some sort of build up into inducement with imbalances left. If the cycle is here ready, right, and you are in London, open trap, having induced the build-up after like a nice build-up to lows, build-up, inducement to a low side, out of it with vector candles, inducing the bigger picture channel into mitigation, definitely tradable as well, right? Doesn't need to be always these extreme mitigations all the time, right? Can be something in the range as well, or in the trend. You just have to identify these proper points of interest after your build-up in here got induced, and you know that build-up should be ready and the cycle should be ready to reverse on it, right? So that's the extreme approach, or the entry, the extreme limit order approach. Then in this scenario, it gave us the Mona Lisa scenario after a break of structure, and in this sense, it's not even aggressive. because we had a break of structure in here, right? So inducement mitigation with a break of structure. So that's technically the confirmed one, right? And then after that, or you can have it in here. Yeah, there we go. Right. So that also can be a let entry, or of course, in this scenario, we talked about it. That's the push that led to the inducement, break of structure into mitigation, also being a let 10 out of 10 trade. Take that stuff into the extreme mitigation to the low side in here, then trade away from that. Again, perfect stuff. And this one, again, locks in as the Asia whipsaw. So we have to take the other way around now and see, okay, the extreme in here, we had an Asia whipsaw confirmed. We expect this high to be taken out anyways. And that tapped into our Mona Lisa point of interest of the higher time frames. So guess what? Same thing as we had above here. Approach number 1, refine this zone, get the approach number 1 in here. Perfect. And this scenario, we also had approach number 2 in here. This one, again, this is, I see I switched those around. That should be technically this one, right? So this was the approach after the break of structure, confirmation with break of structure. And this down here would be without the break of structure. As you can see, this is the push that led to the extreme in here, right? And then obviously you don't have a break of structure after here. And here it's the different way around. So again, this is your approach number 2 with the break of structure in here. And that's the approach number 2 without the break of structure. Okay, perfect. Then, last but not least, we had this Mona Lisa approach number 3 with a build-up into the inducement, and this point overall order flow being an let or an EDM, right? Could be both possible scenarios in here, right? That's obviously the best case, more an EDM in this scenario with this point, right? But also can be a let or technically trading after the break of structure. So the whole thing is just super, super valid. Okay. Then we have our retail heaven scenarios, right? So if we had again triple bottoms taken out by the medium or major inducement, H1 looks like this, M5 looks like this inside, right? Then again, entry opportunity is getting a little bit more difficult, right? Again, we had same thing, our build up induced with speed in Asia this time, right? Could be something like here, right? Perfect. Build up induced to a low side, aggressive entry in here. Then out of Asia, right? Asia high getting retested, pullback, maybe let in here, expecting the retail heaven possible as well, right? Again, that happens when again you're not having some sort of mitigation, smart money traps or anything in here. Maybe smart money traps because you're still in the overall build-up, right? All possibilities. You will see it on the M5 of how it will look like. Okay, then this overall channel, equal lows, build up. The overall channel though getting induced to a low side, again leaving this double tops, triple tops, even forming a quadruple top. This technically is your break of structure because this is the push of the inducement getting broken, relevant break of structure into mitigation. If that's and let again, 10 times nicer. Also can be magic manipulation minutes 2, for example, right? Perfect, and timing confirms it as well. And then you're trading away from it, another channel being built, another channel being induced, and that's where your EDM comes into place with here, and then you aim for more high side, everything away from this medium or major inducement high side. All possibilities. Again, this definitely can happen. Retail heaven. So be ready for it when you're having these build-ups induced to a low side to trade it longer. Again, we definitely doesn't need to trade reversal trades all the time. We can 100% trade continuation trades, and sometimes they even 10 times better because you don't picking all the extreme like, that's my reversal trade. Oh, that's my reversal trade. Oh, that's my reversal trade. No. That's again why we spend so much time getting the build-up into your head that you understand if the build-up getting induced to a low side, you still can have a continuation as well. And sometimes, again, that's all the definitely better opportunities. Again, smart money traders, they most of the time look for reversal trades. They look for their kochs and break of structure and whatnot, their change of characters, right? And then they trade the reversal. But very few of them trade continuation because they don't know how, right? We know obviously how we trade continuation trades. So focus also on continuation trades. That will be a big changer for you because catching reversals can be very challenging, but catching continuation trades will work out very good if you identify the build-up, inducement into mitigation. And here also this could be definitely a very valid trade in here if it's an EDM in here, right? Definitely possible because again, this is the inducement of the overall channel, but the safer one is after the break of structure into mitigation. If that's a let, then boom, take it, right? So guess what? How does it look like? Approach number 2 in here, right? After, I'm seeing again, technically again, we had the break of structure in here mocked up. So we need to push like in here, then a break of structure into mitigation, maybe on a M1. In this scenario, there would be not a break of structure. That would be the aggressive approach, right? So then you can trade it again after this break of structure, maybe into mitigation in here. That would be your approach number 2 after break of structure into mitigation and then out of it, right? Perfectly fine as well. Then we have approach number 3. If that is also unlet, then of course you can take it without the mitigation for sure. And in this sense, again, mitigation break of structure would be all the way up here. So if you have an let in here, definitely tradable because you induced this channel to a low side, right? Structural inducement here, maybe even here, right? And then extreme mitigation with a let out of it. Perfect. Then if you had another one, approach number 4, maybe this is an EDM in here, could be a let, could be both, right? Or like technically not both, but let or EDM, right? And then we had another one with this one, could be the approach number 2 with a normal, again, break of structure into mitigation if that's your inducement, or can also be your let entry in here, right, away from this inducement of the build-up, channel build-up, equal lows build-up, inducement into mitigation, break of structure into mitigation. If that's also a let entry, take it. Expecting the retail heaven away from the medium inducement, definitely a possibility. Okay, also left equalize in here, 3, 4, take it. All right, and last but not least, we can look out for all these EDM continuation trades, right? Again, if we have equalized, getting induced, comes back, leaves the imbalances in here, EDM trade, boom, continuation. Why is it so nice continuation? Because you had a build up before, build up getting induced to a low side into mitigation, boom, continuation, EDM confirmation. Last but not least is the London knockout. Okay, so guess what? We're having our quadruple bottom in here as always. Boom, inducement low of the H1 being the medium or major inducement. And then we had our Mona Lisa scenario, Asia range, getting induced to a low side first. That's our Mona Lisa scenario into the H1 POI. Again, before that, we can trade into the inducement. If again, we had build up, structural inducement, not really a clean inducement, so we have to stay away from that. But guess what? Then we have like a build up to a low side, structural inducement high. Also, this channel got induced to the high side into mitigation of Asia midline. We never induced Asia low, so we trade into the inducement, maybe in Frankfurt, right? Again, one of my favorite trades there is this trade in here. If you have a structural inducement into point of interest of the inducement of the build up, right? High side to go lower into the inducement, into the point of interest of the H1. And then we expect obviously extreme mitigation, break of structure into mitigation, let, EDM, not a build up, not a channel, induced to a low side, equal lows, induced to a low side, into mitigation, order flow. That's an EDM, boom, take it. And then we expect the London knockout out of Asia. Asia getting retested, Asia high getting retested. Again, why does it always get retested? Because breakout traders, they're having their entries, their stop orders above here, and they're getting obviously tagged in. The buy is here. At some point, I want to pull a break even. That's why, again, these always are liquidity zones, comes back, gets them at break even, and then obviously continues higher and shits in their face, kind of. Okay, so does it look like? First of all, we have this approach, can be an EDM, can be an let, can be nothing of both, right? But we just say for argument's sake, approach number 4 maybe EDM to this point, right? Structural inducement in between, or can be a let, or again, can just be a normal cycle play. We had the build up, inducement of high side into mitigation into Asia, midline point of interest, Frankfurt open maybe to the minute, and then you trade low into the inducement. Right, that's perfectly fine. Then we had our extreme limit approach. Again, that would be the Mona Lisa entry in here. If this is your medium or major inducement, extreme mitigation, New York trap time. Right, after, guess what? The build up getting induced to the low side, right? Or even you have some sort of other build-ups in here, right? Then obviously you wait for the vector candles, timing confirmed into point of interest, boom, extreme limit order. Then the 10 out of 10 trade would be the approach with the confirmation of the breaker structure into the extreme mitigation, right? That's your 10 out of 10 trade again, right? If this appears, if you have the extreme mitigation after the cycle into higher time frame point of interest after a breaker structure. And again, if it's then also an let approach, oh my God, then it's a 15 out of 10 trade. You have to take those trades. That's Mona Lisa shit, okay? And then you're waiting for approach number 4, EDM confirmations. And again, if you had a build up before equal lows, or build up with the channel and inducing it low into mitigation, order flow into EDM, timing, maybe match manipulation 1 or 2, boom, just take it, okay? Take it, and then you're trading away from the medium major one and expect a lot of knockout, boom, perfect cycle. And then the last entry would be another EDM off of Asia high or stuff like that. And if you really master that shit, you will see the architects just in your face like, no, that is not fair. How does this guy know that? But that's how it works. That's literally the blueprints right there for you, handed on a silver plate, okay? So master that shit. It literally is exactly like that. That is the blueprint of the market. You just have to identify what cycle variation you have. Where are you in the cycle? Are you in the build-up? Is the build-up getting induced right now? What's the timing confirmations? What's going on to the left? Do I look for an SMT or look for mitigation? Or do I look for an inducement of that and then trading away from that? What cycle version do I expect? Is this now making sense to be a New York, London knockout, or do I expect a retail heaven? Huge difference there, right? Because again, if it's inducing high, and then you're expecting a knockout to the low side, but it's retail heaven instead, your analysis is completely off. That's why you have to understand the bigger picture and understand what's going on. That's again higher time frame, what should happen next logically, and then use the M5 to react to these mini cycles in between, and then trade these mini cycles, but having an overall higher time frame bias. So practice. Again, now you're also having these entry approaches, so very slowly and shooting everything in combination. So practice cycle variations, practice mini cycles, practice entry approaches in all combination. Again, nothing wrong with going back a step and going into the cycle variation master guide, how to identify those cycle variations overall better. Again, it's not a race. Get everything into your mind before you dig into the entry approaches. But if you're ready and you feel ready, there you go. Now you know exactly what entry approaches you expect out of the cycle variations and how to trade it. There you go. Make something out of it. And now practice, practice, practice. All right, let's jump straight into it on the 1 hour on EU, right, to see what we can do actually. So as you already can see from 15 miles away, we had this huge uptrend, right? This huge up-channeling price action. And to make it a little bit clearer, let's remove this one just to see the up channeling was, right? And we already can see they finally got rid of breaking this trade, okay, this trend. Okay, very nice. Perfect stuff. So we technically had our internal switch of directional, right? It's internal breaker structures in here. That already is done. It's already mitigated in here, right? Perfect. But then we had this overall nicer push all the way up here, right? But that technically is really nice in this push. So that broke significantly in here. So that is our valid breaker structure here. If you see this leg leading all the way to the upside, right? Perfect. Okay. So in that scenario, we already can see, okay, we have some sort of directional shift to the downside. We already can see, okay, huge imbalances in here. Got smart money trapped, perfect. And now the next extreme mitigation, where's the extreme mitigation here? Last point of imbalance would be all the way in here, right? Something like this. Okay, so that's the last point of the imbalance, and that's also the extreme after the directional shift got locked in, and we had nice smart money traps in here. But guess what? Did it tap into here? No, it leaves us with this juicy equal highs in here, which is also Asia highs in here, right? Perfect. Okay, so with that in mind, we already have a very good directional shift. So first of all, we see, okay, this could potentially lead to some sort of mitigation or smart money trap. Okay, you obviously have to find out in the moment what's going on in here, right? If this makes sense, this play in where the direction is, or if it leads straight into for fuck's sake, depending on the cycle and what we will have in here, right? But what we can also see, okay, we have these imbalances in here of this push, that this is the inducement. Technically, yes, it's the break of structure, but for the cycle, it is kind of the inducement low. That's why the huge reaction happened, and it's valid until the next supply areas. Okay, so technically we never tapped into demand. So this is still valid until we hit into the supply area, okay, or the supply area, depending on what comes first, right? So with that in mind, we obviously can go now and see this cycle play. So maybe let's actually stay in a moment to show you the cycle plays a little bit more in depth. Okay, so of course, let's say for this day example, okay, this day, for example, or even like this day for even more argument's sakes, right? So you have these huge up runs, and then finally we got this internal breaker structures in this day. Okay, so as you see, Asia range this day, and then the next day, even or a little bit before that, it mitigates this points here also. That's the push it led to it, right? So this next day, knowing that we broke major uptrends and we got a break of structure before that. So we can expect that this day in here, even now in hindsight, it's very easy, but we can expect that just for understanding purposes, that this day can lead to either, again, in this case, it was a really nice Asia whipsaw, or some sort of retail heaven, right? If let's say it broke out low here, then it can go lower, or it can break out high and then go lower, but forming a London knockout, right? Until obviously the next valid areas. So let's see what they actually did. Right, so we know that these cycle plays could potentially happen, right? But guess what happened actually is this juicy Asia whipsaw. Okay, so technically, depending on if you see this in Asia whipsaw, because this push just barely stayed short of it, again building the equal highs and then comes back, right? But this cycle was really nice in Frankfurt, right? And again, also gave some really juicy internal plays in here. If you see this Frankfurt open inducement, just a cycle base, right? Nice channeling downwards before that, building the equal lows in here, really nice. Channeling downwards, breaks out of Asia range, internal breaker structure, comes back to mitigate in here. Perfect timing, Frankfurt timing as well. Aim for the next liquidity areas, which was Asia high in this sense. This was all done and away from this huge extreme, which after the breaker structure trading away from that. And then it got just smoked, right? And then the next day, so that's where this understanding of the cycle plays comes into play. Now, of course, we had this huge down run, which led to the 1 hour break of structures. But of course, for intraday trading, this is considered your medium inducement, right? Of course, for the bigger picture, it is your break of structure low, yes. But for the intraday plays, this becomes your medium inducement. You want to trade away from that. So with that knowing that this medium inducement in here, what day, obviously in hindsight, you've already seen it, what days can we expect in terms of the cycle variation? So if I get my pen, right? So let's say this in hindsight is not there, right? So let's say we have Asia range in here. What cycle plays could we expect? Obviously, the Mona Lisa trade would be Asia range, right? Or Asia range in here. Make something like this. Fakes the small money trap in here. Perfect line. You see what I mean? London Open into the extreme and then turns into London knockout, right? Away from the medium inducement. But that's obviously not what happened, is it? But of course, we can still expect the cycle variations also, because another scenario would be obviously something like this, retail heaven, and exactly that is what happened. Obviously, the perfect retail heaven would be if it comes back, touch something in here, Asia high, and then continuation higher until these next liquidity areas, and then obviously aiming slowly, but surely on the extreme mitigations in here, right? That obviously would be the ideal scenarios, right? So again, we have London knockouts or retail heavens, right? But again, we don't really expect like a normal cycle play or whatever, like could potentially be also an Asia whipsaw. Let's say this would have ripped right away in here. Oh, sorry, the other way direction, otherwise it wouldn't be an Asia whipsaw, right? So let's say it is inducing high Asia whipsaw into the extreme mitigation and then higher. That would be a possibility also, right? On Asia whipsaw to low side wouldn't really make that much sense. Like let's say it would be like here. Then obviously it wouldn't make the best sense because then Asia whipsaw would be whipping like this, and that's not a really possibility, is it? So the best scenarios obviously would be London knockout, right? Something like this, and then just knocking it out, potentially all the way up here, but next liquidity areas at least, right? Or retail heaven of how we have it here anyways, or potentially Asia whipsaw to the high side first, whipping Asia, coming into our extreme mitigations, and then whipping, giving us a valid Asia whipsaw, and then aiming for next liquidity areas. But that's the cycle variation we could have had just based on the overall picture. Again, medium inducement, but having in mind that it's just valid until the next supply areas in here. Okay. And of course, whoops, let me remove my pen in here. Right. And the next day obviously didn't tap into the extreme mitigations of the 1 hour also. It stayed short of it, but gives us equal highs instead. Okay. So technically, again, you can trade it and tapped into the imbalance, but very hard to trade. Again, gives you the break of structure here, taps back into the extreme mitigation. I actually broke this down this day in more detail down on Chow time 2 and the last hour. I just give a very in-depth analysis about that on a quick one, but just to look at this day of how messy it was of the position also, but how you still could actually smoke this day with all these mini cycles in here. So if you want to see this day in detail, then go to the bonus episodes Chow time 2. The last part was for me, and I covered this day in detail of when you see what's going on in here, right? But overall, of course, we have to keep in mind that this is the extreme mitigation here, and we never tapped into that, but leaves us with these liquidity buildups in here. Okay, the next day, obviously, tapped into the perfect normal cycle play, awesome. But now things get very interesting because look where Asia is placed in here now. Right, so just staying on a 5 minute, like what can we technically see? Let's actually give me my pen in here. So we're having this Asia range. We're seeing this huge channel buildup, right? Awesome. So what already can we see? Channeling downwards and already kind of inducing this channel in here. Okay, so perfect. That's really nice. So of course, we can see and expect that this cycle play, like this little trade Asia plane here, if this taps back in here, that's good for the downside to induce this channel. Okay, perfect. But that's still Asia. So we're not really that much interested. Okay, so let's actually see. And again, the thing though is our ideal target is obviously here, or for intraday purposes here, or for the extreme here, right? But that stuff you already can see. We have this medium inducement. You still want to trade away from that until the next supply area. We never tapped into that, so that's still valid because we never invalidated it before we tapped into the supply areas. Okay, so this day can turn out technically on, that's my pen, again, something like this, maybe Asia range gain induced, maybe like this, London open, maybe in here. That obviously would be a perfect day for maybe London knockout, or again, if this would happen then in New York trap, could also be a normal cycle day, right? Perfect. So we could have a starter kit, we could have Asia range getting induced by an Asia whipsaw, like something like this. That obviously would be our Mona Lisa scenario, right? Again, or we technically not really retail heavens, like how would they even look, right? Technically retail heaven, not really, because again, if it goes into here, it should give a reaction, not just go lower, right? So retail heavens out of the picture, so we can look for normal cycle play, Asia whipsaw, or a London knockout, right? So that's the scenarios we have in this scenario, this point, right? Let's actually see just in a 5 minutes to give you the cycle plays of what's going on here. All right, so we got, okay, this channel even induced insanely nice. Okay, that's really, really nice. I love shit like that because we're still in Asia. So now, okay, we can definitely see what they're trying to do. So never give us an entry in here, stay short of it. But now, obviously, this becomes invalidated because this is the clearest inducement you can have. So technically now you have this cycle play to the upside, and now you're looking for sell sides, right? So, okay, gives this internal break of structure. After this inducement plays, again, if it taps into the mitigation, that's something you could trade, but again, stop loss would be way, way, way too big. But just for understanding purposes, you have your internal break of structures after this huge inducement of this channel, right? Also gives, of course, fake break of structures to the high side. Again, the purpose only was to induce the channel, and now we slowly but surely could aim for down there. So let's see what they do. Okay, missed this mitigation actually. Perfect. Asia range is done. Okay, messes around, gives the double. Okay, now it's a different scenario because again we faked again the build up, and now we see the overall cycle maybe. Okay, huge down channeling. We still have this extreme mitigation. Perfect. But what is going on here now? Look at the timing, and now you have to slowly combine things. Okay, so of course, our extreme mitigation would be here. Could be a London thing, yes, for sure. But what is this baby cycling here? Right, we have our build-up channeling downwards. Right, we're having the build-up, equal lows, pullback, vector candle into timing. Okay, so what can this technically be? Okay, nothing we can trade off because this tapped into no man's land in here, so there's no possible mitigation. You should not pull something out of yours and say like, it tapped into this imbalance. So no, that's not how we do it, right? So again, just see the cycle play and be aware that maybe this could lead to some sort of reaction, as this could be a potential cycle to downside already fulfilled, right? So let's just wait what they do. Okay, and now it's locked in kind of, right? It gives this internal break of structures here after the cycle play. It's a Frankfurt cycle play. Okay, so now if they come back to this extreme, we could technically trade this a little bit higher, right? And maybe aim for this medium inducements up here. And then we could look for an Asia whipsaw into the extreme mitigations, and then obviously looking into next supply areas, right? But that's again just obviously projecting things out, and we have to react accordingly, right? So let's see what they do. Okay, actually just messing around. Let's see if we have some sort of maybe EDMs or something to trade into it, right? And yes, we kind of had it. I mean, the whole thing is EDM to be fair. So, but let's just wait actually for more clear reactions, something like this. Yeah, that's really nice. Okay, perfect. Okay, so of course, what we have, again, there's nothing we can force off. So perfect. Now it looks very juicy. We have, again, this channel buildup. Okay. So induced the structure here a little bit to the downside. Again, technically also builds equal lows depending on how you see it. But what we can see nicely is channel buildup, inducement of the channel, giving a nice sharp pullback with speed. So that's technically something, again, you trade away from that, right? So again, if you understand the cycle plays, you had this valid cycle completion to the downside with Frankfurt Open, inducing this overplay, mini buildup, inducement of that buildup, right? So now, of course, you can look for more high side, as this maybe could be cycle upwards play, right? We could look for the medium inducements in here. Okay, so let's see if it gives some sort of continuation. Oh, okay, that's nice. Again, depending on how you see it, this, whatever, like internal breaker structure is very hard to spot, obviously, right? But that's something that could be a possibility, and then it's just gone. Okay, and what is going on here? Now it's characteristic as what? What is this? What's the characteristic of this? Build up, inducement low, smashing through Asia range. That's obviously now your Asia whipsaw. Okay, so this is your Asia whipsaw, taking out the medium like structure in here, right? And of course, now could be technically valid for Asia whipsaw plays. What's the next timing of an Asia whipsaw? The ideal timing obviously would be if the extreme is magic manipulation minutes 1. Very close enough. So let's see if it even goes higher. It does not. Okay. So now, obviously, we can look for reversal trades as we understand the cycle plays. Okay. We have our extreme mitigation here of the demand areas. We have room until at least this supply areas, or overall in 1 hour, this 1 hour supply areas. Okay. So now we're having an Asia whipsaw in no man's land. So does it randomly just stop in here and then out of a sudden goes all the way to the extreme? Very unlikely. But now we're having an Asia whipsaw locked in, okay, and we can trade this down until the next demand areas, right? So let's see if we actually can trade it, right? So if you go in the 1 minute, what's the things we look for, right? Perfect. Entry helper, oops, already there. Let entry, what's your internal break of structures? Boom, vector candle, internal break of structure, let entry, right of magic manipulation minutes of the day open also. So that is 100% a very, very, very nice confirmed trade, right? Until at least, depending on how you see it, at least, whoopa, I don't want to do that, at least of these lows. But again, why would it randomly stop in these lows? Again, aim a little bit lower for the extreme mitigation. What is the points of liquidity in this scenario? Obviously, Asia range with the day open, very, very, very nice. Right, Asia range midline, or Asia high, this one. Right, so these are the 2 zones you could look for. Right, again, ideally, smart money trap, barely even touch this one anyways, okay. And then into the extreme, 1 hour, very, very nice midline into day open also. That would be a juicy, juicy target, and this could be a potential smart money trap. Okay, if it turns out like this, that's Mona Lisa shit, right? But now we're seeing the Asia whipsaw, medium inducement high. Again, why is it medium? Because it should induce something to the left outside the stage, just minor structure place, but again, at least induced something, right, to the left, not only internally. So that's really nice. Kind of locking in the Asia whipsaw. Now we have internal break structures let based on magic manipulation minutes to the absolute perfection. We tagged into our trade, right? Perfect. Whoops, what happened there actually? Okay, obviously you should mark it up properly, not like me, like an amateur in here. There you go. Then you're still valid, depending on how much shaky hands you got, obviously, right? But obviously, as you can see, never took out this high, just barely, right? So depending on obviously your broker, but that's EU, you should be good in here. Obviously, that gives you pretty sloppy, sweaty hands in here. Right? But of course, if you draw it properly, not like me, as sloppy, then obviously everything's still good. Okay, so perfect. So we in this trade again. Best case, if you not have a sloppy execution than me, right? And obviously, that's still very, very nice. You could aim for 1 to 15 again, based on the right stop loss in there, right? So okay, let's see actually what's going on. Pulls back, order flow entry. Okay, if it comes back into these areas, which it does. Let's see, actually see. Put this a little bit like this. You can see this candle. Okay, that's your 5-minute order flow entry in here. Again, a little bit too big for my taste, but just for saying on a 5-minute. If you want to re-enter that thing, you can, because of course now you have this locked in 5-minute break of structure also to the downside, confirming the Asia whipsaw in here, right? So of course, really, really nice. If you want to re-enter that thing, you can right there. And order flow entries. Okay, again, another ones, not the nicest ones, but just feeling the imbalance. Perfect. Okay, something maybe on the 1 minute and here, but we will not look for this for now, right? And then boom, builds equal low. So now it should be very obvious, obviously, that this will not gonna hold, right? So okay, let's see. Boom. Okay, tapped into that. Perfect. That's really, really nice, right? So now, okay, that's again why we wait, because as it turns out, the small money trap or valid mitigation areas. Again, we have to wait for the reaction, and as you already can see, they tapped into it now. Okay, so now, okay, perfect. So is this the valid mitigation, or do they come to this choose your one down there? Again, we technically had it before anyway, small money trap into valid mitigation for Mona Lisa plays, but let's see if we somehow can confirm it for maybe some sort of reaction plays. Okay, so what do we have in here? If it obviously takes out this high in here, then obviously it's a different scenario, but let's see what they do, right? Okay, forming the equal lows. And what is it for the entry helper side? It is an anti-confluence EDM on the 5-minute, right? So technically, again, this holds, right? And then it's a very good indication for us that it goes to the extreme mitigation, so more to the downside. Boom. Okay, what's our ideal scenario in terms of the time? Obviously, New York trap. Look when it happens, almost to the absolute minute, right? And of course, if it taps into, boom, to the absolute minute. Again, the only difficulty is to not getting trapped into the smart money trap before, and then see the more liquidity cycle and more liquidity of the Asia range midline imbalances. Also, they open away from the medium inducement, right? So we expect a smart money trap, and of course taps into the valid demand areas to the absolute minute, giving buildups before. Anti-confluence confirms the push lower, and now obviously this is super juicy, right? So let's see. And a few people actually took that. So is that refined enough? I would say so. Right, so let's actually say perfect. Let's just leave it like this for argument's sake, because we don't want to pull something out of ours too much. So let's see what actually that would be. If you just take it like this. Again, we could refine it more to the left, but let's just say for argument's sake, that's already a 1 to 10. Fair enough to me, right? Okay. So again, but what is our potential outcome? Should we randomly stop here? I mean, for intraday targets, it would be definitely a good target. Just again, 1 to 12, not bad. But what's our more realistic target? Obviously, the next supply areas, 1 to 20. Not bad for actually not even a refined POY, just playing it to the absolute minute, coming off an Asia whipsaw. So we expect the whip of this point, building equal lows. Trapping, smart money trap gives the false reaction confirmed by anti-confluence EDM trade into the extreme to the absolute minute, tagged in. There you go. Okay, so let's see. Okay, comes even lower, very nice, probably into some sort of refined POI. Even nicer, would give you an even better risk reward entry if you refine it even more. Let's see what we had in here. Okay, that's obviously why it happened. Look at it 1 minute. Obviously, at these buildups in here, right? Obviously, faking the smart money trap in here for people, whatever, trading this, buy in here. That's actually really nice. If I see that in 1 minute, again, gives this internal break of structures in here, leaves the imbalances in here. And oh my God, that's actually too freaking juicy right there. All right, if you trade like this, 1 to 40. Okay, can't take that. Too juicy, too freaking juicy. Okay, absolutely amazing. Mona Lisa shit. Mona Lisa shit. And look at it go. Look at it go. Okay, the only thing is that can be tagged into maybe some sort of refillings, right? We had the 5 minute, if I saw that correct. Yes, you had the 5 minute imbalance fill in here. So if it gives some sort of continuation trades, maybe on the 1 minute. Okay, depending on how you see that, if you like this or no. But again, where else would it tap into? It could come all the way to the extreme, but I doubt that. Could be this one also, right? But I guess what? Let's say for argument's sake, this tapped into the 50, right? This the fixed one, right? And again, this whole thing is some sort of very big EDMs in here, right? Again, boom, 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 fitting the 5 minute imbalance. So if you like to trade it like this, continuation, right, of the breaker structures in here, if it comes back lower, filling some sort of these areas in here, right, depending on, okay, something like this. Again, it was clear actually that it will probably not come all the way back here because that's a little bit too over refined. Technically, yes, that's your proper refining it, but again, it's very unlikely in this scenario as this huge uprun pullbacks, right? So it gives already internal breaker structures. So technically, if you market executed somewhere in here, that would be fine. For argument's sake, let's say I did it like this. Again, look at the risk reward. Still very juicy. Okay, and obviously the potential is huge as we never took out Asia high, even building the equal highs in here. That's really juicy. But let's for argument's sake, like not do it because again, you maybe say, no, I would have missed that, or no market execution in the middle of a range. That's completely fine. So let's say for argument's sake, we missed that, right? But at least we can see the play of what they did. Okay, so it comes back, maybe gives us another entry. No, it does not. And then finally, Asia high getting broken. Okay, so but is the play done here? No, not yet. Right, so boom, lovely shit. Absolute Mona Lisa stuff. Okay. Now the only thing is, again, depending on the intraday target, do you want to hold it? Again, the day is almost over. We are literally right now in London close. So London close characteristic, of course, if it's the extreme, we said it like multiple times, it should induce something, which it did. Again, this high once again. So for intraday target partials, that's a very good partial in here, right? But of course, if you want to hold it longer, you can, because you're trading away from the medium inducement. You still have room for at least here, or obviously the extreme, depending on how you want it, right? So let's say you partial here for intraday, get yourself paid, like very nice. If you want to hold it for next day, you can. You just have to be aware that the next day, of course, can come all the way back here somewhere, because maybe induced low goes higher. So you have to obviously be aware of that also. Okay. For argument's sake, just we say partial. Or if let's say we have 2 positions in, we close the 1 position fully, the other position we leave running. Okay, so not bad at all. And then the day obviously is over, Asia, London close. We expect obviously a pullback from there on, and then the day is over. Okay, so let's see. Okay, messes around, perfect. Okay, so not a bad day actually, not a bad day, I would say. Okay, so let's say the next day, what's going on here? Again, we wait for Asia, and you see there's the huge pullback into it, but now obviously it looks a little bit not so good if we left this position on, because you already can see what they're doing. They're building the false channel downwards, so we can expect an inducement low into high, right? So again, that's where the cycle variations slowly should click in your brain, where it says, okay, it's going on here, depending on technically still in the cycle and here. So what should induce the channel? It does induce the channel. Okay. What's going on here? Okay, that's crazy actually. So building the triple top, never induce the channel, only to the high side. So what does that mean if you only induce the channel to the high side? We want to induce low. Nothing you would trade. That actually doesn't look nice at all. Even if I can remember that a few people took the sell in here, if I'm not mistaken. That was really good until you see the should go lower for possibly two scenarios. Or in this case, it was very late in London already, right? But again, huge liquidity buildup in here. Finally inducing out of it. Again, there's nothing really you should look for left because that already tapped into there, gives the false reaction, obviously, smart money trap characteristics right in here. So that's the smart money trap. Let's, for argument's sake, tag this one smart money trap also. And then again, Mona Lisa scenario would be tapping all the way to extreme, but is it likely that it will happen? Again, it taps in once, twice, third times. Probably not, as this is a medium inducement. Actually want to trade away from it. You had a huge reaction. Again, that's just stopping everyone out who's got into this buy channels in here, buy trends up here. And of course, now we can expect the day obviously giving us a really nice cycle in terms of, there you go, that's really nice now. Like again, we're having channel buildup in Asia, building huge liquidity to the high side, inducing Asia low, right? Finally, right? There's nothing really we want to look for mitigation other than the extreme, right? But again, the moment you understand the cycles very nicely, you could already can see that this technically is done inducing to low side now. So depending on how advanced you get on the 1 minute, again, I see actually a few people did that. You can somehow enter this in here, but for argument's sake, as we don't want to confuse anyone, that's not the cleanest one and definitely is an advanced one, but you have to be aware, okay, this cycle could be done and you could play it to the upside. And it was just running from down. Okay, taking out obviously these equal highs in here, obviously missed our POY in there, but that was a really nice cycle play, right? But now maybe you're arguing, oh, Asia whipsaw. Okay, yes, I see Asia whipsaw, but again, then okay, technically you're looking for something in break of structures, a magic manipulation minutes. Okay, perfectly fine if you do so, right? But let's actually just mock magic manipulation minutes too, right? So just be aware of these cycle variations. This Asia whipsaw, perfect, made sense because why? Asia range build up right before our point of interest, never tapped even in the smart money trap. Asia whipsaw, very likely tap into this POY. Now this one, similar but different because again, we tapped into the mitigation of the medium inducement already. Okay, so yes, would be 10 times nicer if you tap into the, but again, is it necessary? Is it already mitigated the medium inducement? Yes, it did. Right, and of course, now it just induced internal or intraday liquidity after the cycle completed. Now it's just gone. And again, what's another potential opportunity or outcome? London knockout or something like this into these scenarios, or retail heavens. Normal starter kits, right? Because again, could inducement low, taps into here and gives some sort of pullback and being a normal cycle kit, right? Starter kit. That's all possibilities. And Asia whipsaw in here could be possible, but is more likely unlikely because again, we already tapped into the medium inducement mitigation in her. Okay, so let's actually see what they're trying to do. Okay, magic manipulation minutes, and now maybe even get an anti-confluence again. If you maybe look for Asia whipsaw, that's fine, but guess what? What is this? Filling the imbalance. What is this on an entry helper? An EDM, right? You see EDMs in here, right? Right, absolutely to the minute of Asia high, right? So again, do we have a scenario which is London knockout into the next demand areas or supply areas in this scenario, right? Yes, it is. So should you actually maybe even look for buy trades instead of sell trades? Yes. Okay, what is it? To the next supply areas, 1 to 8. Okay, so is that something you could take? Yes, it is. Okay. Again, based on inducing low, internal structure plays, right, or intraday plays, taking out the liquidity, cycle is done, right, building up, inducing low. Yes, Asia rips are characteristic. We're trading away from the medium inducement now, finally, mitigation in here, trading away from that. So instead of looking for an Asia whipsaw, whatever, sell in here, maybe trade the EDM, buy into the next supply area, right? And absolutely to the minute, also tapped off the day open liquidity and Asia range high. Okay, so you have more confirmations to the trade this long than short. Again, short confirmation is absolutely nothing in these scenarios, right? And if you're not completely sure, at least hedge the buy into here. And if you still want to look for a sell, then again, you technically can, but okay, at least you don't getting an unnecessary L if you hedge the buys in here. But again, way more confluences for the buy trade than the sell trade. Again, the sell trade only would be based on, okay, potentially an Asia whipsaw, okay? So, but nothing else. Then again, just choops through it like nothing, okay? And then again, what's our next zone? That's our next demand area. Okay, so we wait. Obviously, we don't want to put a limit on there. Okay, so now obviously gives us huge equal highs in here based on this bigger supply area, right? Gives us another EDM confirmation, right? Already is EDM, but obviously this would be the nicer anti-confluence in here if it taps into this one. But you already can see this is already from here to here is already EDM like crazy. Also LED potential. We never had a LED before, right? So that's huge anti-confluence. Taps into, really nice. Okay, filled the LED, but still huge EDM, right? So there you go. That's technically again where you avoid a reversal trade, but trade into the inducement, trade into the liquidity, trade still into this bigger picture supply area, but confirm with the, again, EDM, filling the imbalance, equal highs in here. And again, what's our ideal scenarios to tap in these areas anyways? You guessed it. New York trap time. So if it taps into the, would be 10 times nicer. Now New York trap time, boom, takes out the liquidity and you're out. You're out of this trade. You're out of this trade. Or technically this trade already hit TP, depending on how you had it. Right, but let's say you had this one, another one. So okay, not the craziest thing, 1 to 8, 1 to 5. Okay, nothing too crazy to be too freaking out about. But now obviously, guess what? If you have this bigger picture supply area, now again, do you think this cycle is completed in terms of the upside? Should we take out the slow? Probably not, right? But again, is this cycle at least done, right? Until where? Until at least, again, pullback areas, breaking structures at some point, right? Making people a little bit directional switched again. Again, we're still having our medium inducement and we're still having our extreme mitigation and we're still trading away from this medium inducement until we reached the next supply areas, right? So this is intraday plays that can be traded. Let's see if we can. Right, so obviously we don't want to fire anything here, but we have our vector candle, lovely shit. So let's see if we have some sort of continuation, confirmations. Okay, very nice. Look at the entry helper. Look at the break of structure. Okay. Okay, this is Mona Lisa shit right there. Into the mitigation, being and let, absolutely Mona Lisa of the break of structure. Okay, Mona Lisa shit. Okay, so just be sure this time. Again, we had this for the first position where I slopped my entry a little bit, my stop loss a little bit, but you get the point, right? And you should aim for 1 to 8, something like this. Okay, so let's see. Taps in, messes around. Okay, messes around like crazy. Okay. Okay. Okay, maybe barely. Should not be a break even to be fair though. Okay, but now it's just very late in the day, so I'm not sure if that actually. Oh, maybe it does. Come on. Okay, but that's just very late in the day, so as you see, not the nicest trade to be fair. Okay, but at least obviously very unexpected what it did. The only thing is what, okay, this came a little bit closer in here, but still 128 out of it, but very late though. It's 9:19, so 7 p.m. German time. Okay, so a little bit late, but yeah, better than shitting your pants. So not bad at all actually. Okay, so the thing though is, let me just actually drink something. So the thing is that, of course, we now tapped into some sort of supply areas. But again, this was not the extreme. We still have this liquidity left, but we at least made this best out of this day in here. Okay, so now we can look for the next day. What is going to happen? Okay. All right. Whoops. Okay. Very good. Okay, so we can see what they tried to do here. So technically, Asia, whatever, doing its thing, not really the nicest stuff. Just, in my opinion, just faking the order flow out of this. Yeah, let's say smart money traders having this demand area or supply area, whatever this you call it, supply obviously, right? Again, faking the order flow, giving out a false break of structure to the low side again, right? But guess what? This is our inducement to low side, but nothing really we could trade in here. Again, the only thing, if you really wanted to trade something, again, which isn't the nicest stuff anyways, but again, you had your channel, vector candles into the supply, right? And again, you look for internal break of structures, again, which you never really had in here because that would be down there. And then if we tapped into here, then you could trade the fast time fracture straight into the low side, but we just never had that. Okay. But you hopefully see, let me get my pen. Again, channel build up, vector candles into supply areas, right? Again, then if this push gets broken, or maybe that was something on a 1 minute, and then can you trade into the liquidity down there? Okay. So I never had that though. So let's see what they actually did. Okay, but now it's very freaking nice. Okay, so again, we're having this channel build up in Asia. Now this huge channeling downwards build up, right? Nice build up. Look at this quadrillion bottom on the downside. Again, this mini channel in here, inducing with speed, right? Of course, there's nothing really going on to the left. We could trade for mitigations off, right? But guess what? This cycle is done to the downside. Obviously, the more experienced people, they can look for buys in here and also did. I remember a few guys of you did, which is absolutely amazing. Again, what's the timing? Magic manipulation minute. Again, this is advanced trades. Yes, for sure. Is it tradable? 100%, right? 100% you can trade that. And by the way, so did I as well, right? So you can obviously trade it like this also. So the only question is, where's your target, right? So you have news coming on Friday, so kind of cheating a little bit because obviously I was trading it, so I know exactly how I did it in terms of how you should do it. Intraday target, of course, Asia range. If you want to play it a little bit more, risky because of the news, then the target would be the next medium inducement in here. That was my personal target also. But of course, the more safe target is Asia range high, right? Of course, but if you really want to go for it, the medium inducement. And again, if you really want to play it, but then again, beware of the news, is the extreme mitigation. Of course, that is your Mona Lisa scenario if it hits in here, right? And again, the only trick with that day was that there was crazy news going on there. But let's see of how it actually turned out, because obviously it was very, very nice of what happened. So first of all, it chopped out of the right? And then news were right around the corner. I think some were close. And look what happened actually. It was so nice. Even were in the call while it happened. And I think it was right now. Again, faking the break of structure in here. Faking again gives people the order flow, right? Mitigation wants them to get into it and always trade to the short side. But guess what happened? Swooshed through it, chooped through it, hit my TP to the spackle. And again, that's where the thing comes in. If you don't get out and think like, oh yeah, we'll go all the way in there. Look actually what happened after that. Again, crazy news. And we even talked about that right on the edge while it happened. And of course, swooshed through it to the low side, right? And then of course, making all the people excited in here. They want to take now sell positions, fake the reaction, and then it takes out them once again. What's the only real scenario they wanted to do? Obviously go to the extreme mitigation. Unfortunately missed this trade, right? But that would be super freaking nice if you obviously had a limit in there, right? But yeah, that's the Mona Lisa scenario after the news. And of course now with the extreme of the 1 hour being mitigated, and there's such a nice lovely day. And again, what is this scenario now? Again, if you just look at the 5 minute, what characteristic is this now? Just choop through it, Asia whipsaw, obviously whipping the low already. Again, first takes it out, whips the Asia whipsaw, whips it once again. So guess what? Now the 1 hour mitigation is fulfilled. And guess what? We are ready to obviously choop down. Finally, big time. Again, what's the next target you should at least aim for? Down there, right? Of course, the next proper target would be all the way down there, right? So obviously for the next day, probably not for this day, but overall, if you want to hold this longer, you could have definitely, right? But of course, it was very tricky to get in there, right? So news, what a surprise. So random, the news, right? Never makes sense what the news does. Only plays the cycles to the absolute perfection, right? And then of course, this thing was just not tradable after that, right? But very, very juicy. So intraday target obviously would have been hit in here. Perfect stuff, right? But then again, has potential way lower after the 1 hour mitigation zone is hit. So let's see again what they're trying to do next day, maybe just again to finish the whole day off. So what do they do in here? Lovely stuff. Okay. Okay, so in that day, obviously, let's see what they try to do here. Should be very obvious what they're doing here, right? Building obviously this false channel in here. And again, now we make a little twist, make this analysis yourself, try to do it on the edge and see what they try to do here. Again, our next, just be in mind, again, don't try to cheat on there, but obviously extreme mitigation of the 1 hour, which obviously was very nice, led to all this thing, induced this liquidity before that, really juicy, right? Induced it into extreme mitigation. Perfect. Next target, obviously, was this one, right? Lovely stuff. We already hit that. So if you look at the 1 hour, what's the next target we could look for? Something like this, as we had it, right? Okay, so with that in mind, what day or variation, cycle variation, could that be? Okay, so now again, we have huge potential to the downside. We're building up the channel high. If we get now what? Again, where's my fancy pen? What can we get? Cycle variations. Now do this practice for yourself. Can we have a retail heaven like this? Can we have that? Maybe. Okay, I gave you a little hint. The hint is no. Or can we have maybe something like this? London knockout to the downside all the way. Or again, maybe, I don't know how that even would work, this scenario, but maybe a retail happen like this to downside. So as you probably already saw, the best potential outcome of the scenario would be inducement high, and then something like this, internal break of structures, right? This, and then turning into London knockout. Okay, so let's actually see what we had in here then. Again, we kind of made a little projection already. So we wait, of course, until Asia is done. Now it's done. Gives again the fake break of structure in here. Pushes higher. Perfect, actually. Right, so guess what? That's the inducement already. Taps into order flow. Okay, valid mitigation this time, because again, we had our channel build up before that. Again, where's the small money trap? We already had it in here, right? Gives the false reaction, small money trap, taps into the extreme or the mitigation of this one. Again, really, really nice. Again, maybe you're asking like, okay, why is this not the small money trap, but this one? Right, again, look at the cycle of what it did. Again, we had already small money trap breaking the false. Again, that's where the details become very important. This again, push, faked the break of structures in here. Everyone's getting side already, and then obviously getting induced to the high side. Look, they're building the channel even higher, right? Again, broke the channel in here also, faking it, tapping into that also broke out of Asia range. So that is definitely very, very valid to take. So the only, or not to take, but to obviously mark up for mitigation, there's nothing you should take in here. You wait for what? Or you should wait for what? Of course, valid break of structures now. You got it, right? Perfect. So what's now the thing we wait for? Marking up our extreme mitigation after the cycle is done, like build up, false smart money trap into inducement, minor one into mitigation. Again, we still have huge potential to downside, right? Coming away, trading away from this major mitigation up here, right? Took out the liquidity into the news. Perfect. What a surprise. Huge downside action, right? And of course, now you can trade this into the cycle and expecting a London knockout, right? So let's go in 1 minute to see what we have. Again, depending on how you want to refine it, this would be a possibility, right? Refining the extreme. And there's nothing really you should pull out of yours in here. So let's see how it goes for confirmations. What we have. Okay. Messing around, obviously. Now timing comes in. That's really, really nice. Look at how they're building it up. I'm probably faking the 5 minute POY in here. Building it up even more. Fake break of structure. No, not really fake break of structures, but fake reaction. There you go. Inducement if it taps into. Boom. Lovely shit. And of course, that's super, super valid to take. Oops, not the 15, but the 5. Until then, at least again, intraday target, Asia low, and look at it. How juicy that Asia low is. Like triple tops, triple bottoms, like crazy, right? But of course, if you look at the 1 hour, we had huge, nice potential, right? To take out the next liquidity zone. If you don't like that, you can aim for the next liquidity mitigation area. But of course, knowing that we come from an extreme mitigation, major one, also, of course, we should take out the next liquidity zone, right? So depending on how you like it, you can either aim. And look at the risk reward on that one, like absolutely beautiful stuff, right? So look at this. If you just trade the mitigation in here, 1 to 65. Come on, guys. Come on. Come on, guys. Seriously now, right? And then guess what? Chuped out of the, absolutely smacked it, right? Of course, technically could trade the order flow. Just a little bit too big in that scenario. Again, the order flow would be filled in here. Nobody takes trades like that. But again, that's the only thing they gave in here. So now we grabbed this equal low. So we can expect a little reaction out of there. So let's go in the 1 minute to see for potential continuation trades. Again, yes, we grabbed this liquidity, but again, we don't really expect too much out of there. So let's see. Lovely. Again, faking break of structure. Okay. Messing around. What do we wait for? Continuations. So when does this happen? What's the timing when this fake break of structure happened? Magic manipulation minutes to the minute, right? Okay, so technically, now again, faking the break of structure to the high side. We had our equal highs in here. That's our mitigation right there. You see, stayed away from the mitigation, just barely tapped into it after the magic manipulation minutes, faked the break of structure all the way back low, build up into inducement. Again, don't force these reversal trades. Again, why is this not an Asia whip? So you're asking again. Again, base it always on the other cycles. Again, we had this Asia whipsaw. It didn't make sense. 100% tapping into the. We had this not Asia whipsaw. Why? Because again, we're trading away from the mitigation now. Same thing here. We had this Asia whipsaw, made perfect sense because again, we induced nothing really to the left, inducing high side into extreme mitigations, major one. This obviously is an Asia whipsaw, swoosh, right? But now we're trading away from the major mitigation. So this is of course not an Asia whipsaw, right? And first of all, anyways, we had like a reaction anyways. Again, pull back and then low, so it didn't even whip the Asia whipsaw. But again, that's of course why it should not be an Asia whipsaw anyways. Just let's say you see the speed in here, and then again, why should it not whip up higher? Yeah, it has not really characteristics for Asia whips anyways. Plus, you're trading away from a major mitigation. Plus, we even projected out that it could be a potential London knockout anyways. And now, obviously, it looks very juicy. Of course, we expected some sort of reaction here, right? Potentially even higher into these areas, right? But if you looked at the baby cycles in the 1 minute, right, that's what we had. Again, inducing low with wick. False break of structure to the absolute minute gives the false break of structure here. Also Asia, they open price, build up into a mitigation and continues lower. Again, don't get trapped into these reversal trades. Trade what is there and what you had before. Trading away from the major mitigation zone, right in here. Perfect. Okay, so let's see. Boom, chopped out of there, right? And of course, we have to look for mini cycle plays to continuation lower. Again, look to the left. There's nothing really you would be interested in other than these false random zones in here, right? Again, nothing really should be interested in. Trade away from the major mitigation in here. Aim for the liquidity next, right? Or even not even there. Again, this turned into smart money traps. So where are we actually? Okay, let's actually zoom out. I'm getting lost here. Oh, there we are. Okay. So you see, that already turned into the smart money trap in here. Perfect. Okay. So why should we randomly mitigate in here? Right. We come from a major mitigation zone. Of course, they fake the reaction. That's why we take the continuation trades exactly like we did in here. And of course, we aim for the next liquidity area. So the only thing we look for is cycle plays. All right. So look for cycle plays. So what do we have in here? Okay, perfect. If that takes it out, I'm very interested. It did. Okay, why is this important? It takes it out because again, then you have a valid cycle play in terms of building up a channel, coming off a fake smart money trap, break of structure, false one. So we interested in continuation lower. Right now gives break of structures to the low side. If it comes back, okay, if it comes back in here, something like whatever order block scenarios. Let's actually refine a little bit more. Okay, there you go. Taps in there, and again, if you take the trade in here, stop goes obviously above here, right? And again, that's not really equal highs in here. Again, it's a cycle play, taking out the equal highs. Then real break of structure. And of course, you want to continue to the low side, right? And then chop through it. again, that's the power of not trying to force these reversal trades all the time, all these smart money traders getting trapped into. And again, they're looking just to the left, seeing some sort of change of characters. Again, then they see like, oh yeah, this tapped into something, whatever, blah, blah, blah. Then you have this internal break of structures, right? And then again, taps into and then they're all left wondering of, oh shit, why do I get stopped out then later? Right? Again, even all break of structures in here, so they're taking even this trade in here once again. So again, don't be one of them. Use the advanced cycles, and Chow also covered it for 2 hours of how to trade these false break of structures, actually trade against them. And that's literally what you have to go to slowly also. Again, don't get trapped in these random reversal trades all the time, but trade actually against them and trade in line with the overall cycles and what they had before. Right? And of course, that thing then just flew to the downside, boom, and end the week off like this. Okay, so not too bad. Not too bad for Friday, depending on how you had this one, right? Would have been an insane trade. Okay, 1 to 70 possible, nice 1 to 30 continuation trade, and potentially also this trade in here potential, right? So not bad at all. And then of course it's Friday. You just grabbed this liquidity down there, so you don't expect too many craziness. And then again, it's just best to end the day off and just leave it to do its thing. Okay, then it ends off like this. And yeah, nothing else really going on Friday. But that was the potential opportunities on Friday. Absolutely beautiful. Again, the only hard things in here is to not get trapped into, again, when it goes to the left, taps into some random zone in here, right? Again, and then just gives you some reaction in here. And then fakes the break of structures as they always do. Look at the mini cycles, look at the actual intentions, and then trade in line with it. That's way more safer than forcing all these crazy reversal trades all the time. Okay, so I hope you enjoyed it. I hope the cycle variations are a little bit clearer by now. Again, also very predictable that this could be a London knockout. So that's again another reason why you should not look for reversal trade in here, right? And of course, take the sell trade instead. Okay, this one, probably the most beautiful trade if it wouldn't be the news, and if it could have gave 1 minute entries in here, would be the best trade ever. But even you see this one, 1 to 70 potential, and that was absolutely Mona Lisa shit in here. Okay, so hope you enjoyed it, and we catch up very soon. Cheers.
Awesome.
So as you already see this one, that's the liquidity inducement cycle we had obviously all the time, right? So it's just normal build-up, inducement mitigation, and nothing new. Everything should be very clear here. So now what we can do to make it actually very more, like much more reliable, we just add one more step to the whole thing. And that is the relevant market structure. That of course will always be optional. But overall, that alone, you will see why this can be very helpful because, again, no one of us trades market structure at all. That's the only time we actually can put the market structure approach to it, and you will see why, right? So as we had the build-up approach, right, of course, retail at the stage, you know what they're doing. Me at the stage, we're obviously very happy about it. So if you see, obviously, in this picture, right, so where are the build-ups in this scenario? So the real Sean, if you want to answer that for me, so where are the build-ups in this process or in this picture?
B, D, G is downward build-up, inducement at H, inducement at I. I see inducement, I don't see it.
Okay, there's two tricky
F
ones.
is a mitigation, in my opinion.
Okay, okay. So F is more like meant on this one.
Yeah.
And if that is that a mitigation then, or is that more like a build-up as well?
That's definitely build-up then.
Okay.
If you draw it like that.
And H is a tricky one as well. It's kind of a hidden one.
Yeah, the trend line one, Daryl. That always gets us.
There you go. So trend, like already very important trend lines or like these channel buildups you can note that down. That's definitely one of the most effective ones and the easy ones you can detect, and the most efficient one in terms of liquidity buildups. Okay, so obviously these equal high things, they're very easy to spot, other than if they're like inside in here, right? But then these channel buildups, they are so good, and obviously you have these bigger channel buildups as well, right? Then based on the buildups, of course, we find what? Of course, the inducements, right? So if we find the buildups, as you already can see from 50 miles away, it should be very easy to detect the inducements as well, is it? So where are the inducements? And the only inducements we look for. So where are they?
We got, let me see if I can get my pen out.
Right,
iPad.
yeah.
Are you on your iPad, Reem?
I'm on my PC.
Oh, you're on your PC? I don't have. Oh, there's my pen. Okay.
There's an inducement.
So what about this one? Is that not an inducement as well?
Yes, it's an inducement as well, yes.
So I think I even have, oh yeah, sorry, I even have the letters there. So what is it? Is A an inducement?
B, D.
So is A an inducement?
No, A is part of, well, it inducement, but it's within Asia, so you're guessing, and I don't like to guess.
Yes,
so
so
B
definitely Asia
is,
high is not inducement, right?
Yeah.
Okay, so then B, out of this channel into London Open.
Yes.
Exactly. C, is that an inducement?
It's a buildup.
Exactly, that's the build-up or like a mitigation technically the way we see it, right?
Yeah.
Then of course we have this one, we have this one, we have this one, and of course this one. Very easy, isn't it? It's just based on the build-ups, and then you just mark it, okay, what is the direction you actually want to induce? Okay. Very easy stuff, but then guess what? Then obviously can add some bonuses in, and when does these inducements happen? And of course, what is the price? Only everything happens through our time windows, right? So we have London Open. Obviously, this one is the only one which happens a little bit off. Then we have New York Open, we have New York Trap, and we have London Close. What is the price, right? But then anyways, then obviously we add in the new step and add in the relevant market structure. What will this do to us? So if we now see our buildups, and we see our break of structures after this. So we're getting our buildups. We just have to detect the buildups. Based on the buildups, we get our inducement. And based on the inducement, we should get our relevant break of structures. Okay, now actually try to figure out where are these relevant market structure things. So can you mark it up for me?
Yeah. Like
mark up internal structures, right?
Internal? Yes, so the relevant break of structures.
This one here.
Does anybody consider that a possible inducement or a fake break?
That's an inducement.
Which one? You blue?
Right here. Yeah.
This one? Yeah. In what way? To the upside?
Like a fake break?
This one?
Yeah, like a fake break to go lower, right?
Of course,
like
yes. Yeah, this is just like an advanced one where it's very hard to detect, and obviously you have to see what they're doing on the 1 minute. That's the 5 minute, right? But yes, overall, as you can see, they're obviously giving the proper break of structure here, and then inducing something a little bit on the high side first, and then obviously you want to go lower, right? So you have two break of structures here. You have this one, the first one, like obviously this one, right? So this push led to the high side. This is the bigger push that led to the high side. So you have this internal break of structure, this over break of structure, right? And obviously this inducement low here, that's the push that led to it. So that's it. And of course, you also have this baby one in here, right? But obviously that's not really something we would look for, right? And then of course, based on this inducement, or technically even, this one here, or this induces even higher. So that's done anyways. Then you have inducement high, low, right? And then of course, the break of structure is in here. And then of course, we look for something in this. So as you can see, it's already very easy to just look at this little baby cycles, is it? Right? So we just need to find out the buildups. Then you get the inducements based on the buildups. Then you find your relevant market structure breaks, and only based on that and nothing else. Nothing else. And then, only then, you look at the mitigation. Right? At this stage, it should be very clear of where your potential entry zones are. So if you check, in this scenario, so again, we have like our build-ups, inducement, mitigate, build-up, inducements, and break-off structures. So just based on the break-off structures, where are our potential mitigations? And only based on them.
This whole candle would be one, wouldn't it? Up candle, down, up. I guess it'd be this whole area you'd have to look at.
Mm-hmm.
See, this will be hard for
this,
me because
that one would
it
be
didn't.
Say it again,
this
Sean.
one easier.
That this
Oh,
this
yeah.
right here would be a hard mitigation for me, just because because technically it's already been mitigated with this last candle here. That wick has already mitigated it. So unless you're on a lower time frame, it'd be very difficult for me to see that.
100%. And then again, if you look at like this, Sean, if you look at it like this, right, this one obviously induced the structure in here, always then still goes lower. So then technically, is this the potential mitigation we could look for instead?
Yes, definitely.
Exactly. Right.
And
so even if this one gives you kind of an headache, then this like acts as your mini inducement, then still goes lower, leaves the imbalances, and then still comes back in here, right? Okay, so if you see, that's technically of how we do it, and that's the only time we do it, right? So we're just waiting for the break-off structure, then the imbalances get filled, break-off structure, always the next imbalances get filled, and obviously this one, like technically induced here. This one obviously is the break-off structure in here, whereas the imbalances is right here. Then we have this one, whereas your break-off structure is right here, whereas your imbalances is right here. So you see, there's literally nothing you could do wrong other. And that's the only thing in here is in here. But depending on how you see it in the order block scenarios, right? Or if you have it like this, obviously you missed the trade, depending on how you have it. But if you see the big, or like this one, if you say it like this one, okay, completely fine. You just miss this one by like a baby pip or something like that. But you see, there's nothing you can do wrong in these scenarios, right? And you see, the whole thing comes with the simplicity is just the key. Like it's not complicated. It's just a step-by-step process you do all the time, and there's nothing really you can do wrong. And with that extended lit cycle, again, we had before that, we had the normal like build-up, inducement, mitigation. Now we just extend the cycle by just one thing more, and that's the relevant market structure break, and that opens up the gates to our simplicity approach. And that obviously can have a few steps more to it, right? So we see you can build the whole thing from we always starting at the same area, and then we just move this machinery like further along. The next machine comes, does its thing, and only then we move further. The next machine does its thing. We move further, the next machine does its thing. And that's how we just move the whole machinery through it. And if there's one machine just not working, that's the end of our thing. Okay, so it will be very hard to get even to the end and do like a proper mistake before you haven't walked the whole machine, because again, you don't go from here and then just go like this. That's not what you do. That's why the machinery goes with like whatever this thing is called in English, right? This machine band or whatever it is.
Conveyor belt.
Exactly. Thank you for that.
Yeah.
Right. So again, that's why you have to walk the walk in here. You just don't take shortcuts. And then again, the efficiency of the whole thing is just off the freaking roof. And that's something we tested like quite a lot with Cam and Sock by myself, because it's literally, it's a simple approach, but it's literally a cheat code. Like, I'm not even kidding. The thing is, it's insane. That thing is, it's unbelievably when you figure it out. For example, even if you look at a retail heaven scenario, and if you just look at this picture right here, you think like, what the fuck, where are my entries in here? Like, it's a mess. Like, what can you do in here? Right? If you just look at it in hindsight like this already, isn't it? Or is it clean to you?
Yeah. Well, I see a couple entries.
You see a couple?
Like this one right here is a sell.
There you go.
There's one. This could be an entry. I'm not sure. I have to see it 1 minute. And then no, I guess just that's the main one I see is that
okay, so I'm not sure if you can see the data, but for me it's like I have my border. So what, do you see the data?
I don't. No, I don't.
Okay, but it should be like whatever last week or something like that, or maybe whatever 2 weeks or whatever it is, right? So if you just see where are the buildups, we already can see from 50 miles away. Okay, we only have this bigger equal highs, equal lows buildup, right? And we have this huge channel downwards. We don't pull something out of us and say whatever, maybe, oh, There's something in between. No, it's just one big channel. That's about it, right? Then we have a new channel. Then we're building equal lows, and we have another channel upwards. That's about it. And obviously we have this channel, but then the day technically is over, so we're not too keen about this one, right? That's all we have for our buildups. Guess what? Whereas our inducements comes from our buildups. We see the buildups from 50 miles away, so we understand, okay, this is the structure point that got induced. Perfect. We mark it up with actually a purple line and see that's our inducement structure point. So the next channel build up, that was all this channel, obviously from here all the way back to here. That's all the channel. Where's the next structure point that's get induced? It's right here. So that's our inducement high, which induced the channel and a structure point. Perfect. So then we have the next channel build up. There's obviously the inducement, of course. The inducement is the new break of the low. Right? Then we have this equal lows, very obvious. Where's your inducement? Cannot be more obvious in here. Then we have the new channel build up. Where's the inducement? We have to look to the left to find the structure point. Gets induced right here. So you see, but it's all based on the buildups, and the buildups you can detect from a mile away. Then what's the next thing we do? Break of structures, relevant break of structures. So as you marked this one earlier, right? So you have this inducement in here. So you either can make the internal break of structure, again, not the cleanest one because it's just like one baby push in here, or you have to wait until this one is getting broken, right?
Right.
But that's about it, right? And of course, we have this inducement, whereas the push that led to the inducement, like this. So I mean, first of all, this was the inducement, but obviously the push all the way in here. So good for us. It even made one push higher with this one, right? So this becomes the push, which becomes the relevant market structure break. Perfect. What about this one? Obviously, the break of structure would be something in here, but then obviously this lets another channel build up, right? Okay, so that's out of the picture. Then we have equal lows getting induced. Where's the break of structure internally? That's the push that led to the inducement. Perfect. Here's the break of structure. Then you have the channel. That's new inducement in this range. Right, again, careful about this one then. It's because now you have channel inducement high side. Here's a break of structure. Why is this the break of structure again? That's the push, then this is the high. That's the push that led to it. Here's your break. And you already can see what's the next steps in here, and that's the mitigations. And as you can see, where can you do something wrong here? Where? So it's the inducement high.
You're guessing if you're making mistakes on this. This is pretty easy.
Yeah, like where can you possibly make a mistake? Like just show me one. There.
Yeah, in this chart.
There's nothing because this doesn't have an internal break. So if you're entering there, there's no internal break there.
Yes, the only tricky thing is if you see this one kind of as equal lows, this one has the inducement. Fair enough, right? Okay, but then you should see the bigger cycle. Like it couldn't be more obvious. This is a channel, and this is just the inducement of the bigger picture channel. And that's where people get confused with, and then see this as an internal break of structure, and then look for mitigation in here. That's the only time you can get confused. But again, if you understand this cycle plays better, again, that's where these losses turn into actually wins if you just trade in line with the cycle is and not into the smart money traps. And again, how many times we talked about these fake break of structures over and over again? That's exactly what they do for smart money traps. They fake these break of structures, show you this one instead. But again, what's the bigger picture they literally do? Building up this huge channel. And again, we don't need inducements to close it all the time, right? We also, of course, we can have a channel. Where's the inducement? If it's like this, if it induces high, it will go lower, right? Of course, we can have a channel like this with an inducement like to the lows, a high side also, and then it should go lower, right? But we can have inducement continuations as well. It doesn't need to be induced all the time to the low side. And then again, just inducing the bigger picture channel. That's the inducement we're looking for to the higher side, faking the smart money trap. Obviously, everyone gets excited about this one, jumps in, right? Obviously getting the baby reaction, getting smoked. Perfect. Then we have internal buildups in here, inducement into there, mitigates this inducement. Perfect. Okay, that's the only thing you can mess up. Okay, so let's say you do everything the right way and just getting confused by one. Okay, what about this one? Is there any potential mistake you can do in here? Inducement, break of structure. fakes the smart money trap as always, gives the false reaction, taps into it, perfect, continues lower. Right, and channel buildup. Obviously, this is your inducement. Again, that's where technically the momentum mitigation comes into place. So let's say, okay, this one you saw as an equal lows, and this is the whatever the inducement with speed. And then whatever the price makes something like this and comes back in here, then it's 100% tradable into buy sides, right? But again, if you have this thing in place for smart money traders, this is their confirmed break of structure. But for us, it's obviously the inducement for the bigger picture channel. See the difference? So we don't get into this one by any means, okay? Does it make sense?
Yes.
So it should be actually very
makes
clean.
sense.
It should be very freaking clean, right? Then again, if you just took another messy day, and that's the 5th of April, okay, that's a little bit further away, whatever, but I just chose like random days where they don't look clean at all, do they?
Right.
Right, so I'm not sure if you can see what's going on here, just in hindsight.
Build up. Build up.
Mhm.
Build up. Where's your mitigation points? Your inducements are there's your mitigation there to go lower, but I wouldn't take that
I
just
saw this whole thing
because
as a big buildup.
Yeah, that's not the problem. Okay, let me show you the build-ups where it is properly. Is it clear now?
All right, I got to work on the trend line ones.
And you already can see these channel build-ups,
Yeah.
they are very, very powerful. So as you can see, this obviously is sideways build-up getting induced by lows. So perfect. This one is the channel build-up getting induced in which direction? Low.
Yeah.
So we expect higher. This channel is getting induced mid direction, low.
Lower
So
to
obviously
go
we
higher.
expect something higher, right? Perfect, but doesn't go higher, it just builds up equal highs. Perfect, but guess
relative.
what? It comes back then and gives us a potential new entry. Then again, there's the channel, but guess where this channel is getting broken? Look at the channel. Where is it getting induced?
Downside.
So what do we expect? Again, building also the triple top in here. So this is obviously a very, very juicy trade. But guess what? You already can see what's going on here, do you? Comes back into where? Does it slowly make sense?
Yeah.
And obviously this is the channel buildup. Huge momentum speed to the high side. So we know where this thing's gonna head it. Taking out all these triple tops in here, right? Boom, with speed, and then swoosh to the downside. Okay, this one is just very tricky to take because the break of structure is all the way down here. And this becomes some sort of like a supply demand plane here, but London close thing, right? So this is tricky to trade, but that's the only opportunity we had in hindsight here as well, right? So guess what? Inducements come based on the buildups. You can see that from 50 miles away, can you?
Yes.
Yeah.
Right? So guess what? Out of our inducements comes our relevant market structure breaks. There's nothing you can do wrong here. Like seriously, there's nothing you can do wrong. Identify the buildup, inducement. Here's your break of structure. Of course, this is definitely valid to trade if this thing would have come low in here. That's where the fast and precarious trades come into place. And again, of course, you could argue, oh, what about these equal lows? Guess what? They're getting smoked later anyways. It's not about that they have to smoke equal lows immediately all the time, right? That's why the cycle comes first. And if this would have pushed low in here, that would definitely be tradable, but it did not. So it is what it is. You just mark it up anyways, and if it gives you potential fast and precarious trade in Frankfurt in here, you trade to the upside. Perfect. Right, next cycle.
I have a question about that.
Sure.
Okay, I know for our timing, fast and precarious is 7 a.m. UK, but I noticed even on one of the Sunday slaughters, you took it at 6 a.m. UK time.
Maybe was because my time was switched to UK. Maybe it should be 7 a.m. still. Oh, 8. No,
Okay.
it definitely cannot be 6 a.m. though. Maybe for you, but 7 a.m. for me, maybe. Because for me,
Okay,
Frankfurt
no.
Open is 8 a.m. But it should never be 6 a.m. Other than if you're in the UK, then whatever, it can be a little bit early, but that's still very early. An hour too early is a little bit too early.
No,
Of course.
I remember like on one of the Sunday slaughters, you took a trade coming right out of Asia. Like it was like the candle, 1 or 2 candles after Asia. And I mean, that's one of the reasons now, like, I come to the charts like an hour before Frankfurt. I don't take trades that early, but I just noticed, like, I was like, interesting, Reem, because you marked it up, and I was just like, okay, cool. So I was just asking, would you come like at Asia, like as soon as Asia ends, or like an hour after Asia ends? Just kind of
Yeah,
for
so
myself.
like my favorite trades back then, and currently not so much anymore because I just like to sleep a little bit longer. But I love these inducement trades out of Asia because you're trading into the inducement like with speed, and it's not like you're trying to find the peak or whatever. It's like always you're just trading literally into the inducement, and I love this trade. For example, this one, where a lot of people already would fall like and sell in here. Like, why don't you trade the EDM trade into the inducement into London? I loved setups like that. It's like in my opinion, is the best setups you can take if they give you some sort of inducement already out of Asia, then comes back, gives you some sort of EDM trade, some sort of lat trade, some sort of fast and furious trades into the inducement into London. That's, yeah, I said that like a lot of times. That's one of my favorite trades there is for sure. And especially if they never broke out of Asia, then it's even nicer because you can just literally, very highly expect the inducement out of Asia. So yeah, if it's earlier, again, the fast and furious trade is just called because it's a fast move into Frankfurt, or can happen obviously in Frankfurt session. But yeah, it doesn't need to be to the minute. A lot of times it is to the minute. And if whatever, see the time in here, whatever, this is just a little bit off of Frankfurt anyways. And this is technically a fast and furious buy trade into London Open. It's also an EDM trade. You can see it from a mile away. Comes off Asia high type of thing. Mitigates the imbalance. And guess what? The most important thing is in having this channel build-up. The channel build-up induces it, and then obviously plays in line with the EDM and obviously everything else, right? So then, of course, the tricky thing is how to get in. Obviously, you can get easily in on the 5 minute. That's a Mona Lisa trade in here, right? If you understand the cycle before that. And then you just have to understand until when it's valid. So if in the 1 minute, this is your break of structure in here, you can trade it back in here as well. But the moment you made a new high, that's obviously your London inducement now, and you should not get into here again. Because obviously that will lead into an inducement.
Yeah, now you're smart money trap at that point.
Exactly.
That'd just be too easy to trade.
You can trade it. Let's say it taps in here, gives a reaction, then you can take it into the buy again. But not if it already took out the liquidity, and then obviously they build up again. Guess what? They look for an inducement. That's in the inducement. And again, that's why why it's easier that you put in these purple lines to show you the inducement also, right? For example, this one just technically induced the overall channel because there's just no structure point as well, right? And this leads to an EDM, so perfect. But in terms of this one, this build-up, of course, it needs to induce the bigger structure, and that's like this one. Whereas the inducement of this one, obviously, it's the structure point here that's getting induced. So again, guess what? Structure traders, they see the break of structure, or the koch, the change of character, whatever you try to call it, right? And then, of course, they're looking for sells in here, and they get just getting smoked, right? So this change of characters or this break of structures, like the way everyone else sees it, that's the best sources of liquidity, right? And of course, this one is a very easy one. Of course, a triple top, quadruple top in here gets induced with speed. Obviously, now a time window, perfect. And that's the way you do it, right? And of course, based on that, you find your points of interest, right? That's as easy as it is. Of course, we talked about this one. This can be tradable if it does something like this, but it just didn't. It just stayed short of it. It's fine, right? And same thing in here. If it does this, you can trade it. But obviously, if it takes out the new high, then it's invalid. That becomes a small money trap later because it needs to grab liquidity until you get higher, right? And then you can see this build up from 50 miles away with the quadruple top in here. What do they actually do? Right before that, you have your inducement low after the channel is being built. That's your break of structure now. Obviously building up liquidity like crazy. And you see that's the example where this one would be the same. Like if this comes in here, builds, gives the false smart money trap, comes back, then you trade it into the buys. So that's exactly what it did here, right? So again, this is the imbalance of the inducement. Perfect. Comes back, gives you the break of structure. does not take out the high, but builds up liquidity to the high side, fakes the smart money trap in here, gives the false reaction. That's your buy entry in here. When does it happen? What a surprise! Only to the minute in magic manipulation minutes. Okay, but obviously now you can trade it like 100% because first of all you're trading into the triple top to take out the liquidity, and you're coming off of this inducement anyway. Then you had a break of structure before that, and you have imbalances, and it's timing perfect. Right, and you have the next channel buildup. Where does it get induced? To the low side. Where's your next break of structure? Right here. Or if you want to see it as equal highs, you can do as well. Even nice as well. Where's your imbalance? Right here, comes back, taps in, and now you're trading again into the inducement. Lovely shit. Then of course they channel upwards. That's the inducement with speed. What's the timing? Perfect. If you look to the left, whatever. I think that's either EU or GU because yeah, for the examples, we always use EU and GU. There's like 5 million examples anyways you can find. So if you want to backtest that, you can. Then, of course, the inducement goes into the mitigation. Perfect. Then you just need to wait to make it super safe. Like, first of all, yes, you 100% can enter it somewhere in here on the 1 minute. For sure you can. But as this is just the 5 minute short, you have to wait for something like this. And, of course, you just have to play the supply to demand plays after an inducement in here. And then, of course, magic London close, and then obviously leads to taking out these equal lows right there.
There's a good chance that London close is also a 5 minute let.
In here?
Very good chance. Yeah.
Yeah, could be. I'm not sure about it. So let's actually see maybe I put it in there. Oh yeah, here's like just the mitigation out of this one. So very easy stuff. Good stuff.
Well, it's funny how you saw the EDM here without having the entry helper.
Yeah, but again, the entry helper is exactly just that, an helper, right? But you can spot that that's probably an EDM by a mile away, is it?
Yeah, I haven't done EDM training as well as I have on the LEDs, so it is something I need to add to my repertoire.
I mean, you changed your name to Let, so you should be specialist.
I got permission to change my name to Let, so I did ask.
Who did you give the permission?
See, again, I'm not gonna drop names. This is being recorded. After we're done recording, I will drop the name.
Okay, so
that was a setup there. That was a setup. That was a setup, Reeve.
Okay, fair enough. Fair enough. No, but yeah, that's technically how you do it. But you have to just backtest the shit out of that. I mean, we did the same thing. We technically made like a finger, whatever, 100+ days just like this, and it's the freaking cheat codes. It's literally the cheat codes because it just eliminates the mistakes you can do. It just makes the whole thing so accurate. It's like actually crazy. So let's make it like this. If you want to share,
I'm on my
screen?
iPad. Give me 1 second. I will go to my screen. Just give me 1 second.
The rule is like off the seat for now because he's kind of sick and we don't want to give him too much pressure.
No, the reason I invited him so is that way he could have the pressure. There's no pressure.
And I just checked, by the way. Look at this. Look at this. So take a look. It actually, of course.
You're not sharing your screen, Reem.
Oh, of course. If you take a look, this was the day, and of course, what a surprise! It was an EDM.
Who called a let? Who called a let? Who called it? Who called
there you go. Qualified for the name.
Without even seeing the entry helper.
Yeah, it gets fluid at some point. It just gets fluid, huh?
It does. I people seriously are like, there's no way that's a let. I'm like, bro, that's definitely a let. You can just tell by the price action that's definitely a let. Just give me 1 second. I'm logging back into Discord.
Good.
I'm gonna be logged in twice because my Bluetooth doesn't work on my Mac. So just FYI.
Good.
But
did you get your challenge passed?
I did. I got my first one passed, and I'm working on a new 300K account for my charity account. So working on that now. Yeah, man. My biggest reason for trading and learning how to trade is to give back, man. That's one of my reasons for.
There you go. Love to hear that.
Yeah, man.
That's some
the
good
beauty
stuff.
of why I did this, man. Yeah, I mean, we can have everything in the world, but what's the point if we can't give back?
Love it. Love it. Let me know when you're
I've
ready.
Also, I am in
you
the waiting
joined
room.
with. Oh, you joined with. Okay.
Yeah, I did join. Yeah, I did join with a different one. Yeah,
That's good. We
I
probably hear
can't. There's
some
no
two
sound on
shots.
this one.
Okay.
Yeah, we have. Yeah. No jokes on that one, guys. No jokes on that one. The one that doesn't have audio is the one that I need the share screen on.
Yeah, you should be sharing. Or should
All right,
be able to share.
perfect. All right, and then we're just gonna open new tab, and then we should be able to trading view.
Just make sure to not show us stuff you don't want to show us.
Nah, man, there's nothing on here that I don't want to show you.
Okay.
It's just
Okay, so let's
recording.
actually use EU
Is a clean
for an
chart.
example.
Clean chart today. Yeah, I just
Yeah,
went
the
to a
entry
clean
helper
chart
is
that
just a
way.
little bit too big for my taste.
It's okay. I'll get rid of it.
Okay,
There
so
we go.
let's
What-
make it a
what
little
day do
bit
you wanna
more
go?
challenging for you, Sean. Put on the replay mode. Come on. You don't get you off too easy for this one.
I know. I don't need to get off. Where are we starting?
Yeah, somewhere here. So, and now just really try to just use the simplicity approach and nothing else. Okay?
Oh, yeah. Hey, Sean, you learned this 10 minutes ago. Just use
Yeah,
that.
now
That's
do it. Now do it. Now prove us. Prove us wrong.
wrong.
Oh no. Okay, there you
Give
go.
you give you a 5-minute head start.
No,
Okay,
right in the
then.
cold water. Right in the cold water.
Hey, it's okay. I don't mind. Okay.
Okay, so
So
let's
let's
see.
draw our build-ups first. Again, this is all within Asia, but I'm gonna draw these out. So we'll see what it is. I assume this is going in the vault. Damn.
If you're doing good, if not, then you have the right to be
Reem
censored.
Reem censor. Hey, let's do a horrible job so it doesn't go in the vault. Let's do a horrible
No, I
job.
just don't want people to learn something wrong, if that makes sense. But I'm pretty sure you will smash it.
False confidence is there. All right. So,
Okay, so if you just look at this, for example, is this an inducement right there? Where's my pen? Or is this literally Asia low? So if you just look at this
This is
build up,
Asia
yes, okay, but is this the inducement we look for?
No.
Exactly. So
For
that's
me, no.
rule number one, right? Obviously, Asia low is not an inducement by itself.
Yeah, it's just hanging there. You
Mhm.
could have taken that if you're guessing, but not something I would take. Again, I don't have an entry helper to help. Okay, now we have inducement of structure. Now we can just sit back and see what happens.
Okay, so what do they love to do? So what could this be, as we always preach, like all over again? So if this can happen like right before our key time windows, right? Or like technically Frankfurt can do it as well, right? But what do they love to do? If you just look at the left also. Right, so is this the inducement we look for?
No, because this is just in Asia.
Exactly. What should it at least take out to be a proper inducement?
Structure.
Yeah, so what is, if you look at this day, the next day, or the next point, which it should take at least out?
Yeah.
So what is
There's
it?
relative equal lows here. You
Mhm.
can trade that if you choose to trade that. You can also, I did take this long today, but I took it with a very small stop. I did take it with a very small stop. So I did close
Okay,
at 1 to
so
5.
what is the inducement we look for? Isn't it this one?
That one right there, yeah. A structure
Exactly.
point, not
So
this.
can you mark it up?
Of course. Not trend line, but horizontal line.
All right, so that's our Asia low, obviously, and what's right below that?
It's a structure point. That's a possible mitigation, but it's also a build up. So
Yeah, true. But is it a potential zone at least we could monitor, which could make sense?
Yeah.
Definitely.
here's a trick, guys.
Because
Anybody
also
that
depending
doesn't
on
know
how you
this,
see this push to the low side, whatever, where's your internal structure points. Obviously, that's probably, again, depending on how you see the structural points, whatever. So that's technically, yeah, the push that led to at least 2 of them. And then obviously this one just led to the first of them, but this already turned out to be a smart money trap. So even nicer. This one is a smart money trap. We look for an inducement next, which would be this one, into some sort of mitigation. Perfect. And already we have, what do we already have? Bigger picture channeling downwards like maniacs, isn't it?
This was also a vector candle up to go lower. That's also how I saw this on the higher time frame, like the hourly or 2 hour. It was just straight up. So, all right.
Okay, so we have a fake break of structure, so this could potentially turn into a small money trap, is it?
Yep.
So if we know this, again, that's what we just literally talked with the other example. Again, not a coincidence. It's always the same shit anyways. What did I tell you about my most favorite trade? Is it trading into the inducement?
Always.
Right, so that would be my favorite trade in this scenario be.
Trading into the inducement would be from here.
Yes,
or
so can you
even
mock up?
above this build up.
Can you mock up the zone? Exactly.
There's
Why
an
again?
imbalance there.
And now the trick thing comes into place. Why, for example, would we look for a potential mitigation in here, not an inducement?
Because you've had everybody look for a breaker structure to a downside, and you've had a breaker structure not to the upside, which makes this a smart money trap right here. So that's why you're looking for mitigation.
And again, if you lose the power of channel, again, and you miss the most important channel.
Talking about this channel here.
Exactly. And as you already can see, if you just mark it from here to here, and then how people draw this channel, they need 3 touches, right? So it has to be from here to here, some sort of, and then go in here. And you already can see, if you see my perfect straight line, that they would already induce this channel, right?
Yeah.
And that obviously gives them the confirmation to whatever, break out of the channel and then take the buy trade anyways. So if you extend it.
Daniel, we're looking for inducement. This is, when you hear this, you're looking for inducement of the channel line.
Not this one, not this one, Sean, though. You marked it wrong. They need a third touch. So this one has to be a third touch.
Okay. So this would then be that would be kind of slightly broken then.
Yeah, it's completely fine. That's channel traders are kind of weird. And if you want to make it super accurate, that's the power of the channel. Then you use the clear one and use this one.
Okay, the downside.
So
okay.
You do the downside and then you literally just mirror it. So you see this one is perfect, is it? Or like semi-perfect. And then you just literally control, drag it. Or you already can see of how parallel it actually is. You see, it's literally almost parallel, is it?
Yeah.
And that's like the power of these channels. They're almost parallel all the freaking time, right? So if this channel is getting broken to the high side, obviously perfect, right? So now what are you doing with speed? Obviously, right? So giving everyone the fake break of structure or Koch, change of character, whatever. And that is where obviously the juicy trade would come into place, trading into the inducement, swapping out all the smart money chop traders into the inducement and potential mitigation here, is it?
Yeah. I do have a question. It didn't come back to the extreme. I saw.
Yes, that's over refinement. You have to use the order block.
Okay, order block.
Right. So it never over refine if you have a clean setup. You can take those 2 candles, like the 2 upwards candles. Yeah, that's your potential whatever order block you want to call it, whatever. Supplied.
The last buy before the sell. Got it. Okay.
Exactly, whatever you want to call it, but that's the proper way to do it. Again, that's the danger of over refinement if you just use this one instead, and you just miss it.
So we have a 5 pip stop.
It's completely fine. Look, what's the reward? At least, obviously, until here. Potentially, that's your inducement, and that's potentially your thing.
Do we want to see what this is? Okay, for everybody that's looking here, it's 1 to 3.7. That's your 1 to 7-ish area, and there's where I would draw it to. But there we go.
Okay, so that's not bad to start the day off, is it?
Nah, it's pretty clean.
And obviously comes out of what channel? Inducement out of the channel, right? Into mitigation zone. Perfect into trading into the proper inducement.
Yeah.
So that's the
and no
cycle,
drawdown.
right?
0 drawdown. And you got Chup. For all the Chup traders. Look at that, guys. 6 candles on the 5-minute.
Not too bad.
Nah.
So okay, so now obviously we have this cycle completed, yes or no?
Yes. In my opinion.
What do we also have if you look at this trend line? Is it getting broken? Obviously get a 5th touch again. gives a false reaction here, right? You see this one?
Yes.
Gives a false reaction and then just smacks all of them, right? Okay, so what's the timing?
It's near London Open.
It's
we
to
are
the minute. Why is it 2 a.m.? It's not 2 a.m. It's perfect to the minute.
Here, I'll change the time. Berlin, right? There you go.
There you go. Look at it.
To the minute. I'm not in Berlin, guys, but yes, 3 minutes.
Now you are. You made the
Now I
time
am.
change. There you go.
I
and it's to
I
the
need to
minute
move.
out of a sudden.
I need to move.
That's how you do it in Berlin. Okay, so what's the simplicity approach now? What do you look for, Sean? What's the only thing you look for? Now, because you know the cycle is completed, of course, you can go crazy and like whatever, execute it down there. If you want, that's definitely possible. But what's the safe approach?
You're looking for an internal breaker structure.
Where is it?
And then
Where is it now?
it's just
Yeah, there you go. And what so also, depending on draw the liquidity properly, why is this not the inducement?
this right here didn't take any structure to the left. It was just random
Plus?
point.
Plus, it stays in this channel thing, right? Is it?
Yeah.
Perfect. Okay. So we have multiple reasons why this is not a proper inducement. Okay. Then we have obviously fake breaker structure. We take it into the inducement, getting our perfect sort of the day. Now we have to the minute, what is a price into inducement, into mitigation. Lovely stuff. Now Sean, draw the internal breaker structure. Lovely. So what do we wait for?
Internal breaker structure.
There you go. So let's do it.
That was the setup there. Oh, my timing went off. Oh man, there we go. All right, there's my timing back. All right, so we have relative equal highs. Oh, look at that, guys.
What a surprise, is it?
Yeah.
Okay, so now if you want to make things accurate, we can go also to the M1. Let's give Sean a little bit of a challenge.
Of course. Why not?
Yeah.
Why not?
So show me the next build-up. Or the build-up we have. Oh, okay. Perfect.
There we go. I actually learned the Control C while just right now. Did not realize that was a thing.
Right.
Yeah.
So if this is getting induced, what's a structure point that should get at least induced?
I would say this.
Very good.
But
That's absolutely perfect because again, that's the question is at least, right? It's not like what's nicer, it's just
yeah,
at least.
At least that. I mean, you can actually even see this, but I don't know if that is going to happen just because of how powerful that liquidity grab was.
Mm-hmm. Okay, what's at least a structure point now that has to be induced? There you go.
By the way, Rima, I love the way you teach. It's amazing. It is amazing.
Okay, so what's going on here? So if you
break.
extend now this channel, if you want to make it clear, because does this stay in the channel, yes or no?
Yeah, that's all in the channel.
Okay, so do they break the channel now, yes or no?
Yes, they broke the
Is
channel.
that a surprise for us?
No. So
and do we have a fake breaker structure?
We do. Would you take the order based on that order block?
That's how you can do it. So again, if you check, again, we have the internal breaker structure, right? So we know, okay, technically somewhere in here, this is the push that led to the internal breaker structure. So we don't just pull randomly something out of ours and say what it might could be. First of all, we use imbalances, right? What's the only little imbalance we have? Of course, we have this in the extreme or this in here, correct?
Yes.
So what is our cycle? Channel, fake breaker structure, speed into what already?
Decisional.
Exactly. So do we need to wait for all the way down there?
We do not, because this also gave you a 1 minute let. So
I'm
price
sure.
doesn't have to
Can
come
you check?
back.
It's not a 1 minute let. Okay.
Did everybody not see that touch? Did not everybody see that touch?
From where?
Look, watch. We're gonna gentlemen arguing about this.
Please tell him, man. Please.
No, that's not a touch.
Oh my gosh, thank you.
It's like a
Look,
oh,
that's
this
a
one.
touch right there.
Oh, okay,
Yeah,
but it's
see,
still
that's a
not a
touch
let
right
though. The
there.
let has to touch this one though, right?
No, we take it off the equilibrium of line 2. Come on. Me and Daryl been waiting for this call for a minute. That definitely was a touch. I saw it in real time.
Yeah, but then only the fixed equilibrium, not the liquid equilibrium, right? But the let is the
Yes.
liquid equilibrium touch. Be careful with that one.
Daryl, you win. I owe you beers. This is recorded. This is recorded.
Thank you, Reem.
There you go. Yeah, but just
Reem,
be
I'm
careful.
sending you the
though.
bill. Reem, I'm sending you the bill. Just be on lookout. So would you have put a limit order here at this point?
I probably market executed.
So after the engulfing candle and put your stop here?
So like depending on how you see the mitigation done, if you literally want this one to be filled to the absolute tick, it did not. Right? But then if you just see the rep move out of it, you just market execute here and put your stop below here. But that's the aggressive way to do it. But you asked me of how I do it.
I did.
So again, that's not the best thing you can do, but that's the way you do it if you want to trade it aggressive. Obviously, there maybe would be better opportunities like a let or EDMs, and of course, we can take a look at it also if there are. But yeah, if you asked like how I do it, yeah, that's how I do it.
So I just want to correct. So you would just wait for this candle, this bear candle to close, and then just enter there.
You're not specifically the close, like it's more like you see the channel. If you mark it up properly, you see the channel getting induced. You just have an alert potentially on here, depending on how many charts you monitor. The moment this gets induced, your alert pings and you look back. Obviously, you saw your imbalance zone down there already, so you can expect that's your Mona Lisa entry in here. If it just pulls back, I'm a freaking FOMO trader because I want to trade everything. I just execute it in here and then put my stop still there. It's just, again, the difference is literally whatever. You can measure the distance in here. It's like half of a pip. Is it still worth it to be in a trade? Fuck yes. Like, do I care about like a 0.5 difference of a pip? Fuck no. So yeah, it's a very good. No, don't put it like this. You have to put it below here.
Okay, got it. Put it at the bottom of the.
Yeah. Okay. All right, because what's your potential area you target for? You should already know what's the target for that.
Minimum Asia high, but there's liquidity to the upside. There is,
but minimum
like
Asia high. Is that on purpose that this color is different?
What color is different? Oh, no, it's the way that it's done it.
And there you go. And your alert already, thank you so much. So our EU cells are looking good. Also the GU ones.
Yeah, I'm gonna go take a few more partials. Be right back.
Yeah, actually, it makes a lot of sense because timing, again, we're very late in the day.
By the way, everybody that will listen to this, please trade London close. I know a lot of traders leave it for New York trap. I ask you very nicely, go back test London close. It's by far, for me, the most profitable time to trade.
Yeah, and also we can make that shit up. We even talked about that before. So
yeah,
very nice. Yeah. Lovely stuff. Okay, so that's really nice. Give me just a speckle as well.
All right. Doesn't even come back. All right. Okay. So I did skip ahead. There was magic manipulation minutes, and there was a trade at magic manipulation minutes, but it was a little bit after magic manipulation minutes right here, or there's a fake breaker structure.
Sorry, I just managed. So, say it again.
Oh no, you're fine. You're fine. I'll just rewind it. There was a trade at magic manipulation minutes. It was a few minutes after, so there was your fake break after you got the equal lows taken.
Can you go to M1 please again?
Of course, M1. Yes.
Okay. Just need to catch up what we had. Yeah. So can you zoom out a little bit?
Yes, I can zoom out.
So yeah, we had you actually did quite a lot. So we had our entry in here, yes. Then again, be aware, what did you miss already?
Yeah, I can go back to our entry. There we go. Sorry, I didn't know you were managing your trade. My bad.
No. So like again, we had this one, right? But again, if this one is not clean, you ask, like, so let's go forward a little bit.
Okay.
Right. So what's again a cleaner entry also? Again, it's a big entry, yeah, a big stop loss, yes, but again, just for mitigation order flow, yes. Right. But if this is too big for us, what do we wait for? Just
That'd be too big though,
no,
right?
definitely.
You would
I'm just saying for that's the order flow entry, that's too big, but that's why what we wait for, right? So let's say if it taps in there, and if it does, then we can break our stop loss lower. Right? So if it does, maybe I'm making shit up anyways.
I don't think we're making shit up, guys. I don't. Ah, look at that. Look at that, Reem. You're not making shit up. Look,
No,
it touches it.
Okay, so but
I think-
again, this is too big though. So if it taps in there, what's our technically breakup structure if you look at this?
Breaker structure was here.
No. Like you, no.
Oh, okay.
So you had this push down that tapped into the order flow. So it doesn't
Yeah.
matter how low it goes, right?
Uh-huh.
So no, the internal breaker structure, like the relevant one, the
Daryl,
only relevant one.
Thank you, Daryl. Appreciate the love. Just watch me
No.
think here.
There you go. That's it. That's the internal breaker structure. It makes sense, right? If it breaks that, we can look for potential mitigation after.
There we go.
So let's see how low it
Alright.
goes. Goes lower, right? You don't care about this one. Only if it breaks this point. Now
There
it
we go.
breaks. So where's your imbalance now?
It's right here. Here, we
Yes,
can
and that's
draw
the
this box.
aggressive way to trade the order flow, right? And obviously that's very fucking nice. No, you have to put lower.
I was moving the other box out of the way so
Okay,
I can
there
actually
you go.
see. Can't see with all these boxes going everywhere. All right, there we go.
But that's how you refine the order flow and get in obviously nice entries just based on the order flow and internal breaker structures after that. Right, so you can trade this with a buy right now.
I did take that trade on my paper trade. I did not
Oof.
put it in my MT4. I did take that.
That's unacceptable. Trust your analysis, Sean. You're good enough.
I am. I know. Reem, I did. I even sent in the study lounge. I did call it. So I did. It's there.
Plus,
Can't-
what is it also? Maybe check
It's a-
if it's a letter or DDM or something.
It's a static let. I took it here.
Okay.
I did. That
Okay,
actually
it's not
worked
an.
really well.
No. Go back with the entry elbow.
Yeah, of course.
And what is it also? Look at it. Oh no, the order flow actually was. Oh,
EDM.
EDM.
this push, and this one, and this one. What is it?
EDM. Push.
There you go. So again, that's just trading then technically even the order flow and just refining the EDM even more, how we did it. Right
There you
here,
go.
is it?
Yeah.
We're technically
it's,
just trading the refined EDM, which is very juicy.
Yes. Make sure you get your Lamborghini drives from Reem. Send them the bill.
Definitely have to do that. I think Josh still owes me a Rolex. If you hear Josh, I'm still winning.
Hey, Josh. While we're here owing stuff, we would love that psychology call anytime.
Oh
Just
yeah,
like
we
that.
actually will do that. Depending on when we upload this one, we probably will not upload it this week, so it's already done. Well, okay.
This call
No,
is getting
very.
uploaded. This call is getting uploaded.
Yeah, I
Okay.
think you're doing pretty good so far. But stay in the 1 minute. And what do we have now, though?
Oh, we
What's
have
going
a
on here?
let,
So
I
we have
think.
this push that led to all. Whoops. No, sorry, not the
My
one.
bad. You told me to go back to 1 minute.
No, just go a little bit more to left. Yeah, so we have this push that led all the way to the inducement, right? So that's your 5 minute what?
5 minute breaker structure.
Yes. So what's the push that led to it?
1 second. Internal break. you can call this to push that. No, I'm sorry. This is to push that left to it, right?
Does this
right
have
here?
imbalances left also?
Okay, so we're taking yet another possible trade right here, which
Yeah,
will be
so if you
absolutely another
took
EDM.
this trade in here, then obviously you have to just be aware of exactly that. If you pull that break even and then it comes back and you're getting all mad that it's getting a break even, that's sort of how you not do it.
Yeah.
Makes sense because you understand, okay, that's the push. It literally just broke the structure of here and it had a fuckload of imbalances in here and it can come back all the way in here to mitigate that and you're getting a break even and you kick your dog, right? That's not the way you do it.
And you got roulette incoming as well for the people that don't use the equilibrium line. Just FYI, they do work. All right, there's your true MM1 trade timing. But again, just, everybody that didn't take the trade early, okay, possible let. I mean, Daryl, you can argue that's not let.
Yeah, but that's nothing you will take, and that's
But
nothing.
it's not in the, yeah.
It will hold also. Come on, Sean.
I'm not taking it. I just wanted the argument because we go back and forth on the lounge all the time. So, all right, we're not taking this trade. We're waiting.
Definitely not taking this trade because your stop loss would be all the way bound down.
Oh my god, it'd be insane. All right, let's see what happens. We're still on the M1. Oh, look at that.
So what is going on here now? So what is
you
this?
You have a liquidity graph.
Yeah, what is this?
What is what?
Like, what is it? This trade right here.
It's a mitigation.
Yeah, but what else?
It's also EDM.
It's another EDM. Because what is this push on the entry helper? Let's write this. And that's an EDM right here. So a lot of freaking entry opportunities. Like, oh my god.
Reem is selling me on these EDMs, guys. I'm telling you. don't even
you need to change your name now to EDM. Not let anymore.
I'm just gonna change my name to entry helper.
There you go.
Permission the first time, name incoming. Just when you're listening to this, you know why I'm gonna be calling you. So just FYI, don't hate me for it. Reem made me do it.
There
so Reem, stop here or stop here.
Like if you want to play it very safe, you put it obviously down there. If you're just trading a pure EDM, then you put it down there.
Okay, got it. Okay. So
but best case, you got in this one anyway. So I personally would not take this one again. Just if you did miss this one, then you take this one for sure.
Or if you're Chaf and you're triple entering, then
oh yeah,
Chaf,
you just
love
stack
you.
It up.
Love you, Chaf. Had to give you credit here. So yeah, we're in here 17 times, guys. It just keeps giving me fake breaker structures. I got to keep entering. So
there you go.
But it's crazy how you get to learn from the community. All right, can we go to the M5 or we stay here on the M1?
You can.
Okay, cool. Not that this hot seat isn't already hot enough. Actually, it's not, but
it's not. It's so easy, isn't it?
Yeah, it's easy. I think a lot of times, people are just afraid. I don't know why they're afraid.
Growth is out of the common. That's what you do right anyways. You're just rocking the study launch on a daily basis. You just missed your thing yesterday and the day before.
Getting there. We gotta. We'll talk about that after the recording is over. Okay. Would anybody consider this a static 5-minute let? You already know. You already know that would have been an entry right there. All right. So we're waiting till timing 11:30, which is now. We're actually technically in timing now. So this is our build up. I don't know
why 11:30.
And magic manipulation minutes 2.
That's not 11:30.
Oh, I'm sorry, 12:30. My bad.
There you go.
See, you had me go to Berlin time. I'm not accustomed to.
Oh yeah, 11:30 UK time. Yeah.
See. I'm sorry. I'm just drawing it out better so that way everybody can see it. I was just like.
So if you want to draw this channel, you have to draw a little bit different though. So where is this whole channel? What's the whole channel doing? Yeah, exactly. That's how you do it.
You draw. That's too far, right? Just right here.
Yeah. Again, you can use the mirroring method to make it even more accurate. So use the cleaner side, and always there's a lower side in this scenario, and then you just mirror it upwards. Yeah. There you go. See. Something like that. Whatever. It can be a little bit in between. Yeah. It's not about that.
There
It's
you
just that you show the shit. No, a little bit more. Like to the downside. Yeah,
Lower?
just to show like this.
Okay, got it. I see.
So you just
I
need
got
to visually see the channel and then obviously what you expect.
There's your
What do you
inducement
expect?
high. We expect the inducement low to go higher because we haven't
That's
hit
still
our
in the
target
channel
yet.
though, right? Because again, this channel goes a little bit higher, so that's still in.
Yeah. Yeah.
There you go.
So
See,
just
now it's
keep moving it.
perfect. Now it's perfect, isn't it?
Yeah, now you have 3 touches too. So
So obviously everyone's getting excited.
we are to the minute. Next, do you want to stay here or you want to go to the M1?
Just stay here. We just wait for the simplicity approach. The channel gets broken. So if we're still in the
Okay.
build-up phase, we don't get too excited about that.
I should have undone that. Let me just go do this quick trick. 325.
A very interesting technique. I never did it like that. Oh,
It doesn't work on trend lines, but yeah, it does work. It keeps your trend lines and stuff very clean. 300 typically on regular. We'll keep it. All right, we have a possible inducement, but nothing confirmed yet. But we're now outside of timing. It looks like. Yeah, we're outside of
it's to
timing.
the touch, is it?
Yeah. But would you take this?
No, it's still a
With
touch.
equal
Just
high?
look, this
Yeah.
trend line is still like in it, so it's still a touch. You need a clean
Yeah.
break, Sean. A clean break. If
No,
you
I'm
have
just
to
trying to
question
trade.
yourself, is this a break or no, then it's not a break.
You need it
Plus,
somewhere
again,
down
if
here.
it's the inducement, you need the structural inducement also.
Yeah.
Right, and this did nothing. So it did not break the channel and did not break the structure also. And that's 2
It's
things
just
you need.
random.
There
Just
you go.
random.
That looks a
Okay.
little bit better. But not yet though. What do you wait for? Now is it a question if they break the channel, yes or no?
Not a question at all.
Now you're not sitting
Like-
there and asking like, is that a break or no? And also what we have in here.
Equal highs relative because they're in the direction
Did
that
we
you're
induce
going.
Asia high yet?
No, not yet.
So
Are we
do we
taking
have
liquidity
potential
yet?
to the
Not
upside?
yet. Yes, we do. Just
There
a
you go.
random zone. Plus, you have daily open right above it.
Just to know, Sean,
equal
I'm
high.
actually delaying my pizza for you right now. And obviously the real as
mean-
well. And
I mean, you
obviously
you could definitely eat. I promise. There's nobody gonna stop you. So we can push pause for like 10 minutes.
no, it's completely fine. I will eat longer
Alright.
than that. Hungry. So what now? Obviously we have a fake breaker structure that's perfect. What is also this purpose of this push?
Just to go higher.
Yes, inducing
to
the whole
find a
channel to the
mitigation.
downside. So what's the only thing we wait for, Sean?
Wait for internal break
Or equal highs.
or equal highs. Okay.
Or whatever. Like whatever comes first. Always the breaker structure is nicer, but I'm kind of cheating because I remember this move because I took it.
Reem cheated.
Sorry.
Yeah,
No, not
there's
this.
your SMT.
No, not this one. Yeah, be careful. Be careful with this one, right?
Oh no, that's a SMT box. That's
Oh, okay,
my
okay.
box.
Oh, okay.
Yeah, yellow's SMT, blue is possible
Oh,
mitigation.
okay,
But yeah,
okay,
I didn't
okay.
take it. I didn't take it yet. No. Yeah,
Okay.
I just visually drawing it out for anybody that doesn't see the
Okay.
SMT. Okay, so do we go to the M1 for internal break? Or you
No,
wanna stay here
because
on the 5?
no, it was so clean on a 5. Just stay in it. Just stay in it and enjoy it. Just enjoy it.
He doesn't want us to go down to the 15 seconds, guys. Just letting you know.
No, you don't need to. You will see how clean it is.
All right, there's your equal highs right there.
No,
Uh,
don't mark that as equal highs, Sean. Come on.
they are right there. They're equal. I'm just kidding.
No.
They are.
No. Don't do that. There you go.
There's equal highs right there.
That's
But,
equal
okay.
highs. Okay, so what is this?
Another channel build up, and now
I
you
mean,
have a
this,
possible
yes. What is this?
SMT.
Uh-huh.
Dude.
So if that's a
Very
proper SMT after, again, smart money traders, they see obviously the breakout structure, so they think obviously this has to lead to a 1-to-100, is it? Has to be. So
I
obviously
mean,
smart
I
money
can't
trap.
take profits before 1-to-100 yet. I mean,
Exactly. It
only
has
way.
to lead to 1-to-100 because it's a smart money reaction, is it? Because you have a
And
fake
on-
breaker structure into a smart money trap, it has to get to 1-to-100. But what is the actual the thing they do? Inducing the channel, faking the small point trade, giving the reaction, and when it taps into where, John? When it taps into where, we can take the buy.
I would love to see it at this point, but it appears that part of this candle is already mitigated. So I don't know if it needs to come all the way there. Maybe this candle right here, but that's a random point. This would be the only structure point that I would be willing to take. This is not fully mitigated, but it's partially mitigated.
Okay.
No, it's.
I just see it as the last whatever demand candle type of thing. That's
okay. So
that's just to spoil you already. That's exactly my entry rules, like we're exactly there.
Dream is spoiling the cat because
Sorry.
his pizza's waiting and he's ready to eat. He's ready to eat.
And what's the target? Right, so you can either take the very easy target, but you see it's only 1 to 3, so that's not the way we do it, is it? So then you look to the left, and obviously we will figure it out of where a proper target is. And I will spoil this also. I did take the wrong target, so fuck me.
Is that where your target was, or was it at
this one was my target? Yeah, my target was just this one, yes. But obviously you can target this. And shout out to the wizard Cam. He also gave the proper target on his The Edge series, which he will release hopefully already or released already when we post this video. And if you just zoom out a little bit more, obviously that brings us to the cell we already took. This is obviously the proper target we should take out.
Oh, yeah.
But I was just a little bit too scared away. So happens even to me. I'm a noob.
That last 10 seconds is it's been removed from the vault.
I just added it out exactly.
Yeah. Just we didn't hear any of what he just said. All right, but it was a 7 pip stop for you as well.
No, I will show you why I did that though. So it kind of makes sense. It was something like that. I think I took it a little bit lower. It was like a 6, I think, something.
Yeah. Hey guys, Reem trades with 6 pip stops.
Oh, fucking noob. Freaking noob.
hey. You should have seen the study lounge, boys. By the way, he takes a Sean stop loss. Just let you know.
No, in that scenario,
I don't know if you saw that. I don't know if you saw that. But
what?
I didn't know if you saw that, but
what?
A couple of the charts on a couple of the guys put their stop loss as Sean's stop loss because it was more than 5 pips.
Wow. Okay. Now in this scenario, as you can see, it's perfectly fine. Like, I mean, you can refine it to the 1 if you want, but it was just too clean to take it. I'm not even sure. I can't remember, but I think it was just very messy on the 1. You can, if you take a look, because I can't actually remember.
Go to the 1 minute.
Yes, but I think it was something weird going on there. Oh yeah, that's why I didn't like it. Look, so you had like this weird one, and then like this all the way down there. So I just thought like, fuck it. I just take it based on the 5. It was just too clean anyways. I actually managed to take this one out by just a pip or like a tick. And I thought like just whatever. Yeah. When it came there, I thought like this is too risky to take like this anyways. And maybe it stays in the middle. So I just take the 5 minute, and that's what I ended up doing.
Would it be a fair loss if anybody did enter there?
Yeah, just a fair loss, but a stupid loss, because again, you just base it on like, what is it, like a 1 pip thing or like a 0.5 pip stop loss, and what's that? Again, you have to put your stop loss anyways, and that's why I just took it based on the 5. See what I mean?
Right.
Because that's like this typical way of, trade the decisional type of nonsense. Take an L here, and if it comes back here, take it again. But what if it literally stays in the middle as well? Just take it based on a freaking 5 minute, get in the trade. Oh, wow, your stop is a little bit bigger, but guess what? It's a super fucking solid trade. And guess what? If it comes lower as well, do you cry about it? That you have like, oh my God, I had 1 pip too much stop loss. What the hell? Just take the trade. It's fair enough.
Take the trade that comes in front of you.
Yeah. And then again, it was a let also on the 1, but I didn't take it based on that. But just for argument's sake, it was a juicy let entry on the 1 right here. But then again, same thing. Do you take it like this? Probably not.
Also, whoever's the editor, the last 15 seconds where he said that he didn't take it on the let, just completely remove the part that he says, I did not. Just let it go. Yeah.
Wait, say it again? I'm confused now. No, I did not take it on
Yeah. Where he said I did not, just edit the part that says not. Just put I did take it on the left.
Okay, so
just,
to leverage
just leave
your
that
name.
part in there.
Okay.
There you go. You see. Hey, you got to brand yourself here. Come on now.
That's how. There you go.
Could you not, Reem? Could you not take that off of like? I know there's not really a structured point off of the candles though. After a break on that 1 minute,
Yeah,
Like-
I mean,
with a
this
lag.
one, but it's not
Okay.
the cleanest. I mean, I see what you mean. If you would have like a clean push,
Right.
but we have
Okay,
like just
yeah.
a lot of candles, right? And then the question again, like, do you take candles or structure points? It's technically called break of structure for a reason, right? Or not like break of
Yeah.
candle. So that's not really like a structure point in there. Yeah, unfortunately, but yeah, I completely agree. It would be 5 million times nicer if you had like a nice structure point, gets break in it, and then comes back, gives us a let. Yeah, fucking hell, I would jump in straight head first in that, but didn't happen.
Okay, thank you.
Okay, so Sean, let me just tell you why I've chickened out a little bit on that one. If you just go on a 5 minute back.
Of course.
So timing, we're in a proper timing. We obviously reach the first target, which is Asia high. And then if you just fast forward a little bit, because now the timing obviously aligns perfectly fine.
More in trap time.
Yes, exactly. And then look what happened. It just
Target hit.
Yeah, and then just chuped in the time window, and I thought like, okay, it took liquidity. Obviously, my target was a little bit higher, but I thought like, fuck, that looks like a vector candle to me. And it kind of took liquidity, and I didn't just risk whatever getting a freaking pullback thing into my position. I just closed it. It is what it is. But obviously, the target obviously should be higher, at least technically yesterday's high. Again, which was this one, or the target cam obviously successed it. And obviously we had before.
Cam and beast mode.
But yeah,
so
that was
even
just,
if you would have taken that, even if you had taken that, it's a 1 to 11, and Cam's was 1 to 14. Now, I will ask you this: would you have, in hindsight? Now, this is just hindsight. Would you have partial like maybe 80 or 90%, and then held the rest of it?
Yes, I just was in a call also, so I thought like, oh, fuck it, I'm not the one to get confused and shit, so I just closed it.
Okay.
All right, and then obviously chuped completely out of it. That's when we were on a call. We obviously talked about it. It was quite funny, and that obviously led to almost an inducement of the point we looked for, and then obviously we took the cells together, so that was quite juicy.
Hey, do we get invited to these calls? I mean, not. The Zoom link is always available to be shared. I mean, we're not asking, but we're kind of asking.
Yeah, maybe at some point we will see. But yeah, then we obviously look for this juicy liquidity target to get taken. And obviously then shout out to my visit, Green Bunny Cam. He took it in the inducement also. Black belt shit right there. Makes me very happy, obviously. So we wrote that down together. Shout out to Mr. Boykers as well. I think he took it also. I hope you had the balls to hold it.
All right, so now we have to go to the 1 minute.
Then we just took it straight into inducement. So we're not going into how we took it there. But yeah, that's some little bit advanced stuff. Obviously, the cleaner entry is, I think, the one you took also. If you go on the 1 minute, you just wait for confirmations, break of structure.
Yep.
Obviously, and then you trade the mitigation. That's some obviously, yeah, that's stuff literally everyone should freaking take. Everyone should take it.
Everyone
you as well.
That's on this call. I was in this trade, but I waited for mitigation. I didn't.
Unacceptable. Unacceptable. Community star removed. No, that's
even better.
Huh?
Even better, guys. No more community star. I'm no longer.
No, fuck. Star. I take it back. We need you as a community star.
Take it. Okay. All right. Where would you have entered, Reem?
Look. It cannot be more clean. You marked it perfectly. So this is obviously the push that led to the break, right? So obviously this is your mitigation zone. That's right there. Boom. And let's see if it comes back.
I think that's where Grant got it.
And then obviously, because it's very late, you just aim for the next mitigation zone. That's what he did also, Sean. So that's obviously perfect stuff. And that's literally it.
Hold on. Where did you aim for?
Yeah, this one.
Oh, I'll show you where I aimed for. I didn't aim that low. I went lower.
Oh, but you were very late for the day, right?
Well, yeah. In my back testing, London close is proven to be like it's just gonna continue to seep all the way down because it's
Yeah,
already
I see.
grabbed
I
the
see.
20
Depending on if you're wrong, but I'm obviously gonna eat pizza. I'm very happy with TP. So should be Cam if you watch that Cam. So yeah, I mean that's obviously unfortunately I know what happened. So if you just fast forward that.
Okay, 1 second. So okay, let's see if it taps. I don't know if it taps. It takes
did.
forever to
That's
tap.
even nicer, right? Fakes the order flow, takes it out, inducement into it, mitigates perfectly, messes around a little bit, and then just
Missed my left by literally a little bit, very little. I know. Jokingly, it's there. All right, we don't need to watch this. You may just close this.
you can, and then technically target met.
Let me show. Target
and
met,
that's
yes.
all she wrote.
Yep. So yeah, I mean it's just gonna mess around here the rest of the day. It's gonna do what it's gonna do. This was your target, right?
No,
Right there.
No.
Oh, okay, right there. Okay, the last. Okay.
So obviously this mitigation candle, but obviously aim for the fill, and that's technically bad hit. Yeah.
There we go. 1 to 6. Look at that. I don't know how big your stop was, so it
No,
could have been
I
a
took
4-pip
it
stop.
from above you. I think Cam took it in here, and I took it in here.
Hold on. Okay. Are we done with this recording? Hold on. Push pause on the recording. I want to know this. Come on.
No, that's just some black belt stuff. Yeah.
Cam, can you push my application up? I don't know what I need to do, but
no, but obviously that's the trade you take. That's the trade you take,
course.
and obviously that's the solid trade, which obviously is the proper way to do it. But of course, if you figured out what's going on, again, Sean, go on a 5, just to make it very obvious of what's going on. Look.
I was gonna say go to 5 seconds. I really thought you were gonna
just double click.
Double click reset. What are we doing?
Or whatever, and double click this so you have a nice and juicy size chart. Okay, so a juicy size chart. So show me the build up, show me the inducement.
All right.
Leading into this.
This is a really hard build up for me to draw because it's so. It looks like a straight vector, like
that's exactly
on the
it.
higher time.
So look, do you have your channel? You have your vector candles into the inducement of the high we had, and then of course you see in a 5 minute that's like perfect also to take in here, but obviously this one took it out the inducement right there, or even higher, a little bit like this. But also if you understand the cycle, that's your build up, that's your inducement, vector candles, just taking out the target, and then obviously take it from there.
Yeah.
Easy stuff.
How big was your stop?
You can check. My entry was at 0.22, close to it, so I can remember properly.
0.22?
Yeah, or whatever, like 60.
106.022.
Yes. And then my stop obviously was right above the high. No, stop is above the high.
Yeah, I'm moving it. I'm just still trying to figure out what the high was. Oh, jeebus. 54. So he has a 3.4 pip stop, 3.2 pip stop. That's insane. 3.2. There it is right there. And then you have this. Do you add the spread to yours? I don't know if you do or not.
Of course you have to.
So 3 pipettes.
But it's EU.
Yeah, FTMO 3 pipettes. Sorry. So it goes between 2 and 3 pipettes. So, and then there's your entry, guys. 3.5 pips. Carrying there to 1 to 9.
Closing the day.
Reem now has pizza money for all of us. Just send them your bill. Make sure get the Venmo and the Cash App.
There you go.
Jeez.
So yeah, that's technically a simplicity approach on a nutshell right there. So yeah, hope you guys enjoyed it. The rule, get well very soon. We need you around. Even if this voice suits you very well. Sean, well done as always. You want to see some magic tomorrow in the study launch?
We will be there. 1 to 8, 1 to 8. Just for anybody that's keeping count, 1 to 8, 1 to 10. That's 26 plus another 14 on Cam's entry, 8 on Reem's entry. So that's 42 and 53. So not as quite as good as Duo, but you know, Duo, as always, all strive to be
Shout
great
out
as
to
you.
the legend, yeah, for sure.
There you go, bro.
Yeah.
Hey, you know,
So-
his name was gonna get dropped. Come on now, you can't. We don't learn to trade without that man. That guy is Reem. All props to you, but you've created a legend in himself, man. This guy's amazing.
Oh yeah, we have a lot of legends. So it's now your turn. Sean, the real your turn, right? So let all the works you study, Lord, pay off, obviously, right? And then of course,
Absolutely,
let me
man.
just end this recording. It was a pleasure
Absolutely.
Thank you, Reem.
and well done. There we go. Whatever, just a mini session because we probably picked the worst time ever possible. But anyways, just have some fun in the progress. So Raheel, it is you then, the chosen one. You lucky day. Can
Hello,
have
Reem.
some. How are you doing, man?
Good, thanks. How you doing?
Yeah, doing fine also. So Michael
Right.
Jones, maybe you want to jump in as well. We have Jake in the house. So yeah, whatever. Just a quick, spontaneous session. Why the hell not? Make at least something out of the mock condition right now. So yeah, let's just actually do it. Let's just make a quick and easy cycle variation, mini cycle session. Really, you want to go?
Why not?
Sure,
Let's
go
try.
ahead. Sure, let's do it actually yesterday and the day before. And let's see how we can make a little bit sense out of that one because it actually was really, really nice.
Yes.
There you go. Awesome. So if you want to go, let's say actually make 2 days, whatever, have some fun.
Yes.
So you can do one, let's make not today and one yesterday, make the day before that, yeah. Yeah, something like this. Okay. Yeah, exactly. Let's see how we doing. What because obviously in hindsight we already could see what happened, like a little bit cheating a little bit in terms of we saw that we didn't had the nicest cycles in terms of daily cycles, but we had like really clean cycles for mini cycles we covered, for example, in the Sunday slaughter last week, right? So let's see, my man, how good you still memorize everything in terms of the mini cycles, right? Because that already in here is kind of tricky. Why is that right? Okay, so that's already a little bit tricky in terms of the overall cycle variation, but let's see what you can get out of it. So let's walk us through. Come on.
Okay. All right. Well, first I would say if I zoom out, we had a almost a build up. This whole area is a build up. Let's go to 60.
So already notifying that, where's your next liquidity zone? If you go back to the 5, just using the lower time frame, just zooming out. Or you can use it like this also, yeah.
So I would say that was a big liquidity zone that we've taken. So we had a medium inducement
Very good.
in this area. So therefore we would trade away from the medium inducement. Okay. Let's just get the timings back on. And therefore.
So can you mock up the inducement again on like so we see which one it was, because it looked like it's stage 1, right?
15.
There you go. Exactly. So we see that's obviously the Asia inducements are not the nicest ones for our overall picture, right? So not the strongest one, but definitely, as you said, it's definitely median inducement in terms of the bigger picture, but not the nicest in terms of the timing aspect, right?
Yep.
So we just have to know that.
Okay. So I would say the Asia, that was definitely the inducement of, or the final inducement of all this liquidity that has been taken.
I agree. Until unless what? Like, what's your next liquidity zone if you just look at this overall, like, whoopa, cycle play, right? Or uptrending, final inducement up till. So where's your next technical potential pullback zone you should at least target?
I would say bare minimum, I would say this area, we've got equal lows, but we've got also equal lows in this area.
And what's for structure purposes like the nicest place you could induce if you just look at that? Like, let's say the induced structure here, is that a nice structure inducement? Or would it be rather this one or like even this one? Or like maybe even this one or maybe this one? Like, what would be very nice in terms of structure plays? What they would induce to low side?
Ideally, well, from this leg created the inducement from this point, but major, I would say, this area would be the first liquidity zone to be taken because this was also the previous week low.
Exactly. Nicholas said it, hinted it already. Very good, Nicholas. Also, so definitely if you have like a medium inducement to the high side, we should, of course, aim at least for the next liquidity target. And you said it both perfectly correct. That would be the weekly lows, and that would be a reasonable target we could already have in mind, right? That makes sense in terms of liquidity. It makes sense perfectly in the cycle, and also would induce this overall channel with like a pullback zone, right? And obviously induces people to the short side, and then we could be ready having a pullback area, right? Or whatever continuation. We will obviously see what the daily cycles bring from there on, right? But that at least makes very much sense in terms of the overall picture. You agree?
Yes, agreed.
Oh yeah, Nicholas, there you go. Congratulations. Yeah. Okay, so with that in mind, obviously we already can see, okay, we had technically this inducement and technically even came back on this day, which we missed, obviously, right? But obviously it came back, as you can see in hindsight. Even if you could have caught it, that would ended up break even. So now the next day aligns. So we obviously can see what we could make out of it. But we already, what else can we see if you look at this one, for example, Ryan? What else could you see?
Let's go to this.
Right, so we had the extreme. We had like technically the mitigation of the extreme. It came back once, back, even second one, induces the highs one more time, now mitigates that technically, and then just out of there. So do we necessarily need to become a fifth time higher? Should we need to expect that or no?
No, but it could happen, but we had a major inducement.
No, yeah, medium one, I would say, but definitely yes.
So medium, yeah.
And Sakbo, you look at the waiting room, right? Because like I think you not let anyone in so far.
Oh, I have.
Oh, okay. Because every time I check the waiting room, there's at least someone in there. So.
Oh no, I'm looking.
Okay. So yeah, but that in mind, like, do we expect that they need to come back a seventh time to induce whatever, which seems to be like equal highs or whatever? Or like, are we technically still done and trading away from the medium induce when it just messes around a little bit, induces higher and mitigates, and then is out of there? Gives you technically
the cycle is done.
I agree, right? So we don't need to. That's again where you don't get confused of like, oh my god, equal highs once again, and this and this and this. No, like again, induced high one more time. This technically is the push that led to the high, right? Now you have this valid, whatever people want to call it, the like changing market cycles, whatever you want to call it, whatever, just a break of structure away from the inducement. We had that perfectly fine, right? So what can we now expect from the next cycle play in here? Now we have Asia. So what is this, for example? What do they do here?
It's a mini build-up.
Exactly, mini build-up. So what do we expect of the mini build-up?
Maybe induce this mini build-up to go short.
Okay, so let's see actually. First of all, we need to mock up the build-up for this day now. So we don't care about the other days at this point. We just see the mini build-up, right? There you go. That's the mini build-up.
And there's also equal lows.
Depending on how you see it, obviously you should definitely count that wick in. So technically this is still your Asia low, right? So I would not consider this as equal lows completely, but I see your point if you just want to mock it up for clarification. But yeah, it's not technically equal lows because the low is Asia low, right?
Okay.
Would be a different scenario if this wick would be the beginning of Asia and you had a wick like in this, but it's like literally mid Asia, so you cannot just ignore it.
Okay.
Mm-hmm.
Cool.
So yeah, I would not mock the build up like this. I would actually mock it like this, right? So the channel, so obviously from here to here, right? So you have this little channel they already building up, exactly something like this. You see why? So nicer would even be from this point to this, because then you have the little very perfect channel thing. And then obviously that's what the retailers love. They see that channel and they obviously wait for breakout of the channel, and then they obviously take the side where it breaks out to, right?
Okay. Yep.
So where are we in the cycle though for our understanding? Like what's the next thing we should expect?
Inducement.
To which side?
To the upside, to trade down.
Very, very good. 100 points. So let's see what confirmations we need though to take something in terms of trades. Okay. So let's see. What's your next timing you would be interested in?
Frankfurt open.
So can you mark it up with a line? What time zone are you in? UTC +1?
Yeah. UK.
So what is it for you? You okay? For it's 7 for you. Okay.
Yes.
Okay. That's your next potential timing window you would be interested.
Yes.
Cool, man. You did very good last time, so you definitely had 100 points already.
Let's just MM1. MM2. Okay. All right.
Very good. So let's see if we can make some sense out of it now, right? Okay, so let's continue a little bit, but just okay. No, stop. Walk me through it. Come on.
Okay. All right. Right. So we've got the build-up, waiting for the inducement. Expecting inducement potentially of this area to be induced to go lower.
Yeah, that's the bigger cycle plate. Is the build-up technically being induced right now? Yes or no? So did they broke the channel or no? Or did they break the channel?
No.
No, why not?
So
is this still in the channel?
Oh, okay. This part of the channel has been, they broke out of the channel to go higher.
Exactly. So is the build-up technically being broken? Yes or no?
Yes.
Exactly. So that's very important to understand your first step. Like when is the build-up not a build-up anymore, and when are you in the inducement stage, right? So you had your channel build-up, right? But now this again doesn't fit in the build-up stage again. You had your channel to the downside like this, right? And now they're giving retailers obviously the breakout, whatever retest of this stuff, and wants to continue higher, right? So obviously retailers see this as confirmation. For now, oh, crazy, we have so many imbalances in here and craziness, and oh my God, channel downside, breaks out, whatever, flag shit, whatever, you know, that stuff, retailer stuff, we don't care about that. But what's the real intention, right? We had Asia lows, build up, inducement high, as you said perfectly, with what intention to do?
To induce or
to induce high to go
high,
what?
Go lower.
Exactly. Would that make sense in terms
so
of something?
The bias.
Exactly. So if obviously that would be the case they're trying to do here, that would make absolutely perfect sense. Very good, Mike, also. Right? So let's see what they're doing additional to that. So you see the inducement high, right? So what's the next timing window? Frankfurt, do we have a setup we could trade into the inducement?
Potentially.
What is it called? We gave it a very weird name.
A smart money trap?
No, we gave the setup you would to trade into Frankfurt into the inducement. We gave it a very funny name.
Frank and Frank Curious.
Exactly, the stuff nobody ever could talk about. Right? Except Nicholas, also we have Asia midline for liquidity purposes, right? So technically, again, if the mitigation comes up in this area in Frankfurt, that would be our ideal scenario, right? So that would be technically the perfect fast to trades, but we have to monitor the cycle and see what they show us, right? So what would be confirmations to take the downside after the buildup is induced? What, for example, maybe 2? What confirmation would we have to take a short trade?
Maybe a well, induce and
Nicholas.
then maybe a let.
Maybe we have a let, maybe we have timing, maybe we have a break of structure to the downside,
Right.
or something on the lower time frames anyways, right? So something like this could all be confirmations if the cycle could be ready, right?
Yes.
So with that in mind, where would be the next break of structure to the low side if this is the inducement stage right here?
Ideally, break of structure or Asia low.
No. So let's say you wanted to trade the false time frame 2 is trade in Frankfurt. There has to be a break of structure of this to actually consider a short trade. See what I mean?
We want to break this area
Mhm.
or this area.
Exactly. So technically we have like already a minor break of structure, yes or no?
Yes.
Okay, could be fake, obviously we don't know, so that's why we need to wait for more confirmations, right?
Yes.
Perfect.
Mhm.
Okay, so let's see what's going on.
Okay. So technically, we've got a break of structure, or it could be a fake break of structure at this point.
Mm-hmm. So for argument's sake, just leave it under 5 minutes. So we
Okay.
obviously
Right.
can make a little bit more place here, right? Okay, so do we have a break of structure here?
Yes.
Okay, mini one, right? But
Mini.
not really the better one is where?
This area.
Exactly. So can you mark this one up also? Very good. Okay, so what can you do?
Wait at the moment, because it's not timing yet. It's still a few minutes.
Very good. So let's wait then and see what they do. If they show us a play, okay, what's going on here?
So now we have relative equal lows.
Not really. I mean, not really equal lows, but what is it more like? If you marked it up already?
Break of structure.
Exactly. So where's technically your next mitigation zone? Just looking at the 5 minute. No. After break of structure, right? If that's the break of structure, right? This push obviously led to the break of structure. So what ideally you can trade it from? Yeah. Very good. Exactly. Something like this, right? Obviously not like it should not end here, but where should it end?
There.
Exactly. Right, and that's just monitoring the 5 minute and how it makes sense. So we had obviously a valid build-up. We had a break off the build-up. Obviously, the ideal sum would be something higher, but we unfortunately didn't get that. Now you get a break of structure downside. What's our timing window? Frankfurt, perfect, right, to the minute. Do we have imbalance? Yes, we have.
Yes.
Could we have a potential mitigation to that?
Yes.
Maybe. Do we have a valid target, which would be Asia low? Do we have that also?
Yep. Yes, we do.
Perfect. So that's technically your first
trade.
First trade, exactly.
And this cycle could be completed.
Exactly. So yeah, Jake, I know we chose the most random time ever, but yeah, definitely. I think it's recorded, so we put that on to Vault. So no worried about that. Okay, so technically, could we monitor that? Would it make sense? Would we be surprised if we get an entry here or no?
No. Yeah.
Okay, perfect. Let's see.
Yeah.
Interesting. So should we be freaked out now and not take the trade because it's going so high?
No.
Exactly. So that's something we definitely can take, is it?
Yes, absolutely.
Should we be confused that a random let appears to the downside and whatever?
No.
Exactly. So that's, again, when we look at the entry helper?
When it's in our zone.
And we have a valid cycle completion, which we now technically have now, right? So if we wanted to look at the entry helper, we can only look at for, obviously, M1 after the cycle is completed, and then we use it afterwards, right? Not right randomly now. It doesn't even make sense, right?
Yes.
So there's your first sell to the downside, obviously. And where should you target for?
Asia low.
Exactly. What could happen if you don't target the right way? Because obviously you marked it up also. Where's your next inducement zone of the build-up?
That's the imbalance. That's the
So
extreme.
at this point, you have to again switch your bias. Like first, in this stage, it would work for mitigation because you never had an inducement. Let's assume and let's think a few steps ahead. If you get an inducement low, would that still be in your mitigation area, or would it be more like a liquidity zone where you want to take out, grab liquidity, and then take lower?
This will definitely be a liquidity zone, this area.
Mm-hmm.
It could.
Okay, so maybe let's walk it a step by step first. Okay. So first we are on this trade obviously right here. So are you good with taking this sell, yes or no? Do we have a lot of confirmations, or do we make shit up here?
Yes.
Okay.
Let's.
So just a lazy 1, 2, 3.5. It is what it is, right?
Yeah. But obviously
not
we
bad
can still
for Frankfurt.
go down to the 1 minute as well.
Technically, we could do that. Well, let's not do that for this argument's sake, okay?
Yeah.
Okay, so let's see what's going on.
Okay.
Okay. Not bad.
Okay.
So should we close this trade or should we hold it on forever? Because we're trading away from a medium inducement, but it's Frankfurt. Should we just randomly hold this trade because we aim for the fences? So this is a very good target to close.
It's a good target or minimum target.
Exactly. Yeah, there you go. All right. So what's the
also
next
come
logical thing now? So we have now our time window from what?
London. London
Exactly.
is coming up.
So we had our mini build up before. We induced the mini build up. Now we induced high, obviously to go lower to complete what?
The cycle.
Exactly, at least until the target. So if that's the inducement low, what's your next target you should aim for?
Um,
No, don't zoom out that much. Come see it just on the cycle. We had obviously this being your last inducement, which mitigated the medium inducement, right? So do we need to necessarily induce the whole thing a fifth time again?
No.
Exactly. So where's your next liquidity zone on just this picture? To the high side, obviously. Now we induced low. Where's your next inducement zone?
This area.
Exactly. Nicola said also. But the question now is, should you look for mitigation or should you look for smart money trap into inducement and then go lower and complete something to the left as you're trading away from a medium inducement?
Okay. This area will be the smart money trap because we've got equal lows or equal highs. So this is a smart money trap.
Okay. 100%. The only question is this one? Now, as we had an inducement low, should we look for inducement low into an liquidity grab or into a mitigation?
It could be a smart money trap.
Exactly. So we just have to be very aware of that. So the best case scenario, you just don't run a limit on it. If you're not sure, just don't run a limit on it and look for lower time frames instead for confirmations after. Okay, because if you're not sure, then never run a freaking limit. You should never guess and hope it will hold. So if you're not entirely sure, but you have an inducement low, but you know, okay, this is a liquidity area, is it a mitigation or is it a smart money trap? Just wait for some lower time frame confirmation when it comes back here and then decide from there on, okay? But let's just see first if we even made shit up or not.
Okay.
Why does Asia Midland turn into smart money trap? Very good question. Because we had the mini cycle build up, inducement high to complete the cycle to the bigger picture, right? So now we induced Asia Midland, Asia low to the low side. Now this technically mini cycle over here, again, what do they do? Building up, building up, building up, Asia low being induced in our time window. So we're looking, obviously our perfect cycle is of course, if you take Asia range, blah, 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 something like this. Of course, our ideal cycle is taking out Asia high and then go lower. That's our starter kit cycle. But as we looked at the higher time frames, this mitigated something to the left, which was the medium inducement of Asia. and this mitigated. There's technically a break of structure now. So this becomes your next logical inducement area if they want to go lower. Again, they usually don't mitigate just then. Again, give people the chances to get into the trade and then continue lower. They want to grab, as always, liquidity high and then go lower.
Okay.
Right? So the external inducement, Nicholas, would be the inducement we had to the left on the higher time frames. This is all inside internal inducement, and technically this would be an internal like intraday external inducement. That's where shit get a little bit confusing because it's induced technically the Asia low, right? So this is external, but if it's inside here, this is technically an internal inducement because it not induced something out of Asia range, if that makes sense, right? So be very careful about those different variations, right? So if it's an internal structure, you induce to the inside, and if it's outside, then obviously it's external, right? So we technically want to see it like this, Nicholas. Also, we had a cycle completion external. Now we're looking for a next liquidity area to be grabbed until they can go lower. So again, if you're not sure if it should be mitigation or smart money trap, not a problem also. Just wait if they come in here in the first place, and then wait for lower time frame confirmations, timing, you know, all that stuff, and then decide from there on. Okay?
Okay. Yep.
Okay. So another question is, did we induce anything to the left other than Asia range yet? So you have to zoom out to find out. So did we induce anything to the left?
Yes.
Would you say so? I mean, this maybe, yes, and then it
Maybe.
comes in here, right?
Yeah.
So is that a mini cycle or is it a valid cycle? So do we have a mini cycle completed into a smart money trap, into inducement, into mitigation now? Or is this a valid completed cycle that induced something crazy to the left and now the whole cycle can return and makes new high highs?
No.
See the difference?
Yeah.
So does this make sense in terms of a mini cycle play to induce the structure points into extreme mitigation? This technically was a mini inducement also. So would that at least make sense for mitigation for a mini cycle? Yes or no?
Yes.
Exactly. So with that in mind, obviously we can do what or can expect what?
The next point to induce to go
Exactly.
higher.
So you see, everything literally here is making sense. Like you cannot even make anything up here if you just follow the rules, right? So again, we had our bigger cycle. Now we're in a perfect time window for London. What they did it before, induce the mini cycle, inducement high side, right? Then obviously go low, complete another mini cycle to the left. Also makes perfect sense. Induce structure goes into another mitigation zone, which also was an inducement of Asia low. Perfect. Do we expect obviously new higher highs trading into medium inducement? Yes or no?
No.
Exactly. Where's your next liquidity area? Asia midline, or obviously the structure point. In this scenario, it's both, even nicer. So do we necessarily need mitigation here?
No.
Would it be nicer?
Yes.
Exactly. But again, we're not making shit up. We just take what's there. But does this now confirm the cycle to the downside? Is technically the mini cycle is completed and we can aim for next liquidity zone? Yes or no?
Yes.
Perfect. Do we get surprised?
No.
Awesome. So let's see what we can make out of it. All right. So taps in. So maybe whatever, you just mark something up that technically there was something to the left for mitigation. So you just understand, okay, it could make sense that it directs from here. Again, if you really wanted to trade it, you technically could, but whatever, like not the biggest, nicest play, but nice cycle, mini cycle play, but obviously trading against the medium inducement, right?
Okay.
Okay, so we understand that mini cycle is completed. So technically we can look for buy scenarios, right?
Boys. Yes.
Okay, so where's your next break of structure point? If you take it from the 5-minute perspective, maybe you can zoom a little bit. My eyes are too bad for that. There you go. So we either had, I help a little bit with that one because it's tricky. So technically the next break of structure would be that, but that's kind of weird. And then we had like this little pullback zone, right? Which we technically could get also. Make sense?
Yes. Because if it break this structure, then it might just mitigate or induce this area to go lower?
Technically, but again, we should be careful about mitigation here, but I see what you mean. Right?
Okay, yeah, because it could also be a smart money trap.
Exactly. But now we're obviously having the cycle completed to the downside. We have backdoor candles. Obviously, see these huge candles to the downside, right? Perfect. Into mitigation zone, timing window is absolutely perfect. So now we're just looking for confirmations on the 5 for maybe taking this cycle play to the upside until at least these areas, right?
Yes.
Okay, so let's see what we have next. Okay, got even lower, we don't care. Okay, messes around, who cares? Awesome. Okay, what do we see or what do we have?
Okay. Well, it's now timing is London Open. Late to the opposite side.
Yeah, but do we care about that at all?
No.
Oh, no, exactly. Not at all, right? Again, when is the only time we look at the entry helper?
When we are in the zone for potential.
Exactly. So if anything, you're looking for lets to the upside, right? Because you're trading away from this cycle completion. And obviously only would be interested in the right? You see the next imbalance zone, obviously, right? So obviously if they give you a break of structure, whatever, baby break of structure, again, that's the only thing we have technically in the 5-minute time frame, right? So where's your next imbalance zone? Where's your next mitigation zone? Where's your next demand zone? Yeah, or maybe again, what's the imbalance fill?
Imbalance fill will be
something like this, yeah. So depending on how low you want to mark the zone, yeah, but you can make it like this, right?
Yep.
Makes sense?
It's already been mitigated. Or there's no imbalance.
Yeah, so but the only imbalance we had technically is from here to here, right? Obviously, the candle is still open.
Yes.
Right? Okay, so let's see. If you get a nice break of structure. Okay, so depending on how this thing turned out in a 1 minute, maybe we got a break of structure first and it came back and obviously mitigated, or if it obviously came back first and mitigated and whatever, go high, we don't know. We need to find out a lower time frames, but just for stay in the 5 minute, does it make sense what they did here?
Yes, absolutely.
Right. So they filled technically perfectly the imbalance they just created from a zone which made absolute perfect sense. Do we have potential trade opportunity? Yes.
Yes.
Is it likely you caught it? Probably not. Right?
Yeah.
But at least we can understand what the hell is going on here, right?
Yes.
Okay, so should we get excited about this cells in here?
No.
Exactly, because why?
We have liquidity and potential smart money trap.
Yes, so if anything, we should be, this is 100% like in the inducement zone, right? If anything, you could think about again something in here, but then again, you're not sure if this is the cycle to the downside, grabs liquidity low, high to go lower. So the best scenario in this case is anyways to just wait what they do, wait for lower time frame confirmation in this scenario, and then decide if you want to take the mitigation or wait for the inducement and then lower, right?
Yes.
Perfect. So let's see what they did. So faking the smart money trap, giving a fake reaction as always, right?
Yes.
Okay. Perfect. Smack the smart money trap. Okay. There you go. Makes people excited to take the cells, obviously. Yeah, now they're getting really excited because whatever they think, inducement, love, whatever, this and this. And now they probably take this cell, right? So after whatever fake break of structure, depending on how you see it. Should we get too excited about that now, though?
No, not yet.
So again, if you're not sure, just wait.
Wait. And
boom.
We at inducement.
Just waiting in this scenario would just, first of all, saved you a very annoying L and gives you more clarity now because you literally now, with this wick, you got one more confirmation that this cycle maybe could be done.
Completely.
Right? Because again, you have inducement low into mini mitigation, into structure breaks also, right? Then technically you had your smart money trap. Now technically this becomes the for fuck's sake. Now you grab the liquidity. Obviously the next nice target would be some mitigation zones, but that's optional. So now we can monitor the lower time frames to see if we get something nice for entry opportunities, right? And only then, you see?
Yes. But also, as we could also look at the 50% zone of the imbalance.
You could, but that's, in my opinion, that's more like really wanting to find something. And we rather don't do that. We just rather wait for confirmations, right? But again, if you want to invest to 50%, something like whatever, like here, but again, like that's not really a great confirmation. Oh, look at the accuracy of my beautiful line there. But anyways, so I would not recommend you do that. Again, just monitor lower time frame and use timing for indication. You technically have your inducement high, right? Obviously from the structure point, nice would be into the POI. If it doesn't do that, not a problem. That's why we have the lower time frames, entry helper, timing, and everything like that, right? So let's just actually use the first 1 minutes.
Right.
And see what we got. So what's the latest pullback zone we have in this scenario? Like if you just look at this push, what's the highest pullback zone?
This area.
Is it the highest pullback zone?
Oh, there.
Exactly. So if you look from extreme mitigation, where's your break of structure?
We will wait for this area.
Exactly, because this is obviously a little bit too low, right? And if that, then you literally can take this one instead. That would be better. Make sense?
Yes.
Okay. So if anything, don't pick this one. Either pick this one or this one, right? But don't pick the one in the middle. That's the worst thing you could do.
Yeah.
Right. So take the highest one for extreme mitigation or whatever. If it goes higher, then it becomes this one. You see what it works? Or if it goes higher, then it becomes this one, blah, blah, blah. So that's how you not making shit up, but actually just see what's there. Okay, but let's actually see. So is that cycle technically, has it induced something? Yes or no?
Yes.
So can you extend the line so you see it?
Yeah.
There you go. Right. So in mine now, cycle completion, check. Obviously, now if you want to look for an extreme mitigation, you either wait all the way until it goes back to the extreme mitigation up here, which technically could be happening. You never know.
Yes.
Or you wait for lower time frame confirmations, which
Makes sense.
confirms you some sort of directional change. And then obviously you use timing as you mocked it up already. Magic manipulation minutes 1 is right around the corner. We have our entry help also, which all could make confirmations, right?
Yes.
So what do we do?
Wait at the moment.
Very good. So it goes higher. Do we care about that?
No.
Exactly.
Right.
Mm-hmm. Interesting. So what is going on here?
We've got now internal break of structure.
Semi, I would say, yeah. Not
Yep.
really, but at least wicked it. Right. So maybe even more equal lows.
Okay. Yep.
But yeah, so technically, again, if let's say you consider this as a, so where would be a potential zone?
There is an imbalance.
Yeah. So can we mark it up for understanding purposes? Yeah, something like maybe fill the imbalance.
Yep.
But right, but where's the imbalance though if you mark it up like this?
Imbalance will be there.
I mean, the high is fine if you take it. Again, there's no need of adjusting the high, but where's the imbalance for the low side? When is it filled technically?
There.
Not really. Like, where's the imbalance fill? You just take, again, you had imbalance from here to here. So when is it filled?
This candle.
No, but it's here, right?
Oh, okay. Yeah. Yeah.
Right, so you can take this zone. Again, only if you saw this as a break of structure. If not, then not. Could we have a good one? No, timing sucked on this one, but we use the random marking conditions right now, the bank holidays. Oh, why not? Just have some fun still in trading sessions. Okay, there you go. Right. So did it tap yet? No.
No.
Okay, so let's wait, as always, right?
Yeah.
So can we have an entry opportunity, an entry help opportunity?
There's no confirmation on the entry helper.
Exactly. So again, the only thing that's a very risky entry if you take it, because there's literally not really any confirmations until other inducement high, semi break of structure, mitigation, timing, right? But there's no entry helper, no clean break of structures yet.
No.
Okay, but technically valid, risky, and not the cleanest.
Yeah, great.
So I'm not sure if it tapped to the minute or no. Okay, at least tap now. Magic
Yes.
manipulation minutes. What a surprise.
Nice. Yeah.
Right, what a surprise.
Uh,
1 minute late, sorry. Everyone gets a refund. There you go. Thanks, Cam, for reminding me in that one. Doesn't work. Complete scam. Right? Perfect. But what's the nicest clean break of structure, obviously, if it breaks clean, right? Because now technically, yeah, obviously this one, but even
Yes.
this one is not the nicest. It's
one.
more like the equal lows, right?
Yeah, if we have a clear break structure of this liquidity.
Exactly. So, but this one, technically valid, not the nicest one, not the cleanest one, but definitely only to the minute and off the valid cycle play, right?
Yes.
Okay, so let's see what's going on here.
Okay.
And if you get some other opportunities in forms of entry helper, better confirmation. So let's see. Okay, what do we have now?
Entry helper has also turned below the equilibrium line as well.
Exactly, and nicer break of structures, right? So now technically you could say, yeah, now it makes more sense.
Yes.
Okay, so what's going on here on the entry helper? Not the nicest,
No.
but is it technically a let?
Yes.
Yeah, not the nicest, 100% for sure, but at least that locks it in. So if you miss the extreme one, that technically would be your second opportunity to enter this trade. Again, definitely not the nicest let by sure. Oh,
Right.
oh, for sure. But technically, yeah, that would be whatever, depending on how you take the stop loss. Technically, like this, right? No. This one you have to leave upside. This one, yeah, this one has to be higher. Yeah, exactly. Just talking about this entry technically here. If you take it like this, obviously it would be very risky to put your stop above here. That makes sense.
Okay.
So if you take this entry, you still have to put your stop loss above here. Get what I mean?
Yeah.
So we had this. No. So we had obviously this entry. Like leave that for now.
Yeah.
So the let entry obviously after this break of structure now, right?
Yeah.
The valid one. This technically left the imbalance. Again, you take it. Here's your entry, but your stop loss again. Technically, you can make it running fucking insanely risky. Then, then you're probably even getting an L here based on spread and everything, right? But again, logically, you should put your stop above here. If you take it like here, right?
Okay. Yeah.
Just for no. Here's your entry, yeah. Exactly, but your stop logically should go above here. Make sense?
Yes.
Okay. And now again, where can we aim for technically? What's your next zone on the 5 minute looking to the left? All right, so we had obviously this inducement from if we induce this one as a first liquidity grab, then technically, what's your next smart money trap? What's your next induce mitigation?
We still have equal lows. So obviously it will be a smart money trap.
Yep. Right. So technically, what's the next inducement zone we should definitely aim for at least?
This zone at least.
Okay, you could aim for this one or obviously this one, and then depending on how you see the cycle, you could see this as smart money trap, and then this is a valid mitigation. But then again, you have the equal low, so I completely agree with that. So we just have to be very careful in these areas, and then obviously wait for this ones, right?
Next one, yeah.
Right. Okay. Perfect. So just aim at least for areas like this. Or if you want to partial in these areas, 100% can, then you have to wait for the cycle, because technically can be smart money trap, can be valid mitigation, and then technically you aim for the lowest ones, but you have to wait for the cycle and the day until what's happening there, right?
Okay. Yep.
Okay, perfect. Then let's go back. To see what you make out of those good
Yeah.
trades. Okay. So let's see.
Okay, must I go back to the 1 minute?
No, just the 5. Okay. Or maybe whatever, you can look for EDM trades or something like that if you really wanted to. That's up to you.
Yeah.
Okay, so let's look for EDMs then. You tell me when we have something juicy. So here's your next valid breakup structure, the cleaner one actually in the first place. Exactly.
Yes. Yeah, well.
So mark it up. Okay, let's go. Okay, that's really nice. Why is it nice? Hopefully gives fake breakup structure to the high side.
Yep.
Obviously get everyone excited about the crazy support.
Yeah, going.
Not yet though. Okay, taps one more time. There you go. There's your fake breakup structure from the support coming or whatever from the continuation traders, right? They see obviously this as a new higher high. They want to trade the order flow back high. Now they're getting even more confirmations, internal breakup structures, whatever. They're taking those buys for the high side, right? So guess what will not going to happen? Buys to the high side, right? So guess what? Or maybe you're making shit up. So let's see. Okay, what should we see instead? Where's your next imbalance zone? Emrit, have a good one. I know timing sucked on that one. It's recorded. So enjoy, man. Have a good weekend and holiday. Don't miss Chow's call, though. Don't miss Chow's call on Sunday if you can. Will be a good one. There you go. Sounds good. See you then. Have a good one. Okay, so do we have an imbalance fill? No. Even nicer, right? So what do we look for? EDMs, obviously, right? We have an EDM? No.
No, and we still will equal lows.
So now all the smart money traders getting screwed because obviously they had to break a structure, a new higher high, whatever, continuation order flow, internal break of structure, smart money trap, everything, and now they're getting all screwed. They all cry. We obviously be very happy about that, and we look for what? You marked it up already. Exactly.
Yes, imbalance.
And if it's an EDM, obviously even nicer.
Yes.
So let's see. Okay, what a surprise.
And it's
only fills the imbalance. It's a kind of an EDM.
Yeah, and it's also kind of late on the static line as well.
Oh, exactly. Did not even see that with my old eyes. So can we take that?
Yes.
There you go. Perfect. Where should we aim for? Again, at least low lows, right?
Yeah, same as.
And always be a little bit careful with the lower, because again, you never know what they do. So we should take more casual targets with the lower orders. So 1 to 7, something like, yeah, maybe a little bit lower, because again, you at least want to be low yesterday's low, something like that, which was this one, if I remember. Right, at least this one we should take, yeah, something like this. 1 to 8, nobody would complain about that. Only Campbell.
Right.
Not good enough. Exactly, Cam. Right. So what a surprise! Like what a surprise!
Yeah.
Right. So we should be all very surprised, Peter. Like it's.
Oh yes. Um,
There you go. So let's check the 5-minute again for cycle confirmations. Because everything is done. There's no more entries, right? Then we're done in terms of everything we look for. We had our LETs, we had our extreme, we had our ADM. Now the next thing is obviously target.
Yes.
All right. So let's see. What's the next timing window? Maybe.
minimum 2.
Yeah, maybe that's a little bit irrelevant now, because if you look at where we are in the cycle, then what's the next target area in terms of time? You see why this maybe is irrelevant? Because we had every entry opportunity possible anyways, right? Next timing could be what? New York trap.
Oh, yeah, okay. So you say London trap.
New York trap.
Oh,
Did I
Is
say
it-
London trap?
New York, is that that is 2 o'clock?
New York trap, if you're in the UK, should be 2 o'clock for you, yes.
Yes. Okay.
But you mocked up 1, is it?
Yeah, 4.
Oh, yeah, yeah, okay,
Oh,
but that's
in
the
minute
match
2.
manipulation minute 2. Yeah, yeah.
Yes.
But again, we already can see in terms of the place where it's placed that it probably will be irrelevant, because you look for inducement low, if that makes sense. And then, yeah, we all had all entry opportunities in terms of the LETs, the extreme, and the EDMs. So there's technically nothing would be interested in here anyways. See what I mean?
Okay. Yep. Yep.
Okay.
Right.
Sean in the waiting room. Is he? I don't see him in the waiting room. Oh. I'm here now. Daniel, you're not Sean. That's what he told you. Where is he? I don't see him. Oh, it's 2 Daniels. Oh, he's on there with Daniel's account. Oh, okay, okay. Wow, wow, wow. Confusion. Okay, made a mistake here. Oh, okay. I see what you guys doing here. Crazy. There you go. Let's see if we have time for another one, but let's just finish that one because I love it.
Yeah.
It's been using it for okay. By the way, Daniel and Sean, if you just can throw that in quick. If you want to use our Zooms instead, obviously you can. We can give you the access to that if you want to use it also. So you have whatever watermarks and stuff, all there, wherever you can record the session if you want, especially for the one you want to do on Saturday, which I love, the manifestation one. So yeah, it's up to you. Obviously, if you want to use it, we can provide it to you. If you want to use your own one, obviously your thing, but it would be nice obviously if you can use the original one and then maybe record the manifestation session also. That would be cool. Oh, you have on there as well. Okay, perfect then. Up to you, my man. Up to you. Okay, so let's continue.
Okay.
Sean is in here as well now. Very good. Okay, so let's see what we have. And always monitor the left also in these scenarios, right? So always now they're building up equal lows. Will that gonna hold? The $1 million question, will it will hold? Yes or no? Will support traders will finally get their first winning trade of the day? You will find out.
Yeah. Shortly.
Yeah, but you also have to notice though how, again, we don't want to make too much fun out of it, but you can see how structure is getting freaked over left and right. Again, technically having the internal structure, you're getting whatever, your first internal break of structures, you're getting then low side, and you're getting a new break of structures. Then obviously that would be entry opportunity, getting another break of structures to the high side, internal ones, getting screwed over again. Then technically again, they would get break of structure to the low side this time, blah, blah, blah. They would look for sells in here. Like, it's crazy. Like, I hope everyone understands that by now, that you only should look for structure when it makes sense and not overall in here, because you will make very funny videos very soon where we shit on structure a little bit because it actually causes more confusion than anything. I hope you understand why at this point.
Yeah.
Right?
Yeah.
Okay, so let's see though what we have.
Yeah, obviously the cycle has been completed to the upside. That's why we
Is it complete to the downside though?
No, not yet.
Exactly. So what technically do we look for next? What's our first thing always in terms of our lit cycle?
Build up.
Exactly.
Build up, inducement, and potential mitigation.
Okay, sounds good. So let's see what they give us. So let's fast forward this a little bit. So obviously that's Opa, too bad for the support traders. Too bad. And for the continuation traders, because guess what? There's your low, let's see whatever. Makes a new higher high now. Koch, change of character. Didn't work out too well.
It was, yeah, smart money trap.
Yeah. So, okay, if you look at just this, can you identify some sort of buildup?
There's a
mini
build-up.
one, right? Just a baby one.
Mini, yeah.
Okay, so should we get too excited about it?
No.
Okay, then let's go. Right, so that's technically for the smart money traders, support and resistance traders, shit, whatever they're messing around, giving them so many reactions, give them so many opportunities, then smoke them, right?
Yep.
Perfect.
Yep.
Then obviously they mess with the head as they're coming back and say, it just grabbed my stop by just 5 pips. Maybe now it goes, right?
Right.
Obviously they give the reaction, so let's see if they give them a reaction or no. Too bad. They're getting smoked again, right?
Yep.
But now, obviously, what we see, slowly but surely, the picture gets a little bit more clearer. Maybe continue a little bit more. So next time window is right about here, right?
Yes.
Okay, so now it's nice. Now you should see it. So what's going on here? Can you see now a clean cycle buildup? There you go, right? That's a really, really nice channel. Is it? Or am I going crazy? And what should, maybe even make it like this so it's even nicer, right? So we have this really nice channel. And obviously we're still having, I mean, this cell potentially is out. This cell could still be running, right? So now we have to maybe readjust because guess what? We're having build up. What is this candles considered of?
A vector.
Exactly. Build up, getting obviously induced to the downside with momentum and speed with vector. So we have build up, inducement, and now we have to look to the left. So our initial target, as you marked it up perfectly fine, was equal lows, right?
Yeah.
If you go a little bit more to the left. Yeah, a little bit more. If you go there again, see it, there you go. That technically was our initial target, which was 100% correct. But now, as we're having a cycle technically completed, build up into inducement,
Into mitigation.
we have to take to the look and see maybe there's something going on there. So could that then technically be the smart money trap into what?
Mitigation.
Yes, that's the danger of it. That's again where you be too optimistic about your target and don't see the cycles inside. That's definitely not the POI, right? But that's the smart money trap. Right, but we still have the imbalances of here. Right, technically that could be the internal inducement. Again, not the nicest one as this technically, yes, 100%, it's equal lows. And what is a bit for the bigger picture? Frankfurt inducement, giving you break of structure high, obviously builds up equal lows in here into inducement. So that technically is an internal inducement, 100%, not the nicest as it's still giving the equal lows in here. But again, that's the game of liquidity. They build up liquidity, they show liquidity, they take it out. They never take it out in one go. So of course they could sweep everything, but what's nice of them in the long run, obviously complete the little cycles, smart money trap into mitigation first, gives a reaction, and then smoke it later. Right? That would be even nicer. Make sense?
Yes.
Okay, but in terms of the cycle we have currently, build up, vector candles into timing, potential into mitigation, right? Does it make sense or no?
Yes.
Okay. Do we technically need to induce lower as you're already building up channels like crazy? We already had, again, these breakup structures for the higher time frames. So do we need to induce lower potentially also again?
No, because we've just induced
Exactly.
this area.
Yeah, even this area, right? Then even the smart money area, and then technically it could be ready for mitigation. How would we know? Based on the build-up before, vector candles into it, and the timing could look very juicy also to tap into them. Make sense? That's how you combine the cycles, right?
Okay. Yeah.
Okay, so let's see. Again, if you're not sure, then at least, first of all, you have to adjust your target for this one, right? For the cell. Right. So again, if you're not sure about if they take it out, at least partial, whatever, big time, at least in these areas or whatever into the mitigation. Because again, is it worth risking like whatever, taking the target here or just whatever here? Is it literally worth like 1 or 2 risk?
No.
Exactly. That's the thing of like target picking, right? If you're not sure, just always be a little bit more unpessimistic or optimistic. And I think a 1 to 15 is nothing someone should ever complain about other if you Cameron.
No.
Right?
Yeah.
So yeah, there you go. Not too bad at all, is it?
No. Yeah. All right.
Let's see what we have.
Okay.
Cycle completion, vector candles into timing, build up inducement. Now taps the POI, is it?
Yes.
Perfect. So let's do what?
Waiting.
I would say so.
Yeah, we
Waiting for what though? Just
well,
waiting is good, but what do we wait for?
timing. For New York Open.
New trap.
Oh, New York trap.
Mm-hmm. And what would be our confirmations?
Potential.
Very good, Nicholas. Come on, come on, come on. What's the confirmations? Hit me. If you take any trade, come on. What do we have?
Late.
Uh-huh. What else?
Break of structure.
Exactly. What else maybe? Timing.
Timing.
Cycle completion. Right? And then obviously EDMs.
EDMs for continuation.
Exactly. So what do we have in this stage?
We had to build up.
Yeah.
Mitigation. We don't have any break of structure yet.
Exactly. So not much. We're just having a potential finished cycle, which we understand of, okay, the bigger cycle, they hold building up the cell turn for the whole day. Now they're building a mini cycle into the build-up, into vector candles, into inducement, technically the inducement of the build-up, but into mitigation of the bigger picture. Had a smart money trap before. Timing looks very juicy. And now we just wait, as Nicholas said very well, break of structures, let's low time and confirmation, something like that. Right? So what do? We jump over the 1 minute. Right? Okay. So let's wait.
What? No.
Right? We don't pull something out of ours. We just wait. So we say naive build-ups. One more time. Right? So we don't care about it too much. What's the push that led to the low? This one, right? So break of structure will be here.
Okay.
I like the way you modified your trading view that it jumps on the high automatically. That's pretty cool.
Just press control.
Oh shit! Is it actually what it is?
Yes.
Oh shit! I did not know that. That's crazy.
That's
a good trick.
Well.
Wow.
Just press control. Or
then it jumps to the high of the next candle. Did you know that, Cam? Come on, don't laugh at me. You did not know that. No, you did not. Liar. You did not know that.
But the shortcut is just control. Control.
Who does believe that Cam knew that? I don't think he did. Oh shit. There you go. Okay, so makes new low low. Do we care about that? No. So what's the push that made a new low low now? So it's not this one we mocked up before. Exactly. Right. So that's again also where you don't get confused and no, maybe this one. Because this is technically, yes, the baby push, but again, pullback is here. That's the bigger push. So now obviously this is the bigger push. Boom. Makes a new low low. We don't care about it. We only care. Oh no, what are you mocking up?
That is just this imbalance that created this push.
Oh yeah, but we're not interested in taking anything on this answer. We're obviously the exact opposite is the case, right?
Yes.
So now we're looking just for proper what?
Inducement.
No.
Mitigation.
No. So we had a cyclical region to low side, we had our vector candles, we have our POYs being tapped. Now we need to push that to low. So if it goes over this, what is this?
Fight.
No. Come on.
Break of structure.
There you go. And then we can do what?
Wait for a late.
Or mitigation or something like this, right? Okay.
Yeah.
Fair enough. Right. So makes even new lows. We don't care about it at all. Oh my, actually did not make a new low low.
Equal
right, still in there. No, again, that's not equal lows. That's like technically still done, right? Don't get confused about two little wicks, right? Equal lows has to be like more. Or even this is not considered equal lows. For the bigger picture, yes, but not for the cycle completion, right?
Okay.
Okay. So let's see what we have. Nothing. Okay, now we have something. What is this?
That's now a break of structure.
What does the timing say?
We are at London trap time.
Very good.
New York,
right?
New York
trap. Exactly. So do we have a cycle completion before that? Yes. Do we have vector candles? Yes. Do we type into POY? Yes. Do we have break of structures? Yes. So we need time window? Yes. Do we look for confirmations? Yes.
Yes.
So what would be technically the push that led to this now first time better break of structure? Exactly. Where's your potential entry opportunity? Exactly. Can you mock it up? There you go. Maybe not this.
Or the extreme.
Yeah, no. I mean, you mocked this one up right, but not the box is not mocked probably. No. Take the lost imbalance. There you go. Something like something like this. You get my point, right? There you go. Something like this.
Yep.
Okay. Then let's see. Okay. What a surprise.
Okay, we don't have any lets.
Yeah. But it's technically there's a risky entry we could take.
Yes.
Exactly. But again,
yes.
the thing is risky, but definitely valid to take for sure. Any targets? Again, we're still trading away from medium inducement.
So it will be a short trade. I would say this will be a smart money trap area, potentially. So that will be potentially the first or a target. Short.
Yeah, very open, small target, but technically, yeah, Asia low. Yeah, that I like actually Asia low, Nicholas. I like that actually, or something like that. Again, you technically you have no clean liquidity areas. Again, you have just highs, whatever. You can randomly pick one, but that's not the point of doing anything in life. So choose the next liquidity zone, and as Nicholas said it very well, you could either choose again Asia midline, Asia midline or Asia low. That's technically the only valid liquidity zone of the day. But again, Asia midline is technically the extreme then. So that's your most optimistic target, and the most realistic target would be Asia low. I like that a lot. Make
Okay.
sense?
Yep, it does.
Okay. So let's see what else do we got.
All right.
Okay, mini build up. You see the cycle. Come on. Stop.
Yep. Yeah.
So there's your mini cycle in this one. Whoop. Help you out a little bit. This was the mini cycle, right? So guess what? We can expect a little pullback, inducing this little channel build up. What should this channel build up do? Best case, give us what?
Let.
Yeah, and if that would be the case, that would be obviously absolutely perfect.
But yeah, actually,
Could
we might.
So we have
let
any
now.
point with with imbalance left, which would be under this channel buildup being induced. Again, this is the buildup. It induces the channel. Where could it tap into? Where's your last point of imbalance left? Just look at this. Where's your last point of imbalance? For continuation trades. Is there an imbalance?
Maybe.
No. Is there an imbalance?
Balance there.
Is there an imbalance? Is here an imbalance? Is here an imbalance? Where's the imbalance? You see?
There's imbalance.
Yeah, exactly. So that's the only point of imbalance left, is it?
And
Right. So if the lead obviously hits in this area, that would make perfect sense also. But here's no imbalance. Here's no imbalance. Here's no imbalance. Right? So you're obviously making a little bit sense out of it. So if the lead hits in here, that's something nice we can take. There you go. So let's see. Build-up gets induced. Comes to our POI. What is it? What a surprise. Oh my God. Complete scam.
And a let.
It's a let. Coincidentally, right into the point of interest with the imbalance. What a surprise.
No.
Only inducing the build-up. And it's only perfect, right? So obviously now we're having a very high entry. So that's obviously not the best one we can have. But whatever. Let's see what's going on.
Okay. Yeah. Right.
Nice reaction. Wants to give us shaky hands.
But we could have taken this because there was an imbalance.
No, technically, yeah. Let's say you missed this one. Yes, you could see this as a baby breakout structure and then take this one instead also. Yeah, technically, you could do that. Very good eyes. Younger eyes than me, that's for sure.
I don't think so.
Seems like it though. So there you go. Right, jumps out of it, really nice. And then let's see. Maybe actually go to the 5. Don't need to wait all day long. If it lets us. Okay. All right.
Right.
Okay. Comes back all the way. That's obviously very unfortunate. Probably gives us a break even for sure.
Yes.
Okay. There's your break even. 100% guaranteed.
Oh, yeah.
Okay, that's just unfortunate. Let's see what happens after that. Okay. Definitely shaky hands on a lower buy for sure. Okay, told him to call me later. Because the calls again. Yeah, well, there you go. That's the day technically. Obviously, I had one very unfortunate BE, depending. Obviously, should have taken BE. If not, then he taken L with this one. right? With
Yeah.
this crazy wick, but definitely this one still good. That's just very unfortunate it happened. Again, there's nothing you can do about it other than call me and shout at me. But other than that, there's not much we can do about that, right? So, but yeah, that's technically the day, and it makes actually perfect sense. The only question is for the next day after, is that now the mitigation, we should get the new higher highs and shit like that, induce the medium inducement. Is this just now literally a triple bottom and we literally smoked that the next day?
Potentially take liquidity to the upside, but higher picture, we want
right,
to
it
trade
definitely
away.
is a triple bottom, right? So we definitely still want to look for the downside.
Yes.
Very good. I think you're off for the hot seat for now. You managed to do absolutely perfect. Any questions for that though?
No, all good. Thanks, Reem.
Very well done. Very well done.
Thank you.